persistence, sticking around, kind of, he's taken a lot of sort of PR abuse, I suppose, from Commerzbank and even Berlin. But I think what he's shown is if you can kind of ride that out, you get in a pretty strong position. So look, 30%, my sense is that momentum is starting to shift towards UniCredit. For the longest time, I just thought, there's no way this can happen. Berlin are against it, Commerzbank are against it. But,
more of attrition. Basically.
Exactly, just by being sort of persistent, he seems to be in a situation where, at least in the market, people are starting to think, hold on a minute, if he sticks this out, just by virtue of having a 30% stake, he will, effectively have control.
So if the market momentum is shifting, maybe, towards UniCredit and Orchel, what about the momentum of the German government, which you mentioned is we've been hearing from the Chancellor just in the last 24 hours or so, talking about this. Yeah,
and to me, that rhetoric seems to be only getting, stronger, right? You know, this is unacceptable, we do not like the way sort of Orchel's gone about this. Those are just words, right? And I think at some point, obviously Berlin could really block it if it really had to, but then the question is does it really have that sort of political appetite to really get into kind of what would be a painful fight, I think.
We will hear from Andrea Orchel a little bit later, I think, but, is it possible that some of the language that's used that's perhaps not making it any easier, maybe that's intentional, but he was saying yesterday that this is a story of operating underperformance, talking about Commerzbank. It risks becoming unfit for the market. These are quite bold statements, aren't they?
No, exactly. And I think that's the change recently. Is you could tell it was pretty contentious, and both sides were definitely not happy with the other. But I think the wording has kind of really, or the rhetoric at least, has got to a whole new height. And it's really interesting because what about, let's say it does happen? You've then got, what does that mean for people in Commerzbank who clearly are not big fans of Orchel?
Okay, Tom, great stuff. Thanks for the update. Lots more to come on this story this morning. Managing editor for EMEA Finance, Tom Metcalf, and Andrea Orchel will be here shortly. Alaska Air has suspended its full-year profit guidance due to rising fuel costs as a result of the war that we are seeing in the Middle East. This as airlines around the globe grapple with soaring jet fuel prices. Bloomberg aviation reporter Danny Lee joins us now. Danny, we're seeing pockets of distress. Clearly, weaker airlines are beginning to struggle a little bit. I'm not naming names here, but you're seeing it in various kind of geographies. Does this spread to a wider level of distress, and when does that start to happen?
Well, we're going to see some airline earnings come through, first of all, with Alaska Airlines. They had been previously guiding towards a full-year EPS of $3.50 to $6.50 a share. Now that's been suspended because of the high fuel prices. When you even look at its first quarter numbers, it hit on the revenue and on the adjusted loss. But it's that second quarter where they're seeing a loss of as much as $1 a share. That's more than what the 11 cents a loss that the street are looking for. So clearly there is pain that they are still yet to feel, because that first quarter only reflects a month of the war so far, and it's the cost of the fuel. Alaska Air is going to be paying $4.50 a gallon. That's around a $600 million increase in its fuel bill than it's expecting. And with it not hedged, you see just how that could impact other larger airlines in the months to come, because this fuel price more than doubled, has been elevated. And we are going to see United Airlines actually releasing its earnings later on today. So it'll be interesting to see just what it says, because it had been warning potentially of an $11 billion increase to its own fuel bill. But I'm sure with the war impact and also the consolidation impact that Scott Kirby, the CEO, has been stirring with his alma mater, American Airlines, I'm sure the street and analysts will be looking both at those kind of topics.
Yeah. And Danny, when we hear from airline execs, is it the case that they're still very concerned about prices, obviously, but not really about jet fuel availability? Or are they increasingly worried about jet fuel availability, and maybe this is a regional story?
Well, I think for the US, there is less concern about supply and just more about pricing, given the fact that the US airline industry is unhedged from the cost of fuel, so they're eating up the cost in full. And when you look at some airlines which are in real distress right now, the likes of Spirit Airlines, they have said, Bloomberg has reported that the airline has been approaching the government to see what it can do for them to help them out, potentially take a stake, some kind of bailout. It remains to be seen whether this would be the right approach, because this could set a bad precedent for the industry and how rivals would see that, and particularly for Spirit Airlines, which has been in distress for a number of years now. And of course, it had its failed merger attempt with JetBlue not that long ago.
Danny, thank you very much. Danny Lee joining us there on the aviation beat, a little bit on the global aviation story, a bit on the US aviation story. Should we talk about the house builders in the UK? Because there's a lot of headlines crossing, well, there have been headlines earlier around Crest Nicholson. And once again, we're sitting here with some guidance that's coming weaker and an incredible share price move.
The stock is down. Well, it's just been suspended. I think it's jumped from on my screen from being down 42% to being suspended as a result of breach of tolerance level, which basically means it's been halted because the drop is so big. It's nearly lost 40% of its share price this morning. The UK housing market's in a really difficult place right now. House builders are in a really difficult place right now. It is a struggle on many levels, and you just start at the top of the level. Getting visibility on what is happening with mortgage rates right now is just incredibly difficult.
We're not understanding where the BOE goes next, whether they stay on hold, whether they indeed hike. Market expectations around that feeding into the house builders, and this is Crest Nicholson then cutting its guidance, and the market impact is there.
We'll move back to geopolitics in a moment. President Trump raises the stakes ahead of potential negotiations in Pakistan this week. We will speak to Rob McCare, former UK ambassador to Iran. That's next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade. We are 30 minutes into the Tuesday session. You look at the benchmark stock 600 and there seems to be a lack of conviction, or at least waiting for more answers. The focus is partly on AI. The focus is also, of course, on what happens in terms of the talks in Islamabad, if indeed they come to pass. Currently, then, the markets are up just 0.1% on the benchmark. It's a stronger session. If you look under the hood at the DAX, up 0.6%. The auto sector is helping with that lift. The FTSE 100, meanwhile, is up just 0.1%. The home builders are under a bit of pressure here in the UK. The CAC current over in France, largely unchanged. Guy, what are you seeing?
I'm seeing a market that is, in terms of the number of stocks higher, definitely kind of giving us a positive story. 412 up, 170 down, 2 to 1. Let's call it that. I'm obviously averaging. Talking of averages, this is the volume versus the 20-day average. Volume hasn't been great for a while, and obviously that number has been declining. But today it looks particularly weak. There's a lack. We're kind of waiting, I think, for the next catalyst, the next obvious catalyst to come through. So the market kind of feels like it's kind of waiting and watching and not doing very much, which kind of, I think you need to see the next moves in the context of this. What you're getting this morning is a bid back into some of the tech stocks. ASML is doing relatively well. The software story is looking okay. SAP is bouncing a little bit after being so badly beaten up. ASML's up by 0.8%. SAP is up by 1.3%. You're seeing changes in the regulatory structure around the UK energy market. That appears to be benefiting Scottish and Southern this morning, which is up by 3.7%, let's call it 4%. So that's the story. So tech's doing okay. Tech's kind of keeping us in there. Downside, I think Astra's got some phase 3 trials, which maybe are weighing a little bit. It's down by 0.9%. Roche, though, is down by 0.9%. Safran in the aerospace arena, it does lots of different things. It makes the nacelles, it makes all kinds of stuff for civil, and it obviously has work elsewhere. The defence names are going to be in focus today. Keep an eye on Thales, but you've also got names like RTX, which are going to be producing numbers a little bit later. I think Northrop's out with numbers a little bit later over in the United States. So a market, I think, that is lacking a sense of direction, I think, this morning, or just doesn't have one. Anyway, it's a Tuesday morning. Who needs a sense of direction? Anna, what else do we need to know?
Let's get up to date on some of the other corporate news flow and other news flow we're covering here this morning at Bloomberg. After 15 years at the helm, Tim Cook is stepping down as Apple's CEO, handing the reins to John Ternus, the current head of hardware engineering. Ternus will become CEO on September 1st, and Cook will transition to the role of executive chairman. The future of Keir Starmer as UK Prime Minister appears to rest with a bureaucrat he fired over the vetting of former UK Ambassador Peter Mandelson. Ollie Robbins is due to appear before Parliament today and is expected to say he felt pressure to approve Mandelson, despite opposition from vetting officials. President Trump has told Bloomberg he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire on Wednesday evening, Washington time. Meanwhile, Iran has yet to confirm it will participate in talks to end a war which has engulfed the Middle East and upended global trade. Guy.
Let's find out more about this. How much do we actually know about these talks? Let's go to Dubai. Jumana is there for us with the latest. Jumana, we think talks are happening. Do we know talks are happening? Do we know what's happening around these talks? Who's going? And what does it all mean for the ceasefire, potentially?
Well, I was just reading about Islamabad itself being prepared, fully prepared for these talks to take place. Parts of the city are in lockdown. There are thousands of security personnel being mobilized in anticipation of the talks. And yet, we have yet to see the delegations arrive. And we know from the U.S. standpoint that J.D. Vance is going to be leading up the U.S. delegation once again alongside, it is expected, Jared Kushner and Steve Witkoff. But they have not yet departed the U.S., which means if the talks do happen, they will likely take place tomorrow, which also coincides with the timeline that President Trump laid out yesterday. He spoke to one of our Bloomberg colleagues overnight, and he said that the ceasefire expiry has now moved to Wednesday evening Eastern time, which is Thursday over here in the region. But that also, he has no inclination to extend the ceasefire, which sort of suggests that he thinks he can wrap things up in the next 24 hours. But we have not yet heard from the Iranian side. There hasn't been an official confirmation of who is attending from Iran. And indeed, a lot of, once more, belligerent messages coming through overnight. We heard from the Speaker of the Parliament, Mohammad Ghalibaf, who was the lead negotiator in the last round of talks. And he was saying that they will not negotiate under threat. Similar messaging coming through from Iran's ambassador to Pakistan, saying that they will not tolerate the ongoing naval blockade that the U.S. is imposing. And so we're in a situation now where it appears to be the case that the Iranian stance is, so long as the U.S. continues implementing their naval blockade on the Strait of Hormuz, that could impede the possibility of actually proceeding on to the next round of those discussions. So I guess a couple of things to watch out for as we think about, how the day is going to evolve. Number one, does the president change his mind? Does he temporarily lift the U.S. blockade in the interest of pushing forward those discussions? And number two, when does J.D. Vance actually leave the U.S.? Because that is going to be a signal that the talks are actually on in the next 24 hours.
OK, Bloomberg's Jemana Bezechi on the ground for us in Dubai with that update. Jemana, thank you. For more analysis, let's bring in Rob McCare, former UK ambassador to Iran from 2018 to 2021 and Chatham House Council member. Rob, thank you for taking the time to join us in the studio. With your deep understanding of Iran and how the government there operates, what is your assumption right now as to whether or not there is willingness from the Iranian side to strike a deal? It seems Trump wants to get a deal. Do you think the Iranians are close to giving up some of their red lines to get something across the line in the next couple of days?
I think it's likely that they go to talks in the end. I mean, it's not guaranteed. There's lots of potential for miscalculation, but it doesn't seem to be in Iran's interest to push President Trump into a corner where he has to make good on his threats to launch massive attacks on their civilian infrastructure. So it's likely that after brinksmanship, they will go to talks. But, they're very, very crafty and experienced negotiators, and what they consistently do, and what you're seeing right now, is the ability to reframe the negotiation, where President Trump wants a very simple discussion, massive military threat versus, complete nuclear capitulation, all the material comes out, no enrichment, and so on. Better deal than President Obama got. But that simple equation, has now been muddied by who goes to talks, who wants the talks more, and then, of course, freedom of navigation in the Straits of Hormuz. So it makes it harder to achieve what the US want.
And it's the Straits of Hormuz that comes up consistently with our guests when the focus is on what investors are looking at. And are the Iranians prepared? It's a point of leverage that many people didn't think they would use. They've used it. Are they prepared to give that up? Will they give that up? That is what is so essential for the global economy.
I can't see how they are going to end up with their maximalist position, which is to extend what they would call sovereignty, to extend Iranian control fully over the Straits of Hormuz, which they've never really had in the past, or they might have made noises about it. They've never seriously claimed to do that. So, but I think they are going to be very reluctant in this situation to give up their ability to use it as a threat unless they get what they want in these talks, which is some sort of a guarantee that they're not going to be subject to another attack imminently, and some sort of economic relief.
So if they don't want to give up the control of the Strait of Hormuz, and that's something that they've said, and they want to maintain the ability to at least go back to enrichment, they were proposing, I think, last time, 5 years. So that they could still be the sticking points we're talking about here. But if we end up going back to war, Rob, I mean, what is the Iranian regime as it exists now? What is its tolerance for war? How long could they tolerate that?
I don't think any of us know the answer to that, and I think that's a key question. I do think that the risk in all this is the risk of the two sides not understanding each other. So Iran not understanding the US because of the contradictory messages coming out of the White House, which obviously is partly deliberate. And on the other side, the US consistently underestimating the ability that Iran has to absorb the pain that the US delivers to them. I don't think anyone knows how long that can go on or how resilient they are, but this is about the existence and the survival of the regime. Their backs are against the wall, and for them, capitulating to the US would be the end of the regime. So there is this misunderstanding about what this conflict looks like and how it's resolved, and that's the most worrying thing.
So in that context, is it possible, can you foresee an agreement that means that Iran steps away from enrichment for, I don't know, 10 years, but that kind of number gets agreed to? Because I think the Americans went in asking for 20 and the Iranians said, OK, 5. I mean, do we meet in the middle somewhere?
Yeah, it's perfectly possible to find a face-saving compromise on the nuclear program. I mean, Iran would be willing to compromise. It's not enriching anything at the moment. doesn't really, I mean, obviously has these stocks of highly enriched uranium, is unlikely to be able to do anything with them for the moment. So there was clearly a compromise available that where Iran can say it's preserved its right to enrich, but isn't actually enriching. And as I say, there's a lot of negotiation around timescales and timelines for that. But I think it's key for President Trump, as you can see from his comments, is it has to be better than the JCPOA, the deal that President Obama got, and that seems to be his priority.
There's a number of kind of points. Let's pull them out a little bit that you made. If we do go back to kinetic action, how would the Iranians react? There's talk that they would target Gulf energy infrastructure again. How big an escalation would that be? And what would be the effect of that?
Well, of course, they've got an incredibly weak hand, haven't they? So, I mean, the US has total military dominance. They can attack anything at will. Iran clearly has some capacity to continue firing ballistic missiles and drones. What they will try to do is to calibrate the response so that if they get massive attacks on power stations and bridges, as has been threatened, then their response will be proportionally higher against those sorts of targets in the Gulf.
At the other end, is Iran prepared to, assuming you don't get a deal, but we get kind of ongoing talks, how long can Iran sustain where we are now in terms of the kind of the restrictions that the US is placing on its shipping? How long could this kind of scenario that we're currently in last for from an Iranian point of view? It has land borders, it has all kinds of other things, but it needs to get its oil out, I'm assuming.
I think that is the question that everyone wants to know the answer to. They are in a very, they're hunkered down. They are obviously controlling the situation on the streets absolutely tightly to prevent popular uprising. The economy was already in a disastrous state before the war. It's now be significantly worse, and with the blockade facing real challenges. But how long they can hold out, I think, is the key question. And consistently, they've shown the determination to outlast
Are they waiting?
the US.
Sorry, are they waiting for shortages to show up around the world? Is there a point at which their leverage becomes really becomes better, and the card they have to play is better because actually you're seeing shortages in Europe and Asia, etc.? Is that the point at which they'd like to, that the current scenario points them towards?
I think it's their only choice, other than capitulation to US demands, isn't it? I mean, they are working out that the longer this goes on, the worse it is for the world economy, and the more difficult it is, therefore, for the US. Iran's in a much worse position, but they're hoping that pressure leads the US to compromise.
Israel were not involved in the last talks, and I don't think that they are attending these talks if they happen, and clearly that widens the conversation about the region and some of the proxies that Iran supports. Do you think that they would be prepared to give any ground in terms of supporting those proxies if it were to deliver a better result for Iran with the United States?
I think in the long run they'd be open to talking about it. What they've consistently said is these are organisations that have their own volition. They're not controlled by Iran. They might make some. In a far-reaching agreement, they might make some commitments about not supplying military goods to the Houthis or Hezbollah, but disbanding or effectively disarming those organisations is not in Iran's gift, and they would say that's not something we can do.
Rob, thank you very much. Thanks for joining us. Rob McCare, former UK ambassador to Iran and Chatham House Council member. Coming up on the programme, President Trump's pick to be the next Fed chair will testify later today before the Senate Banking Committee. We will have more next on what to expect. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The Bank of England makes its next interest rate decision against the backdrop of conflict in the Middle East. Investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Our next decision is at the end of April. A lot will have happened.
Tune into Bloomberg for live market reaction and analysis from the studio and on the ground at the Bank of England. It all starts April 30th at noon on Bloomberg. Context changes everything.
"47 minutes past the hour. Welcome back. You're watching the opening trade. The DAX is the only one that really stands out in terms of some action today here in Europe. You're seeing names like SAP having a fairly good session, which is lifting that market, outperforming the rest of Europe, which is kind of sitting on its hands, trying to figure out what happens next. And at the moment, we don't know, but we're going to get a lot of answers over the next 24 hours, potentially.
Talking of what happens next, let's look ahead at what else we are focusing in on throughout this Tuesday, 9 a.m. UK time. Ollie Robbins will be giving his testimony, of course, the former most senior civil servant at the top of the Foreign Office, embroiled in a dispute with the Prime Minister. So we'll listen into that, potentially significant ramifications for Keir Starmer. We'll be across that for you, starting at 9 a.m. UK time. 10 a.m. UK, we're going to be getting the German ZEW survey, 1:30 p.m. UK time, US retail sales, and at 3 p.m. UK time, another significant one for your calendar for today. Kevin Walsh, Fed Chair, hearing, of course, will be in focus, and we'll also bring that live to you. And at 5 p.m. UK time on the earnings front, ASM International earnings on a day when we're seeing some upside for the tech space.
Let's kick off in our look ahead to the rest of the day with the UK angles first. A big day for British politics, another one. Keir Starmer facing another gruelling day, perhaps, as a little-known official, although if you followed Brexit, you'd have heard of him. He fired, Keir Starmer fired. He is due to speak at the top of the hour in Parliament about the UK Prime Minister's controversial decision to appoint Peter Mandelson as US ambassador. Let's bring in Bloomberg Markets today. Editor Sam Unstead with us. Let's start. There's so many UK themes to dig into today, Sam, but let's start with that. What will markets be watching for in Ollie Robbins? Because there's a lot of kind of court drama, but what are markets going to be focused on?
Yeah, so I think what you're going to need to see to have a really substantive effect on the gilt market in particular, global bonds, but in the gilt market in particular, all being driven by the war in Iran, energy shock. That is the dominant narrative. To change that, you'll have to see Ollie Robbins say something that has a very clear cut-through that indicates that Keir Starmer's position is in genuine danger, and enough to convince investors of that too, because that narrative over the top of everything, in terms of the war in the Middle East, is enormous. You know, it's covering almost every part of the market. So it will take a very significant but very clear cut-through to really have an impact on gilt markets.
Before the war started, the data, which we're now starting to get, pointed to an economy that was looking okay. The GDP data looked good. Now we get employment data that looks pretty good as well.
Yeah. I mean, so the employment data today, even before it arrives, most of certainly the wage data, which is the bit the Bank of England will look at most closely, only goes up to February. So, like all data that only goes up to February, it's pretty much been blown out of the water by everything that's happened since. The data itself, again, is pretty messy as well. There was quite a significant drop in the unemployment rate. That's kind of a technical change. It doesn't really tell you an enormous amount. So I think all the jobs data really does today is moves focus to inflation tomorrow, because that is the report that is going to have the most impact for the Bank of England and probably for UK markets as well.
How much of this windfall tax that was announced today on some of the utilities, some of the energy providers, how much of that is about addressing longer-term higher energy costs for consumers and businesses in the UK? What are the details of that?
I mean, most of it. So I mean, what you're effectively seeing is this delinking of gas and electricity prices, because if gas is the last pricing mechanism that's used, it means energy prices end up being higher. Had a little bit of this over the course of the last couple of weeks. It impacted the companies because any kind of intervention in the market without clarity kind of impacts those shares. You're seeing a lot of those companies move up a little bit today because what they're doing looks broadly pretty sensible. But it's not just for the longer term, but this is something that's been in the works for a very long time as well, as renewable energy generation in the UK has increased. And effectively, if you delink those two things, it should give the UK a much better control over their energy prices, and so energy shocks, like you see with the war in Iran, won't have as much of an impact as they do at the moment.
Let's complete our tour of UK news flow with a trip to the UK High Street and AB Foods. Numbers out today. There's the Primark story that always dominates. What did you take away?
Yeah. Well, I mean, probably as long as I've been a reporter, people have been talking about Primark being spun off from AB Foods. I think, so that in and of itself will probably be received relatively well. It's kind of expected. It allows investors to be able to value the two bits of the business, because the rest of it is sugar, grocery, so the two things have never quite sat particularly well together. However, underneath that, Primark sales not particularly good, softening a little bit. And we've seen actually over the course of the last couple of weeks, little hints that over the course of March and April, there's been a little bit of a pullback from consumers. So adds to that picture. It's still only bubbling under the surface at the moment, but not enormously positive on the underlying
Sam,
picture.
excellent stuff. Thank you very much indeed. Bloomberg Markets Today editor Sam Unstead. If you have a terminal, you can watch the testimony from Ollie Robbins as Sam was discussing the potential implications there, using the function LIVE GO on the terminal, likely to start around 9 a.m. UK time.
The other big event, which we'll be taking live a little bit later on today, will be the confirmation hearing for Fed Chair pick Kevin Warsh. Joining us now to discuss this and all the other things we're going to be talking about today, Skylar Montgomery. Kerning, how much are we paying attention to Warsh? Is he going to be market moving today? Or with Tom Tillis blocking votes, do I just park it and think about something else?
I mean, we've seen historically that his commentary has had an impact on the market. And I think particularly now, if it confirms market biases, then it can be market moving. In terms of, if you get some dovish commentary, equities can be joyed by that with the backup story of tech doing well. Maybe the dollar can be under some more pressure, but it's unlikely to be a big shift in the bond market as a result, is what I'd say.
I mean, we've had a bit of an early look at what he's going to say, and a lot of it sounds like a kind of, this is before he gets questions, and then who knows, but a lot of it sounds in a kind of stay in your lane. The Fed works best, the FOMC works best. When it sticks to monetary policy, doesn't try to do social policy or fiscal policy. Those might be fairly uncontroversial from the Republican side, at least in the Senate.
Yeah, I mean, I think part of it is there's not a reason to change his tone very much, right? Like, part of the reason he got appointed was because he has a more dovish tone. Right now, it's very hard to be dovish because the starting point for inflation before the Iran war was something like 3% on core PCE. We know that there's going to be a big inflationary impact from the war. And so there's not anyone on the FOMC, I think, maybe other than Moran, that's saying we should cut next time or we should cut immediately. So it's hard to push against that economic backdrop, which is why I think the bond market's not going to change that much, right? You have a higher term premium needed. You have that expectation that rates are going to stay that way. And you're actually pretty dovishly priced anyway with that regards, with cuts still in the outlook. And I think further out, too, even if you do get cuts eventually, the risk is if inflation is higher, those cuts feed into inflation persistence. So, the risk is very much higher yields from here, and I don't think there's a reason that he would kind of diverge anywhere from that, and maybe the risk for him more would be commentary on the balance sheet for the market.
So from Kevin Walsh to Ollie Robbins and the focus on the UK, we discussed some of that with Sam Unstead. How sensitive are the gilt markets to political risk and today's events, ultimately?
Yeah, I think there's more of a sensitivity to what happens in the US because there's more of a feed-through to policy from that. We've seen that there's been a lot of kind of political issues in the UK in the past year. At the beginning of 2025, it did have a feed-through to the gilt market, but Starmer's gotten through a lot of these issues without losing his job. And so that means that there's a lower bar, or a higher bar rather, for the market to react to those issues. The worry is that if you have a different leader for the UK, it'll be more fiscal easing. Post-Liz Truss crisis, there's a very low bar from the market to withstand deficit deterioration. And so it would certainly be negative for gilts, but I'm not sure today is really the day that impulse is from the UK.
Skylar, thank you very much. Skylar Montgomery-Koning of the Bloomberg Markets Live team. And I should just say we're getting a line from Iran saying it has not yet sent a delegation to Pakistan. This is to Islamabad for the talks with the United States. Yesterday we were here looking for clues as to whether Iran would be going, and we had seen some reporting suggesting that they would be, but now we hear this. Of course, the timescale has shifted a little. These talks, I think, not expected to take place until either late Tuesday or into Wednesday, was the latest guidance from the president in the US.
Yeah. And Jaman has been reminding us that the US delegation hasn't left either. So we continue
Does one need to go before the other one goes? And which one goes first?
I guess the one that's furthest away.
Well, that would seem like a logical thing, but maybe not.
Yeah, maybe not.
Before that happens, we are going to hear from a key player within the European banking space, because Andrea Orcel will be joining the Pulse with Francine Lacroix at 9 a.m. UK time. A really central conversation to tune in for then. Don't go away. The opening trade is next. That's it for the opening trade. The Pulse is next with Andrea Orcel. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
President Trump signals he's unlikely to extend a 2-week ceasefire with Iran that's set to expire in 2 days, with negotiations to resume in Pakistan. Apple reveals that John Termes is replacing Tim Cook as chief executive after 15 years in the role, which saw the company become a $4 trillion business. Plus, the German chancellor slams hostile tactics in the banking sector. We discuss the pursuit of Commerzbank with Andrea Orcel, the UniCredit chief executive, shortly. Now, first thing is first, let's check in on what the markets are doing. Stocks seem to be rising pretty modestly. Again, traders seem to be a little bit more encouraged, certainly, than they were 24 hours ago, that Iran will join talks that could extend the Middle East truce and restore oil flows. Now, futures for the S&P 500 are rising some 0.2%. All eyes, of course, on the Middle East after Trump seems to have signaled he's unlikely to extend a 2-week ceasefire with Iran in a war that's upended global oil markets. So Brent crude 94.7 and European markets pretty much the same. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the German chancellor says his government is against hostile and aggressive tactics in the country's banking sector. Friedrich Merz was speaking to industry executives after Commerzbank formally rejected UniCredit's takeover bid, saying it lacks value and undermines trust. Now, with us now for an exclusive conversation is the chief executive of UniCredit, Andrea Orcel. Andrea, thank you so much for joining us. Bettina Orlopp, the chief executive of Commerzbank, dismissed this as a speculative attempt to dismantle Commerzbank's successful business model. How do you respond to that? And does it definitely close any room for negotiation?
Thank you, Francine. Well, from our standpoint, we have been consistently trying to engage in a meaningful dialogue to review facts as opposed to statements that we do not believe are backed by facts. As a shareholder, we feel very strongly that we need to be ambitious. We have demonstrated it at UniCredit, and we think Commerzbank can express a lot more value than it does at the moment, both for its shareholders, but also for its employees and the clients it serves. Furthermore, we do think that the current plan puts Commerzbank at risk in the medium term to face a competitive environment, to face risks that would require yet another restructuring plan, and a difficult one, or put the entire bank at risk. For that genuine concern, we have put our views forward yesterday after failing to have any meaningful engagement. And as you know, on April 7th, Commerzbank was very clear that they remained on their position that the bank needed to remain independent and that there was no value, and refused any further engagement with us.
So where does that leave you? I mean, cross-border bank deals often proceed without management support, but rarely do they proceed without government support, or at least the government saying, actually, this doesn't work for them. Are you prepared to move forward without political support in Germany?
So I hear a lot about this is a cross-border deal, but this is effectively mostly a merger between the second and third largest bank in Germany. And if you look at the views we provided yesterday, most, if not all, of the value comes from the merger of two separate second and third banks in Germany. So it is an in-market deal. It is not a cross-border deal. Obviously, the group is pan-European, and the group would incorporate that bank into the broader group, but it is an in-market merger. With respect to the situation and the position of everybody, we believe we've been very respectful for 18 months. We bought the stake in an auction transparently. We reached 30%. We tried to engage for 18 months. We launched an offer. We tried to engage within the offer to land a joint plan in the best interest of everybody. We were dismissed after 2 weeks with a refusal to engage on any detail. And therefore, we have no other option but to present our views publicly, given that we have an offer document and we need to explain what is in that offer document. Commerzbank was well aware that if we did not present a joint plan, we would have had to come back with a plan from our side. And we restricted that just to our views to provide a basis for further engagement. If that further engagement occurs, we would welcome it. If it doesn't, it is now up to the 70% shareholders beyond us to take a view whether they want to remain in Commerzbank with the current premises or whether they want to do something else. For UniCredit as a shareholder, we have a win-win. If we land below control, this is the scenario that will provide us with the absolute best returns, and in our opinion, will provide an opportunity to do a deal further down the line at much better terms. If instead we get a landslide and we reach control, then we will implement the views that we have put forward, views that we have already successfully implemented at HVB and across 13 banks in UniCredit Group, and we will create value above the cost of equity. So from our standpoint, we've done everything we needed to do in order to be in a position to let shareholders and indeed the other stakeholder of Commerzbank make a decision.
We reported last week that the ECB is considering to require you to consolidate Commerzbank. So how likely is that to happen if your stake rises above 30% but stays below 50%? Would that impact your capital buffer?
Look, the control is a topic that is interpreted differently in Europe, as many other things. In some jurisdiction, you need to be above 50+1. This is, for example, the case of Poland. In other jurisdiction, you need to demonstrate structural control of a shareholder meeting. This, in fact, is the case in Germany. So for us to reach control, we would need to demonstrate structural control of the AGM of Commerzbank, something that we can manage very easily not to do. So we will have really two scenarios, one where we don't have control and we go back to status quo, launch our share buyback, and go back to full focus on implementing our unlimited plan. You will see results of that already in our May 5th results, and wait to see what maps up in Commerzbank. With respect to the impacts on capital, we have been very clear. A 100% deal impacts about 200 basis points. A 50% deal impacts about 280 basis points, excluding the pull to par. So it's 80 basis points more that affects our returns. But in terms of capital position, we have enough capital to absorb both.
What would be the trigger point? So, once you after crossing that 30% threshold, what's the trigger point to then launching a full takeover offer?
So let's be very clear. In Germany, we have already offered for 100%. So differently from other jurisdictions, as we have offered to buy up to 100% of the capital of Commerzbank, if we cross the 30% in this offer, we're no longer obliged to do any other offer and can freely buy in the open market as much as we want, all the way up to 100% without ever launching another offer. So if we cross 30% and remain below control, it will be our decision if and when we want to increase that participation to reach control and to move up. And for the time being, I signaled clearly yesterday that after trying this other step to bridge the gap that exists between us and Commerzbank, i.e. launching an offer, if we do not reach control, we will take a pause and we will focus on other topics that we have internally.
I mean, at this point, with what you know now, how many investors from Commerzbank do you think will accept the offer? What's your base case or your baseline?
I normally don't speculate and I use facts. Probably that's why I am cautious when I say some things. In my opinion, it is up to that 70% to take a view. We have shown very clearly what is the financial case to tender. We have put forward our views, the value we can create, and there is now no doubt that we can create substantial more value than what is in momentum, and even more if we reach a combination. The numbers are not challengeable because they emerge directly from what we have already done at HVB and across UniCredit in the last 4 years. So it's our blueprint. We know how to implement it. We will implement it. We will extract those value. We know what we're talking about. So it's only about that. The shareholders will need to decide whether they believe waiting is better for them or tendering is better for them. And I guess we will not know that until the very end of the offer. But as I said, for us, we have reached 30. We've tried to engage for 18 months. We launched an offer in order to have an opportunity for meaningful, transparent engagement to address a lot of the topics that are now being thrown at us. That, so far, has failed. Commerzbank has remained on the position of day one and refuses to look at any other alternatives. So shareholders are now aware of our views, of the risks, of the possibilities, and they're in a position to take a view. And for the time being we're here, we would be very glad to engage constructively, but if that is not possible, the offer will run its course and we will see where we are at the end of the offer.
Andrea Orcel, your proposals to boost Commerzbank's standalone profitability are, around strong cuts to the bank's international operations. But Commerzbank is also an important source of trade finance for a lot of the German exporting countries. So do you think that could be a problem for those clients?
No, I don't. This is another piece of misinformation. UniCredit has a trade finance business that is about 1.6 billion. This is double the trade finance business of Commerzbank. We support that trade finance business with 20 offices around the world. Our service is fully automated. We use AI, and we have a level of service that gets recognized broadly. Commerzbank has half the business with more than 100 offices, which are a mix and match between trade finance and other activities, such as trading hubs, local lending to local companies that have nothing to do with the core business of a German and indeed the Polish bank. So for us, trade finance is a core business. It is a core business from which we are recognized, and we keep on winning prizes every year for best service in that business. So the last thing we would want to do is affect in any way the Mittelstand access to our trade finance and correspondent banking services across the globe. Indeed, those services are much more efficient, much more effective, and better services than the one of banks that use the old model that we believe Commerzbank uses.
You're predicting 7,000 job cuts at Commerzbank if those plans come to fruition. I mean, is that what unions and also the government are worried about this deal?
Well, on the job cuts, I would say that the numbers that were, again, flying around talked about 15,000. So number one is less than half. Number two, Commerzbank itself has already committed to cut 4,000 jobs, all in Germany, hiring internationally and redeploying headcount outside of Germany. So put that in context with our 7,000, which would be done mostly the first 5,000 or so over a period of 3 to 4 years. The remaining, just in the combination, you're talking 4, 5, 6 years out. There is significant attrition given the pyramid of age, and there is significant reinvestment, and a number of those reductions are done in areas that are very bureaucratic and overpaid, in our opinion, and that need addressing at the center of function that Commerzbank has. So are there job cuts? Yes, they are. I don't think they're meaningfully different from what Commerzbank has proposed. And those job cuts are not done to go and expand internationally and lend in other countries, but they are done to strengthen the business in Germany by investing more in technology, in AI, and redesigning the entire operating machine. The very big difference between Momentum and Unlocked is that Momentum, at the end of the plan, delivers a bank that after they have done those cuts, is still lagging the other peers in Germany and in Europe. Unlocked, at the end of the plan, delivers a bank that is a leader versus the other German competitors and Europe. So Unlock is viable. Momentum will just require yet another restructuring plan to address the gap that would be accumulated again in the next 3 years to vis-a-vis the sector.
Andrea, do you think there's a chance actually that the government, the German government comes out and just blocks it like Italy's government did with Banco BPM?
I cannot speculate on what the government will or will not do. I respect their position. I would have hoped we could have had engagement to explain every topic and every step in detail and argue our case, something that we have unable to do, but it is their decision to make.
What's your thinking about acquisitions in Italy? Are you still evaluating something, for example, with Monte Paschi?
Look, I think our name comes very often in acquisition, probably for two reasons. One, because of my past job, and two, because UniCredit being present in 13 countries and having turned around in the way we have turned around, there is a lot of speculation that we may do a lot of things. So, as I said, and I continue to say, we are very committed, and we have demonstrated it again and again and again, to our organic growth. Initially with Unlocked, now with Unlimited. Those two plans have delivered a lot more value, and the Unlimited will deliver a lot more value than any acquisition. Yep. That said, I think it is the duty of the leadership of UniCredit to look at option. In Italy, we have a 9.9% market share of the market. The market is fragmented. So there is basis to look at option to strengthen our market share. There is basis, but we need to find opportunities that work, and we need to find opportunities that fulfill our financial metrics. We're very, very disciplined on the returns to be had, and given the success of Unlocked and what I will demonstrate the success of Unlimited in the next 20 quarters, we do not need to make acquisition. We will do them only if they add incremental value.
Andrea Orcel, thank you so much, as ever, for giving us a little bit of time in your very busy schedule. That was the UniCredit Chief Executive speaking, of course, to us. We'll have plenty more throughout the day on this story. The other big story is President Trump has told Bloomberg that he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire Wednesday evening, Washington time. Details about the next negotiation session remain unclear. The Bloomberg understands that Tehran is also preparing to send a delegation to Islamabad after earlier casting doubt on its participation. Now, for more, we're joined by Bloomberg's Giovanna Bercecci in Dubai. So, Giovanna, just bring us up to date with how likely these talks are and what does it mean for the ceasefire?
Well, I will tell you, Francine, that there are plenty of preparations underway in Islamabad, the city. We're hearing of thousands of security personnel being mobilized, parts of the city in lockdown in anticipation of these talks. But no official arrival yet of either one of the delegations. Now, over the weekend, President Trump himself suggested that the U.S. would be participating, and later emerged that J.D. Vance will be leading those discussions once again. He has not left yet, so that is a key consideration as we think about the coming hours. On the Iranian side, they are still being non-committal, and just in the last hour, the state TV said they have not yet sent a team to Pakistan for these U.S. talks. And what is emerging is a narrative over the course of the evening. We've heard from the likes of the president, Masoud Pezeshkian, who says that they will not negotiate under threat. A similar language coming through from the Speaker of the Parliament, Mohammad Ghalibaf, as well, who led the prior round of discussions, also suggesting that as long as the U.S. naval blockade persists, they will be less inclined to participate in those discussions. So I guess where we go from here is going to be a function of what the U.S. and what President Trump decides to do with that U.S. naval blockade, whether perhaps he lifts it temporarily in order to induce the Iranians to come to the negotiating table. But at the same time, we know that the clock is ticking. He had a phone call with one of our colleagues from Bloomberg yesterday, and he suggested that the ceasefire deadline had moved back by 24 hours to Wednesday evening, which gives a very small window to get a deal across the line. But at the same time, President Trump has also warned that the military is locked and loaded and ready to go again. And equally, the Iranian Speaker of the Parliament has said that they are also preparing to return back to the battlefield. So again, another crucial 48 hours coming up. What we should be watching from here is whether Iran obviously commit to sending a delegation, and also whether J.D. Vance actually leaves the U.S., because that will be a sign that the talks are going to happen.
Jumana, thank you so much. Jumana Barsechi there in Dubai. Now, plenty of focus, of course, on that U.S. delegation led by Vice President J.D. Vance, heading to Pakistan in a bid to resume negotiations with Iran. We're joined now by Anna Rosenberg, head of geopolitics at the Amundi Investment Institute. Anna, always so great to speak to you. I mean, there are two main sticking points. It's nuclear and Strait of Hormuz. So can we muddle through a deal if there's even a deal to be had?
I think as long as you put the nuclear issue back into this deal, I don't think we're going to get a deal, because this issue is so contentious. We've been negotiating this, the US has been negotiating this for years, and it hasn't been solved. So if there is a deal, and it's a narrow deal, it's going to be no more aerial strikes against Iran by the US in exchange for opening the Strait of Hormuz. That's as possible of a deal as you're going to get. That is. And it is likely that we're going to get this deal, because ultimately you need to look at what constrains both sides. And the fact is that neither the US nor Iran have an interest in more escalation. No. So I think we're going to get a muddy deal that, as I said, is just no more bombs in exchange for opening of Hormuz. The more Trump insists on solving the nuclear issue as part of this, the more difficult it's going to get towards a deal, which then increases the escalation risk.
But Anna, does this effectively give the regime an upper hand? I mean, they're stronger than they were 6 months ago. Of course, there's a new Ayatollah, but because it gives them almost control of Hormuz.
So I'm not sure that they're actually stronger. We don't know how strong they really are. I mean, they've been bombed for several weeks. Don't forget that over the past couple of years, the Israelis have been trying to decimate the militias in the region. They've lost military capabilities. They've reduced their nuclear capabilities. So I'm not sure they are really stronger. I don't think we know enough about that. But the issue around Hormuz is critical for the US, because this is about who controls freedom of navigation. That's a core US foreign policy principle since the end of the Second World War. They can't allow Iran to control Hormuz. They can't allow Iran to implement tolls. So if the Iranians don't back off on this issue, I think the US will have to escalate and will have to send in boots on the ground. That's why this issue is really important, because it would challenge the US on a global level, not just in Hormuz, but also in other areas.
I mean, the rumors that, frankly, have never been confirmed about, for example, the Iranians asking for yuan for the safe passage. I mean, this is not confirmed, but there's always China in the background, right? China kind of supporting quietly, not supporting. They don't like it messy, but they're also not calling Iran and saying, this is it. So what's China's role in all of this?
So firstly, China obviously has an interest in seeing the US being weakened and in trust in the US being undermined. But that's a far cry away from supporting Iran outright. Because ultimately, when you look at what is in China's interest, it is that we see ongoing global trade and we see as least economic friction as possible. Because in China, you have a social contract between Xi and the population, which is, I give you economic growth. In exchange, you give me political control. That has to work based on global exports and free trade flowing. So China doesn't have an interest in seeing the Strait of Hormuz closed for longer. On the contrary, Asia is one of the most affected regions. So I think what we're seeing with Russia and Iran is similar. China has supported Russia and Iran in a kind of lukewarm way. Yes, companies are sending and selling dual-use technology because they're taking advantage. They have an interest in seeing a multipolar world order, but it's not an alliance. And there are real limits for China to go in deeper and support Iran. So ultimately, I think China has been trying to put diplomatic pressure on Iran too. But I think we shouldn't make this bigger than what it is.
And so I don't know what the chance is, you think, of getting some kind of deal. And again, it's a small deal, right? It'd be just for the safe patch of Hormuz. at the end, does it flare up until there's a bigger agreement, and how long can that take?
So this is a muddy deal. This is not going to be a clean deal. We have to be clear, it's quite unlikely that we're going to go back to the status quo ante, how it was before the war. Because ultimately, you still have an Iranian regime in place, and the Israelis are not happy with that. They're going to continue to undermine that regime. There are also a lot of opposition forces within Iran, Kurdish militias in Iraq that are not happy with the regime. So we're likely going to see more covert operations in Iran, which means that even if there's a detente between the US and Iran, other forces will seek to destabilize that regime, which means the regime will continue to flex its muscles, threatening the Strait of Hormuz occasionally, threatening the Gulf occasionally. That's the new normal that we all have to accept. It's quite likely that we're going to be in this environment, because a real diplomatic solution to all the issues on the table, the nuclear issues, is very, very hard to achieve.
And I mean, if you're a Gulf state right now, do you have to also deal with Iran, because it's a huge problem for your economy given what's happened in terms of strikes over the last 6 weeks, or are you actually more anti-US than you were before?
Well, clearly, the Gulf states are looking at this and seeing their business model threatened. There's going to be a persistent risk premium until you actually have regime change. So, and I think, and they tried to improve their relations with Iran before. We've seen this a couple of years ago, after the Trump administration failed to protect them. So they are asking themselves some hard questions right now, and that's why also the risk of escalation is not gone, because as long as this regime stays in place, this business model is threatened. So I think as it's clear, there's still a lot more uncertainty, even though the hot phase of the war, the aerial bombardments, is more likely over than not. But as I said, the more the nuclear issues gets muddled into this negotiation, the higher the escalation risk.
Anna, thank you so much. As always, Anna Rosenberg, there, head of geopolitics at the Amundi Investment Institute. Coming up, the dangers to the global economy from both inflation and deflation. We'll discuss that with Dambisa Moyo from Versaka Investments. That's coming up next, and this is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Great. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump signals he's unlikely to extend a 2-week ceasefire with Iran that's set to expire in 2 days, with negotiations to resume in Pakistan. Apple reveals that John Ternus will replace Tim Cook as chief executive officer after 15 years in the role, which saw the company become a $4 trillion business. Plus, the German chancellor slams hostile tactics in the banking sector. We discuss the pursuit of Commerzbank. We just spoke to Andrea Urchel, the UniCredit chief executive. Now, the UK Prime Minister Keir Starmer remains under intense pressure over the appointment of Peter Mandelson as ambassador to the US. A top civil servant, Ollie Robbins, who was fired by Starmer over the scandal, is testifying before the Foreign Affairs Committee. So there he is speaking. Robbins saying he was pressured by the Starmer office to appoint Mandelson. I think actually he said that he felt the pressure to appoint him. Starmer's office had a dismissive approach to vetting. Now, as we wait to see if Iran and the U.S. will resume peace talks, the economic consequences of the war continue to spread. My next guest says it's a rare moment with powerful forces pulling prices in opposite directions. With us now is Dambisa Moyo, principal at Versaka Investment. She's also been appointed an honorary fellow at Oxford University and recently joined the Adam Smith Lecture Series at Panmure House. So, Dambisa, first of all, congratulations for everything that you do. But it's just a very, very unusual moment in time where everything seems in flux. Are we spending enough, long-term attention to what AI does to inflation, deflation, and jobs?
So I would say that this is a very unique time because most business leaders and policymakers haven't had to contend with the issue of inflation since the COVID era. And we haven't really been thinking about deflationary effects, although there has been some discussion about what that might mean longer term. I think what I've been thinking about and writing about recently is the fact that in the near term, so think about the next 6 months to 9 months, we're really facing a lot of inflationary pressures, largely catalyzed by the Straits of Hormuz and the issues around disruptions from energy, but fertilizer, as well as inputs such as helium to semiconductors. Obviously, food production will also be impacted in that respect. That's the inflationary piece. But then longer term, there's a question around deflation, which will be driven by AI. And there's a wonderful chart that has shown that over time, technological changes for consumer goods, telephony, transportation have declined in eras of technology. And this was no doubt going to be quite similar, and that has deflationary impacts, which have effects on bottom lines. I mean,
what I love is that you also, try and find a solution for this. It's not only pinpointing to the problems. Again, whose job is it to make sure that their workforce are ready? You sit on a number of boards. Is it chief executives, or is it up to the governments to first understand the real long-term consequences and also make sure that the workforce is adapted?
So the AI supercycle is absolutely another opportunity for organizations, private businesses, as well as government to come together to try and solve a structural problem that's impacting prospects for economic growth, prospects for living standards over the long term, and then also with knock-on effects for society and how we live. And I think that whereas traditionally we've been working in different pockets, so as a member of the House of Lords, public policy is busy feverishly thinking about this issue of AI in terms of joblessness, in terms of taxes, in terms of what this means for the welfare state. But at the same time, if on corporate boards, we have to think about not just the short-term benefits that might come from right-sizing an organization, but longer-term, the Henry Ford quip of who's going to buy your products. And we have to think about what's the role of corporations in a broad sense in a world where job diminution has become quite popular. So that balancing act is definitely something that is calling for business leaders as well as political leaders to come together to think about what does this look like, not just in terms of where the equilibrium will be longer term, but how do we transition through these challenging periods.
Dempsey, I mean, is there a dislocation? What I like, you're a big thinker, and actually you put it kind of very simply in the sense that there are these two powerful forces, and they're opposing forces, right? One is AI, and the other one is geopolitics.
Yes.
I mean, this means that we have a very complex world. Where are the dislocations? What are we not thinking about?
So the interesting thing about geopolitics is that there are a number of studies that have been done that say geopolitics generally does not affect the markets. And really what affects the markets when there is some kind of a geopolitical incident is whether or not the geopolitics will affect the path of interest rates. And I think that's an important piece because there have been plenty of things that have happened that you might think would alter the markets, and maybe the VIX will move or there'll be some changes to the 10-year rate. But really, over a long period of time, it doesn't really matter because it has not altered the path of interest rates. In this particular instance, vis-a-vis the war in Iran, we know that there's a 20%, for example, disruption to the supply of energy because of the Straits of Hormuz are disrupted. And that's really quite material because in the past disruptions, the disruption to supply has only been as much as 7%. So this is a really big impact. And we do expect to see that flow through. On the other hand, with the AI aspects, even if you think of energy and fertilizer costs and costs of helium, etc., really eating into margin in the short term, there are longer term questions around what AI will do to business models, what will it do in terms of even deflationary effects and how that might impact debt and the path of interest rates. So I really think about the interest rate being a very important proxy for how we should be thinking about the longer term effects, both of sort of short-term effects of inflation, but longer-term effects of deflation.
Do you think about debt at all? I mean, again, 2020, COVID, 2022, it's the Russian war against Ukraine, energies all over the place. And we have, the Liberation Day with all the trade concerns last year, and this year is the war in the Middle East. And then you have these underlying kind of like AI issues.
Yes. So I do think about debt a lot, and I think many people do. Obviously, the interesting piece is that it's moved from our concerns in the financial crisis of it being on household balance sheets to now government balance sheets. And there's no doubt about it that the debt problem is not only big, it's also growing. I mean, we just saw in the last week or so that the UK government, or certainly Bank of England, was struggling to, struggling might be too strong a word, but certainly was had to pay up to issue debt. And I think we're going to see a lot more of that. And there are deeper concerns, the shortening of bond maturities for governments, thinking about what AI might do, and deflation could really increase on a discounted basis, increases the amount of the liabilities. And most of all, I would say, without the prospect of a growth, the question is, how do you get out of this debt burden? And I think that's really where the issues lie.
I mean, do you really see a difference between the countries that have energy access and the ones that don't? If you're energy dependent, broadly, you'll be okay, and the ones that don't will be, I think, have structural issues.
We're kind of seeing that now at a very, very, very early stage, because in many respects, I feel like the United States has not yet felt the full throttle of even the disruption in the oil prices. I mean, oil trading as much as over $100. Today it's a little bit off because of the prospects for some resolution. But if you think about it, the concerns around demand destruction, or even policies that will put on a windfall tax or will ration access to food and energy, those types of implications have already started to come to in Asia. There are concerns about that coming into Europe. So I do think longer term we are going to see this become an issue, broadly speaking. But for now, I think there are some countries that are more energy independent, such as the United States, that are somewhat ring-fenced from these concerns.
Dempsey, I mean, going back to AI, does the U.S. have a natural advantage? I mean, they have all the AI companies, right? It also means that their banks can actually test the models much better than maybe European banks. It means that they understand how it impacts their economy maybe more than Europe. Is that true and fair?
So I think superficially, yes. I think there are many things, a confluence of factors that make the United States very attractive. It's got the innovation. It's got the energy dependency. I mean, there are some issues around that, but it will continue to evolve. It has talent, and it has deep capital markets. I mean, I think a lot of that is very sort of bitty in the European context, and which is quite funny to watch your earlier segment around Europe and the reaction towards a long-standing debate about whether Europe can be more integrated in terms of capital markets. But I think that handful of things public policy that's much more interested in investment rather than risk mitigation. There's a lot of things that come together in the U.S. versus European context that make the U.S. a standout winner. And we see it not just in GDP numbers in terms of the U.S. doubling, or certainly being double the size, roughly double the size of Europe today, having been the same size of GDP in 2008. But we also see it in terms of valuations, in terms of liquidity in the markets, IPOs. I mean, it goes on and on. So I think it makes it a standout.
Yeah, it's a standout, definitely, on more than one metric, as you say. Dambisa, thank you so much for joining us. Dambisa Moyo, principal at Versaka Investments. Now, Mistral AI's chief revenue officer says the company has evolved to become a full-stack platform. I'm losing my voice. There's so much news out there whose advantage lies in customizing AI for enterprise workflows. Now, she says revenue is being driven by large global clients deploying tailored models across industries like finance and manufacturing. Well, I spoke to Marjorie Yanovitz about the French firm's global ambitions.
Over the past couple of years, the company has evolved quite a bit to be a full-stack AI company that provides frontier AI models, but also developer tools all the way to apps and compute. So we are offering a vertical stack between model, intelligence, and applications, whereby what we offer to enterprises is the ability to customize the models to their IP, to their tooling, to their knowledge. So we believe that, of course, being frontier AI is important, but what's even more important in order to really drive return on investment in the enterprise is the ability to customize the models to the enterprise context. And that's really how Mistral has become very, very known over the past couple of years, driving value in the large enterprise globally.
So, Marjorie, what's your biggest source of revenue right now, and how are you planning to grow it?
Yeah, our biggest source of revenue right now is very much enabling the large, I would say, enterprise transformation with very big accounts globally. We sell our AI Studio together with AI Forge, which is a tool we launched a couple of weeks ago to enable customization, as I mentioned. All those tools are really able to be deployed everywhere, on the edge, on-prem, in public clouds. And most of our revenue comes with really all those toolings combined with our forward deployment engineering services to really enable multiple use cases in very, very large enterprises in financial services, manufacturing, and public sector. Our revenue comes from all those components combined. And we expect that to continue to grow globally.
And so, you've given us there some of the top use cases. What else could you look at, given also Anthropic's traction has really been driven by these coding agents?
Yeah, so coding is, of course, very important. We also see multiple use cases that are really enabling the transformation in the large enterprise. One of those use cases is very much all around the complex workflow transformation. For the past couple of years, a lot of companies have been struggling to see the value of AI, and it's very much because the models were not adaptable enough to the complex environment of those enterprises. So complex workflow transformation is definitely for us a big winner in the sense of larger enterprises in financial services, for example, trying to transform their KYC process. In manufacturing, we see a lot of enterprises that are really trying to improve defect detection as a complex process. So beyond coding, being able to really adapt the model with the data of those enterprises and enabling them to transform their back office process is very important. Another use case that's top of mind for many organizations as well is a revenue generating use case, being able to really adapt the models to really build opportunities with things that were not possible to do in the past. We custom develop models to language, domain and culture. You may have seen some exciting announcements, for example, in Asia, where we customized models for healthcare data, knowing also to speak fluently Southeast Asian languages, and that enables really use cases that were not possible to achieve in the past.
Would Mistral offer cloud services to other companies, for example, from its data center?
Yeah, so right now we really go wherever the data of the customer is. It means a lot of our deployments are on virtual private cloud, on premise, and also on the edge. But our willingness is very much to deploy customers in our own cloud as well, with Mistral Compute that we released a few months back. That's also linked to an acquisition we made recently with a company called Xauusd, which purpose is going to better enable cloud deployment on our own compute services.
I was going to ask whether you had access to Anthropic Mythos and what you made about the cybersecurity concerns.
Yeah, we're starting to see quite a bit of cybersecurity use cases at Mistral as well. A lot of companies are asking us to really custom develop model and helping them with use cases that are specifically targeted at cybersecurity overall. I have 7 years of cybersecurity myself, so I'm very glad to see Mistral getting into the cybersecurity side of things, customizing models to better enable really safety in the context of AI.
And have you been able to play around with Mythos?
So being a chief revenue officer, I haven't, but we see a lot of our customers that are playing around with it a little bit.
Well, that was Marjorie Janowitz, Mistral AI's chief revenue officer. Now, coming up, Jimmy Muchachetre, the senior equity analyst at Investec. We discuss UK and global equities. That's coming up next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
UK unemployment has dropped unexpectedly in February. It comes as the Prime Minister, Keir Starmer, faces more scrutiny over his controversial appointment of Peter Mandelson as U.S. ambassador, with fired civil servant Ollie Robbins given public testimony in the Commons. Well, let's discuss the UK and the macro outlook with Jimmy Muchachetre, a senior equity analyst at Investec, and John Stepek, author of Bloomberg's Money Distilled. So thank you both for joining us. John, let's just start with the UK, because it feels like we've been saying it's crunch time for a little bit for Keir Starmer. Yeah. But I mean, in how much trouble or hot water is he now? Whether he knew or not, he should have known about what his ambassador to the US was up to.
Yeah, no, absolutely, and I think that's the plainest fact about this. I mean, the conversation with Ollie Robbins today, I was watching some of the select committee hearing before we came in, and it's ongoing just now. And I would say, to be fair, I don't think there's not an obvious smoking gun there in terms of the processes and be able to turn around and say that, oh, this definitely happened or this definitely didn't happen. But that kind of doesn't matter. It really is just another straw in the camel's back. Now, I think what will probably happen, the question now is not so much, do people want Keir Starmer to stay or go? I think it's fairly clear they would like him to go. The question is, can the Labour Party actually get itself in shape to do that? And I suspect that we're still looking at the May local elections as being a trigger for that. Because at the end of the day, we're 3 weeks away from them. So why would you make a move now? The people who might want to line up to replace him will be getting their soldiers in order, and then they'll make their move after May the 7th if they make a move at all. And I think that's the kind of big question.
No.
Whether that matters for markets is a slightly different issue, I must say.
I guess it depends who comes next if he does go,
yeah.
Right? Jimmy, overall, I mean, there's a lot of, geopolitics is dominating everything. But the markets are quite optimistic. I mean, they seem to just want to look through these tensions.
Yeah. That's a good thing. The markets are forward discounting mechanism. And so they priced in the war before it started, when there was the posturing in the Gulf of Oman. And they're doing the same thing now. But part of it is also that the shock factor lessens over time, the sting lessens over time. We keep getting the same headlines, the same, is this happening, is this not happening? And over time, it's got less impact. And so the market moves on.
I'm surprised because no one's telling me that we're going to go back to normal. So, we talk about ceasefire, better position, we're going to be in a better place, but no one's saying, well, we'll go back to what was going on in January in terms of the Strait of Hormuz.
I think that is true. That is true. The Strait, as it's showing now, there are so many stakeholders at place that something needs to happen. We probably won't go back to, because if you're Iran, you've suddenly discovered this power that you didn't know you had. But it's interesting. It's also happening in AI, where there's big change, but it's never going to go back to where it was before.
Yeah, which is why when we're speaking to Dumbies about these two opposing forces, right, it's AI and geopolitics, and they're not cancelling each other out, but one is deflationary, the other one is inflationary. How much trouble is that for the UK, especially on the energy front, and with this layer of political crisis?
Oh, I mean, as far as the UK goes, I mean, I guess we're a sideshow with this. I mean, I think it's really interesting what you say about the market having priced in Iran, and I'm sort of thinking, but they're not discounting anything. It's like those stocks in the US are at record highs. And I think what is perhaps at work slightly is both AI, but also the fact that the bears have been wrong for so long on everything. And now we're at the point where the market needs to see proof. So the market needs a show-me moment from the bears for the bear case. And that really won't happen unless earnings start to show some deterioration as a result of the rising energy price. And I guess the other issue is that we are less oil intensive than we were in the 1970s. So at the end of the day, $100 oil price, and I realise the oil price is very different depending on what you're actually talking about. But at these levels, it's not as catastrophic as it kind of needs to be. So as far as the UK goes, I mean, the UK's real problem is that we don't have governance, and we kind of need governance because all of the problems we've got boil down to things like planning rules, energy usage rules, which are all things that are kind of set by government and need to be somewhat unwound by it. And instead, we've just got our politicians having these ongoing psychodramas, as has been the case, I guess, for about 10 years now. Yeah. And the problem is, in 2024, people thought that was over, and in fact, it's just been exactly the same. So we're going to get one bad Prime Minister replaced by another one, or not.
Yeah.
And I guess maybe markets will just get slightly used to ignoring us.
Yeah, Jimmy said, the fear of missing out is strong. The power is strong in the markets, and that kind of also is defining it. What happens to dollar and gold?
So our view is that the de-dollarization is more of a structural trend, partly related to the fiscal situation in the US, which keeps getting worse, by the way. And this war does not help the situation. But also it's also the uncertainty around the political side of things. In fact, what's the policy impact that we're going to have. Today, we're going to have a testimony from Kevin Walsh. And one of the questions you have to answer is, does he work for the Trump administration or is he independent, right? So all this uncertainty means that the market participants like us who are long-term investors, we're looking to diversify. We want to bet on a sure thing over the long term. And this uncertainty means that gold will continue to do well because, the de-dollarization trade is more of a structural one.
Jimmy, I keep on getting reminded. Walsh is just one vote. Right,
100%, yeah, out of 12.
So it matters in terms of psychology, but again, the market is kind of anything that the president of the U.S. does that would suggest he's hurting at the central bank independence is ignored by the markets.
Yeah, 100%. I think the key for the markets, from our perspective, is the independence of the Fed, of which the Fed chair is one person, but one of the most important. He gives the casting vote. He can help align some of the other Fed members, in a certain direction. And apparently Kevin Walsh is not one for forward guidance. Yeah. So if there's less forward guidance, then he can work more in the background, if you see what I mean. But for us, it's more about certainty. And I think that's what the market is all about, is what can we get certainty for? And I think that's the part of the conundrum which you mentioned, John, which is the market all-time highs with all this uncertainty. How does that work? Well, if you look at some of the biggest companies in the world, they've got certainty in terms of pricing power. So give me $150 oil, will pass through that cost. The ones that haven't got the pricing power will suffer.
Okay, in 20 seconds, I live in the UK. Is my margin going up or down?
Oh, God.
I know, 20 seconds. There's nothing like a curveball.
Depends on the Iran war, basically. To be fair, I think interest rates in the UK are pretty high, and the Bank of England would rather cut them. I don't think they're going up, basically.
Okay, I love this. John and Jimmy, thank you so much for joining us. Jimmy Muchachatere, a senior equity analyst at Investec, and Bloomberg's John Stepping. Coming up, an interview with Ukraine's Deputy Prime Minister. That's at 10:15 a.m. London time. Again, a lot of the markets are looking at two things. So the market is pretty much ignoring what's happening in the UK, although there is a big story with the top UK official saying he felt pressure to approve Peter Mandelson, but they're looking at Iran. And again, we're a little bit in a wait-and-see situation. S&P futures gaining 0.2%. Up next, it's Bloomberg Brief, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Peace talks hanging in the balance. Oil drops as markets await the fate of the ceasefire with Iran. Apple appoints a new CEO, hardware chief John Timus set to replace Tim Cook in September. And President Trump's Fed chair nominee Kevin Warsh heads to Capitol Hill for a confirmation hearing. So let's take a look at these markets. Oil just off its highs of yesterday. We're still waiting to see what actually happens with these Pakistan talks and if they go ahead with delegations from both sides, right? But Brent crude is around the $95 a barrel mark still. New York crude at 88 and change. Not too different from where we were 24 hours ago. Interestingly, Ed Yardeni out with a new call today saying that we should overweight energy in the S&P 500 after last week's sell-off. He's recommending a 5 to 10% portion of your portfolio should be now in energy. The 2-year yield just up a basis point at 373.50. If we look at futures this morning, remember we had a massive run up. It looks set to continue, but maybe not as enthusiastically as the last few days. The dollar index continuing to strengthen though, which is a major sign. Nikkei pointing out today as well that the Bank of Japan may hold off on an April rate hike. That had been widely anticipated by the market, and that they may delay making a decision now until June. So lots of things percolating in the background, but obviously the main stories today are the AI investment, the Kevin Warsh testimony, and of course whether these peace talks take place. So let's dig into the belly of this market, if you like, and see what's moving pre-market. We'll go over to London and Chloe Malley. Chloe.
Good morning, Bonnie. Apple is a little weaker this morning after announcing its new CEO. So the head of hardware, John Turnus, will be replacing Tim Cook, who will move on to the role of executive chairman. And some analysts have flagged that the timing of this transition may be raising some questions for investors about the strategy going forward for Apple. And therefore, that might explain that slight weakness in the shares in pre-market that we're seeing today. Moving on to another tech giant which is doing much better, and that is Amazon, which has said that it will invest another $5 billion into Anthropic and may inject $20 billion more as well over time. So this is an expanded partnership that's seen as a really positive development for the company and really showing this growing demand for enterprise products. We're up about 2.7%. And finally, Alaska Air is down in pre-market this morning after suspending its guidance because of higher fuel costs. So this really echoes what we've heard from other airlines, including EasyJet just a few days ago, and shows just how much pressure this airline industry is facing because of the war in Iran.
Absolutely. We'll be watching for earnings from United later. Chloe, thank you so much. Chloe Malley there. And coming up in this hour, an exclusive conversation with Ukraine's Deputy Prime Minister. We'll also have more on markets with Kevin Mann of Hennion and Walsh. But first, President Trump says he will unlikely extend that ceasefire that is set to expire Wednesday, telling Bloomberg News, quote, "I am not going to be rushed into making a bad deal. We've got all the time in the world. I'm not opening the Strait of Hormuz until a deal is signed." According to people familiar, Iran is sending a team to Pakistan. However, its parliament speaker writes on X, "We do not accept negotiations under the shadow of threats, and over the past 2 weeks we have prepared to reveal new cards on the battlefield." Let's get to our team coverage now with Jumana Brzezinski in Dubai and Laura Davison in Hong Kong. So again, the rhetoric is a little bit confusing. We have black and white rhetoric on both sides, right? But Jumana, let me ask you, the ceasefire has held for the last 2 weeks. There is room for hope and maybe some signals from Iran potentially that they might actually send a delegation?
Well, that's the big question. And so far, there has been no official confirmation that the Iranian delegation has arrived or is planning on even attending these Islamabad talks. And we know from Islamabad and the messaging that's coming through from Pakistani media that preparations are underway. There are thousands of security officials who are ready to host these talks. There are parts of the city that are in lockdown as well. So the expectation is that the talks are going to go ahead, but yet we are awaiting final confirmation from Iran that they will attend. Now, I will say, in the last 24 hours, the language that has come through from some of the key players, especially on the negotiation side, suggests that they are hesitant to participate, and namely because the U.S. naval blockade is still in place. You had the likes of the Iranian Speaker of the Parliament, Mohammad Ghalibaf, who led the last round of negotiations, saying that Trump seeks to turn the negotiating table into surrender. We do not accept negotiations under the shadow of threats and have prepared new cards for the battlefield. This has also been echoed by the Iranian ambassador to Iran, who was saying that Iranian ambassador to India, I should say, who said that they will not surrender and they will not participate in discussions under the threat. And here they're particularly referencing this U.S. naval blockade and the fact that it is still being implemented. And so the thinking from here on, perhaps in the coming hours, is the U.S. has to make a decision as to whether they go ahead and continue with this naval blockade at the risk of torpedoing another round of discussions, or they temporarily lift it to give diplomacy a chance. And I should say, to come back to your comment, the ceasefire does expire tomorrow evening. It was supposed to expire tonight, but President Trump told our colleague Jeff Mason yesterday in a phone call that he was pushing it back by 24 hours, perhaps to give this window of diplomacy a chance.
So, Laura, Xauusd mentioned what President Trump said. Can you give us any more detail on what we might know might be going on behind the scenes?
Yeah, this has really sort of been a very confusing period. The White House has said that J.D. Vance, the vice president, will go over to lead the U.S. delegation in these talks, along with Steve Witkoff and Jared Kushner, who have also been involved. But they have not yet left the U.S. It'll take them, 12-plus hours to get over there. So there's a lot that can happen, in terms of something coming together quickly, or perhaps falling apart together quickly if the two sides aren't seeing eye to eye. Trump has continued to express optimism that a deal could come through, but we're working with a very tight deadline. Even with Trump extending that deadline essentially by a day, that doesn't really give a lot of time for the two sides to both get on site, get in a room, and hash out some sort of deal. Trump has continued to project that, that all the points that he wants of Iran giving up its nuclear program, opening up the Strait of Hormuz, are part of this deal, and Iran has continued to insist that they have not agreed to any of those key points. Meanwhile, Trump has continued to say that if a deal is not agreed to, that bombs will go off on Iran and he will pursue a military attack. So this is a very, very tense moment on all sides.
Xauusd, 3 ships did attempt to cross the strait. Do we have any update? Did they make it through?
Yeah, so one of them is of particular interest because one of them is an Iranian-linked vessel that has been carrying cargo, so it's actually laden. And from what we can tell this morning, and again, it's difficult because what these boats do is they turn off their signaling after a while. But from what we understand, this Iranian vessel did actually make it through the Strait of Hormuz into the Gulf of Oman, and then it switched off its signaling unit. So Iranian state media are portraying this as a win in that the Iranian-linked vessel has managed to navigate through the U.S. naval blockade. And then there were 2 others that we were monitoring as well, not linked to Iran, that seemed to have traversed the strait too. But the bottom line is there are 2 blockades essentially still in place. And while last week we started to see perhaps a higher number of vessels trying to transit through, anything from a dozen to 15 a day, now the last couple of days we are down to about 2 or 3 that have gone through, really not that many. And especially after CENTCOM seized that Iranian-linked vessel on Monday morning, I think that sent a lot of alarm bells through the industry, because the concern is not just whether they get the green light to pass through, but whether actually it is dangerous for the vessels to do so. So yes, the strait is still a major point of contention as we head into these potential Islamabad talks in coming days.
Laura, I do want to ask you about something else that's happening in Washington today as well, and that is the Senate Banking Committee speaking with the potential Fed chair, if he is confirmed, Kevin Warsh. What should we expect questioning to be like?
Yes, this will be a very dramatic hearing. Warsh will have two audiences, essentially the senators who are in the room who will need to vote on his confirmation, but also at the White House and Donald Trump. So he'll need to show both enough distance from the White House, show that he believes in Fed independence and sort of the academic rigor behind his case for interest rates cuts, while appealing to senators, but while also not making Trump angry. And so this is going to be a very, very difficult thing for him to navigate here. But really, the big thing that's going to be hanging over this hearing is this ongoing Justice Department investigation into Jerome Powell, the current Fed chair. This is essentially the thing that is keeping Warsh from becoming Fed chair. There's a key senator, Tom Tillis of North Carolina, who says he will not advance Warsh's nomination until this probe is resolved. Trump has said he wants to continue this. This really sets up a standoff that even if the confirmation hearing today goes swimmingly, Warsh could be waiting for weeks, if not months, before he's able to advance and actually take over at the Fed.
Well, the bond market's certainly looking out for that testimony, Laura. Thank you so much. That is Laura Davison there. And also thank you to Jumana Bersetti. In Cupertino, meanwhile, Apple announcing a new CEO. Head of hardware engineering John Timus slated to take the helm in September as Tim Cook stays on as executive chairman, stepping down, though, after a 15-year reign at the head of the tech giant. Matt Bloxham of Bloomberg Intelligence joining us now. What will the new CEO's priorities be, Matt?
Yeah, I mean, I think this is kind of very much perceived as the kind of continuity candidate. So I think clearly hardware is the core of Apple. It accounts for over 70% of revenues. He's coming from the hardware engineering group. So I think there'll be a huge focus on product excellence. I think obviously there's a couple of big launches coming. Firstly, the foldable iPhone. But I think there's going to be a whole bunch of wearables, including kind of vision, like a bit like the kind of the Meta glasses that's coming out. So I think there's going to be a focus on product excellence, but perhaps also some more focus. We've seen some big hits from Apple in recent years, particularly things like the iPods. But there's also been a few misses, like the vision glasses. So I think there's going to need to be quite a bit of focus on what the right product options are. And then on top of that, there is the AI integration. Obviously, there's been a kind of a mixed review about how successfully Apple has been integrating AI into its products and the overall AI software platforms. I think that's something he's going to have to get really right, because clearly going forward, AI is going to become an increasingly integrated part of every product they have to put onto the market.
Yeah, absolutely. Meantime, we're also hearing that Amazon is investing $5 billion in Anthropic. Amazon already one of Anthropic's biggest backers. It might even move that to $20 billion over time. How much is too much of this, Matt?
Yeah, well, I think clearly Amazon is, kind of hedging its bets to a degree here on the AI trade. They early this year made a much bigger investment in Anthropic's rival OpenAI, $50 billion. So I think they kind of want to make sure that they're kind of covering all bases. Obviously, they've got a huge cloud services business, so having strong partnerships with these AI businesses is an incredibly important way to kind of bring volume onto that cloud platform.
And then we're also hearing that Project Prometheus is nearing another round of funding, $10 billion. It was valued at almost $40 billion, Matt.
Yeah, so Prometheus is an interesting project because it's essentially trying to bring AI into the physical world, and particularly in terms of physical engineering. I think there's already a lot of automation and technology involved in engineering and manufacturing, but there's clearly still a huge amount that AI can do to boost that. So I think this is a strategic bet that it's going to be a big, big market over the mid to long term, and they're trying to get a leading position in that. So it's an interesting thing to watch for sure.
Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. President Trump's super PAC raised almost $36 million in March, part of the $1 billion war chest he and his party are building ahead of the midterms. Billionaire Diane Hendricks, who owns the biggest distributor of roofing materials in the U.S., is the top donor, giving $25 million. In comparison, Democrats have $261 million in their war chest. Unicredit CEO Andrea Orcel says he'll put the pursuit of Commerzbank on hold if his takeover bid fails to get him control. He spoke with Bloomberg's Francine Lacroix.
For the time being, I signaled clearly yesterday that after trying this other step to bridge the gap that exists between us and Commerzbank, i.e. launching an offer, If we do not reach control, we will take a pause and we will focus on other topics that we have internally.
Estée Lauder is seeking $5.9 billion to fund its tie-up with Spain's Puig. JP Morgan has been hired to structure the package, which would fund a cash-and-stock takeover for Puig, which owns Carolina Herrera and Charlotte Tilbury. JP Morgan and Estée Lauder declined to comment on the reports. Coming up, an exclusive interview with Ukraine's Deputy Prime Minister on the country's plan to get to peace. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's get straight over to Brussels now, where Bloomberg's Oliver Crook is standing by with an exclusive interview. Ollie.
Yeah, that's right, Vani. I'm here with Taras Kachka. He is the Deputy Prime Minister of Ukraine with a number of responsibilities, including the main responsibility of integration within the European Union, which is obviously a very sort of present topic right now in Brussels and, of course, in Kyiv. So, Deputy Prime Minister, thank you so much for joining. Before we get into the enlargement conversation, I'd like to have a conversation with you about this oil pipeline, whether or not the oil is flowing currently from Russia through Ukraine to Hungary, which is the precondition Orban has sent to release that 90 billion euros. What can you tell us this morning?
So that I'm here in Brussels, so I'm not actually, my hands are not with oil, so that's why I didn't check it personally. But the letter of our president was very clear, so that in reply to letter of Presidents von der Leyen and President Costa, or that the pipeline will be fixed in by estimation last decade of April. So that's why we hope that our company will do it like literally like today, or we all expected this to be done as soon as possible, because it was also our promise to fix it by this time period. Yeah, so that's why let's look for an announcement from company, from our Minister of Energy. But this is our very primary task, as was indicated in the letter of course, President.
Yeah, and of course, and we've heard from President Zelensky when we spoke to him back in November. He said that this EU loan is a matter of survival for Ukraine. So what is your timeline in trying to get that money, that first tranche of money, and when is it necessary by, just so we can impress very clearly on your partners when Ukraine needs that money by?
Our plan was to have these monies in April, so starting from Q2. So that's why we're already beyond the deadline. So we have some kind of financing under current instruments. We speed, make it faster, the payments, and we thank European Commission on considering these more flexibilities for our current Ukraine facility instruments. But we need this money as soon as possible because this is a first credit that has essential part of it is for war needs. So that's why our military spending, especially on armaments, on drones, are literally matter of life and death. So that's why we need this money as soon as possible. The more or less realistic scenario was June. We do all our best, and we hope that member states support us, that we'll get this money sooner.
And of course, that is very critical, not just in financing the war in Ukraine, but also sending a strong signal to Russia, saying that we're in here for the long haul, we're in here for the long fight. Part of that strategy as well is your main portfolio, which is joining the European Union. We have seen some sort of proposals that have been circulating over the last couple of days and weeks and indeed months. We've heard most recently from the French and the Germans who are proposing a sort of associate membership of Ukraine into the European Union, which seems to sort of give a sort of titular status without any of the benefits. Is that something that is at all appealing to Ukraine?
It's, that when you discuss this here in Brussels, but to the global audience, it resonates in different ways. So something that is like delicate, prepared for discussion within Council can resonate in the messages that we got yesterday in the article about these documents. So our goal is to join the European Union as soon as possible because it's like our dream as Ukrainian society, but as well this is also a part of geopolitics about security guarantees in their virtue, in their essence. So that's why for us it is important to say that we are ready to comply with all requirements of the European Union as fast as possible. So we got the benchmarks from the EU. Now we need to open the cluster. So that's why by the end of this year we can really comply with majority of requirements.
And so give me your most optimistic timeline in joining the EU, and how does the absence of Viktor Orban now bear on that?
Yeah, so that's why continuing this topic about clusters is that if we have an ambition to comply with all the benchmarks presented to us by member states, then we believe that it is possible to sign the Treaty of Accession next year. That's why we are talking about joining the next year, signing Treaty of Accession next year, and then everything will depend on ratifications that can also last for several years. So that's why our debate between member states, so that French proposal or French ideas, not proposal, because it was like general suggestions leaked to media, or German ideas, or our ideas. We also prepared our non-paper, which is more ambitious. They all about the same, how to bring Ukraine as fast as possible to the European Union. But for us, it is important that this scenario is based on speeding up, on absolutely serious classical accession, not creating any alternatives as it was perceived from yesterday coverage of this topic.
Yeah, and there's been some research done in how much of these sort of steps taken that have to be taken have been taken by Ukraine. I've seen a report that says basically only about 10% has been put forward.
Thank you, but I will correct you from the jump. So that it was a paper about like 10 points we agreed between me and Commissioner Kos.
Yes.
It is not about overall assessment. Overall is more expensive.
So what percent would you give to it?
Now it jumped already from last week to the 40, I think, because we adopted 2 laws from this list, and also we are going to submit anti-corruption strategy. So that's why we are moving very fast.
Right, and you say that your priority is to be a full member of the European Union. That may not come with all of the privileges on day one. That is something that will be negotiated as well. Where are you willing to negotiate? For example, the agriculture has been a very sort of big focus for many nations within the European Union. Could you see a delay to sort of cap funding, for example, in order to gain accession?
It was from the very beginning very clear. We stated even in our paper that the interest of joining the European Union, as like for Iceland, for example, they believe that they need to join the European Union now because of geopolitical circumstances. And our interest to join the European Union lead to the consciousness on our side that we cannot wait for years to agree all modalities of joining the CAP. We propose from the start that we may join CAP later, maybe eventually in like next generation, not the generation that is discussed now.
So
but
the next budget, you're saying,
yeah,
34.
So
Sure.
this kind of approach is possible, but let's start discuss modalities.
And just to have the sort of a limit, we have a little bit of limit on time. I'd like to get your appraisal of the war in Iran, the impact that it's having on the battlefield within Ukraine. There have been sort of reports about delays to delivery of hardware through the Pearl program. What can you say about that? Does that war need to end before we can really talk about serious peace negotiations that involve the United States?
I want to highlight one thing, and it was highlighted by our president during his visit to the Gulf, so that to share our lesson that you can save the precious missiles for Patriot by using more efficient drones that we have. So that's why for us it is important to ensure that we are not artificially create the deficit of missiles and so anti-missile systems that are essential to counteract ballistic missiles, because Russia is now using a lot of ballistic missiles that can be intercepted only by Patriot or only by the systems that are still being developed here in Europe. So that's the message. I think that if we are coordinated, then we can be efficient in deterring all our enemies.
And we have about 1 minute left, so just very quickly, how do you appraise peace talks with Russia? Would you say that we're any closer today than we were a year ago?
A year ago, yes, but months ago, no. I think that intensity is definitely lower, but the problem remains the same. It is Russia that doesn't want to be part of negotiations, and that's why we need to increase pressure on Russia in order to force it to be part of negotiations.
Well, Taras Kachka, thank you so much for your time. That's the Deputy Prime Minister of Ukraine, giving us generously of his time this morning, getting a lot in that short period of time. Thanks very much, Vani.
Oliver, thank you so much. That is Oliver Crook there with Ukraine's Deputy Prime Minister. Coming up, we're going to be speaking with Kevin Mann of Henyon & Walsh. Retail sales out in 3 hours. Also, the dramatic whiplash in these markets. Brent crude just off its highs. New York crude down 1 3/4% right now, still around $88 a barrel. And gold also just off the $4,800 a barrel mark. This is Bloomberg.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Peace talks hanging in the balance. Oil falling as markets await the fates of the ceasefire with Iran. Apple appoints a new CEO. Hardware chief John Ternus set to replace Tim Cook in September. And President Trump's Fed chair nominee Kevin Warsh heading to Capitol Hill for a confirmation hearing. So oil off its highs of yesterday then, but we are still around $88 a barrel for New York crude. Brent crude around 95, roughly where we were at this time yesterday morning. All eyes on whether those peace talks will actually take place and if there will be an extension to the ceasefire or any kind of a deal, as President Trump says he is waiting out for. We're also going to be watching the Warsh testimony on the Hill. We may see a Treasury reaction to that. 373.71 is where we're trading on the two-year yield now, about a 50% chance of a rate cut this year. But if Warsh leans any more dovish, we may see a move there. And we are seeing futures higher today. Once again, a little bit of enthusiasm, an AI deal also in these markets. The US dollar index up about 0.2%. Worth noting as well that the Bank of Japan is now leaning towards keeping its policy rate unchanged next week, according to people familiar with the matter. Let's get to some individual movers now for some stocks to watch. Here's Chloe Melly. Chloe.
Good morning, Bonnie. We're seeing slight weakness in Apple this morning after the appointment of a new CEO. So the hardware chief, John Ternus, will be replacing Tim Cook, who just joins as an executive chairman instead. And so we are seeing a little bit of weakness there, with some analysts mentioning that there are maybe some questions around the timing of the transition. But this really emphasizes the identity of Apple as a hardware company. So we'll be watching out for any further movements there throughout the day. Moving on to Amazon, which is up this morning in pre-market after saying that it will invest $5 billion into the AI startup Anthropic and may inject $20 billion more as well. And so this expanded partnership is seen as quite a positive development there and really underscoring the demand for enterprise products, and therefore we are up. And finally, Alaska Air is the latest airline to be flagging the impact of those higher fuel costs on operations. So we had EasyJet a few days ago warning of losses, and Alaska Air last night suspended its guidance for the same reason. So this really shows the growing pressure facing that airline industry, with really no let-up in sight at the moment.
All right, Chloe, thank you so much. We are in the thick of earnings season, that's for sure. Stock futures back in the green as investors await for any update on those US-Iran peace talks. Joining us now is Kevin Mann, CIO and President of Henyon & Walsh Asset Management. Kevin, it's not just the Iran story, there's also the AI story in this market. And of course, we're getting more data today. Retail sales. Talk to us about the consumer. Is the consumer going to hold up in this environment?
Well, what we've learned from the big banks during this retail earnings season is that the health of the consumer is generally good. They continue to spend, and the banks aren't necessarily concerned that there's going to be a large amount of delinquencies with respect to their credit card balances. So that sounds good. Does that trickle through, though, into retail sales? Why are retail sales so important? Well, 70% of the economic growth in our country comes from consumer spending. And we all understand and appreciate the K-shaped economy that's developing. The upper end continues to spend. Institutions continue to spend on things like AI infrastructure and defense, and also, as we know, healthcare. But how is the lower end consumer doing right now? Are they continuing to spend? So I'm very interested and keen to see how that trickles into the retailers and retail sales overall.
Yeah, because it's basically tax refunds versus the higher cost of energy and so on down due to this war, right? The president needs to get some kind of a deal. There needs to be an extension to this ceasefire. Would you agree?
Yes, 100%. And I think that most investors have already looked past the war, if that's even possible at this point in time. Why would futures still be up this morning? They believe that the situation in Iran is going to ultimately be resolved, and now they're focused back on earnings again. They're looking back at AI and technology companies, and what a historic recovery we've seen for the stock market in recent weeks.
Well, speaking of which, I mean, we've had this massive rally, as you said, but it's global tech. Is there any reason for investors to be looking outside the United States, or are the issues facing tech right now and the AI trade, are they global issues?
I think investors should always consider adding international stocks to build a globally diversified portfolio. Certainly over the last 18 months, that would have benefited a lot of investors, as international stocks have outperformed U.S. stocks. Emerging market stocks have outperformed developed market stocks. But when you look at the AI trade in particular, everyone focuses on semiconductors and chips and software companies. Where I see greater value is in the infrastructure side, the power side, the memory side of the AI ecosystem. I think investors look to those areas. They're going to find a lot more attractive targets than they necessarily would if they just stuck to software, because software focuses on spending. I'm more interested in who's receiving the spending, not who's making the spend.
Give us a few names, Kevin. I know you have your eye on some.
I'll start with Sterling Infrastructure. They're known for e-commerce, construction, warehouses, distribution centers. Now they're involved in data centers. In terms of cooling companies, how about a company like Vertiv or a company like Modine Manufacturing? These data centers run hot and they need cooling. Then I think about power. Big old boring utility companies, right? These data centers today can't manufacture their own power, so they have to turn to the utilities of the states they operate within. NextEra Energy, which owns Florida Power and Light, which itself has 2 nuclear sites down in Florida itself. Memory. The AI revolution starts and stops without memory. When I think of memory, who do I think of? Micron Technology. Boy, do they have a strong
More room to run there?
More room to run there. You look at their forward PE right now, it's 8. That's how much we believe their earnings are going to grow from here, because of the insatiable demand for memory.
You know, a statistic that came out this morning, or Dan Curtis sent it to us, 25% of the tech index is basically overbought. Does that concern you at all?
It does if I was buying that portion of the tech index, but I still see great opportunities there. Take Taiwan Semiconductor, the leading chip foundry in the world with over a 60% market share. Look at their forward P right now. It's still relatively attractive. I think somewhere between 23 and 25. Now, that's not cheap, but it's not too rich either. So you have to look for the right opportunities that exist within the ecosystem and don't overpay here.
If you've decided, okay, I have some money in tech, I'm not going to put any more in because I just don't trust that part of the market and I want to look for other opportunities.
Yes.
Ed Yardeni out today saying overweight energy. Are there other parts of this market that you would be interested in?
One area that I'm very interested in right now, and I remain interested, and I was last year and I will be for the balance of this decade, is aerospace and defense. And certainly the conflict in Iran, the recent expedition of Artemis around the room reminds us of the need for aerospace and the need to replenish, upgrade, and modernize defense capabilities across the globe. If you follow the money, Bonnie, you'll see where those opportunities exist. NATO countries committed to spend up to 5% of their GDP to bolster their own defense by 2035. The European Union's committed to spend around $840 billion to upgrade their defense capabilities by the end of this decade. Who's going to get all that money? Likely the largest defense contractors in the world, and most of them reside here in the United States.
What would you do about the Treasury portion of your portfolios, Kevin?
I think why you have the treasuries in your portfolio in a lot of cases is for the income that they provide and the risk mitigation that they could offset to an overall stock-based portfolio. So you have to look at what your income objections are. Right now, I would look to extend maturity, extend duration in those portfolios, because if there's any movement that's going to take place in the yield curve this year, as of now, it's going to be on the short end of the curve. Of course, once Kevin Warsh gets confirmed as the new Fed chair, will we only get 1 rate cut this year, as the Fed told us? Will we get 2? Will we get none? I don't think we should expect that much from the Federal Reserve this year, and we may not need to.
You think there might be none?
There could be none, at most 1. I'm going to take the Fed at their word, but I'm most interested to see their new dot plot chart once the new chair takes position.
All right, well, we've got a little time before all that happens. Kevin, thank you so much. Much appreciate you coming in this morning. That is Kevin Mann of Hennion & Walsh Asset Management. Now to other top stories trending on the terminal this morning. Ukraine's richest man has bought a luxury apartment in Monaco for a record $550 million. It's the biggest known home sale in history, surpassing Nick Candy's Chelsea mansion purchase in London a few weeks ago. Billionaire Rinat Akhmetov used his holding company System Capital Management to acquire the 21-bedroom waterfront property. Alaska Air suspended its full-year profit guidance and forecast a deeper loss than Wall Street estimates for the second quarter. The fuel prices contributed to a volatile quarter marked by disruptions from rainstorms in Hawaii and civil unrest in Puerto Vallarta ahead of the peak spring break travel season. New York's Penn Station is getting more funding. The U.S. Department of Transportation is allocating $4.7 billion to renovate Penn and Washington's Union Station. The money will go towards streamlining passenger rail service, rebuilding bridge infrastructure, and other renovations. Coming up, President Trump readies VP Vance to leave for Pakistan for peace talks. More on that next. This is Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gurry.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The Iran war ceasefire set to expire in fewer than 2 days. President Trump says an extension is unlikely, while readying VP Vance to head to Pakistan for another round of negotiations. The president told Bloomberg, quote, "I'm not going to be rushed into making a bad deal. We've got all the time in the world. I'm not opening the Strait of Hormuz until a deal is signed." Bloomberg Chief Washington correspondent Tyler Kendall joins us now. Tyler, what do we know about the Vice President going to Pakistan and who might meet him there?
Hey, Vonnie, well, at this point, the White House is saying that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are set to depart for Pakistan later today for potential talks, either later in the evening or tomorrow, as President Trump appears to have maybe given a little bit more time, saying that the ceasefire extends tomorrow, Wednesday evening, Washington time. But as you mentioned, he's also indicating that at this point, he is unlikely to extend that deadline any further. In fact, the White House has also ramped up the stakes, threatening to hit Iranian civilian infrastructure if a deal is not reached, though a White House official has outlined to us that the president's various comments on what could potentially happen if that deadline lapses is contributing to what the White House feels is strategic ambiguity heading into these talks. Now, our reporting indicates that the leader of the IRGC is pushing for a tougher negotiating stance compared to some of the political figures and leaders like Iran's foreign minister or the parliament speaker that seem to be more amenable to getting and reaching an accord with Washington. So still at this point, though, unclear exactly who the U.S. delegation is going to be meeting with amid uncertainty on whether or not Iran is going to send those diplomats. Though at this point, Vani, they haven't ruled out completely that they would refrain from the talks. So according to the preparations on the ground in Pakistan, it does appear that they are preparing for some sort of negotiations to go forward.
Yeah, absolutely, Tyler. But then also in Washington, a big day. Kevin Warsh has his confirmation hearing. What are we expecting that senators will be concentrating on?
Well, Vani, at this point, this is going to be the first time that we hear from the Fed nominee since his nomination. So I'm sure that the senators are going to want to ask him about what a Federal Reserve under his leadership will look like in terms of what he needs to see in order to chart the path for monetary policy. We also know Democrats have previewed that they are going to look a little deeper into Warsh's financial disclosures. But beyond that, we are expecting politics to really take center stage later today, if you will, because we know that looming large over this is the political backdrop of President Trump's pressure against the central bank. And at this point, Senator Thom Tillis is still maintaining that he will not vote to advance the nomination until the legal matter against Fed Chair Jerome Powell is resolved. And I can say I touched base with a senior aide to Thom Tillis yesterday who told me at this point the senator's position has not changed. And Vani, at this point, we know the administration is doubling down. In fact, a person familiar with the matter tells us that the White House has no intentions to let that DOJ investigation up, even after a federal judge last month handed the White House a potential off-ramp ruling that the subpoenas in the case did not pass muster to be issued. But still, at this point, officials say that they're going to appeal that decision.
Tyler, bring us up to speed with what's happening at the Labour Department. Laurie Chavez-DeRemer has now left amid this investigation that's been ongoing.
Right, so this was an inspector's general investigation into the labor secretary. We're now going to see the deputy labor secretary elevated to the top position in an acting capacity. But it's our understanding that this probe was following a flurry of allegations into that the secretary had an inappropriate relationship with a staffer, committed travel fraud, and was drinking in the workplace. Now, the White House initially defended Chavez-DeRemer, and she herself has denied these allegations, though we did see a number of disciplinary actions taken, including administration officials placed on temporary leave. But, Vani, this follows a recent slew of departures as we head into the midterms, including Pam Bondi and Kristi Noem.
Tyler, thank you so much. A lot going on. As always in Washington, D.C., that's Tyler Kendall there. Turning to technology now, Apple has appointed Head of Hardware Engineering John Ternus to succeed Tim Cook in September. Cook is going to stay on as Executive Chairman. He spent 15 years as CEO of Apple. Let's get more with Matt Bloxham of Bloomberg Intelligence. So what will Ternus's priorities be when he gets into the role, Matt?
Yeah, hi, Bonnie. So I think there's going to be two aspects to this. First, obviously, is to move Apple forward with the next generation of a range of hardware products. Hardware accounts for over 70% of Apple's revenue, so kind of really key to the future of the business. But the second part of it is how they better integrate AI both into those products and the overall proposition. And, you know, we've spoken a lot in the last year or two about, you know, the friction that Apple's been facing with their AI strategy. So I think those two things are going to be really critical for them. And obviously, as AI pervades across the kind of broader economy, I think there really is a big question about what the kind of future of devices are going to look like. And kind of Apple, I think for some, needs to definitely step up its game, be a bit more decisive and nimble with how it deploys those technologies to kind of make sure that they are kind of continue to be perceived as the kind of market leader in consumer technology.
And a tough act to follow in some ways, given the size of Apple
yeah.
now. Amazon investing more in Anthropic. Is there any amount that's too much, Matt?
I don't think so. I mean, we've seen Amazon and others, investing huge amounts of money into AI businesses. Actually, when you look at Amazon, spent $50 billion not so long ago upping its investment in OpenAI. So they, are making sure they have a big stake in the game in terms of the future of large language models and hedging their bets across different platforms. It's been a really successful partnership so far with Anthropic, with the Claude platform being served to over 100,000 customers on Amazon Web Services, and Amazon is committing to spend something like $100 billion Anthropic got $100 billion on Amazon capability over the next few years. So it's a kind of really important partnership.
Matt, as always, thank you so much. Matt Bloxham of Bloomberg Intelligence bringing us up to speed. Now to earnings. RTX set to report before the bell this morning with eyes on how the war in Iran is impacting results. We also, of course, get United later today. Bloomberg's Benedict Kamel joins us now. Let's begin with the defence portion of things. Benny, what will the defence companies tell us?
So we have a whole range of defence companies reporting this week. You mentioned RTX, they're first out of the gate, but we will also hear from Northrop Grumman, maker of the B-2 bomber. We will hear from Lockheed Martin later in the week. We will hear from GE and others. Boeing also reports. So a whole range of these companies. On the defence side, a big focus will be on what are they doing to replenish their stock? What are they doing to lift production? That's been one of the great themes of the Iran war, that the US is really going through its stockpile of advanced weapons like missiles very quickly. And can the production keep up? Can they ramp up production? This is nothing where you can simply flip a switch and sort of raise output. So this is a longer term initiative. They have sort of been at the receiving end of some angry tweets from the president, who said they need to do more. They should focus less on reinvesting in the business in terms of dividends and buybacks and so on. They should invest in R&D and in production and in new factories. So we'll probably get some commentary around that. But really, as I said, it's a longer term game, but it'll be interesting to see where some of the capital allocation might be shifting away from areas like dividends and stock buybacks that reward the investor, and more towards sort of the production side.
Yeah, an update 2 months into this war. And we'll also get an update from some airlines starting today with United earnings after the market close. It's a different segment. Obviously, it's a consumer population that uses United. But what will the airlines tell us, Benny?
So again, the airlines are affected by the war in Iran in a very different way than the defense companies, but it's the price of kerosene, of jet fuel principally, that is affecting the airlines. We got a bit of a taste last night from Alaska Airways, who reported. We've already heard from Delta, and both of those companies issuing a rather sort of cautious forecast into the year. Alaska saying that they are essentially suspending their forecast into the year, and they want to sort of see how the next couple of weeks shake out. The big issue affecting all these companies is, as I said, the price of kerosene. That is really weighing on the cost structure of these companies. And the thinking is that those who've gone into this crisis, shall we call it, that have been strong, like United, like Delta, can probably weather this better than those who are already a little bit on the wobbly side. And we've seen some commentary out of the weaker companies saying that they might need to cut some routes, they need to reconsider their cost base. So there will be probably a shakeout in some ways in the industry, but it all depends a little bit on how long this crisis continues and how long the war continues.
Yeah, you said it, Benny. Spirit actually floating a government stake to avoid liquidation potentially. We'll see what happens with that story. Bloomberg News' Benedict Kamel, thank you so much. Coming up, more earnings and retail sales. Your day ahead is next. This is Bloomberg.
Welcome back. 1 billion. 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 Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead in your trading day today. We get RTX earnings before the market open, the first of the major defense companies. Then United Airlines will give us an update after the market close. March retail sales coming out at 8:30 a.m. New York time. Expect the advance number to be pretty strong, but if you take out the gas sales out of that, the control group expected to be pretty weak for the month. And President Trump's Fed chair pick, Kevin Warsh, testifying before the Senate Banking Committee at 10 a.m. Eastern. Let's take a look at your market then as we approach the U.S. Open in just a few hours' time. We are seeing futures pointed higher. They're at their highs or their session, but nevertheless, not as much as in the enthusiasm that we saw last week. The dollar index also stronger, and you have the 10-year yield now unchanged. We'll be watching for any Treasury movement during the Kevin Warsh testimony. Will he appear to be a little more dovish than perhaps the Treasury market is pricing in for this year? About a 50% chance of just one interest rate cut this year. Let's take a look at Brent and WTI as well, because we're off the levels that we were at overnight, but we're pretty much where we were yesterday morning. So it really is all eyes on this peace process, if you can call it a peace process. Is it even going to happen? Are there going to be 2 delegations meeting in Pakistan? That is it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Xauusd only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Markets are becoming a lot less responsive to these headlines.
There is still a lot of hope and optimism in this market.
It was time for a bounce. There's a bonding happening across markets.
The market is over-exuberant in terms of a fast fix to all of this.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, approaching a ceasefire deadline. The White House promising there will be no extensions. As Fed Chair nominee Kevin Warsh is facing a hearing on Capitol Hill, Apple's longtime CEO Tim Cook is calling time on a 15-year run. That stock inching lower this morning.
Being pretty consistent, though, the person who is pegged to be the next CEO, John Turnus, is somebody who's been at the company for 25 years and is a hardware guy. This is what a lot of people keep saying. On one hand, you could say that Tim Cook has been very much a software man, looking to bring things into the new world when it comes to some of the services in the platform. This is hardware. This is a question of how Apple will adapt to AI at a time when they have fallen behind and chosen to do so as they watch other peers try to get ahead.
I feel like Tim Cook is calling time-ish. He's still going to be the executive chairman, and his portfolio might be the most difficult and important for any executive right now operating in the United States. And that's going to be maintaining this relationship with the White House and President Trump, and also maintain the relationship when it comes to Beijing.
Overseen tremendous growth. Let's give the guy credit. What a 15-year stretch. Tremendous growth. Supply chain master. Yes, some high-profile failures along the way. The Vision Pro, not a fantastic success, but some tremendous success along the way. The buyback king. I think we have to remember that he is the king of buybacks. The capital return program that's generated, 2,000% gains on this stock over that period? Phenomenal.
And something that a lot of people hailed. At the same time, a lot of criticism about not being forward-looking enough. At the same time, you did have the AirPods, you did have the Apple Watch, you had some products, but otherwise it still is very much the iPhone. That is the core of the business. Key question for John Turnus is, what do you do next, given the fact that you need to have something new to really drive and propel gains in this company?
That's my question too. Is this a continuity candidate? And this is a moment where you want a continuity CEO at the top of Apple, when many people are looking for an era of innovation. That's not the only thing we're watching for. Later on this morning, of course, 10 a.m. Eastern Time, we'll be focused on this. Kevin Warsh, testimony on Capitol Hill. Politico leaking some of that testimony just yesterday. Some interesting highlights came out of that. A commitment to independence. And I took away the following. The Fed's got to own it. The Fed has to own inflation. It's their job. It's their responsibility. And I think he's going to be pushing that line pretty hard later this morning.
Which raises this issue. Are people expecting an overly dovish Kevin Warsh as Fed chair? Are they going to be expecting him to push on a string that he's not going to push on, because ultimately they've got to get inflation back in the bottle? And at this point, we've been talking about this. Treasury Secretary Scott Bessent talking about how this might not be the time to cut rates, essentially giving a green light to whoever might come in next, Kevin Warsh, to essentially hold tight, even in the mid a lot of pressure from President Trump.
I think it was a little bit of a pushback at the current Federal Reserve and Jay Powell. Inflation is a choice. Well, this Federal Reserve has made inflation a choice that they're basically going to accept 3% as the target. When it comes to this hearing, though, it is going to be box office. I love this from a member of the Senate Banking Committee, Senator John Kennedy. The president's current nominee will be ultimately confirmed In what decade that happens, I'm not sure.
Yeah, the timeline is tremendously uncertain. I've used that word a few times already this morning, but it's true. I've got no idea when he gets appointed. I've got no idea who's at the Federal Reserve by the time we get to the end of May. And I imagine that's a key question for a lot of market participants going into this hearing.
Can Kevin Warsh sweeten his way into Tom Tillis's heart to overturn his commitment to not allow any candidate to go through before the inquiry into the Federal Reserve is resolved? Ultimately, that's the key question. Can he sort of sweet-talk his way? Can he charm his way into Tom Tillis's heart? The answer probably is no. I'm sure that he's watching, and I'm sure that he would say it's not about charming.
Senator Tom Tillis likes Kevin Warsh. He's excited about Kevin Warsh being the next Fed chair. His issue is the DOJ investigation. I think the real question is, will the president just drop this investigation, take the off ramp? The president can still say he doesn't like what the Federal Reserve did, but does it mean it's criminal? And that's the question.
4 hours away. That testimony just around the corner. Looking forward to that hearing in front of the Senate Banking Committee. Coming up this hour, we'll catch up with Tom Forty of Maxim Group as Apple names its next CEO. Chris Verona, strategist ahead of Kevin Warsh's confirmation hearing. And Steve Yates of the Heritage Foundation as President Trump signals no ceasefire extension with Iran. We begin this hour with our top story. Apple's Tim Cook stepping down following 15 years at the helm, naming John Ternus as its next leader. Bloomberg's Ed Ludlow tracking the story and joins us now for more. Good morning, Ed. All change at the top of Apple.
All change, but not until September 1st. That's when it becomes effective. And as you guys know, Tim Cook becomes executive chairman, where he probably has a more focused brief. You know, talking to policymakers, it will include supply chain. And in his internal memo to staff, you know, he was really emphasizing, I'm not going anywhere. You know, that he will continue to play a strategy role from that executive chair position. All things can be true. It was interesting what Lisa was talking about. He's both the continuity candidate, as heir apparent is John Ternus, as well as the hope internally that he will do things differently to Tim Cook. You know, John Ternus, he's a hardware guy, he's an engineer, and he's a product guy. But he has been a very key voice internally on some of the projects that have not worked. Apple Car, Vision Pro, voicing concern that those won't go anywhere in the long term. He's also been a key voice on some of the bigger swings, like the MacBook Neo, entering the lower price point category, disrupting that laptop market where there are a number of incumbent Chinese players. So this is really interesting. The question comes back to AI, of course. What we know is that John Ternus has been a big advocate of using AI internally. We don't have as good a read on how AI is going to actually show up on the iPhone, and that's been the story for Apple for a long time. But John, I think you noticed something really important, which is your audience, be they, you know, portfolio manager or their clients, will thank Tim Cook for the 15-year era that he was CEO. The shareholder returns and performance of the stock and the company's top and bottom line, incredible.
Phenomenal gains. Ed, looking forward to your coverage throughout this morning. Ed Ludlow there, host of Bloomberg Technology. Catch Ed throughout this morning. Tom Forty of Maxim Group with this to say. The naming of Mr. Ternus as CEO is an indication that Apple still considers itself as a hardware-first company. We look to see how well Apple capitalizes on AI. Tom joins us now for more. Tom, welcome to the program. Is this a continuity candidate? And is that what this company needs?
This is absolutely a continuity candidate, as you're referring to it. I believe Tim Cook handpicked John Ternus to succeed him, as Steve Jobs handpicked Tim Cook to precede him beforehand. Does Apple need a continuity candidate? So I think that we'll be measuring John Ternus's tenure at Apple on the company's ability to capitalize on AI. How long can he extend the iPhone life cycle? It's already 19 years. And will he be more like Steve Jobs and less like Tim Cook, and be able to determine what the next device that consumers want that they may not know that they want? Smart glasses, foldable iPhones. Will they give the car another attempt? Will they work on more connected home devices? So those are the things we'll be measuring John's performance in the future.
Tom, why now? Why is Tim Cook stepping down at a time of tumult ahead of what could be the biggest revolutionary aspect or evolution in technology?
I think you could argue, Lisa, that why now? Tim Cook has got the company in an amazing position when you think of the challenges it faces. He's diversified the supply chain so they're less dependent on China. They now rely on China and India and Vietnam. At least on a near-term basis, he's addressed the AI challenges by having a strategic partnership with Google to ultimately enable them to enhance Siri. And he hands over a very strong company when you think about that 20% growth in iPhone revenue in the December quarter. So I think why now? He's handing off a very strong Apple to John, and he's addressed a lot of the near-term challenges for the company.
One thing, Tom, that we've been noting for a number of months now is that the other big tech companies have all been investing hundreds of billions of dollars into the tech evolution. Apple's been relatively investment light. They have kept their kind of capital light profile. Do you expect that to change as Apple tries to be more forward-looking and come up with new products?
I don't expect it to change unless John pivots the strategy and Apple changes its emphasis on AI to focus perhaps on services or things where they need more raw compute power. When you think of the heavy investment spend, a lot of it's by the hyperscalers, Amazon, Google, Microsoft, and a lot of it's come from Meta platforms. So then the question is for John Ternus, how long can Apple maintain this hybrid model, call it capital light relative to its peers in AI? And I would say it depends on how much raw compute power he intends and if he wants to offer AI as more of a services, including at the enterprise level.
How much bandwidth will Ternus actually have with, of course, still having Tim Cook as the executive chairman?
I think he's going to have tremendous bandwidth. So when you think about Tim Cook's success at Apple, he's managed the governments of US and China beautifully. He was a steady hand following the untimely passing of Steve Jobs in 2011. So I think that Tim Cook, as executive chairman, will be very supportive to John, but ultimately be John's vision for the future that I think drives Apple shares from here.
Tom, just finally, Tim Cook, I was going through the numbers yesterday. Just how much stock has he bought back over the last 15 years? Just how much has that company changed from that vantage point?
I don't think they ever, achieved cash flow neutrality or that sort of thing. But yes, he has done an amazing job of returning that tremendous free cash flow to shareholders, initiating a dividend, buying back stock. I like to think of the $4 trillion from $350 billion performance in his tenure, which is truly superb.
Crazy. Tom, thank you, sir. Tom Forder there of Maxim Group. To call him the king of capital returns is not meant to be derogatory. It's just a statement of fact. I think it's north of $600 billion in buybacks under Tim Cook.
I don't think any stock investor was personally offended when you said that. I think that a lot of people were very happy.
I feel like it reduces his tenure just to capital returns instead of all the other things.
In fairness, some people said that he was kind of a continuity character, and some people said he wasn't innovative enough. He didn't take Apple into the new era to be the trifold type of iPhone or anything like that ahead of, say, Samsung. Key question is, will John Ternus be that? And will that be necessary? Because they've been rewarded, frankly, for not making the same investments that some of the other big tech companies have.
Apple in the pre-market down by 0.3%. I think that speaks to the continuity that so many people are talking about at the moment. Let's give you an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Sticking with that top story, Apple naming a new CEO, hardware boss John Ternus will replace Tim Cook on September 1st. Ternus has led the hardware engineering division since 2021, and sources say he's a strong believer in AI, where Apple, of course, has struggled to make an impact. Kevin Warsh's confirmation hearing is set for 10 a.m. today. President Trump's pick to be the next Fed chair will face questions about central bank independence and his rate outlook. Lawmakers may also ask about his personal wealth, which includes assets worth at least $192 million. And President Donald Trump signaling he is unlikely to extend a ceasefire with Iran that's set to expire on Wednesday. The president telling Bloomberg he is, quote, not going to be rushed into making a bad deal. Vice President J.D. Vance heading to Pakistan to resume negotiations, while Iran has yet to confirm if it will participate in those peace talks this week. That's your Bloomberg Brief. John.
Yahira, thank you. More from Yahira later this hour. Up next on the program, standing in the way of the next Fed chair.
I have no intention of allowing any Fed board nominee to move forward out of committee and to be confirmed until this matter is settled. Look, this is foundational to Fed independence.
Up next, we'll catch up with Chris Ferrone of Strategas, live from New York City this morning. Good morning.
a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
$8:30 Eastern Time, more economic data at 8:30. We should get US retail sales after the closing bell. You'll hear from United Airlines. The airline's very much in focus given the pressure on them over the last 2 months or so. Then this at 10 a.m. Eastern Time. Kevin Walsh in front of the Senate Banking Committee on Capitol Hill. Looking forward to that. The scores going into it look like this. Equity futures bouncing back higher by 1/3 on the S&P after snapping a 5-day winning streak on the S&P 500. We snapped a 13-day stretch of gains on the Nasdaq 100 yesterday, this morning, by 0.4. Under surveillance this morning, standing in the way of the next Fed chair.
The initial inquiry and the investigation was a flex to try and get the current chair to step aside. I have no intention of allowing any Fed board nominee to move forward out of committee and to be confirmed until this matter is settled. Look, this is foundational to Fed independence, and I, for one, am going to stand on the side of certainty, and Fed independence is what delivers certainty in our markets.
So here's the latest this morning. Fed chair nominee Kevin Walsh heading to Capitol Hill for a confirmation hearing before the Senate. Senator Tom Tillis still vowing to block the nomination until the Justice Department drops its probe into the central bank. Tyler Kendall has more. Good morning, Tyler.
Hey, John, good morning. Well, I caught up with a senior aide to Tom Tillis yesterday who told me that the senator's position has not changed and he will continue to block Walsh's nomination from advancing to the full floor until the legal matter against Fed Chair Jerome Powell is resolved, though this aide says that Tillis wants to vote for Walsh as this confirmation hearing gets underway, but he really can make good on his threats to block the nominee, considering Republicans only hold a 13-11 majority on the panel. Meanwhile, a White House official tells us that President Trump will not back down on this Department of Justice investigation into whether or not Powell misled Congress, this very Senate Banking Committee, about the Fed's renovations to its headquarters here in Washington, allegations that Powell denies. Now, the Trump administration, as you well know, was handed this potential off-ramp last month when a judge ruled against the subpoenas in that case. But still, at this point, the DOJ says that they will appeal that decision. Now, for Walsh's part, Bloomberg News did obtain a copy of his prepared remarks where he is expected to vow to protect the central bank's independence. He's expected to say, in part, quote, "I believe that monetary policy independence is earned and better policy decisions crafted by steering clear of distractions." Senator Tim Scott's team says to expect questions about charting monetary policies when I checked in with them yesterday because, John, this will mark the first public remarks from Walsh about interest rates since his nomination and since the war in Iran has brought up those energy prices.
Looking forward to it. Tyler, thank you. Tyler Kendall down in the nation's capital with us here in New York. Chris Ferrone of Strategas, a bed company. Chris, good morning.
Great to be here.
The words of Kevin Walsh, inflation is a choice, the Fed must take responsibility for it. Does that sound like a man who's about to cut interest rates?
Listen, I think at the end of the day, when you even look at the Fed funds futures market here, cuts are coming back into the market. So I still think we'll get one or two by the end of the year. Look at December 26 SOFR or June 27 SOFR. You've really priced back a cut in as we start to move towards the end of the year. So yes, I do think ultimately we are working towards a cut here. I think the bond market's figured that out, kind of following this kind of initial panic around the start of the war. 2-year yield has come back down. 10-year yields, I mean, for as chaotic as the world has been, we're sitting here with the 10-year yield still at about 4.25. Not a lot has really changed from the bond market's view here.
And stocks close to all-time highs.
At all-time highs, right?
Let's get into that.
Yeah.
Why do you think this is more than just a position squeeze?
So when you go back and you kind of take stock of what the leadership before the war and now as we think kind of move towards the ending phase, it's not that terribly different. I think really important yesterday, cyclicals made new relative highs versus defensives. That's kind of our view of how the market perceives the economy. So things still in pretty good condition from that perspective. You know, when you look at the quality of this advance under the surface, something like 50% of the S&P made a one-month high on Friday. That's a really good reading. It tends to lock in some durability to the advance. Something like 60% of the Russell 2000 made a one-month high. I think this is suggestive of more than just a bounce from the March lows. There's some durability behind this. What it means for the next couple of weeks with a very overbought market, I do not know. But if you're looking 6 months out, I still think we're higher than where we are here.
Just from a logic perspective, does it make sense to you that consumer discretionary should lead at a time where the consumer is being crimped by higher oil prices?
As we wrote a few weeks ago, and I would say again loudly this morning, the less you know in this business, right?
That's our motto,
right?
Chris.
The less you know. There's a lot of things about the last 4 or 5 weeks that seem to defy the logic, and I think oil might be the best example. I think the high in oil was March 11th. The headlines only got worse thereafter, yet oil could not make new highs, right? So we look for things that behave differently than the consensus or the headlines might imply. I think discretionary is a great example of that. 80% of discretionary made a one-month high this week. That's the best reading we've seen in about 4 years. It's the first legitimate sign of momentum from the discretionary sector that we've seen in a number of years at the most unusual of times. So we can see that the market knows a lot more than we do. It's kind of a comforting feeling that we don't have to have it all figured out. And I think the market is saying something out there is more constructive for discretionary than people believe.
Not to be a conspiracy theorist.
Yeah.
But I don't feel particularly comforted by the fact that the less you know, the better off you are. And I feel also like there's an increasing number of people who are concerned that maybe markets are trading off something that they don't know, which is raising concerns about whether they want to get involved in that. How do you deal with concerns about that?
You know, Lisa, I think if we were sitting here the last week of March 2020 or early April 2020, we'd be having the same discussion because it was exactly when consumer discretionary really started to inflect. I think if we were sitting here in summer or fall of 22, we'd be having a very similar discussion as, frankly, inflation expectations began to come down and discretionary started to turn up. So the market is 2 or 3 steps ahead of you or I. And I think the message here, frankly, is one that we're reinforcing a lot of the themes that were in place pre-war. And you see it with the power stocks, the industrials, the CapEx. I mean, the velocity with which things like, we look at tech equally weighted, the way that tech equally weighted has gone on to make new highs here, I think is pretty compelling.
Well, your whole thesis is predicated, though, on the war ending. What if it doesn't? We don't even know if the Iranians are showing up in Islamabad.
I would disagree, Maria. I would say my whole thesis is predicated on this is not a financial event. And when you go back and you look historically and you drew every geopolitical event on the S&P chart, you wouldn't really notice. They tend not to matter very much. If you drew every financial event, you would notice because they do tend to matter. So our kind of main part of our call is what's happened in Iran is not spiraling into a global financial event. And you see that through credit spreads, basically back to where they were pre-war. The banks have acted fantastic throughout all of this. I mean, even the private credit stocks are, I think Apollo hasn't made a new low since March 2nd or something of that matter, right? So the places where I think the sentiment was probably most apocalyptic, credit, financials, private credit, have actually held their own throughout all of this. So I don't think we're spiraling into that more serious event.
It is an energy event, though. It is an energy shock for the rest of the world.
Yeah, listen, crude's certainly meaningfully higher than it was in January.
Crude, helium, LPG, naphtha.
Yeah, and yet discretionary is working here, right? So there's one of those two things is wrong, and we're ultimately trying to figure out what. And also, let's keep some things in perspective. This economy has operated perfectly fine with crude in the $80, $90 range. Let's not pretend that's $200 oil. So I just want to put that in a little bit of perspective here. You've actually had a pretty good correction in the energy stocks over the last 3 or 4 weeks. You're kind of probably getting to a point where they actually might be timely again on the long side. But I think the bigger picture here is when you look at what the leadership is telling us, what the internals have looked like on this rally, I think at worst it's a B plus rally, and I think ultimately it's locked in some duration to this advance.
I think energy stocks might be flat since the war started.
Yeah.
which is kind of crazy.
All the leadership in energy came between really September and February 27th. Pretty remarkable that, again, in the spirit of the less you know, right? The market knew something well before you or I did.
I've been tracking energy shock, rate shock, growth shock. We've had the energy shock. We had a rate shock for about 5 minutes.
Yeah.
There was a real concern, I would say, that some of these central banks would shift to a much more hawkish stance, particularly the Bank of England, the ECB. I think they've backed away from that since then. So we can sort of park that shock, the rate shock, for now at least. And a growth shock has been parked alongside with it. Whether that is the right call to make, the right thing to see, I don't know, but that's the way things are playing out.
Evidently, the less that I know, the better I am. And right now, what I am looking at is, and getting a little worried about, is that in the summer, when some people want to go to the south of France, the south of Italy, or go to Asia, those flights might not go. And we're seeing that increasingly from some of the airlines. So those are some of the tangible potential breaks. But, you know, the less I know.
Well, I mean, I think the irony of that is new high Marriott, new high Viking Cruise, airlines basically at the high. So, like, the market seems to have moved on to something else, I think is the broader point. And John, just on rates, if 10s were going to 5, why didn't they go to 5? Right, there was every opportunity for a few weeks there when there was some pressure in the bond market. You saw European yields start to go, and they couldn't get U.S. 10s above 445. The curve is re-steepened here, albeit modestly, but I do think it's important. If you want to draw some lines in the sand, 445 on 10s, maybe 40 basis points in the 210 curve, call it 400 on high-yield CDX is kind of the lines that you'd want to watch for, hey, are things starting to deteriorate here again? We don't see it yet.
425 on 10s this morning, basically the upper end of the range, the pre-war range on a 10-year yield.
It's just shocking how stable the 10-year really has been. I mean, ultimately, that has been the ballast for a lot of this risk rally.
Hey, Chris, good to see you, buddy.
Great to be here.
Great to catch up. Thank you. Chris Verone there at Strategas. Coming up on the program, Steve Yates of the Heritage Foundation as President Trump signals no extension on a ceasefire. Plus, Yahara has your morning movers. Amazon investing an additional $5 billion in Anthropic.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, But when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Snapping a five-day winning streak on the S&P 500 in yesterday's session. It bounced this morning by a third of 1%, up by 0.36 on the Nasdaq 100. On the Nasdaq, 13-day streak snapped yesterday. That 13-day winning run, gains of more than 16% or something like that. Bramo, what a stretch for the Nasdaq 100.
Yeah, and it was just snapped. It wasn't as though it was some sort of massive sell-off, and today people are coming right back in. And this is ahead of what we're expecting next week with earnings from some of the big tech giants amid some pretty big moves in terms of investments as well as personnel management moves at a time when potentially these tech companies are on the cusp of revolutionizing how we live.
We'll talk more about Apple a little bit later in the program as well, a change at the top of that company. Let's talk about the bond market, struggling to shake up fixed income. Mr. Verona over at Strategas put it well. This bond market unmoved by so much of the last 1 month or so. The 10-year 4.2569 yields just about unchanged, and as I've repeated several times, at the upper end of the pre-war range on a 10-year yield. Elevated, yes. Breaking out to new ranges, not quite.
I think Chris Verone's onto something when he says the less you know, because ultimately, if you scrutinized the leaked commentary from Kevin Warsh that was published by Politico, you would think he was still the hawk that he used to be, and that he'd be inclined to actually keep rates where they are or even hike them, talking about how keeping inflation at a high level, as it has done in recent years, is grievous harm is done to our citizens, talking about how it's necessary to wrangle it under control. You'd think that bond markets might care, but no, they don't care at all, because they're looking at what he does, not what he says. And potentially this is all just lip service to try to get the job.
Yeah, I don't know which one it is, but I was intrigued by the comments. I believe that monetary policy independence is earned. Inflation is a choice, I think, is the line that jumped off the page for me when I first saw that testimony from Politico just yesterday. Inflation is a choice. That seems to be a screaming message for the current Federal Reserve.
And the Fed must take responsibility for it, to your point. Exactly. So right now the market's saying, show us something that really will move the needle, and it's not going to be that.
Well, you thought it would be this. Brent, WTI. Hasn't been that either. Brent crude around 95, WTI around 88. We're down about 1%, let's call it. Going into talks. Now, potential talks, because I still don't think we're really sure whether these talks are happening and at what level.
Potential is the operative word there. I spoke to a Pakistani official who said this to me. Fingers crossed that the talks happen tomorrow. We have not got a readout from the Iranians on whether or not they're going to attend. They have not left. The U.S. delegation has not left the United States. So at the moment, potential talks, but TBD.
Fingers crossed. I think we're all hoping for progress on that point, that's for sure. If you're just joining us, welcome to the program. Futures back at the green again, high by a third of 1%. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with none other than Apple. Shares are down some 0.3% in the pre-market, trimming earlier losses on that bombshell CEO transition that will see John Ternus lead the company. And looking through analyst notes this morning and hearing your interview with Tom Forte, they largely see this as a continuity move, with Morgan Stanley saying that this does little to alter Apple's core strategy. And the market's trying to decipher whether that is a good or a bad thing in the age of AI. And moving on to a company that is, unlike Apple, spending big on AI, that is Amazon. Shares are up 2.7% in the pre-market because it plans to spend more, investing another $5 billion into Anthropic, potentially $20 billion more over time. But this partnership will see Anthropic spend more than $100 billion over the next decade on Amazon's chips and cloud, locking in long-term demand for AWS. And that move is filtering through Amazon's supply chain with its suppliers like Astera Labs up nearly 7%, Credo up 5% in the pre-market, since that expanded partnership means more demand for their connectivity solutions used in data centers. John?
Yahara, thank you. More from Yahara later this hour. On our radar this morning, President Donald Trump saying he's unlikely to extend the Iran ceasefire. The president telling Bloomberg the US won't be rushed into a bad deal. The Vice President, J.D. Vance, expected to lead the negotiations. Elsewhere, Fed Chair nominee Kevin Warsh testifying before the Senate Banking Committee this morning. His opening remarks highlighting the importance of Fed independence. The DOJ probe into current Fed Chair Jay Powell threatening to block Warsh's nomination. And finally, the Apple CEO, Tim Cook, stepping down after 15 years at the helm. Cook handing the reins to hardware boss John Ternus in September. Ternus expected to bring a more decisive leadership style, sharpening Apple's competitiveness in AI.
Two takeaways. I think the first is that the guy who's coming in, John Ternus, is a hardware guy who's been at the company for 25 years. What are they going to create next? And then to AMH's point before, I think it's a really important point just to be highlighted again. Tim Cook is stepping into a new role of essentially diplomat. He's going to go around the world and talk with all of these officials to understand and maybe guide some of their policies. That might be the more interesting move, given just how political some of these companies have gotten, especially in an era of AI.
That's why I wonder how much bandwidth the new CEO is going to have when you have your former boss basically still hovering around, but you're ultimately the decision maker. But maybe it gives him more time to actually focus on AI, which Apple, of course, has a bit been behind the 8 ball on.
A shout out to Walter Piecyk over at Lightshed, who last summer came on this program and talked about the need for a change in leadership. Now, the stock move this morning, down by a few tenths of 1%, signals continuity. My question for Walter Piecyk will be a pretty simple one, and we've already asked it a few times this morning. Is continuity what he believes this company needs?
And it's not clear the answer is yes, given the fact that ultimately it's been the lack of a new innovation to really drive the company into the new era. I will say, though, it's kind of nice to have somebody else to fly around the world and talk with the presidents and prime ministers,
sure,
so you can actually focus on the business. I imagine a lot of CEOs feel like they're spending a lot of time in Washington, D.C., and are getting distracted somewhat from managing their own businesses. So I wonder if this is what we're going to see going forward, just more broadly.
Apple down just 0.3%. Let's turn to the president. The president of the United States telling Bloomberg the US-Iran ceasefire expires tomorrow night. The Vice President, J.D. Vance, expected to travel to Pakistan for a second round of talks. Steve Yates of the Heritage Foundation writing, the president made clear that he has a lot of cards and he's willing to use them. We have the last gasp of the IRGC trying to flex their muscles, but they're really at this point no match. I'm pleased to say that Steve joins the program now for more. Steve, welcome to the show. It's good to see you, sir. Let's talk about this messy kind of moment that we're in right now, where both sides trying to find a bit of leverage. Why do you believe the US is in a stronger position?
Well, basically because everything the United States has sought to do in unwinding this multi-decade intractable problem has worked better than someone could reasonably expect at the beginning of the process. There has been overwhelming military dominance strategically. There's been tactical hits that have come back from time to time. When you start looking at going from a strategic force of on the cusp of multiple nuclear weapons, as international assessors and inspectors have reported, not just American sources, and you look at the large number of organized military forces, you have a divide now in Iran between regular military and the IRGC. All of them, from leadership down to true capabilities, are degraded. And we have new tools that have been opened up between round one of negotiations and whether we get to round two in the next day or two or it takes longer. There's been an immense toolbox of financial tools that have opened up to Secretary Bessent that really aren't open to public scrutiny, that are because Iran lashed out at allies. And so international financial access and tools that could be just as crippling economically as the military has been in that strategic sense. This is a correlation of forces that can push for a change. The question is, what kind of a change? If you're not going in to occupy and run a country, which we absolutely are not doing this time around, you're going to end up with this messy situation of a disaggregated leadership that is a bit schizophrenic on communications, some elements lashing out, and you have to manage that de-escalation over time.
Well, if that's the Iran we're left with, what does that mean for stabilization of the region?
Well, in some ways, the region is much stronger. If you look at the Arab allies, that have a lot of capital, that are determined to invest in a number of different ways, first and foremost in their own capabilities. Having strong independent allies is actually a net benefit to the United States. If we have to surge anywhere in the world from the Indo-Pacific to our own hemisphere, it helps greatly if we have very strong, vested and determined allies who can somewhat keep the lawn mowed in their own region without us having to be there for daily maintenance. It doesn't mean we leave. It just means that it's a much better set of options for us and for the allies, for that matter. I think there's been a clearing of the air somewhat on where there are real powers and abilities to influence. United Nations has been AWOL in this. Europe, in many ways, has not influenced things very much beyond going on television or public events. And some allies in Asia are stepping in to balance things in different ways, too. So some of these changes, if they are sustained, changes in energy dependence and flows that could greatly affect China's geostrategy and the U.S. relative power there in those negotiations. So a lot still to unfold, but I think on balance, there's a lot of geopolitics that are a net advantage while there's still a lot of risk to manage.
Steve, as you know, the Iranians are notoriously famous for dragging their feet when it comes to negotiations. Do you even think we have talks tomorrow?
I'd give it about a 50-50 chance, but I don't think it matters in the long run. I admire the administration's willingness to do this. It's one of the things that kind of goes counter to a lot of the cartoon caricatures of President Trump and his style. This has been a very gradual escalation of power and use of tools. It's been somewhat patient. It's much different than sort of the flash bang of going into Iraq before and pushing for regime change and de-Baathification. There's a higher tolerance to work with remnants that is kind of more of a centrist and pragmatic approach than people might have assumed.
Steve, hold on a second.
So I think that it doesn't matter as much if the talks happen in the next 24, 48 hours. That is great if there is a sustained deal that comes of it, but I'm very much in the don't trust, just verify category when it comes to who you're negotiating with.
With all due respect, there's this question about the impulsivity or whether this was orchestrated or whether this was a patient effort, given the fact that a lot of allies were not aligned or aware of exactly what was happening. And now there's a lot of pushback, at least publicly, from both the Europeans as well as from some of the Gulf allies, talking about how you made this mess, now clean it up. How do you see it differently?
Just the facts of on the ground are completely counter to that narrative. We have politicians in a lot of geographies whose audience is larger than their ability to influence. They have meetings about someday going in and protecting freedom of navigation, but the whole world can watch that they are all dance and no music. And in the Gulf, there are definitely some mixed messages that come from different capitals, but real centers of power among those Gulf allies are saying publicly that they are on the American side of this longer term. And ultimately, they don't think that the Iranians are free of responsibility in all this. Ultimately, Iran has been a profound threat to them, and they've seen everything that's been tried in recent decades as being insufficient to the task. They don't like the ugliness of the missiles coming their way. They would rather have greater certainty, greater access, but they see this as having been a necessary issue to address, whether they liked the timing or the pre-operation consultation. Also, not everyone who is consulted says so publicly.
Steve, there's also a question. You mentioned that you think that it aligns the United States in a better position geopolitically, even with respect to China. There are a number of people who say that China is trying to actually reinforce its influence in the Middle East as the major oil buyer from the region, and that you're seeing actually some of the oil traded in the region from Iran transacted in renminbi. What do you make of that, the idea that China has actually gained leverage during this process?
Well, it's, I think, very incidental leverage, and it's really exposed two huge vulnerabilities for China that haven't really factored into a lot of people's long-term assessments of China's power and influence. One is China is entirely dependent on being an export-led economy. There has been no transition to a consumption economy in China, and where they have to export is to the world's largest consumer market, which is the United States. That's a huge complication for them. The other part is that China remains hugely dependent on imported fossil fuel. There's been a lot of chatter about them racing ahead on solar, and maybe they are, but when it comes to being a cutting-edge AI-driven export tech economy, it's just impossible for them to even function at a survivable rate without that dependence on imported energy, and especially fossil fuel. And so their risks have gone significantly up. We've had exposure on rare earths. They have much bigger vulnerabilities. Really, both have to address those, but America's options are getting gradually better. And I think China's options are not.
Steve, it's good to hear from you. Appreciate your reaction in anticipation of these talks if they happen in the next 24 hours. Thank you, sir. Steve Yates there of the Heritage Foundation. Just as we're wrapping up those thoughts, we got some comments from the President of the United States out on social media. Not on the US and Iran, not on those talks, but on Apple and Tim Cook.
Yep, that he's an incredible guy. He basically is talking about how he's a huge fan of Tim Cook. He even makes a joke, which I think a lot of us think about when we think of the president and Tim Cook. When I got the call, I said, wow, it's Tim Apple. And then in the parentheses, the president says Cook calling. How big is that? He said he was very impressed with myself, the CEO of Apple, basically calling, helping him with problems that only he could do. And basically saying if they had to hire a consultant, it would have cost Apple millions, basically saying he saved the company millions of dollars. He says he's an incredible guy. And I think this is pretty much a sign-off to Tim Cook. But of course, this is why Apple is keeping Tim Cook around as executive chairman. If you're a new incoming CEO that ran hardware, you're an engineer, is this really the portfolio you want to deal with on day one?
The ambassador keeps his job at the top of Apple.
And frankly, I'm sure everyone is happy because if you think about it, that's not a small distraction if you're at the top of one of these tech companies.
That stock just a little bit softer this morning by a third of 1%. Let's get you an update on news worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. 3 ships, including an Iranian vessel, crossing the Strait of Hormuz, even as the U.S. and Iranian blockades remain in place. The Iranian vessel stopped signaling its location after moving into the Gulf of Oman. Around 800 vessels remain stuck in the Persian Gulf. MAGA Inc. is building a nearly $350 million war chest ahead of the midterm elections, according to federal filings. The super PAC raised over $35 million just last month, fueled by donations from roofing supply billionaire Diane Hendricks and tech investors Mark Andreessen and Ben Horowitz. And Amazon is investing $5 billion in Anthropic and may inject $20 billion more over time. The partnership will see Anthropic, maker of the Claude chatbot, spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. That's your Bloomberg brief. John.
Yahara, thank you. More from Yahara in about 30 minutes. Up next on the program, Kevin Walsh setting the tone.
There's a potential for Kevin Walsh to come in and kind of set the tone about how he's going to smooth out this leadership transition. It's really important to help us understand how does Kevin Walsh think about rates policy.
In just a moment, we'll catch up with Andrew Sheets of Morgan Stanley, live from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, Kevin Walsh setting the tone.
There's a potential for Kevin Walsh to come in and kind of set the tone about how he's going to smooth out this leadership transition, because right now it's quite chaotic. It's a bit of an enigma what his reaction function is. It's really important to help us understand how does Kevin Walsh think about rates policy. He's had very hawkish positions in the past, and now he has very dovish positions.
So here's the latest this morning. Fed Chair nominee Kevin Walsh set to face a grilling on Capitol Hill at his confirmation hearing. Walsh writing in prepared remarks, quote, "I believe a reform-oriented Federal Reserve can make a real difference to the American people." Here's the big line. Inflation is a choice, and the Fed must take responsibility. Joining us now is Andrew Sheets of Morgan Stanley. Andrew, good morning. What kind of change are you expecting at the top of the Federal Reserve when ultimately the handover takes place?
Yeah, thanks. Good morning. It's great to be here. So we do think that Walsh will embrace a view that I think is backed by a certain level of initial data, that AI is boosting productivity, and that productivity boost is going to be disinflationary and help relieve inflationary pressures in the economy. And I think this is a view that's also very close to a Silicon Valley tech-focused view of the world, which I think helps form his worldview. Now, the challenge is that the data that the Fed is inheriting is still above the Fed's target. Core PCE year over year is 3%. It's been well over the Fed's target for a considerable period of time. And so it's not just about what the new Fed chair will think, it's about what the rest of the committee will think, and it's about convincing that committee of that story. And so, again, I think if we think about this data that's coming in, the data in the second half of the year is going to be incredibly important. That's going to be data that's harder to push off to tariffs, to push off to one-off other things.
Some officials have already weighed in on that theme. Do they agree with him?
I think there's a lot of skepticism. I think there's a lot of skepticism that inflation is really coming down. I think the Fed's been surprised this year about the persistence of core inflation. And I think so the next incoming data, the next several incoming data reports, remember we're lapping roughly the year anniversary of Liberation Day and the tariff impact that we know has had an upward pressure on core goods inflation. And so as I think you get into the next several data prints, which are arguably going to be cleaner prints without the same tariff impact year over year, as you get into the second half of the year where some of those factors should be easing, if it does ease, I think that makes the new Fed chair's case a little easier if they're trying to convince the rest of the board that inflation's coming down. If it doesn't, then I think it's a much harder hill to climb.
How much is the market just completely ignoring the statements that we got that were leaked from Kevin Walsh ahead of this testimony, considering this sounds like the hawkish person who he was before he was nominated by President Trump? And frankly, this sounds like someone who'd be even willing to hike rates in the face of higher inflation.
Yeah, I think the market is willing to look through that. I think the market believes that ultimately The Fed will want to normalize policy if inflation is coming down. I think the market can also look at inflation break-evens and say those have been relatively stable in the face of some of this other higher core inflation pressure. Again, that should overall encourage a gradual normalization of policy. But I think as we get into these hearings, as we get more statements, there is going to be a lot of important information that comes out. But again, I think the market is still believing that this is ultimately a potential Fed chair who ultimately wants to lower interest rates and sees more disinflationary pressure on the economy.
How much is the rally and frankly, the strength in credit predicated on that assumption?
Well, I do think that you've had a challenge where the market has eased financial conditions again as this rally has taken place, right? Equities are higher, credit is tighter, yields are lower. And so in some level, some of the argument for easing into some of these growth shocks from a potential extended energy risk, well, those go away if financial conditions have already eased. But I also think for credit, whether or not the Fed stays on hold, cuts rates 25 or 50, I actually think that's a relatively minor issue. I think the more important thing for credit is one, whether or not the economy holds up. If there's a recession, it's quite bad. But also just the level of supply. I mean, the levels of AI financing continue to surprise what we thought were going to be very large levels 6 months ago. 6 months ago, or over the last 6 months, our estimates for AI-related spending have increased $630 billion. Increased that much. So that's an enormous amount of spending. That's an enormous amount of spending that needs to be financed. And that's a big issue that the credit markets are having to deal with, is just a lot of supply coming from often high-quality issuers, but it needs to get financed, and that can put some pressure pushing spreads wider.
Andrew, when it comes to Kevin Warsh, Senator John Kennedy says he'll ultimately be confirmed in what decade? I don't know. Do you have a date penciled in on when potentially we actually will get a confirmation of Kevin Warsh?
We do not, so we have to play that by ear. Again, I think that for the moment, the market, I think, can take some comfort in the idea that the market's expecting the Fed to be on hold anyway. So, the lack of a changeover maybe matters a little bit less as we're in this intermediate period. I think where it gets more awkward is if we have a significantly higher inflation print. If inflation does not moderate in the second half of the year, does that complicate this question more? Or if we get an extension of the crisis and there's this question of, does the Fed feel confident enough to react? But again, I think for the moment that question of if it takes a little bit longer is one that the market can deal with.
Andrew Sheets of Morgan Stanley. Andrew, good to see you here in New York. Thank you, sir, for dropping by. What happens after May 15th? Nobody knows.
And frankly, right now, nobody cares, the less you know.
Stocks near all-time highs. Equities up again by 0.4% this morning. Up next, we'll catch up with Savita Subramanian of Bank of America, Stephen Kirk of the Council on Foreign Relations, Angelo Zeno of CFRA, and Tony Rodriguez of Nuveen from New York City. The second hour of Bloomberg Surveillance just around the corner.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television. When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Data still feels like the economy is very strong.
The consumer has remained intact.
It's very clear there's a lot of resilience in the economy.
There is absolutely zero room for consumers to be able to absorb higher prices.
It's not all puppy dogs and rainbows out there.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures bouncing back, heading back towards all-time highs on the S&P 500, following snapping a 5-day winning run on the S&P 500 yesterday. Likewise on the NASDAQ, snapping a 13-day winning stretch this morning, up by 0.5 on the Russell, up by 0.3. Going into this a little bit later this morning, retail sales at 8:30 Eastern Time. After the close, we'll hear from United Airlines somewhere in between at 10 a.m. Eastern Time. A little bit later this morning, Kevin Walsh, testimony on Capitol Hill.
Yeah, how much will it matter? I mean, we've talked about how this is going to be political theater, but there also are comments that you've mentioned were leaked to Politico from Kevin Walsh, talking about the importance of wrangling inflation back in the bottle, and talking about how this is a choice by the Federal Reserve. This sounds like the hawkish Kevin Walsh that everyone has loved and known for many, many years. So would the real Kevin Walsh please stand up?
It also sounds like shots fired at Team Transitory and Jay Powell. Inflation is a choice. The Fed must take responsibility for it, something that the Fed really hasn't done, given the fact that they're cutting interest rates when inflation has been closer to 3% than 2%. He also talks about how it does grievous harm to the citizens, especially those that are least well off. Another interesting moment in this testimony, I do not believe the operational independence of monetary policy is particularly threatened when elected officials, i.e. presidents, state their views on interest rates, and saying central banks need to be strong enough to listen to everyone, have a variety of opinions.
There's plenty of nuggets here. I believe that monetary policy independence is earned. I imagine there might be some pushback on the committee a little bit later this morning.
Especially given the fact that right now people are somewhat skeptical, although that pushback is not what the market wants to hear. Ultimately, people will just say, la, 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 we don't really care. This is the classic kind of line of questioning. Post it on your Instagram and we'll tune it out. The real line of questioning is, what's your threshold to cut rates again? The other question that people have is, what is some sort of cooperation with the Treasury Department? What does that look like, given the fact that a closer tie between the two departments could end up with the Treasury having a say in the Fed's balance sheet? There are a whole host of questions that are lined up for this afternoon that we probably will not hear about.
I'd like a deeper understanding of his reaction function. I want to understand of his mood, his idea, his view of things has changed since the war in Iran. 2, 3. He's got this whole thesis that because of technological developments that ultimately they'll be able to reduce interest rates. I'd like to hear more about that. Can he get the committee to come alongside him? Those are all things we'd like to hear about. You're not going to hear much about them later on this morning based on the views of so many people that have already come on this program.
It'll probably just be a question about, are you Trump's man? Are you going to do whatever he says? And he's going to say no. And they're going to say, are you sure? Well, how about this? And he's going to say no. And then it's going to be...
Sir, you're worth so much money.
Oh, yeah, that's
so
true.
rich, you're so
Let's
wealthy.
go through this. Yes, exactly.
Can we really trust you to set policy for the country when you've got all this money?
All right.
You know exactly how this is going to go.
I know, but please. Ask some questions. I keep hoping that we're going to get somebody sneaking in there.
Well, Senator McCormick, obviously, former Wall Street executive, I imagine he is going to dial into some of the financials and also macroeconomics when it comes to this hearing.
I'm pleased you're hopeful. I share some of that hope. I hope you're not wrong.
Someone's got to do it.
My bar for Washington's like rock bottom.
The less I know.
It's just
I'm a little more hopeful than you, maybe, then.
Okay. All right. 10 a.m. Eastern Time. You can tune in for yourself. Coming up this hour, Savita Subramaniam of Bank of America as the Nasdaq snaps a 13-day winning run. Angelo Zeno of CFRA as Apple sets its succession plans in motion. As Stephen Cook of the Council on Foreign Relations as President Trump signals a ceasefire extension is unlikely. We begin this hour with stocks holding near all-time highs. Savita Subramaniam of Bank of America writing, we see a big proportion of haves in financials and a good chunk of haves in tech and see both sectors as rife with idiosyncratic opportunity. Savita joins us now for more. Savita, good morning. Good to see you.
Good morning.
The mood on Wall Street, buy the dips. I've seen this across the board. I've seen it from a range of banks that every time you get a bit of weakness, you should buy it. Is that your approach to this moment?
Not necessarily. I think you can use this opportunity to buy certain stocks, and you mentioned tech and financials. Those are areas where we think a lot of stocks have been sort of summarily rejected because of geopolitical risk and haven't necessarily come back. I think that for the index overall, I worry because there are some supply shocks in terms of equity coming up. We've got a lot of private capital sitting on the sidelines waiting to IPO, especially in technology, which is the biggest chunk of the S&P 500 of the U.S. equity market. I also think that the direction from here is really what's the next positive surprise versus negative surprise. And, you know, we're done with that whole geopolitical thing, it seems, but are we? You know, I think that's the question. And then on top of that, we're starting to see the potential impact of higher oil prices in consumer companies' forward guidance. So I think the risk is the impact of oil shocks takes a while to play through. So far, what we've seen is that consumers are spending more on gas and oil, but the actual hit to discretionary and, you know, kind of the rest of the stack could be 3 quarters out. That's what we found in our data. So I think this is a moment where you have to think about what are the positive versus negative surprises. And I guess I don't see as much likelihood of positive surprises in these big bellwether sectors like tech, like, you know, even industrials. I think industrials is now trading at a really lofty multiple. It's pretty crowded. Sure, tons of tailwinds, CapEx alive and well, everything is hunky-dory. Defense, you know, you've got oil plays in the sector, but I do think that, you know, there are areas of the market that were basically bought to hedge against geopolitical risk, industrials being the classic case. I mean, it's interesting. So I'll give you a little anecdote.
Sure.
I was marketing in Europe a couple of weeks ago, and as you know, it's hard for global investors to buy fossil fuels. So I think that, you know, there is this frustration because you can't buy oil stocks. Oil is surging. So I think there was this sort of industrials closet energy demand, because if you look at the correlation of industrials companies, they're basically, they act like energy. A lot of them look like energy and act like energy stocks, but aren't in the energy sector. So they're a good way to get exposure to a commodities upcycle without actually having to buy the energy companies. Sorry,
yes.
long.
Well, let's unpack some of it. So the headwinds and the threat at the index level.
Yes.
You noted a couple. IPOs being one, the lagged effect from higher oil prices being two. There's a third from tracking your research that you didn't mention, and that was buybacks.
Yes,
How are
yes,
buybacks
thank
changing?
you.
And why is that becoming a bigger headwind to this index?
So, I mean, there's a lot more claims on capital for companies. Thank you for remembering that for me. Buybacks are a big deal. I think that what we're seeing now, they're still happening. And in certain sectors like financials and tech, you're seeing really sustained levels of contribution to earnings per share from buybacks. But for other sectors, we are starting to see a bit of a slowdown. And, you know, I think that what we're seeing right now in that mega cap tech complex suggests cost cutting. And you're seeing this with layoffs. Buybacks are slowing down. There's a lot more money earmarked for CapEx, like kind of mandatory CapEx. So I think that's the problem right now is you've got higher interest rates. you've got this environment where the cost of capital has increased pretty aggressively, could go up even further for IG investment grade debt in, in some of these tech areas where you're seeing supply issuance, as we were talking about. So I think this is in a moment where you really want to think hard about what companies are doing with their capital, buy the ones that are getting the CapEx, not spending the CapEx, and buy the companies that are continuing to have this share buyback or cash return focus. Because that is starting to wane rather than wax.
It feels like it's sort of a good moment for Tim Cook to step aside as the share buyback. The king of share buybacks is stepping down at a time when maybe that's not going to be as much of a driver. You pair the potential negative technical with the positive that everyone who comes on the show keeps talking about, which is earnings. They've beat the upside tremendously.
Yeah. Earnings are great.
Why
earnings
is that not enough for you?
Earnings are not the problem. Earnings are great. I mean, so far, so good. Q1 coming in strong, more beats than misses by a big margin. I think, though, when you think about what markets react to, it's not necessarily actual earnings, it's a surprise element. So, what we've found is that during years of really strong earnings and strong GDP growth, the market actually turns in sort of, average returns. It's not necessarily the greatest year for the market. The markets generally anticipate these recoveries. And now the question is, are earnings going to surprise as much as they did last year or the year before? I don't know. I think it's harder at this point.
What do you have to see next week from the big tech players to potentially change your view and suddenly upgrade to 7,600 and say, you know what, technicals be damned. It's going to be a great year.
Right. Buy the dips. Look, I think that tech is still, the future, right? And it's some of these companies belong as core holdings in our portfolios. But I think that the idea that all of the Magnificent Seven can go to infinity is hard to imagine. There are going to be winners and losers. And, I guess I want to see how long it takes to really monetize AI. Because if you look at the telecom bubble back in the 90s, 2000s, obviously very different, much more extreme valuations, a lot more leverage. But during that build-out cycle, the companies couldn't fund themselves and last long enough to enjoy the fruits of their labor, which is all that fiber they laid in the ground that we are using now, but they're not around to actually recoup the benefits. So I think the longer this build-out cycle takes, then the longer it takes to actually monetize these efficiency tools, the more at risk some of these companies are, especially the ones that are having to lever up to extend that CapEx machine.
Something that struck me in your research was you say there's better low-income consumer for affordability measures. At the same time, what I'm seeing in polling is that the lower-income consumer is struggling right now with higher gasoline
With higher gas and oil, yeah. So, I think that's the one kind of dark spot. But when you think about the lower-income consumer in general, I think what we've seen outside of energy is a slowdown in some of the inflationary measures for, food at home versus food away from home, like things that are skewed more to that lower income wallet. I think, one of the benefits as we move towards the midterm elections is if we start to see a renewed focus on this affordability agenda, and, that could get the wheels turning again for the consumer. But I think, we were surprised by this sort of inflation shock rather than a disinflation affordability shock at the beginning of the year. So I think that's the spanner in the works.
Yeah, how we started the year and how we kicked off the month of March were very, very different. Let's put it that way. Savita, good to see you. Always enjoy your research. Thank you. Savita Subramanian there of Bank of America. The president weighed in just moments ago on social media. Just one line, enough to pull the equity market back just a little bit. And that one line read as follows: Iran has violated the ceasefire numerous times.
So this is obviously going to throw some cold water on the potential for those talks tomorrow. Is the president basically trying to prepare everyone that because he thinks they violated the ceasefire, maybe those talks won't go ahead to Islamabad? Remember, neither delegation has left their home countries yet to go for those talks. When he talks about Iran violating the ceasefire, I imagine he means when they pretty much said the strait was open, then it was closed. A little bit of a difference between what the Iranian politicos are saying versus the IRGC. What Iran is saying right now is that the United States has violated the ceasefire, especially since they went onto and held captive an Iranian vessel. So right now it looks like potentially a little bit more tension between this relationship, as a lot of people were hoping for that off-ramp.
We'll keep tracking those headlines for you throughout this morning. Let's get you an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. We start there. President Donald Trump signaling he is unlikely to extend a ceasefire with Iran that's set to expire on Wednesday. The president telling Bloomberg he is, quote, not going to be rushed into making a bad deal. Trump posting in the last few minutes, as you said, that Iran has violated the ceasefire numerous times. We are seeing United Health shares rising 7% in the pre-market after posting first quarter profit that blew past Wall Street estimates and boosting its full-year outlook. The figures are a sign the health giant is rebuilding credibility with investors. Its CFO saying the increased outlook is prudent. And President Trump also weighing in on Apple's succession plans this morning. In a post on Truth Social, the president complimented the way Cook has run the company. He called his career amazing and wrote that Cook will, quote, go on and continue to do great work for Apple. Tim Cook is an incredible guy, he says. That's your Bloomberg Brief. John?
Yahira, thank you. I have to check myself every time I talk about Apple. How close are you to saying Tim Apple?
All the time.
All the time.
And Trump actually makes a joke of it.
It's true.
In a moment of self-awareness, the president makes a joke of it because he knows that that clip gets played a lot. Tim Apple calling Cook.
Up next on the program, succeeding Apple's Tim Cook.
The suggestion that like only Tim Cook is the CEO to run this company is crazy. You clearly need someone that can move forward on a lot of the product development.
Shout out to Walter Piecyk of Lightshed. We'll catch up with him a little bit later this morning following that conversation 12 months ago. Angela Zeno of CFRA joins us next.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Equities on the S&P 500 firmer here by 1/3%, bouncing back up by 0.4 on the Nasdaq. Moments ago, the president with just one line on Iran, saying that Iran has violated the ceasefire numerous times. We were hoping for talks a little bit later, unsure if those talks are even taking place.
Yeah, the talks were supposed to happen today, and now they're going to be happening tomorrow. There's an extra day for the ceasefire. This just adds a new wrinkle, and frankly, it's notable to me that the market, again, it's sort of like, okay, Not sure what to make of that, so maybe we'll just move on.
Small dip and then shaking it off. Small dip on Apple stock as well in the pre-market. I'm sure you want to know where that's trading. Slightly softer throughout this morning by a few tenths of 1%. Under surveillance this morning, succeeding Apple's Tim Cook. The latest this morning as follows. Cook preparing to step down following a record-setting 15-year tenure. Handing the reins to hardware boss John Ternus on September 1st. With the latest, Bloomberg's Ed Ludlow joins us for more. Morning, Ed. Just walk us through the next steps here, the timeline, and how this is going to work.
Yeah, I mean, through September 1st, that would be almost exactly 15 years since Tim Cook took the reins as CEO, which was August 2011. I think what's so interesting about all the coverage is people forget Tim Cook joined Apple in 1998 and was COO in 2005. So his kind of relationship with the company extends beyond that. The September 1st point is interesting because you have WWDC, which is the company's annual developers conference over the early summer. And, you know, this time around, especially as it relates to the stock story, everyone's expectation is they will finally say something about AI and how AI is going to be meaningfully useful through an iPhone handset. And then when you get to September, you have the seasonal release of the latest generations of hardware. So, you know, the backward-looking data is amazing, right, John? Profit growth of 700% in that period with Tim Cook as CEO. They finished the last fiscal year with $112 billion of net income. But the current data and forward-looking data is that top-line growth, at least, has really plateaued. And so Tim Cook is going to continue to talk with policymakers, government, focus on supply chain in an executive chairman role. But what's so detailed in Bloomberg's reporting, John Ternus is a good operator, right, politically and literally from a hardware engineering standpoint. And so he's seen as both the continuity candidate, but also someone that might be a bit more Steve Jobs in mold, have conviction to make calls, not just to proceed with the big bets and big swings, but cancel those projects which don't go as well. And so that really is the focus of what everyone's digesting this morning.
Ed, thank you, sir. Stay close. We'll catch up with you again, no doubt, later on this morning. Angelo Zeno of CFRA maintaining his buy rating on Apple, writing, we view this well-orchestrated succession as neutral to modestly positive. Angelo joins us now for more. Angelo, I just get the feeling, and whenever I get this feeling, I'm slightly uncomfortable, that the PR is in full flow this morning, that people are worried about offending Tim Cook because he's had such a great run for 15 years. Do you sense this was a choice, or was he getting ahead of potential pressure later this year to step aside?
Well, you know, I think the writing was on the wall with Tim Cook at some point to have stepped down, right? You know, it was something that had been talked about for a couple of years at this point in time. When you look at his age at about 65 or so, I mean, it was going to happen sooner or later. So timing-wise, I do think this is a very interesting time. I think potentially the right time. It did come sooner than we anticipated. We actually kind of thought he would maybe sit this out or, you know, stay as CEO through, you know, the Trump administration stay. But that being said, you kind of look at, you know, where Apple is today and what they're pivoting into. And this is a critical year in terms of the shift to AI, something they've missed the boat out here over the last 2 years on. And you kind of look at the shift to foldables here later this year. You know, I think it's the right move to hire a product guy. I think it's also the right move to, you know, finally pivot away from Tim Cook. Again, it had to happen at some point in time. You know, is Apple somehow smoothing this out? Potentially, but, you know, nonetheless, I think it's the right time for him.
Angela, you said that Apple missed the boat when it comes to AI. Is that the right way to look at this, or is this the classic Apple playbook where they wait for others to start something, try to perfect it, and then roll out a more complete product after the fact?
Yeah, I think you probably put it better, to be honest with you. And, you know, I think this is a wait and see for Apple as far as the AI story is concerned. I do believe when you think about how Apple is going to find success here in the future, clearly they've said we're not going to chase the LLM strategy, and many people have applauded that. You look at the multiple of Apple stock in the high 20s. Most investors are happy with that move. Clearly, the pivot here and their success is going to be dictated on AI at the edge, at the device side of things. And again, you know, the moving to you know, John Ternus here partly makes sense because of that pivot. When you look here over the next 10 to 15 years, which, you know, we think is going to be the time span you're looking at John Ternus staying at Apple. You look forward to that point in time. Clearly, Apple's success is going to be dictated on that AI strategy and rolling out the right products in an AI-driven world.
Angela, do you think that investors will be patient if we hear from Apple that they're planning to boost their CapEx significantly as a result of their effort to try to roll something out in the AI space?
Well, I think if they choose to do that, it's going to be dictated on how they articulate it, where that CapEx gets spent, and what have you. So I think there's a lot of moving parts as far as the spending plans goes going forward. If I were John Ternus, and I think when you kind of look at Apple here, I don't think they're going to rock the boat very much here, at least initially, as John Ternus takes over. I mean, one thing that we saw with Tim Cook once he took over from Steve Jobs is he was giving the keys to a very nice car. And when you kind of look at here and what John Ternus is taking over from Tim Cook, I do think that the seeds are put in place here where clearly they've got an AI strategy that I think they're going to be able to finally articulate on. They are going to be leveraging Alphabet as well as others out there here over the next couple of years. And again, as you kind of shift to probably new product devices on the horizon, finally shifting towards foldables, I think that you've got a good enough strategy in place. And the great thing here is Tim Cook does stay on as chairman. So he's going to be able to handle a lot of the dirty work out there on the policy side. And I think that's a critical part of the story here.
One executive speaking candidly to our colleague said that Ternus is a Tim Jr. What points of the next few years would you actually want him to see him be different, though, than Tim Cook?
I think initially you kind of want him to be, a lot like Tim Cook in terms of execution, operation, and what have you. At some point in time, you're going to have to see John Ternus make some of the tough decisions out there and be willing to go out on the risk curve. And again, because we are talking about a more AI-driven world, things are going to move a lot faster here over the next couple of years. And if Apple's not innovating, if they're not looking to beyond the iPhone at this point in time, clearly they're going to be stuck in the mud here long term and be a low growth revenue driver. So at some point in time, let's call it here over the next 2 to 3 years, once Ternus gets his feet in there, you're going to want to see him go out on the risk curve. And again, it's going to have to be a lot more than just iPhones.
Angelo, it's good to get your view. Thank you, sir. Angelo Zena there of CFRA. I give Tim Cook a lot of credit for stepping aside. And I don't want to make too much of a single day's move, but when you see those big gaps lower because a CEO has left and something's gone wrong with succession planning, I think the fact you see such a muted move in the stock is credit to Tim Cook for taking the succession planning very, very seriously. That's what you expect. That's what you should see when a CEO steps aside.
Especially because John Ternus was pegged as the guy months ago. I mean, people have been expecting this to be the successor. And so, frankly, they're prepared for it. And frankly, they're kind of welcoming it, given that there isn't much more of a reaction in the stock market.
We'll have more on that story for you a little bit later on this morning. Coming up next, we'll catch up with Stephen Cook of the Council on Foreign Relations as the Iran ceasefire deadline looms. And we still don't know if we'll have talks between the US and Iran and at what level. Plus, Danny's going to be back. She's got your morning movers. We're going to look at Apple, edging slightly lower. We're down by not even 0.2%, following the announcement of Tim Cook's successor. From New York City this morning, good morning. You're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Stocks bouncing this morning, very muted declines in yesterday's session. Keith Lerner over at Truist, we'd view weakness as an opportunity. How many times you heard that? Max Kettner, HSBC, these are exactly the sorts of dips one will have to use very quickly. You'll have to be fast. Here we are. Here's the bounce, up by 0.4%. On the S&P, on the Nasdaq 100, up by 0.5. The appetite to buy this equity market, stunning.
Yeah, and it's sudden. And I think that that's really the point that a lot of people keep taking home, that this rally has been absolutely a huge whipsaw and kind of, if you blink, you miss it. I love that JP Morgan just raised their S&P 500 year-end forecast to 7,600 after downgrading it to 7,200 last month in the wake of what we saw with respect to the war in Iran. It highlights how quickly this is moving and how people can't really get a handle on it. And right now, people are saying, okay, that geopolitical stuff, as Savita Subramanian was saying, is probably over. Let's just focus on the fact that tech earnings look great and that tech will power us to the moon.
I said it when he did it. Venu, over at Barclays, raising his price target in the middle of the war. He had to respect it at the time. I had no idea how it would work out, but so far, so good as we get deeper into April.
And when we talked more about that call, we said, well, what happens if the war continues forever? And they said, well, ultimately, that's going to just eradicate this view. We're wrong. And the war has continued, and they're still right, because ultimately that is the direction of travel. So at what point do we get some sort of right-sizing and understandings? You know, the whole idea of less you know is really kind of getting to me today.
We pushed back hard on him because it felt unorthodox to come on in the middle of the war and raise your price target. And he said if he's wrong, he'd come back on the show. And guess what? He's been right. Cheers to him.
Equity futures this morning, again up 0.4% in the bond market. Yields just unchanged. Going into Kevin Walsh's testimony later on this morning on Capitol Hill in front of the Senate Banking Committee at 10 a.m. Eastern Time. We've got yields doing absolutely nothing. 425 on 10s, 2s at 373, and 2s just anchored around Fed funds. And the idea this Fed is going nowhere fast.
Because that's what they've told us time and time again, even the more dovish members. I'm thinking of Chris Waller, the Fed governor, who had previously supported a rate cut because of weakness in the jobs market, reiterating his concern about the jobs market, but saying ultimately there isn't justification to cut rates with inflation inflecting higher on the heels of this war.
Brent crude this morning, 95, WTI 89, just slightly softer. We're negative by, let's call it 0.5% going into potential, I stress potential talks between the US and Iran in the next 24 hours. That's the price action this morning. Cross asset, let's get you some single names, some morning movers. Danny has more. Hey, Danny.
Hey, John, it's the top corporate story over the past 12 hours. Tim Cook stepping aside to executive chairman, and John Turnus, the hardware chief, taking over. This ends Tim Cook's tenure, where he increased the market cap by tenfold. Not a lot of action. In fact, the President of the United States putting on Truth Social moments ago a very long post about Tim Cook, praising him, basically saying he's an incredible guy. Dan Ives of Wedbush basically saying that the timing creates questions. It could make sense, but there are big shoes to fill. In some earnings news, we heard from United Health, and this stock had really been suffering. It was only in January that they increased what they thought would be their loss for the year. Instead, we get the widest beat, the widest margin of a beat for United Health in 5 years. They also increased their expectations for the entirety of the year. They're able to bring costs in. That beats a key metric, so shares surging this morning up by 7%. Finally, GE Aerospace also reporting earnings. Now, they do have to contend, this jet maker, they have to contend with the war in Iran, but still travel demand is very healthy, which helped the engine maker. At the same time, they kept their guidance for the year, but guided towards the high end of the range, and also guided that they expect oil prices to remain elevated. Those shares up 1.6%, John.
Danny, thank you. Thank you for the update. More from Danny in the next hour. On our radar this morning, President Donald Trump saying he's unlikely to extend the Iran truce that's set to expire tomorrow. The president posting on Truth Social earlier this morning that Iran has violated the ceasefire numerous times. Elsewhere, a historic shift at Apple. CEO Tim Cook stepping down in September after a 15-year run. The hardware chief, John Termes, taking over. Cook transitioning to executive chairman. And finally, Amazon doubling down on AI, pouring an additional $5 billion into Anthropic. The deal securing a massive 10-year partnership for Amazon's own cloud services and chips. Turning back to the Middle East, Vice President J.D. Vance expected to travel to Pakistan as doubts remain over whether or not another round of peace talks between the U.S. and Iran will actually take place. With the latest, Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, as you mentioned, President Trump says that he's unlikely to extend that deadline, and the White House is now threatening further escalation, including targeting Iranian civilian infrastructure if a deal is not made in time. Though we're getting a little bit more insight into the negotiating tactics, if you will, as a White House official outlines to Bloomberg News that President Trump's varying comment should be seen as creating strategic ambiguity that the U.S. can use in any potential negotiations. Though, of course, that's not the only ambiguity amid this uncertainty about whether or not Iran will send a delegation to Pakistan, as the vice president, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are expected to depart later today. Though at this point, they haven't taken off yet. And we got this post from President Trump within the last hour saying that Iran has violated the ceasefire, which is raising those doubts further. Now, our reporting has indicated that leadership within the IRGC is pushing for a tougher negotiating stance compared to, say, less ideological figures such as Iran's foreign minister or its parliament speaker, who seem to be more amenable to a potential deal with Washington. However, John, perhaps universal among Iranian officials is that we keep hearing that the country does not want to negotiate while the U.S. blockade is still in place. President Trump indicated yesterday that it's not going anywhere until a deal is signed. And while the waterway still remains virtually closed, we can say that data analyzed by Bloomberg News shows that at least 3 vessels appeared to have made it through the strait overnight.
Tyler Kendall with the latest. Tyler, thank you. More from Tyler throughout this morning as we anticipate potential talks between the two sides. Stephen Cook of the Council on Foreign Relations writing the parties are very far apart on the most important issues. The question is whether the president has the patience to continue to squeeze Iran or if he is willing to escalate. Stephen joins us now for more. Stephen, welcome to the show. Good to catch up. Important day. Let's see what the next 24 hours holds. But ultimately, an important question for you. Is Iran willing to have regime collapse? And is the US willing to maintain maximum pressure and take the consequences in the energy market as they come?
Well, the regime believes that it's winning and that it has weathered the worst of the American and Israeli assault and come through it with the IRGC completely intact. So they are, at least the leadership of the IRGC, which is Ahmed Vahidi, who is essentially running the country, wants to take a tougher position in negotiations. The president is variable, as Tyler Kendall's report suggested. He wants to have a deal, but the Iranians have violated the ceasefire. He's going to keep the blockade on the strait for as long as he can. I would expect that the president does not want to escalate and is looking for some opening here for the Iranians to agree to some sort of extension of the ceasefire. But again, the Iranians are driving a very hard bargain because they believe they're winning.
Does the IRGC give the green light for the talks to go ahead tomorrow?
Well, again, Ahmed Vahidi, who is the head of the IRGC, who is quite a hardliner, will give the go-ahead for talks as long as Iran's demands are maximal. There seems to be somewhat of a split between two figures within the IRGC, the parliament speaker, Ghalibaf, and Vahidi, over the way to pursue Iran's interests here. Ghalibaf is suggested to be somewhat more flexible, whereas Vahidi is the hardest of the hardline and would rather Iranians eat dust than capitulate to the United States.
He did seem more flexible until last night. Ghalibaf tweeted this: "We do not accept negotiations under the shadow of threats, and in the past 2 weeks we have prepared to reveal new cards on the battlefield." Is the IRGC prepared to escalate?
Absolutely. I think that the IRGC would go back to the battlefield. Once again, they have felt that despite taking a beating, they have approached this conflict in an asymmetric way by targeting America's partners, by targeting the global economy, by targeting the Strait of Hormuz, which they now have at least partial control over, which is all accrued to their benefit. And so the IRGC, highly ideological, would continue this fight. They have said that they have nerves of steel and that they will not capitulate under threats of the United States.
What would the United Arab Emirates like to see, given the fact that they're the closest neighbor to Iran and have arguably suffered the greatest amount of damage?
Indeed, the Emiratis have taken more fire than even the Israelis. But the Emiratis have said that they are going to draw closer to the United States. Their rapprochement with Iran, which was happening for a couple of years before this war began, is now over. And they would like to see the Strait opened. They volunteered to be involved in any kind of military operation to reopen the Strait, and have in fact engaged in military operations against the Iranians in response to Iran's strikes on the UAE. So the Emiratis are taking a pretty tough stand here. They are worried over the long term about what this might do to their development model, but that's why they are taking a relatively tough stance. And Emirati officials have said that they will draw closer to the United States as a result.
Last week, we talked about cognitive dissonance, the fact that when we talk to policymakers, they don't foresee an easy end to this anytime soon. And when you speak to people in markets, they're done with it. They don't want to hear about it. They've moved on. When it comes to jet fuel, when it comes to tangible assets that potentially are running out in places like Europe, do you have a sense of your likelihood or your categorization of the likelihood of jet fuel running out in certain places and suddenly global flights getting canceled as a result of this ongoing conflict?
Yeah, it's very interesting to see the markets, and you all know better about that than I do. But there is, when you talk to energy analysts, there's a difference between the markets and the molecules, and that there is that countries that are producing oil and other hydrocarbons that are critical to the running of the global economy are having to shut in, and that the oil is starting to become scarce. So we might see in places like the UK and others the rationing of jet fuel. I wonder if market actors will then wake up to what a serious crisis this really is.
Not seeing that right now. Stephen, it's good to hear from you. Thank you, sir. Stephen Cook there of the Council on Foreign Relations. Airlines up nicely this month. I think Delta's up by 7%. We'll hear from United later on this afternoon. Discretionary names up by double digits on the S&P 500 so far in April. Energy stocks down double digits so far in April.
Yeah, all of this, though, with Alaska Airlines pulling their full-year guidance, saying oil prices just are too much of a wild card for them. JetBlue saying to their shareholders and their employees, we're not going to have to file bankruptcy this year. It's not a good thing when you have to tell people you're not filing for bankruptcy.
Bar's pretty low for that company right now, right?
It is a difficult time for the regional players and for the ones that aren't very large. And so you do wonder at what point this becomes a larger story, or is this just going to be a consolidation, winner-takes-all type of thing?
Future session highs up by 0.5% on the S&P, with an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. 3 ships, including an Iranian vessel, crossing the Strait of Hormuz, even as the U.S. and Iranian blockades remain in place. The Iranian vessel stopped signaling its location after moving into the Gulf of Oman. Around 800 vessels remain stuck in the Persian Gulf. Amazon is investing $5 billion in Anthropic and may inject $20 billion more over time. Anthropic, the maker of the Claude chatbot, is planning to spend more than $100 billion over the next 10 years on Amazon cloud services and AI chips. Those shares up 3%. And Labor Secretary Lori Chavez DeRemer is leaving the Trump administration. She has been the subject of an inspector general probe following claims she engaged in an inappropriate relationship with a staffer, committed travel fraud, and was drinking in the workplace. That's your Bloomberg Brief. John.
Yahira, thank you. Appreciate the update. Up next on the program, Kevin Walsh in the hot seat.
I really do think Walsh is a great nominee, but I'm not going to have an investigation out there. We have to have an independent Fed, and we can't finesse this.
Up next, we'll catch up with Tony Rodriguez of Nuveen from New York City. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Session highs up by 0.4% on the S&P, and the Nasdaq up by 0.5. In the bond market, 2s, 10s and 30s shaping up as follows. 2s right now up 2 basis points, 3.74. Under surveillance this morning, Kevin Walsh in the hot seat.
I really do think Walsh is a great nominee. In fact, the short list was great. I told the president that. But I'm not going to have an investigation out there. We have to have an independent Fed. And we can't finesse this. They either need to move forward with a compelling investigation that convinces me I was wrong, or resolve the current investigation and move on.
Right now, we're struggling to move on. Fed Chair nominee Kevin Walsh preparing for a grilling on Capitol Hill today, vowing to protect the central bank's independence while pushing for major reforms. Bloomberg's Mike McKee has the latest from Washington. Mike, you've gone through that prepared testimony. What are you focused on?
Well, Kevin Walsh addresses the elephant in the room right away by talking about independence. Remember, the president said he wouldn't appoint anybody who didn't want to cut interest rates. So the question for many Democrats is how beholden to Trump is Kevin Warsh going to be? He says in his testimony that I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Simply stated, Fed independence is largely up to the Fed. What does he mean by that? He goes on to explain the Fed has to take responsibility for inflation. It is the Fed's lodestar. It is the most important thing they do, and Warsh pledges he will keep inflation low and steady. But he also goes on to say that independence does not extend to other areas of Fed responsibility, including public monies. Think buying QE or maybe remodeling a building. Doesn't extend to bank regulation or international finance, which could be interesting because we've seen these reports about the UAE asking the U.S. for a swap line. Fed probably wouldn't want to grant it, but would he do it because the Treasury Department wants it? There'll be a lot of questions about the relationship between Treasury and the Fed. You mentioned the delay, of course, with Tom Tillis. The calendar for what happens next with Kevin Warsh is kind of compressed. It's up to Jeanine Pirro when they get a vote because Tom Tillis isn't going to change his mind and do any kind of vote, allow any kind of vote until she drops the issue, and he can't get confirmed until he gets a floor vote, which he can't get until he gets out of the committee. Jay Powell's last meeting is April 29th. That'll be next Wednesday, and it'll be very interesting to hear what he has to say. His chair term ends May 15th. He says he'll stay on if Warsh is not confirmed. The next Fed meeting after next Wednesday is June 17th. So a worst-case scenario might be that Warsh is confirmed by at least that time. I suppose you could do a double worst and say he stays on the sidelines for some time if the U.S. Attorney for Washington does not yield in her investigation.
They haven't taken the off-ramp so far. Let's see if it changes. Mike, thank you. The senator from North Carolina is not backing down and not backing down anytime soon.
No, he's not. And he's heard it there. We've been hearing this for months from Senator Tillis. He talked about this with us in Davos. He's basically saying there's no gray area for him. You can't fudge this. The investigation needs to be dropped for him to move forward.
Tony Rodriguez of Nuveen writing the following. We've incorporated Warsh's likely eventual confirmation into our forecast, which currently calls for 1 quarter-point rate cut later this year. Tony joins us now for more. Tony, good morning.
Good morning.
Timeline and policy and substance. Let's kind of play with timeline for a moment. Middle of May, Chairman Powell's term ends. Best guess, what happens next?
Well, I think Tillis is going to hold firm, as you mentioned, and I think that you're lucky if you'll see something by the end of the summer. We do think you'll see something by the end of the year because we think this investigation really doesn't, as you've seen with some of the court decisions, have significant merit to it. So I do think it'll eventually be dismissed, but you are going to have to wait well into the second half in our minds.
What will leave the door open for further rate reductions in your mind?
So in our minds, what leaves room is that right now we think they're above the neutral rate by, call it, 50 basis points. We think that as you get to the end of the year, you'll begin to see some of the negative economic impact on growth from higher energy prices. But you will also begin to see some of the pass-through of tariffs begin to anniversary itself. So inflation will end up, we'll call it closer to 2.5%, maybe 2.7 by the end of the year, but with an outlook in 27 for a decline into the low 2s. That'll allow one cut to still be above the neutral rate, but kind of reflecting the path of inflation and some of the negative impact on the consumer from higher energy prices.
Inflation is a choice, and the Fed must take responsibility for it. Does that sound like a man who wants to cut rates?
No, but he also sounds like someone who's speaking to a market that is assuming his independence and his credibility is a bit tarnished by what happened through, we'll call it the interview process of all of this. So I think he's leaning into that hawkish history that he's had, but I think the market's really going to still be believing that he will be more dovish than what the rhetoric is and what his history shows.
Yesterday, Michael Kontopoulos of Janus came on, and he said that he could see actually a rate hike by the end of this year, just based on the fact that financial conditions are incredibly loose. It doesn't seem like people are particularly concerned about the Fed being overly tight right now, and inflation is still running significantly above that 2% target for more than a fifth straight year. So how do you sort of game out that likelihood or not in your fixed income outlook?
Yeah, and again, I think the main thing for us is that we do think you'll see inflation begin to recede as we get to the second half. We think that as long as energy prices remain kind of below $100 a barrel, and that still is our forecast that will be below $100 a barrel, inflation won't be the dynamic that is continuing to accelerate and requiring a hike, while at the same time, we do think growth will be negatively impacted by a couple of percentage points of GDP. Unemployment maybe stays steady to rise a bit, primarily because of the supply side element of that. So that stress on the consumer, we think it begins to show through in the economy, and that's where the Fed will begin to say, we don't need to be 50 basis points above our neutral rate. We can calibrate a bit. So it's not an aggressive cutting cycle by any means. It's just the end of the cutting cycle getting down to neutral that we think kicks in by the end of the year.
Tony, this is going to be a very high-profile hearing, and the political theater is going to be max level. But as a market participant, do you think there's anything market-worthy that will come out of this?
Quite honestly, we don't. I mean, I think there would be potential for that if he were to say, begin to talk a little bit more clearly to the markets about maybe his views on, say, balance sheet reduction, which he's talked about, on his views about where inflation is heading and why there could either be further cuts or not. You know, Mirren has been quite clear in his discussion of why he thinks there should be many cuts, whether you agree or disagree with it. If he's clear, then there could be some news. But from what we've seen historically in a lot of these confirmation hearings, they are more about political theater.
The questions
now,
are bad.
So unlikely.
Brutal, but true. They often are. A great question for the chairman of the Federal Reserve next week. Is above target inflation a choice at the Federal Reserve? I'd actually like to hear Chairman Powell's answer to that, because in the last news conference he was talking about being surprised by supply-side shocks that were kind of out of their control. I'd like his response to that next week.
Yeah, especially if ultimately a lot of people say it is a choice, and people have said that they have not wanted to torpedo the growth in the employment market really deliberately because they saw the scarring that happened after 2008 and 2009. They want to avoid that. So clearly they've prioritized this. Question is, how do you codify it and remain credible as an agency that's still trying to target 2%?
You might not like the medicine. Let's put it that way.
Correct.
The chairman talked about that pain. Remember the pain speech? We'll remember that. We were in Jackson Hole at the time when he was going through it. Then we didn't see much pain, did we? Subsequently in the years after.
Which, again, goes to the point of, is any Fed in the future willing to exert pain in terms of torpedoing the labor market? And is it worth it? Or should there be an escalation of the range of potential inflation targets to maybe between 2% and 3% rather than just have a 2% fixed target?
Tony, enjoyed this. It's always good to catch up with you, sir. Thank you. Tony Rodriguez there of Nuveen. Ahead of that testimony from Kevin Warsh, the Fed chair nominee, later on this morning in front of the Senate Banking Committee at 10 a.m. Eastern Time. We've got a lot of questions about policy, but our hopes are pretty low going into this when it comes to the answers we might get and the questions that will be asked.
Even if he gives answers, even if he gets to ask good questions, will people regard what he says with any credibility, given the fact that his comments were actually noteworthy and people are just like, yeah, that's what he has to say?
I agree. I think some of that in the opening testimony was fairly hawkish.
I agree.
But when you start to think about who it might be for and what purpose that is, and then people are willing to park it like so many other things right now in financial markets.
The less you know.
Up next, Katie Kaminsky of Alpha Simplex Group, Walter Piecyk of Lightshed Partners, Dana Peterson of the Conference Board, Troy Gajewski of Future Standard. The third hour of Bloomberg Surveillance, next.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Markets are becoming a lot less responsive to these headlines.
There is still a lot of hope and optimism in this market.
It was time for a bounce.
There's a bonding happening across markets.
The market is over exuberant in terms of a fast fix to all of this.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. The opening bell, 90 minutes away. Your prices, your scores look like this. Equity futures on the S&P 500 firmer by 0.4%, on the Nasdaq up by 0.5. In the commodity market, Brent and WTI slightly lower, down by, let's call it, 1/4 to 1/3 of 1%, going into potential talks between the US and Iran. The day ahead shaping up as follows. Later this morning at 8:30 Eastern Time, US retail sales, a hearing for Kevin Warsh, Fed Chair nominee, later on at 10 a.m. Eastern Time in front of the Senate Banking Committee. Then after the close, Bramo, one for you. United Airlines, Scott Kirby, reporting earnings.
Yeah, to me, the airlines are the key players in all of this. We talk about the cognitive dissonance between the markets and what we keep hearing on the ground with respect to commodity strategists and beyond. The airlines bring that together. They have to get jet fuel to go places like the U.S. to Europe and then back again. And at what point will they not be able to? At what point are they seeing their jet fuel costs rise so much that the likes of JetBlue have to say, well, at least we're not considering bankruptcy? This is a new paradigm, and you're going to start to see it in some of the earnings.
It's another risk for the airlines. And at the moment, while in the United States, it does feel like we're a little bit more insulated, in Europe, the situation is becoming dire. Once again, Fatih Birol hitting the airwaves, talking about how the heat for him, this is the worst energy shock he's seen. And he has said that Europe is just 6 weeks away from running out of jet fuel. At the same time, the administration is taking a very aggressive posture. Just overnight, again, the U.S. boarded another Iranian-linked vessel in the Indo-Pacific. All of this while potentially we're supposed to have peace talks tomorrow, a second round. But right now, neither delegation has left their home state.
Perfect time to buy an airline. Looking forward to catching up with Scott Kirby in the next 24 hours. Lisa, catching up with the United Airlines boss, 9:15, I believe, tomorrow morning. Don't miss that. Questions not just about this energy shock, but also the potential for a combination in the ally space.
Yeah, one which has been shrugged off, at least by Americans, saying we have no intention of being purchased by United, nor would regulators sign off on it. Of course, there were these rumors that United was interested in doing so. Nonetheless, there are real questions about the likes of Spirit now asking for a government bailout. JetBlue saying, well, at least we're not declaring bankruptcy. Frontier, I mean, all of these questions about what kind of consolidation we could see that's very much ripe for the taking.
Well, Reuters reported that he actually floated this to Trump. So you got to find out from the CEO what the president turned around and said. Was he maybe interested in this? He likes big deals.
I'm sure he'll just, reveal all tomorrow.
I'm sure he'll engage in everything. This is what I'd like and at what price.
Yes, exactly.
I wish they would be that transparent, but I doubt we're going to get that later on.
No, but the forward look, though, is going to be really important, especially from some of these key players that have to manage on the ground and not just have the cognitive dissonance that we all have.
United Airlines reporting later on this afternoon after the closing bell. Lisa catching up with the CEO, the boss, Scott Kirby, tomorrow morning at 9:15 Eastern Time, right here on Bloomberg TV. Coming up this hour, Katie Kaminsky of Alpha Simplex with stocks trading near all-time highs. Walt Piecyk of Lightshed Partners on why it was time for Tim Cook to step aside. And Troy Gajewski of Future Standard looking ahead to the Senate confirmation hearing for Kevin Walsh. We begin this hour with stocks edging higher ahead of potential peace talks. Katie Kaminsky of Alpha Simplex writing, equity markets have been trying to look past the current conflict in Iran and find footing for a recovery from March. So far, this recovery has been a fit of starts and stops. Katie joins us now for more. Katie, good morning. Good to see you. What have you been more impressed / surprised by, the rip-roaring rally in equities or the stability in fixed income?
Well, I think I'd probably say the most surprising is the equity moves in terms of that you had a big reaction on Friday, then you had negative news on Monday, and it was sort of ignored. Fixed income is a little bit of a conundrum, and that's something I'm quite interested in because you're really balancing between inflation risk potential and where does the Fed go? And that is a little harder to sort of sort out.
Do you think there's some paralysis in the bond market then?
I wouldn't say, for me, it's maybe not paralysis. I think it's really trying to understand what this inflation shock means because we're so used to focusing on Fed policy and Fed trajectory. We're not used to sort of navigating what inflation shocks mean for bonds.
It seems like no one's really thinking about what an inflation shock like the oil one would mean for equities either. People are just buying and not thinking, again, in particular, buying big tech. Are you seeing an exhaustion of the technicals under the hood when it comes to some of the just buy the dip, knee-jerk reaction?
Well, you have seen, I mean, for us on the systematic space, we have seen sort of a deleveraging, getting out of equities, and now you're seeing flow coming back in as those signals are recalibrating. And so you're seeing not just that hope, but you're also seeing the potential push of market buying based on technical signals moving back into the market.
Where is it coming from? And I ask this because people are talking about how a number of countries like the Middle East have to retrench some of their funding at some point to try to invest in domestic concerns, especially following the war. There's an issue in Europe of how much to invest domestically with respect to the defense sector and beyond. Are you seeing any kind of regional patterns in terms of where capital is coming from?
That's a very good question. I don't really think we have a view on that. You do see that there is going to be some differences based on which areas have more energy dependence. And that is sort of the theme that we've actually been following a little bit more, is more the idea that, the U.S. is a little bit more sheltered from some of this, although eventually we will see that type of shock coming into potentially disturbing growth. Inflation has the ability to then disturb growth, and then, of course, you have to figure out how policy is going to navigate that.
As John or one of our guests mentioned earlier in the program, we're able to live with $80 oil in this country. Could we continue on this path with $100 oil?
I'd say, that's where the time horizon really matters. If you look historically at how geopolitical risks have affected oil prices and supply shocks, when the duration is long enough, that's when you start to see the pain points. I think we're kind of hoping that the market's hoping that we can see through this and that we'll have some sort of resolution within the next month. The reality may be very different if we can't get to that resolution, and then the impact of those inflation shocks will be much
Tricky
more
question,
severe.
I know, but it's the obvious follow-up. What's long enough? It's almost 2 months. What's long enough?
Well, I'm sure, of course, the 60-day deadline, so around 6 weeks or longer, you're going to see after 60 days, then you start thinking about some of the congressional issues related to that. But I think at the point when you actually start people seeing the pain point, aka they want to buy a flight, they want to do this, and they can't, I think that's when you're going to see, you actually start to see people react when it hits them.
They're seeing it in Asia. They're about to see it in Europe.
Which is the reason why people keep saying from Europe and from Asia, what's going on with the United States? I mean, European officials were in Washington, D.C. last week. They said, you know, we're feeling terrible. We're looking around. We're seeing the reality on the ground. And then we talk to the Americans, and they're like, woohoo, this is a great time.
Although it is showing up in the polling. A lot of families are saying, about 2/3 of polling done by NBC over the weekend, that gas prices are becoming a bigger financial strain on them and their families right now.
The S&P 500 is not the economy. We've gone over this a million times. It's anchored to so many other different themes. The big tech companies are still going to spend hundreds of billions of dollars. That's going to support this stock market. We're seeing that the AI ecosystem is taking off. Hardware, you see that in South Korea and other places as well. The earnings story, this is where things are a little bit more nuanced for me. Do you take comfort in the fact that earnings revisions and the estimates for earnings have improved through this war? Or do you maybe take a little discomfort from the idea that that's come from only a handful of stocks? So one or the other, and it's a difference of perspective, at least for me, when it comes to earnings and the outlook.
Yeah, is concentration risk a feature or a bug? Because ultimately you've got a number of very big companies that are performing very well and delivering huge profits. Is that a good thing? Well, in times of stress, that's what supports the United States. And in times of weakness, people are saying, well, that's a ballast, because ultimately, at least you could depend on that. So it's sort of, heads you win, tails you lose kind of question. And people are really depending on that concentration right now.
Katie, it's good to see you. Thanks for being here. Katie Kaminsky there of Alpha Simplex. Your equity market close to all-time highs, bouncing back this morning by 0.4% with an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. We'd start with our big corporate story. Apple naming a new CEO. Hardware boss John Ternus will replace Tim Cook on September 1st. Ternus has led the hardware engineering division since 2021, and sources say he's a strong believer in AI, where Apple, of course, has struggled to make an impact. Spirit Airlines is considering offering the U.S. government an equity stake. Sources telling us here at Bloomberg the discount airline is hoping to stave off a potential liquidation. Any proposed bailout is likely to get pushback from competitors. And Kevin Warsh's confirmation hearing is set for 10 a.m. this morning. President Trump's pick to be the next Fed chair will face questions about central bank independence and his rates outlook. Lawmakers may also ask him about his personal wealth, which of course includes assets worth at least $192 million. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next on the programme, the Morning Calls, plus Walt Piecyk of Lightshed Partners on why it was time for Tim Cook to step aside. That conversation up next, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The writing was on the wall with Tim Cook at some point to have stepped down. It did come sooner than we anticipated. But that being said, you kind of look at, where Apple is today and what they're pivoting into. And this is a critical year in terms of the shift to AI. I think it's the right move to hire a product guy. I think it's also the right move to, finally pivot away from Tim Cook.
Angelo Zeno of CFRA joining us a little bit earlier on as Tim Cook steps aside. Equity futures, okay, firmer by about 1/3 of 1% on the S&P, on the Nasdaq 100 up by 0.4. The one stock in focus in our morning calls, it's Apple. First up is Evercore, reiterating its outperform rating following the CEO shakeup, feeling encouraged by the potential for new AI features. Your second call from Morgan Stanley maintaining its overweight view on the stock, the firm noting near-term changes are unlikely. And finally, Wedbush reiterating its outperform rating on the iPhone maker, highlighting growing pressure for a successful AI strategy. Sticking with Apple, Walt Piecyk of Lightshed Partners has been calling for a change at the top of the iPhone maker for nearly a year.
The suggestion that only Tim Cook is the CEO to run this company is crazy. You clearly need someone that can move forward on a lot of the product development. If they don't have a succession in place today, a CEO internal at the company that can take over this company today, that in and itself is a failure of the CEO of the company as well as the board.
What reacting to Cook's resignation, writing Apple has stumbled embarrassingly on AI. This is clearly just a different skill set, and credit Cook for recognizing that and stepping aside. Walt joins us now for more. Well, welcome back. And I messaged you yesterday, credit for making a call 12 months ago. Can we just reflect on that briefly? Well, how much heat did you take when you published that almost a year ago?
I mean, I took a lot of heat, I think, even from some of the experts on Bloomberg calling the call blasphemous. And how can you dare suggest that Tim Cook could step aside, even though we were going through this monumental change in AI? But that's fine. I mean, that's part of the job. And the issue was never look, we've recommended this stock in the past. Tim Cook obviously did an excellent job, and what they needed was someone that could crank out volumes and make those tweaks. They missed out on some product cycles, and there's some growth issues. You have more cyclical growth now at the company when people need to upgrade iPhones. So the whole point of the call, last year was okay, you needed it. And by the way, at the time, they're like, who's going to replace him? Who's going to replace him? Thanks for playing those clips. It's obvious. You generate someone internally. And if you weren't, that shows a massive failure at a company. So obviously the company didn't fail. They have Turnus here. The stock set, has done exceptionally well, even since last year. But you're facing existential risks to the company, as many companies are, as we head into this AI era.
Well, let's just piece that together. You use the word existential risk, and yet what I hear from a lot of your peers this morning is continuity and no near-term changes. Do you think this is the right person?
I mean, I hope there's going to be some near-term changes in the, what's going on at the company, because, they're clearly not on the right path in terms of an AI strategy. I mean, I think, a couple of weeks ago or maybe a month ago, when they opened up who Siri can reference, and can we all agree that Siri just is still not good? I mean, we've been promised Siri is going to get better, and it's still terrible relative to what you use in any of the AI LLMs today in terms of an audio interface. But a couple of months ago, they added, they opened it up because they only had OpenAI before, right? Where Siri would theoretically forward you to OpenAI, to chat in order to get answers. That implementation, anyone that tried it, they realized that was not good. All they're doing is adding additional LLMs. That's not 4D chess. Many people are calling that 4D chess. That's not 4D chess. That's just adding another LLM to a Siri. That's just not good. So I think just because Turnus is taking over doesn't change things overnight. But hopefully, with a new CEO, he can change the culture of the company and move in a path that prepares them for what's about to happen with AI.
Walt, has a ship already sailed? Is there a competitor in the smartphone industry that already has gotten an upper hand in deploying AI in a better way than, say, Siri?
I mean, it's hard to know. We'll know in a year or two whether the ship has sailed. But I mean, and I said this back, a year ago, every day that they don't make a change is a day it's going to be harder for them to catch up or potentially get leapfrogged by someone. Obviously, Google is the major competitor in the space. This is 50% of their revenue is still iPhone. Services is still relying on iPhones. Android is obviously the major competitor. On the opposite side, their share has only gone up over the past year. However, we have this new thing. You have OpenClaw that has shown us what agentic can do. This is like kind of a nerdy thing that people do, but it shows you how close we're getting to agentic. Anthropic and others will start integrating this in. How we interface with our phones is likely to change. When you go through major technological transitions like that, that's when industry leaders tend to potentially lose share, right? Now, it doesn't mean Apple can. Apple's in a tremendous position to maintain that share if they can execute an AI, but everything that they've done up to this point has just not delivered on any promises or shown you some belief that they can continue to succeed in this area.
Well, they also have funneled a lot of their free cash flow into share buybacks and dividends. Going forward, as an investor, would you rather see a continuation of that type of deployment of cash, or would you like to see capital invested in, say, an acquisition or a new initiative?
I mean, look, Apple's done a great job without having to acquire a company. That the major acquisition they made was Beats, which was nothing in today's dollar terms, and really didn't change much at the company. The other thing that I think you're referencing is spending the tens of billions of dollars to build their own models, which again, that was the 4D chess everyone was talking about. So they have avoided that. That's part of the reason the stock has done so well, right? All these companies that have invested money relative to Apple, who seems like, okay, they've escaped having to invest that money. The question is there going to be repercussions for that in terms of, them not having a product that consumers want or be positioned, where none of it may matter, right? It just might not matter at all, whether they spend the money or not in that, if you're not using your phone because your agent, wherever that agent lives, is ordering your Uber, is ordering your DoorDash, is doing all these things for you, the way you interact with these phone, or maybe it ends up being glasses or pendants or whatever, it just is going to change. So whether they invest the dollars in an LLM or not, it might not matter in terms of what the important product is to Apple, which is the iPhone, which represents half of sales.
Walt, hearing you speak and looking through your research where you say, are there core cultural issues that need to be drastically changed in the company? Are people showing up to the office 5 days a week? It sounds like you're saying Apple's gone a bit soft.
I mean, look, the product development over the past 15 years, the last big product categories that were successful, at least, were, the watch and AirPods. And these are a product of Johnny Ives, who's no longer at the company. And I think there's been plenty of books written about, this tenure and the need to look for innovation, but just look at the lack of new product categories. You've had categories that they've attempted to develop. I mean, autonomous cars are obviously going to be a huge thing. There was a lot of dollars spent in Apple. They went nowhere. Vision Pro was kind of an effort in, I guess you would call it the immersive metaverse, and that was effectively a flop. So I think, at the end of the day, that's the cultural change that I think you need, meaning a CEO that's getting more involved with the product and the software teams to get products into the market, and maybe an overall culture at the company to drive to innovation as opposed to optimizing, chips, in their existing phones, or, moving the manufacturing to China in order to get better margins, or tweaking up the price of an iPhone, just to generate some revenue growth in a particular quarter.
Can Turnus do that with, of course, Tim Cook sticking around?
I mean, look, so one of the knocks that people will say is like, oh, he's a hardware person and AI is a software. I don't think that's really the issue. I mean, you have to be, I think, product focused. I think he kind of checks that box. Willing to work with the team. I think he checks that boxes. I mean, he's termed, I think, a nice guy. But I think, perhaps more involved with, putting pressure on teams to get things done. So sure, he can be the person, but there's obviously risk. Like, this is a mega company. We've lived with Tim Cook, for 15 years, who's done an exceptional job at the skill set that was needed. So there's obviously risk. No one really knows, until you're seen. You have the NFL draft coming up on Thursday. You can pick what you think is the top player, the top quarterback, and it could be a complete flop, or the guy can take you to the Super Bowl. So, we'll just have to see how that plays out.
Well, I just wanted to finish on something that I know is important to you and to the team over at Lightshed. I've known you a long time. I've never gotten the impression that you are willing to massage the message out of fear of losing access to a management team. I think that's really what Lightshed is born out of, together with Rich Greenfield, your partner, who on countless occasions upset Bob Iger over at Disney by putting a sell on the stock and communicating quite clearly what he thought about the strategy and why he thought it was failing. Well, what do you think we can all do better? Not just on this particular occasion, but just for the whole industry. And I don't just mean on the South Side, by the way. I mean the media industry as well, because I think many people in journalism are guilty of the same thing. Whoa. What do you think we can do better?
I mean, I get it, right? There's definitely pressure for access, whether you're a reporter or for an analyst, and there's value in being able to actually talk to these people directly. But at the end of the day, truth is what matters. Whether you're getting leaked some information or not, to have a great story, you still have to kind of call out what the issues are in terms of AI and whether there's change that's needed. And I don't know, like it's just the way you approach it. Earlier this week, last week, you saw someone interview Jensen from NVIDIA, and I thought it was very telling. And the interviewer did a great job. Now, maybe that person, Dvorak, I think his name is, will never get another interview again with NVIDIA. But like the value of that interview and seeing what Jensen's views were on, how they dealt with China, what competition was like, I think was incredible. And, it helps us all to have more of that. But look, there's a cost. There's clearly a cost that we see every day in dealing with this. But always truth, John, always truth.
Well, appreciate it and credit to you and the team. Walter Piecyk there of Lightshed Partners. We've seen that a few times, and we all get uncomfortable when we feel like someone's massaging the message to maintain access.
You mean that everyone has a buy rating on absolutely everything and nobody has a sell? Right, look, this is a difficult moment, especially because there's a fear of groupthink. And how much are we all thinking in the same way that AI is going to revolutionize everything in a sort of unilateral way that will lift most boats? Given how much money is going into the space, that is one fear that people keep highlighting. How do we pick the winners and losers? And are we suffering a little bit from groupthink?
I just sense we're dancing around that tension a little bit this morning as well. Because at the same time, everyone is calling this a continuity candidate and saying there will be no near-term change. We're also talking about massive change in this sector and breaking into a new era of innovation. Isn't that a failure to sit here and say we're talking about continuity and no near-term changes when we're going into that?
It's incredibly uncomfortable because ultimately he cannot be a continuity candidate, because ultimately continuity isn't going to meet the moment, which is going to be revolutionary change. Nonetheless, he has been at the company for 25 years and understands the culture and was sort of focused on the hardware. So to the degree that he has just been at the company a long time, yes. Whether he can actually revolutionize and bring the company into the new era, that's really what people are waiting to see.
Stock is down by a few tenths of 1% so far this morning. Equity futures on the S&P 500 just pulling back from session highs, now up by only a third of 1%. A report from Xauusd just moments ago, with the chairman of Joint Chiefs of Staff's General Dan Kane saying we are ready to resume major combat operations against Iran in a moment's notice. That coming from Xauusd just moments ago, setting the stage for potentially some tense talks. Retail sales data up next. We'll have a reaction for you in just a moment.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
David Solomon, Goldman Sachs. I think this will resonate with many of you. Recession risk could change. Only one tweet away. Kind of relevant to this morning and how things are set up as well, going into talks a little bit later with the US and Iran. Equity futures on the S&P 500 firmer by a third of 1% on the S&P, on the Nasdaq up by 0.4. Retail sales data just around the corner. Your bond market shaping up as follows. 2s, 10s and 30s. Bond yields look like this. Yields higher by a single basis point on 10s, up 2 or 3 on 2s. With your data, let's cross over to Bloomberg's Ender Curran. Hey, Ender.
Good morning, John. Just waiting for the retail sales numbers here. The headline number is up 1.7% to 1.4%. That, of course, likely reflects a big increase in gas prices. If you look at the sales, ex-autos rising 1.9 to 1.4%, and the control group is up 0.7% to 0.2. So just going through the numbers, John, the control group is the one that we look at because the headline number is impacted by higher gas prices. And of course, we know car sales have been stronger. So it's getting a sort of skewed effect because of what happened in the month of March. But that control group, which strips out gas prices and cars and the like, that increasing there 0.7% above expectations, hinting perhaps at some of residual strength from the tax refunds. And of course, higher income consumers also keeping things ticking over there. So better than estimated for sure, but also likely reflecting some one-off impacts due to the tax refunds. So kind of a mixed story, I would say, in the retail sales number so far.
So far, so good, though. If you put it all together, the totality of the data, a surprise to the upside. Resilience, I'd go one step further than that. That's a decent upside surprise. Control group coming in at 0.7, the estimate 0.2. Equity futures holding on to gains, higher by a third of 1% on the S&P, up by 0.4 on the Nasdaq. If you turn to the bond market, yields were higher by some 2 to 3 basis points, now 3 to 4 on the front end of the curve. 2's at 375.81, up 2 now. So an additional basis point higher on a 10-year to 4.2727. That, together with other data points as well, Lisa, over the last several weeks, the data has been better than expected stateside.
Yeah, we've seen incredible amounts of surprises to the upside in terms of economic data. And it wasn't just that the actual headline numbers came in higher than expected. The actual previous months were revised upwards. So you're getting not only a sense that this past month, as we did see gasoline prices increase, you saw retail sales increase, but it actually was off of an even warmer retail sales the previous month. Look, all of this just points to the idea that you're getting upside surprises in an economy that is supposedly being slowed down by higher oil prices. Those messages are uncomfortable to put together and just highlight how difficult it's going to be for the Federal Reserve to justify cutting rates at a moment with inflation and, frankly, evidence of strength in the economy.
Ender, I hope you're still there. I want to come back to you. Just got a quick follow-up. The story that Kevin Walsh has got to tell in front of the Senate Banking Committee later on this morning, has he got a good story to tell about the U.S. economy?
I mean, it's complicated, like you're both just outlining, John. On the one hand, we know he's kind of backed up to getting the Fed chair job, if he's confirmed, has been he sees a path to lower interest rates. But how is he going to map out that path, given, as you said, the economic data is holding up okay, the employment market is holding up, and of course now we have the Iran energy shock complication as well. So on the one hand, he has to get across the signal to the senators and the audience listening today that He can maintain credibility. He will do what's right for the economy first. But also, of course, he's playing to the political audience, the White House, President Trump, of course, pressuring the Fed to bring down lower interest rates. And he'll have to give a signal that he's open to doing that as well. So it's clearly going to be a very tricky balancing act for him to pull that off.
Enda, appreciate your time. As always, sir, thank you. Enda Curran there of Bloomberg down in Washington, breaking down the economic data. Headline, month over month, coming in at 1.7%. The estimate was 1.4%. If you strip out autos and gas, that comes in at 0.6%. The estimate was still 0.3%, so it's an upside surprise. The retail sales control group, important factor, gets plugged into GDP, comes in at 0.7%. That's an upside surprise relative to an estimate of 0.2%. And as you pointed out, Bramo, better reads for the month before as well, almost across the board.
This points to strength, especially given the fact that when you strip out autos and gas, you still see that better than expected retail sales component. It also speaks to what we hear from a lot of different executives on corporate calls. We hear about how the consumer is still strong and still spending, and that's the reason why you're getting these upside beats. So maybe the less you know, or maybe this is what we have to take away from what we're getting from all of the earnings, which is better than expected U.S. economy that's able to weather this particular oil crisis.
How many times have you used that phrase this morning?
I'm going to keep using it. I think it's wonderful.
That was
Thank you, Chris, for
fourth, I think,
right?
minimum. That was your fourth. I'm counting.
Thank you.
Keeping a tally
Poorly
over here.
informed and optimistic. Just ride the bull market.
I think
that's
that's
worked
great.
very well for a long, long time.
Dumb and rich. Let's do it.
Alex Altman of Barclays, I think, put into perspective last week when we were in D.C. and I was struggling because what was going on? They're straight, nothing has changed. And he said, look, it's really, there's going to be fits and starts on the way up or down, but you have to decide directionally, are we moving upward or downward? And he said, it's upward.
Don't drown in the nuance. Dana Peterson of the Conference Board joins us now for more. Dana, welcome. Decent data. Retail sales looks pretty robust. Have you got confidence in the outlook for the economy?
Well, honestly, that's all nominal data. What happens when you fold in inflation? Indeed, I haven't seen the real data in terms of the percent over percent, month over month percent change. But for the most part, consumers are shifting their spending. They're not spending as much on things that they want. It's more on things that they need. And we definitely need to strip out that inflation. So I think the U.S. economy will still do okay, but we're going to grow at a slower pace. Again, because a lot of the increases that you're seeing on a nominal basis are due to prices, not only tariffs, but also the shock from the oil prices, as well as the pass-through to consumers for the supply chain disruptions.
Dana, let's say on the consumer, you track confidence levels. How big is the gap between what they say and what they're doing?
Well, I don't think there's a really big gap. When we look at our own consumer confidence measures, consumers are saying, yes, we're still working and that's great, but we're not happy about the inflation. We're not happy about the fact that price levels are so high and now we're seeing them rise even further. And so our last measure indicated that consumers are wary. But again, as long as they're working, I think they can make it through.
I'm looking right now at the breakdown of the retail sales figure, and you can see a 15.5% increase in expenditures at gasoline stations. That makes sense. It accounts for the increase that we've seen in gas prices. But you're also seeing a better than expected read for furniture and home purchases, up 2.2%. Just start to wonder, Dana, is the read through here that even though gasoline prices have increased as much as they have, people still have discretionary spending to go out and to put to work, especially at the higher income that might be doing a lot of the heavy lifting here?
There is some discretion. There is some discretionary spending, and I think a lot of it is happening among those with higher incomes. But again, these are nominal numbers, and things like furniture are going to be impacted if there are tariffs on them. So that's the price. And so you have to strip out the pricing. And what we're seeing is certainly in the confidence measures and even in the hard data is that consumers are shifting what they are purchasing. They are moving towards things that they need rather than things that they want. And if they do go after something they want, they're doing it in a very inexpensive way. So I think that's something material and something that should be continued to watch.
Dana, are you seeing signs of scarring in pockets of the overall consumer? Because the overall average data doesn't suggest that to be the case at all.
I don't think there's scarring. Again, if we look back at 2022, 2023, we had much higher inflation than we do now. But the key was that most people were working and wages were averaging above pre-pandemic levels. And that's still true today. Most people are still working. The unemployment rate's super low. Jobless claims are infinitesimal. And so that means that consumers do have the bandwidth to work through the inflation, but it doesn't mean that they're not kind of economizing. And we're seeing that in our surveys.
Dana, thanks for weighing in and reacting to that breaking news. Dana Peterson there at the conference board on US retail sales. That's probably the strongest counterpoint to the inflationary fears right now. The labour market is not as tight as it was. Wage growth is certainly not as hot. Consumers aren't in a position to support those higher prices in quite the same way.
And the reason why you haven't seen the rate of wage inflation increase at any kind of pace, in fact, it's actually fallen to the lowest, I believe, since 2021. That said, I just don't see the weakness in this data. The fact that retail and food services increased 1.7% in the March data versus 0.7% in the February data points to people who can still go out and spend money and go to the bars and go to the clubs and go to restaurants and buy clothes. I mean, but this is, you just wonder how much.
I'm only laughing because is that what you're doing with your extra time and money?
Describing absolutely no one around this table, right?
Okay, all right. Going and buying.
We go to bed at 7 p.m. I don't know what you're doing.
All right, but look,
nice.
Look, moving forward, it just points to resilience, and you just wonder if it's averages driven by top consumer. I'm going to stop talking.
Just describing the life you want to have.
Yeah, 100%.
Right
we're manifesting right here.
Be aspirational.
That 4 p.m. dinner reservation. Yeah. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Recapping that data we just got, U.S. retail sales coming in a tick above estimates at 1.7%. A big bump up from February's figure. Excluding volatile auto and gas categories, retail sales seeing a 1.9% gain in March. The control group also rising 0.7%. That was 0.5% above estimates. U.S. and Iranian negotiators are headed to Islamabad for last-minute ceasefire talks as a fragile 2-week truce nears expiration. Neither the U.S. nor Iran have confirmed the timing of talks. U.S. Joint Chiefs of Staff Chair Dan Kane telling Axios, quote, "We are ready to resume major combat operations at a moment's notice." And Senator Elizabeth Warren asking SEC Chair Paul Atkins to investigate Defense Secretary Pete Hegseth. Warren citing a media report that a broker for Hegseth tried to purchase shares in a defense industry fund before the Iran war. Atkins speaking now at the Economic Club of Washington ahead of an interview with Bloomberg's David Rubenstein. You can watch that interview on the terminal at LiveGo. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, we'll catch up with Troy Gajewski of Future Standard, looking ahead to the Senate confirmation hearing for Kevin Walsh. Plus, Danny's back. She's got your morning movers. Shares of 3M sliding on a sales growth miss. Their stock is down 3%.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, But when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Tim Cook obviously did an excellent job, and what they needed was someone that could crank out volumes and make those tweaks. You know, they missed out on some product cycles, and there's some growth issues. You're facing existential risks to the company, as many companies are, as we head into this AI era.
That was Walter Piecyk of Lightshed Partners weighing in on the change at the top of Apple. Tim Cook stepping aside as of September. The new guy stepping in, and the new guy has got a background in hardware. Lots of questions about the continuity and the changes we can expect.
Yeah, is this going to be somebody who is going to play it safe, or is this going to be someone who's going to come out with a foldable phone that can also speak to you, that can really compete with the latest and greatest in the AI universe?
Do you want a foldable phone?
I don't understand it. I did a lot of research.
I saw one over the weekend. My friend's mom has one.
And?
It's Samsung. I think it's like convenient, especially if you drop your phone and it's foldable, so the glass won't hit the floor. But I don't love the crease then when you open it up. I think it's annoying. And then to put it in your pocket, it's tinier, but it's like thick. I don't think it works.
Okay, we'll see if we get one. That's Apple. More on Apple now. That and some other morning movers, some single names with Danny Berger. Hey, Danny.
Hey, John, just want to check on the price of Apple this morning. It's not moving tremendously, slightly weaker. Again, with that news that Tim Cook will be stepping aside come September. Dan Ives of Wedbush basically writing that the timing will create questions, even if this move makes sense, and it is big shoes to fill. So those are the results there. Finally, some earnings that we're looking at, 3M among them, missing on sales, even though their EPS beat. They're also sticking by their full-year guidance, the CEO citing geopolitical uncertainty. But it's also a CEO that's been trying to right-size the company, focus on core, spin off non-core assets, still shares down 3%. Surprising to the upside with earnings, though, was United Health. And this stock has been beaten up over the past year. But this time around, it beat its earnings by the widest margin in 5 years. It upgrades its view for the entirety of the year. Medical costs come down, so those shares up 7 1/3% in the pre-market, John.
Hey, Danny, thank you. Thank you for the update. Looking ahead to Danny's program alongside Matt Miller in about 15 minutes' time. Look out for that as they count you down to the opening bell. As we count you down to the cash open, this is what you need to look ahead to at 8:30 Eastern time. Just 15 minutes ago, we had retail sales coming in stronger than expected. Looking for more data and more earnings through the week. Some PMIs coming on Thursday. United Airlines reporting after the closing bell alongside Tesla and IBM on a Wednesday, so look out for that too. And then the main event for many of us today is the Kevin Walsh hearing taking place down on Capitol Hill in front of the Senate Banking Committee at 10 a.m. Eastern time. Mike McKee's dropping by for a little bit more on that. Mike, welcome to the program. So the president was speaking to the press earlier on this morning. He was asked about this, and I imagine this comment and this response is not going to help Kevin Walsh in front of the Senate Banking Committee. He'd be disappointed if the new Fed chair doesn't cut interest rates.
Yes, and John, the question that he was asked was, would you be disappointed if he didn't cut interest rates immediately? And there's no prospect of that given the way the economy is going and, of course, given the way the war is going at the moment. Now, Walsh is going to address that elephant in the room right off the top of his opening remarks, saying that it's the president's opinion and it's not something we have to worry about. He says, I do not believe the operational independence of monetary policy is particularly threatened when elected officials, presidents, senators, or members of the House state their views on interest rates. Simply stated, Fed independence is largely up to the Fed. In other words, if we ignore what the president or anyone else says and do what's right for inflation, then we won't have a problem. And he says inflation is their lodestar, and low and stable inflation is the requirement, and he will pursue that. But there'll still be questions about how and what else he wants to do at the Fed, including going back to a scarce reserves regime. That would create a lot of upset on Wall Street. How would he manage that? What's he going to do about shrinking the balance sheet? Would he sell mortgage bonds? Those are the sort of questions that are going to preoccupy members of the banking committee besides the questions about Trump.
Mike McKee with the latest. Looking ahead to your coverage throughout this morning. Mike McKee on Capitol Hill this morning ahead of that hearing. Troy Gajewski of Future Standard writing Walsh is clearly going to be in a tough spot for a while as the ability to cut further will be somewhat constrained. Troy joins us now for more. Troy, good morning. Good to see you.
Good morning, yeah.
What are you looking for in about an hour from now on Capitol Hill?
Yeah, so it's going to be more about the articulation by Walsh about how he's evolved from being a very hawkish fellow to one that's much more dovish, and then how he's going to preserve Fed independence while still being responsive to the federal budget deficit situation, which can benefit greatly from lower rates.
That's a delicate balance act.
It
how
is.
How closely
yeah.
do you think he'll be working with Treasury?
Well, when you think about the harmony between the two, right, and you think about the continued path of rates falling in the short end and his desire, at least historically, to shrink the balance sheet, the Fed is back to expanding their balance sheet now. It's one of the reasons that money supply is expanding again, one of the reasons equities arguably have been so buoyant even through the war. So that is a delicate balance for he and Bassett to get correct. The whole game plan for the Fed, the way we saw it last August and September, was for them to cut maybe more aggressively than they had intended, caused in part by political pressure from the president. Bassett would issue like crazy in the front end and starve the back end of supply. And if you could move that front end down to 2% more rapidly, then a 4.25 back end made sense from a yield curve steepness standpoint. Our concern now is the longer the Fed hangs out at 3.5, the longer it takes them to cut, the more likely you can have a nasty bear steepener, which clearly isn't good for equity multiples, for commercial real estate equity, for mortgage refinancings, all those things that are part of the affordability agenda. So when you want to run an economy hot, one of the ramifications can be a materially steeper yield curve.
This doesn't seem like somebody who wants to run the economy hot, just based on the testimony that was released, or at least the Political reported on, talking about how inflation is a choice, the Fed must take responsibility for it. Why is the market ignoring the fact that Kevin Walsh was a hawk and still kind of sounds like a hawk?
Yeah, well, look, if you think of the price of what was cut in, or priced in this year for cuts, right? Clearly, there was around 100 at one point. That's backed off substantially. It wasn't too long ago, you guys were running headlines about implied market probabilities of the Fed hiking. So I think it's hard to argue that the market's saying Walsh is going to get in there and boom, we're going by 100 right now. That being said, if you assume that productivity growth stays as strong as it is, and you assume that there's continued disinflationary pressure from technology, which is most of the last 20 years, we know the labor market's weakened substantially. It's still relatively strong, the consumer's relatively strong. There is scope to cut further. The debate, and no one knows the answer, is what is the new neutral rate? Is it 2 or is it 3? Economically, there isn't that big of a difference between 2 or 3. From an inflation standpoint, there isn't that big of a difference. But there's a heck of a difference in servicing debt when you're issuing $2 trillion per year. So, comments come and comments go. It's going to be really key to watch the action that takes place the first 3 months in terms of building consensus. Should we go by how fast, to what degree, and how markets react to that?
Why do people still think that this is relatively tight monetary policy, given the fact that that financial conditions have eased dramatically, the capital markets are wide open, that the economy seems to be chugging along, and that there are no signs of constraint except for small pockets that are affected by other exogenous factors? Yeah,
and to take it even one further, obviously private credit's been in the headlines quite a bit these days, courtesy of your esteemed institution. And, if you think of floating rate borrowers, they were one of the few that actually suffered from tighter policy, right? And what's happened, the last 18 months, 16 months, is interest expense has gone down by about 15%. So that's one pocket that actually benefits from that. Additionally, if you look at maybe subprime borrowers or those that are more rate sensitive at the low-end consumer, they benefit from lower rates. But your central point is true. Financial conditions are not overly tight. That being said, it still has substantial savings for the go-forward budget deficit situation if we can issue very aggressively in the front end and starve the back end of supply.
I don't think you can underestimate the importance of financial conditions. We talked about this when the shock first hit. The financial markets can shape the events they anticipate, not my line. We've talked about that a million times. The fact that financial conditions have eased will support this economy in a way that you want it and need it to at a moment like this one, because this is a real economic shock and you will see ripples in months to come.
Yet markets are doing the Fed's work for it. The Fed doesn't have to cut rates because essentially the market is wide open and companies can still issue debt. Question is just how much it's a bifurcated open market in terms of welcoming any kind of high quality, well-heeled company, not necessarily individuals that fall on the other end.
Troy, Bramo's right. Is this market just open for massive hyperscalers issuing a lot of debt? Is it just open for big OpenAIs, Anthropic type companies to come to market and IPO in a few months, or is it open to more than just that?
Yeah, it's a great point. So one of the things that you've written about, we've discussed, is the IPO market has been relatively shut for companies that aren't go-go growth or hyperscaler. And, that's one of the reasons why it's been tougher for large and mega cap P firms to exit their positions, that are growing at 3 to 8%. Fortunately, we'd say, in the middle market, most of the exits are to larger sponsors or to strategic acquirers. If you look over on the private credit side, issuance was very, very robust late last year. That certainly slowed down with the change in flows and the change in insurance company appetite. Wider spreads, right? Wider spreads, you tend to have sponsors that sit back and wait for conditions to ease to some extent. I wouldn't say it's bifurcated, but I think the market is getting more discerning in terms of what it'll finance in private credit and private equity. And exits for large and mid-cap sponsors, you really need to see the IPO market broaden, which could happen if financial conditions ease further. But to your broader point, they've been easy for quite some time. 22 was really the last period of significant financial condition tightening. For most of the time period, other than Liberation Day and obviously the war, it's been wide open for anything that's high quality.
There was a massive worry we'd see a repeat of 22. Central banks hiking, simultaneous sell-off in stocks and bonds. You saw it for like a heartbeat. People started to price in hikes. Stocks and bonds sold off. It's good news we haven't seen that continue.
Yeah, people point to the labor market, the fact that it just isn't as tight as it was back then. The fact that also we're not getting the same degree of fiscal stimulus, even though that we are getting some fiscal stimulus. Ultimately, though, we're going to have to wait for the data. The data so far, pretty good.
It's
at least
not bad,
according to, I mean, honestly, people are buying a lot of things going out.
Yeah, and John, if I could jump in there one second. Yeah, so I think, there's confusion from time to time, right? In that, 2022 was really a result of 3 and a few other necessary conditions for an inflation surge. One was we printed 42% of money supply out of thin air. 2 was we had 2 job openings for an unemployed person. And 3, we had $2.2 trillion of excess savings that was being spent.
Things have changed a lot.
Things have changed a lot, right?
Troy, it's good to see you.
Great
Thank
to
you,
see
buddy.
you too.
Troy Gayeski, a future standard. That testimony from Kevin Walsh about an hour away from New York City this morning. Good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time
We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Futures higher, 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Tim Cook is ending his 15-year run at Apple, handing the reins to hardware chief John Ternus in September.
President Trump keeps up the pressure on Iran, saying he does not want to extend a ceasefire that's set to expire tomorrow.
And Fed Chair nominee Kevin Warsh heads to Capitol Hill for what could be one of the most contentious confirmation hearings in decades.
In the meantime, we've had a lot of earnings this morning, Matt, and that's what I'm looking at pre-market. If you are to follow me over this way, defense stocks reporting, I guess, mixed earnings. Iran has been fueling demand for munitions. RTX, they raised its outlook. Northrop Grumman maintained its outlook with plans to expand production. And GE Aerospace was able to avoid major war disruptions. They also see strong demand for their jet engines because people are still flying. But I guess expectations were high because both those stocks are down.
Yeah, we'll talk through those stories. Very important to the pro-sec economy. Apple CEO Tim Cook will be replaced by the head of devices, John Ternus, in September, who's just 50 years old. Ternus will be tasked with ushering Apple into the AI era as the company struggles to break out from its incremental growth hinging on the iPhone. You can see shares in Apple down 0.6% in the pre-market.
Let's get deeper into that story. Joining us now is Bloomberg Tech co-host Ed Ludlow. Ed, first off, I was reading Dan Ives' note this morning basically saying it could make sense because he's always a bull, has to find silver lining, but saying that the timing might raise questions. What should we make of the timing?
Yeah, look, that John Ternus was the heir apparent and is the new CEO of Apple effective September 1st is not a surprise. And I was on Bloomberg Television when Romain or Katie read out that Dan Ives subject line, and I think everyone was saying, come on, really? The timing is interesting. Apple has just celebrated its 50-year anniversary, and Tim Cook did a number of interviews which would have indicated at that time he wasn't going anywhere. Additionally, you know, again, this does not happen until September 1st, but remember what happened at the beginning of the year. There were a number of executive departures from Apple that prompted Tim Cook to explain it to staff. And Tim Cook said when people get to 65 years of age, they want to move on and do something different. Well, Tim Cook is 65. And the reality is that as the executive chairman, he is this kind of even expanded role where he continues to be sort of a vital piece of strategy and the company's relationship with governments around the world.
So first of all, does that mean John Ternus is younger or older than Apple? Well, if he's 50 and the company just celebrated its 50th anniversary, there must be pretty close in terms of birth dates.
This is why, like, the history is actually quite important. Everyone's going Tim Cook since 2011. Tim Cook joined Apple in 1998, and he became COO in 2005. John Ternus joined Apple in 2001. He spent 25 years working at that company and gone up the ladder, right? But for most people, that's a career. You know, he's been there through the evolution of the company anyway. So people talk about it being new blood. It's new blood, but it's internal, you know.
So how would you grade them, you know, or how does Mark Gurman grade them on their AI performance? Because I think a lot of people thought they made a mistake in not building their own multi-billion-dollar LLM. And now it looks like maybe it was a smart move using someone else's multi-billion-dollar LLM, or everyone else's multi-billion-dollar LLM.
One of the frustrations of the street has been the cash pile that Apple sits on and doesn't use. Right, so whatever they do, they don't do aggressively. They don't do big pieces of M&A. They have used third-party models in different ways, as well as developing their own. But they haven't arrived at a point where Siri, which is the voice-based AI assistant on the iPhone, iOS, and the other OSs, does something tangible and useful as an AI tool. That's why, going back to your question on timing, it's interesting. WWDC is in June, right? That was the expectation, that this year we would finally hear from Apple, here is our AI story. And so the fact that Tim Cook is staying through June into September for that is kind of interesting.
Isn't Turnus more aggressive in his leadership style anyway? So maybe that helps push things forward?
So what you need to know about John Turnus is that he was a very big voice for the projects that were not working. Vision Pro didn't want them to go so deep on that. The car project being killed, which is so interesting. He was also a big voice for pushing MacBook Neo, going into that lower price point market, departing from Apple's position as the premium luxury product. Very different part strategy. Internally, what you need to know, Danny, and part of Bloomberg's reporting is that he's very pro-AI, using it as part of the product development cycle, but we don't know how he feels about putting it into a product. The read here is he's a hardware guy, he's an engineering guy, and so that's the focus that he will have on the product, on the hardware.
All right, we'll have a lot more time to talk about this, obviously. And of course, you'll cover it as well, I'm sure, in depth today on Bloomberg Tech. Co-host Ed Ludlow coming up in just a couple of hours. Let's get to Capitol Hill now. Fed Chair nominee Kevin Warsh testifies in the next hour, vowing to safeguard the Federal Reserve's independence if confirmed. Michael McKee, Bloomberg's international economics and policy correspondent, joins us now from Capitol Hill. And it's that independence that's in question, right, Mike? Because you wouldn't think that President Trump necessarily wants a terribly independent Fed.
You would not, and the president is not doing Kevin Warsh any favors. Speaking on another network now, he said that he would be extremely disappointed if the new chairman doesn't cut interest rates right away. He also said he's in no hurry to end the investigation into Jay Powell. So Kevin comes in with maybe 2 strikes against him here. Warsh, in his opening remarks, is going to address that elephant in the room, saying that it's up to the Fed to prove its independence by not listening to presidents or senators or members of the House who tell them what they think the Fed should do. He said, we have to do what is important for the economy, and that is price stability. So he's pushing back a little bit on Trump, but there will be questions certainly about whether or not he's going to push for any kind of interest rates anytime soon. There are also going to be questions about the Treasury and the Fed. Warsh has said that he would like to see maybe a new Treasury-Fed accord where they would work together on debt issuance because the Fed has been buying so much in terms of QE that it affects the overall bond market. And he says he wants to go back to scarce reserves. That would be a big blow to Wall Street and all the repo desks out there, all the repo business. So that should draw some questions as well. And then, of course, he's talked about not talking, that members of the Fed should speak less, offer fewer opinions about what's going to happen in the future, and he might like to have them more coordinated. So a lot for Warsh to talk about today. And of course, then the secondary elephant in the room is, when does this Powell investigation wrap up, and when can they get around to voting on Kevin Warsh as the new chair?
Yeah, I mean, Mike, first of all, the cool kids obviously are going to care most about what he says on the balance sheet. But to that point, I mean, how much does this matter? How much does it even matter for markets if that is hanging in the background? A Tom Tillis who's unwilling to vote and confirm Kevin Warsh as Fed chair as long as this investigation is ongoing.
It matters only to people who might trade in December Fed futures or something far out the curve at this point, because everything's going to change on a day-to-day basis. Even if Warsh were chair now, he probably couldn't tell you what he would do at the moment because of the war and the inflation outlook. It's all very, very uncertain. So it isn't that big a deal. And if Warsh is not confirmed on time, Powell's term as chair ends May 15th, then Jay Powell just continues in the job, particularly on the Open Market Committee, which the president has no influence over, and they're not going to be cutting rates. And that's also a very important point. There are 19 members of the committee, 12 of them vote, so the new chair will be only one vote. And if he wants to lower interest rates immediately and nobody else does, it isn't going to happen.
All right, Mike, thank you very much. Bloomberg's Michael McKee on Capitol Hill, and he's going to be back with us at 10 a.m. as we walk up to Warsh's confirmation hearing when it gets underway. Again, that's expected in about an hour's time. Elsewhere, the U.S. is waiting on Iran to join a second round of talks ahead of a ceasefire deadline, with tensions rising on both sides as they remain deadlocked. President Trump spoke on CNBC moments ago.
What I think is that we're going to end up with a great deal. I think they have no choice. And the blockade has been a tremendous success. They said 2 days ago, we will open the strait. I said, no, we're not going to open the strait until we have a final deal. No, we want to open the strait. They said, we're not opening. We totally control the strait.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, with a ceasefire deadline expiring late tomorrow, do we have any clarity whether both sides will be in Pakistan and Islamabad to continue conversations?
Hey, Danny. Well, President Trump went on in this interview to indicate that he believes Iran will be sending a delegation to Pakistan for another round of talks amid what has been uncertainty about whether or not the country will participate from the U.S.'s end. It is our understanding and expectation that Vice President J.D. Vance, alongside Special Envoy Steve Witkoff and the president's son-in-law, Jared Kushner, are expected to depart later this evening. The president did reiterate that he doesn't want to have to extend the ceasefire deadline beyond tomorrow amid new escalation from this White House, reiterating threats to hit Iranian civilian infrastructure if a deal is not made in time. In fact, in this interview, President Trump said that he, quote, expects to be bombing, appearing to cast doubt on a deal, though we are getting some new insight into the perhaps negotiating tactics that are going on, as a White House official outlines to Bloomberg News that the president's varying statements are to indicate strategic ambiguity that the U.S. could use in any negotiations. Now, our reporting has also indicated in recent days that the leadership of the IRGC is taking a much harder and harsher stance when it comes to negotiations with the U.S. compared to, say, less ideological figures like the foreign minister or Iran's parliament speaker, who seem to be more amenable to a potential deal with Washington. But Matt and Danny, one thing that's been consistent from nearly all Iranian officials is that they say that they don't want to negotiate until the U.S. lifts its naval blockade. But President Trump has said now multiple times in the last 24 hours that he's not going to do that until they put pen to paper on a potential agreement.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there in Washington. We're going to check the markets quickly here as we head towards the opening bell. We're looking at gains after slight losses yesterday, around the same size. In fact, S&P futures right now about 0.2%. The NASDAQ futures up 0.25%. We're always following Brent crude throughout this war. It's not doing a lot today, but still holding at $95 a barrel and change. And the U.S. 10-year yield right now at 4.2678, holding firmly in the range.
Some of the more interesting things might be the single names this morning. We had a lot of earnings. United Health earnings topped all analyst estimates. It lifted its earnings outlook as higher medical costs helped profits. It's a stock that's been beat up over the past 12 months.
Scotch tape and Post-it note maker 3M posted sales growth that missed expectations and reaffirmed guidance as it works to exit its non-core sides of the business. A huge business, so I don't know what's non-core. Maybe the Post-it notes and the Scotch tape.
No, those are so core.
Down 3.5%.
Some airline moves too. Alaska Air earnings topped estimates. It suspended profit guidance for the year due to Iran's war impact on fuel costs. Separately, in that same CNBC interview we were just talking about, President Trump said that he does not support a merger between United and American Airlines, both those stocks turning negative on that. He did, though, say, wink, wink, nudge, nudge, he hopes someone will buy Spirit Airways soon, and the government may step in to help, confirming a Bloomberg scoop yesterday.
I'm sure that company will be one he never forgets, and probably won't join the tariff suit either. Coming up, defense stocks report strong earnings as the war boosts demand, but fuel prices pose a risk.
And happening right now, SEC Chairman Paul Atkins is speaking with David Rubenstein at the Economic Club of Washington, currently discussing SEC efforts to strengthen U.S. capital markets. You can watch that conversation live go on your terminal.
And secondly, just last year, they made illegal mandatory arbitration.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look at what's making headlines around the world. U.S. retail sales jumped 1.7% in March. It's the biggest gain in a year, fueled by a surge in gas spending during the Iran war. Demand held up broadly with gains across furniture, electronics, and more. Economists say strong tax refunds are cushioning consumers for now, but that boost may fade as gas prices, or if gas prices, stay high. Top oil traders are warning the Iran war is crushing global demand, which is already down about 4 million barrels a day and could hit 5 million barrels soon. With Hormuz disruption slashing supply, industries from airlines to plastics are cutting back. If the strait stays closed for 3 months, traders say a global recession could follow. And RTX is raising its profit and sales forecast, citing resilient air travel and growing demand for military hardware. The aerospace and defense manufacturer makes critical hardware for the U.S. government, including Tomahawk cruise missiles and engines that power F-35 fighter jets. Danny?
Let's get more on the defense sector. And Bloomberg's Boston Bureau Chief Brooke Sutherland writes the Bloomberg Industrial Strength newsletter and joins us now. Brooke, I was looking at these earnings. They seem strong, and that seems to be no surprise. But the stock reaction isn't as big, and in some case lower in some of these defense companies. What do you make of what we heard and the reaction to them?
Sure, and I think in the case of GE, I don't think the stock reaction is one that's defense driven. That's more, I mean, this is predominantly a commercial aerospace company. And so I think, what you're looking at here is they did maintain their guidance for the year. They said based on their first quarter results, they are on track to hit the higher end of that. But CEO Larry Culp was very acknowledging of all of the uncertainty out there and the impact of higher fuel prices on their airline customers. And so you did see GE taking down its departure outlook for the year, in part incorporating a double-digit decline in Middle East traffic in particular. And why that's important is that is where aerospace suppliers make the most of their money, is in maintenance and spare parts. And this market has just been absolutely booming the past couple of years because we've seen such log jams in terms of aircraft deliveries. And so you've seen, a huge rise in pricing power, just, a really supply-demand mismatch here that aerospace suppliers have been able to take advantage of. And I think, if you do see those departures continue to trend down, that is going to hit those higher margin spare part sales. And I think, GE is not seeing that impact now, but you worry about how that plays out down the road.
Brooke, I don't know if you're able to watch President Trump's conversation with Joe Kernan on CNBC in the last hour, but he did praise Raytheon and said that the U.S. has essentially resupplied. We've got much more ammo and other things, he said, than we maybe had before or would otherwise have had. That wasn't entirely clear. But how is Raytheon doing in terms of making more missiles as we use them?
I think they're working on it as hard as they can. It is not the easiest thing in the world to ramp up production of these things very quickly. But, in the case of Raytheon, I do think you're seeing the benefit there of having that diversification. They are also a major commercial aerospace supplier, but they have a very, very large defense business, and they're certainly seeing the demand there. And, I think one of the things that's interesting for these defense companies is you talk about increasing production, that is going to require capital spending. And you did see Northrop Grumman today taking up its CapEx forecast for the year. And what we haven't really seen from investors is sort of a verdict on if they're okay with that, because that does ultimately mean, a hit to cash flow. But on the other hand, more orders, hopefully more stability. I know the Defense Department has really been preaching about the value of having that visibility for these defense suppliers so that they can make the investments that they need to ramp up production. And, I think that's in process, but time will tell sort of how investors feel about that trade-off between capital spending and cash flow.
What about their ability to issue raises to C-suite and things like that, Brooke, something that the president also put in the executive order?
Sure. And I think the industry is sort of still in wait and see mode. We haven't yet seen, this list of underperforming companies because they were specifically talking about, punishing companies that weren't meeting their deadlines or were sort of otherwise failing to invest in the priority projects for the Defense Department. And there was supposed to be sort of this list of underperformers that we have not yet seen. And I think, part of what the administration, might have been trying to do there is get some movement, get some, the defense companies to think more seriously about investment from the defense suppliers since that executive order in terms of ramping up production. But it is a two-way street. And, what the defense suppliers always said is that they need that long-term visibility. They need these commitments from the Defense Department. And you have seen the Pentagon stepping up, making some of these longer-term deals that give these companies the visibility to invest.
Wasn't there a $5 million cap? And I think the CEO of Raytheon last year got paid more like $35 million. So
they get paid quite a lot of money to do what they do. So nobody is hurting financially in the C-suite in America.
All right. Brooke, thanks so much for joining us. Look forward to reading more of the coverage in your newsletter. She is Bloomberg's Boston bureau chief as well and writes, as we said, the Bloomberg Industrial Strength newsletter. You can subscribe to that on the Bloomberg terminal. Coming up, United Health beats and raises its outlook. What's driving the strength? We'll tell you next. This is Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
A strong quarter for United Health, beating on profit, raising on guidance, with shares moving higher and lifting other health insurers as well. A sign of a rebound after last year's shock. Joining us now is Bloomberg Health reporter Ike Swetlitz. So, Ike, what do we know about what's driving these gains? What's going right at United Health?
Yeah, so United had a pretty challenging year last year. They replaced their CEO and raised prices in their insurance plans. Raising prices, there have been some fewer people signing up for those plans, but that's been a pretty big driver of the better quarter this time around.
I also saw they had some commentary, specifically the chief of government programs, around challenges and questions on the structure of the Medicare obesity program. Ike, what does that just say about United Health and other insurers' ability to participate in these government efforts?
Well, the government's sort of working on this project to look at covering GLP-1s in Medicare, but they need a certain percentage of people to sign up for this program in order for it to take effect. So United's comments, I think, we're all watching to see whether they're going to sign up. United is one of the largest Medicare Advantage insurers, and so their participation may sway things here.
How is United doing, just quickly, compared to the other health insurers? Because it had a horrible drop last year, obviously.
Well, they're the first to report here, so I think it's sort of a sign, potentially of what's to come. Many health insurers have been saying for a while that medical costs are increasing, and they don't see payment rates, especially from the government, increasing enough to keep up with that. So I think this is sort of the first preview that we're getting of what's to come.
Okay, Ike, thank you very much. That's Bloomberg's Ike Swetlitz on United Health earnings. And just 4 minutes to go until your opening bell. We'll have that on the other side of this break. You're watching Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are seeing some slight gains in terms of futures. We got some good numbers in terms of jobs. We got some good numbers in terms of spending. Traders are clearly looking through the war or hoping it turns out well, as President Trump has assured us that it would, and soon. S&P futures, you can see up 0.2%, just about what we lost at the close in the cash trade yesterday. NASDAQ futures doing the same. Ringing the bell at the New York Stock Exchange. UiPath, the ticker is PATH, and the stock has lost just about 85% of its value in the last 5 years. So nowhere to go but up, right? Crane shares ringing the bell at the New York Stock Exchange for, I think it's a high-income ETF, and they've got a little robot, Danny,
adorable,
with them. I'm not sure if it's the one that, there was a robot that ran the marathon, right?
Surely not that one. That one has stumpy little legs.
Looks slow.
It's horrible for running the marathon.
Some dude did it in 2 hours and like 1 minute. Did you see that?
I did not see that.
2 hours and 1 minute. That's insane.
So impressive. I can't believe that. No.
I'm pretty sure that's true. I think I'm not wrong.
Well, fact check it, and it sounds right. Yeah. Okay. Producer Ann confirms the Chinese marathon. Someone did run a 2-hour marathon.
No, I'm talking about Boston.
Oh, Boston.
Yes.
Okay.
China.
I don't know.
No. Yesterday was the Boston Marathon, remember?
I do remember that. Anyway, I am looking at shares of Apple at the open, going a whole lot of nowhere, down 0.2%. Apple CEO Tim Cook is going to be replaced by the head of devices, John Ternus, in September. He's going to be tasked with ushering Apple into the new AI era. It's been struggling to break out from its incremental growth, hinging on the iPhone. Maybe we get a foldable iPhone more soon. Anyway, we're down only 0.33%.
All right, defense stocks have been reporting earnings this morning as the war with Iran fuels demand for munitions. President Trump said that we're restocking. We've got more ammo, he said on CNBC. RTX, Raytheon raised its outlook. Northrop Grumman maintained its outlook with plans to expand production. GE Aerospace, or General Electric, trading as GE Aerospace, warned about sales risks due to fuel prices. Joining us is BNY Wealth Chief Investment Officer Sinead Colton-Grant. And this sets up, I guess, the push and pull in the market perfectly, Sinead, because corporate earnings are on fire. They're doing very well. On the other hand, we have an inflation problem that may somehow hurt growth, right? How do you see it panning out?
So let's think about the fundamentals. The earnings are strong. That's great. Interest rates, which are obviously linked to inflation, there's no expectation that we're going to see really any change between now and the end of the year. You can almost say the first hike getting priced in is July of next year. So that's a pretty stable environment. Now, when we think about inflation, during the 2010s, we all got conditioned to inflation at 2% or lower for the most part. But actually, to have inflation at the 2.5%, 3%, that is perfectly okay for an economy. It can grow well, businesses can flourish, and financial markets can perform extremely well, particularly equity markets with inflation even as high as 3 or 4%. Now, our forecast for the end of the year, the midpoint has been 3%, and we've had that as our expectation since the start of the year, simply because inflation is a little bit stickier. So inflation at these levels, fine. We obviously need to watch to see how do those elevated energy prices translate into inflation over a longer time period.
The thing that I struggle with is that if you listen to most energy experts, they're having a mild freak out over what's happening right now, and that the true extent of supply disruptions haven't fully been realized. We had a story out from our energy team governor group saying that the amount of lost consumption may need to double, that if the waterway remains closed for 3 months, it's going to trigger a global recession. They're not the only people saying this. But nobody in equity land is saying this. A few people, a few bond traders are. It feels like there is just this disconnect between the experts that look at energy markets and what equity investors say.
Well, and I think it's a case of perspective and time horizon. It's not unusual to see different asset markets pricing probabilities differently. And what you're clearly seeing in equity markets is that investors are looking through the conflict. There's an assumption that we're going to see a resolution of some sort over the next, call it, month to 6 weeks or so. Clearly, energy analysts are looking at, well, what's going on the ground in terms of disruption? I would say we focus a lot on energy supplies, but we also need to think about the supply of things like fertilizer, because that has also been impacted. Now, again, a lot of views are predicated on the assumption that this will be relatively short-lived. But here's what we also know, and this is something that we talk to our clients about a lot because geopolitical risk can be very unsettling. Obviously, there's a huge humanitarian cost. But when you've gone through multiple geopolitical risk events, what history shows us over the last 7 decades is that 12 months after the onset of the geopolitical risk, markets are higher, and typically they're higher by, on average, 10%. So there's a reason for that difference in pricing.
You know, we also have higher tax refunds, which offset, I guess, the slightly higher price at the pump. We don't need to go crazy. $4 isn't insane, right? We were at $5 in 2022. So that seems to even things out. And earnings, I just keep going back to the numbers that we're seeing are mind-blowing. I think consensus is for $327 on the S&P going out 12 months. Are you that optimistic as well that we can keep this thing going?
So we are optimistic. The high end of our forecast right now is 315, and so that gives us a year-end S&P target of 7,600.
315 year-end, right?
Correct.
Yeah.
Correct. So that's pretty constructive. You know, we're seeing a lot of earnings beats. This is another quarter. It's looking like double-digit earnings growth. And it's a pretty strong fundamental backdrop across multiple sectors. We've seen tech come back very strongly. The multiples now are looking a lot more attractive than they were in October. But what's really important for ongoing strength in the S&P in particular is a broadening of that strength. And we're seeing the earnings expansion and the lift coming from industries outside of tech.
You have seen, though, a lot of the earnings upgrades revolve around tech. And I just wonder how much of the leadership remains intact, even if the consumer is strong and still spending on things like goods. Do you believe that's still what carries this index higher through the end of the year, that tech can regain the crown after it sold off to the start of this conflict?
Well, you know, I'm not sure that it needs to, because we had such strong performance over the last 2 or 3 years. And now what we really want to see is some of those tech-related benefits, whether it's AI-driven productivity gains, broadening out through sectors as a whole. Now, when we look across the board, we do like tech. We also like industrials. We like financials. And we're starting to see many of the, you can call them AI-adjacent activities, really starting to buoy other sectors.
All right, Sinead, thank you so much for joining us this morning. Appreciate your time. BNY Wealth Chief Investment Officer Sinead Colton-Grant. Let's get a look on your equity market right now, and we are mostly undoing very mild drops yesterday, or not quite at this moment. We're a little changed. We are going to hear from a potential future Fed Chair, Kevin Warsh, in about 20 or so minutes time, so maybe we just take a breather until then. Some of the individual movers, an interesting thing happening with healthcare. So United Health has very, very strong earnings. So you can see those shares up nearly 8%. However, then they cast doubt on the government's program to try to increase access to obesity medication and the insurers' willingness to take that on. And that's why if you look in the down column, you'll see Eli Lilly is one of the worst performers. What happens for Eli Lilly if there's not more mass widespread adoption of insurers covering some of the obesity medications? So those shares down 3 1/3%. Apple, it's slightly lower, but given its size, it's pulling the index down about 3 points on the announcement that CEO Tim Cook will be stepping aside in September. Let's take a look at the sector breakdown this morning. Consumer discretionary financials, those are at the top. Healthcare is at the bottom. That's basically being dragged down by Eli Lilly. Even though the insurers are doing well, Eli Lilly is just a bigger company. Staples, real estate, communications, all of those lower for an index that is little changed, Matt.
All right, really interesting stuff there under the hood. Coming up, Alaska Air suspends profit guidance as the war in the Middle East shocks the industry. We'll discuss with analyst Tom Fitzgerald next. This is Bloomberg Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Let's get you some top calls, what the analysts are saying this morning. First up HSBC, they upgrade Intel. They cite an overlooked surge in its server chips. The firm expects strong growth in shipments and pricing to boost earnings in a meaningful way. Shares up nearly 2.5%. Next up, Colgate-Palmolive is getting upgraded at Rothschilds and Redburn. The firm says that the consumer products company is delivering reliable growth and shows a strong track record in productivity savings, but not a lot of change here in the share price. Finally, ExxonMobil, that gets downgraded at Wolfe Research. The firm says that easing Middle East risk lowers the geopolitical premium as oil markets normalize. Shares down 0.5%, despite, Matt, all the energy analysts freaking out that we still have a problem and a closed Strait of Hormuz.
Right. Well, energy has done very well throughout this war, right?
That's true. So maybe the peak is in and gone.
The energy sector is up 22%, doing better than any other sector in the S&P 500 in terms of industrial groups. President Trump says he does not support a merger between United and American Airlines. On his recent CNBC interview, he also said he hopes someone will buy Spirit soon, and the government may step in to help. Let's bring in TD Cowen analyst Tom Fitzgerald. And Tom, to be clear, you don't cover directly Spirit since the bankruptcy, but you obviously have a view on the entire industry and the state of play. How do you see this, that the President of the United States wants to help get the deal done? Is that going to spur some action?
You know, it's impossible to say. I think, as someone once said, there's more rumors than airplanes on Spirit's fleet. But I don't think the government wants to get in the habit of bailing out industries and picking winners and losers.
This government might want exactly to do that.
And there's the affordability issue as well going into the midterms. But do you open up the door to other airlines, whether it's a JetBlue or some of the other ultra low-cost carriers who are struggling? Will they also be seeking a bailout? It's a sticky situation.
Well, there was this idea floated that by having Scott Kirby going to the White House and considering an American merger, that it opened the way for them to buy JetBlue. The president also saying on CNBC today that he doesn't want to tie up between United and American Airlines. Does that tell us anything about a potential JetBlue purchaser?
It's definitely in the cards. I mean, there were articles last month about the company potentially hiring advisors. I think everyone can look at the leverage statistics. Fuel's only going to make their challenges worse. It would not be surprising to see the board try to look for a strategic solution.
What's your take on the price increases that we've seen? I mean, a lot of it's through increased baggage charges, which to me, by the way, I know it's maybe a tangent, but it makes no sense, right? If you raise the price on checked luggage, then people bring more stuff on board with them, and there's no room for it.
And you have to awkwardly wheel your suitcase up and down the aisle.
Tom? Yeah,
it's a little
looking
easier.
For space.
You know, base fares tend to ebb and flow with the oil market on a lagged basis, but ancillary fees tend to be a little stickier. We
but
saw
why
that.
Not charge people for carry-on luggage instead of checked? Then people would check everything, right? You don't want people bringing, their entire, life's assets on the plane with them.
Yeah, well, sometimes it spurs them to pack lighter, so then you save on the fuel and you have the deplaning, so.
Okay, well, beyond that itself, by the way, I've seen people bring like violins and precious things on board. You're not going to check that,
That makes a lot of sense.
That are like really awkward shaped. Anyway, so Alaska
I once
Air.
brought a sword.
No, you did not.
With me, yeah.
In what world are you allowed to bring a sword through security?
Well, first of all, it was the late 90s.
Okay.
And secondly, the pilot actually saw me trying to get it on the plane.
And then was he like, sir, please come fly this aircraft.
He volunteered to carry it in the cockpit. But my question is really about the inflation and the pricing power that they have, because we hear so much about it, but airline prices don't seem to change that much in the last 20 years. So how do you view it?
I think right now, as long as the labor market's hanging in, you still have the positive wealth effect from the equity markets hanging in. I think demand for air travel is going to be strong, and they should be able to pass through pricing. We'll see as the summer goes on, if gas prices stay elevated for a longer time, there's a risk that the price-sensitive leisure starts to show some cracks. But right now, it's they're firing all cylinders on the revenue front. Corporate seems to be very robust. I think the Delta print, the Alaska color last night, that bodes well for United after the close tonight.
Well, I mean, given that Alaska suspended its 2026 guidance on those fuel costs specifically, is that an admission from them somewhat that there is a ceiling to how much that they can raise prices?
Well, I think it's just harder to get, a longer term, and they're always just trying to predict revenue, 40, 60 days out. I think the other thing that Alaska is specifically grappling with is about 20% of their fuel is exposed to the Singapore benchmark, which is much more elevated than U.S. jet fuel benchmarks right now.
All right, so what about the other big cost is the people, right? We're seeing big problems, and there's always big problems in German unions. But how about for U.S. carriers? Are they doing fine with staffing? Do they have enough labor? And are they able to keep costs down?
Labor's okay in terms of staffing and attrition. It's been one of the stickier parts of inflation in the industry since the pandemic. We're not expecting...
And is their second biggest cost or their first biggest cost?
It depends on where fuel is, but it's either one or two, depending on the price of jet fuel. We're not expecting another big surge of labor inflation in the later part of the decade when the CBAs open up again. But it is, United has a tentative agreement with their flight attendants out right now. That's going to drive inflation in the second quarter. And it's not just there, it's maintenance, airport infrastructure. There's a lot of, that's all this secular cost convergence that's made a much more challenging operating environment and separated the wheat from the chaff.
All right, Tom, thank you so much for joining us.
Thanks for having me.
Appreciate your time. TD Cowen's Tom Fitzgerald. And tune into our interview with United CEO Scott Kirby. That's tomorrow at 9:15 a.m. New York time. Coming up on today's show, Apple's next CEO doesn't signal strategic change.
That's not Apple's next CEO.
No, that would be so surprising if Scott Kirby did. That, on the right, is Apple's new CEO. Apparently, it doesn't signal any strategic change. That, according to BI's Anurag Rana. He'll be joining us next right here on Bloomberg Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what's going on in the stock market 20 minutes into the session. We're now looking at gains. So we could be approaching all-time highs. Danny, I'm not sure what the closing high was, but it's, I think, around 71.11, right? And we're trading at 71.26 right now. NASDAQ trading up to 26,610. So very slight gains, but up nonetheless. Even with NVIDIA down. It's off only 0.25%, but it's a more than $4 trillion company, so that makes a lot of waves. Intel gaining 1.5%, and the chip industry is going to be very fascinating to watch over the next months as we get more deals in AI, right? Amazon committing another $5 billion to Anthropic and saying that it could go as high as 25 at a low valuation. United Health gaining 9% on better earnings and a better outlook, but hims and hers down. And this is kind of the Lilly trade that Danny was talking about. If these big health insurers don't agree to take Medicaid money for weight loss drugs, it's going to hurt companies like that. Amazon doing well. I talked about this cash injection they're doing with Anthropic. Anthropic also turning around saying, look, if you invest $25 billion in us, we'll buy $100 billion worth of chips and services from you. And then Apple right now down about 0.6% as Tim Cook announces his successor.
Yeah, I also just want to point out Apple announced that they were going to start a weight management program online, and that's also why they're doing well, and Hims and Hers isn't doing well, because obviously that challenges Hims and Hers.
But an Apple weight management program that would
an Amazon.
Amazon.
One.
Okay,
yes.
I got it. Good point.
No,
yes.
Apple would be interesting.
Well, I think a lot of people who are doing weight management already use Apple's platform.
Like an Apple Watch with a little GLP-1 prick in it that can give you your dose. Something to
I was thinking about it in a different, like a Noom kind of way, but yes.
Yeah, that makes sense. Okay, let's get back to that top story. New CEO over at Apple, Bloomberg Intelligence senior analyst Anurag Rana joins us now. Anurag, I know you think that this is a trade of continuity, but what about around the edges? We've had some excellent reporting about just how their leadership style differs, that Tim Cook liked to rule by essentially getting viewpoints of many different people, and perhaps the incoming CEO is more deliberate and a decision maker of one.
And if that's true, that's very good for Apple, frankly, because we want to see some new hardware products. We want some more innovative hardware products. And one of the criticism I get a lot by anybody who I talk to is, think about it. Samsung came out with their foldable phones so long ago. Why haven't they seen one from Apple at this point? So these are small things, but if you are the leader, you want to go ahead and show a product first before anybody else can take care of it.
So, I think the bigger question beyond a foldable phone is, why is Siri still so dumb? And I don't mean to sound vulgar, but it just isn't capable still, years after ChatGPT launched, of much of anything at all. Can this new CEO really move the needle on that?
I think Mark Gurman's already reported that we are going to see a new upgrade of Siri, in the Worldwide Developer Conference in June. And a couple of things he's talked about is pretty impressive, actually, because they are going to use Google Gemini's technology to embed in their own models. On top of that, it will have the ability for Siri to go and ask any of the AI agents that resides on your phone. So if you, for example, say, Siri, go out and ask OpenAI for something, it will go into your app and take care of it. Now, you don't have to load the app up and try to get that. So I think that upgrade is coming. And by the time we see the CEO transition, that upgrade would already be part of the next operating system.
Well, considering Turnus is a hardware guy, Anurag, what sort of upgrade cycle do we expect for the hardware itself and innovation?
I think they've laid the rails out for that, and Mark's already mentioned that when you look at it, the iPhone cycle refresh, not all of that is going to happen in September. It's going to be staggered throughout the year, and the good advantage of that is, you go through 2 cycles of that. You're not going to see the volatility in revenue growth rate for Apple, which means not everything is going to hinge on what the December quarter looks like. December quarter is still going to be seasonally the strongest quarter, but not at the same degree as we see right now, with most of the launches happening in September.
Just got 20 seconds here, Anurag, but do you expect to see moonshots from this new CEO? I mean, apparently he didn't want to really do the Vision Pro and wasn't too down with the car. Like, is he going to do some cool, new, different stuff, or just, business as usual?
No, I hope that there is moonshots. They really have the cash flow to go out and do some moonshots. And, if you go look at any large company, whether it's Amazon and Google, all the moonshots have worked because visionary people have invested some money in that without knowing what the payoff is going to be.
All right. Thanks so much for joining us. Anurag Rana, Bloomberg Intelligence senior analyst, covers Apple. Coming up, we're going to talk about Kevin Warsh. We're going to look at Kevin Warsh. We're going to hear from Kevin Warsh on Capitol Hill for his Fed chair confirmation hearing. By the way, that is going to probably go into what would normally be Bloomberg Tech. That starts usually at 11 o'clock New York time. So we're going to push that to noon New York time. Tune in to Bloomberg Tech at noon, hopefully after this Warsh hearing wraps up.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60-65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From ABC News, I'm Sherry Preston. Retail sales numbers for the month of March are in, and they show a solid increase from February, but it's not because Americans could spend more money. It's because we had to. Here's ABC's Jim Ryan.
Last month's retail sales figure was up 1.7% on an annual basis from the month before. But it comes as energy costs have surged during the U.S.-Iran conflict. Strip out gasoline prices from the numbers, and retail sales last month were up only 0.6%. That's slightly less than February.
The war with Iran now in its 8th week. Ceasefire discussions were supposed to be held this week in Pakistan, but so far there's been no direct confirmation they will in fact take place. In a post on social media this morning, President Trump sent a message to Iranian leaders saying he would greatly appreciate the release of 8 women who another social media user said were set to be executed by the regime. Opening statements happening today in Harvey Weinstein's 3rd New York rape trial. This one beginning nearly 8 years after the former movie tycoon was arrested amid the Me Too movement. ABC's Phil Tate is outside the courthouse in Lower Manhattan.
The 74-year-old who was once one of the most powerful voices in Hollywood was convicted of the rape of Jessica Mann. That was back in 2020 during his first trial. But the verdict was overturned in 2024. His second trial had only delivered a partial verdict as deliberations appeared to fall apart. He was found guilty 1 count of first-degree criminal sexual act, which carries a maximum sentence of 25 years in prison. But he was acquitted of other accusations, and the jury was hung in Miss Mann's case.
Weinstein has pleaded not guilty to all the charges. Singer David under arrest in Los Angeles on first-degree murder charges after the body of a 14-year-old girl was found dismembered in the trunk of his Tesla last year. Markets this hour, the Dow is up 346 points, and the S&P is up 23. You're listening to ABC News. One Canadian tourist killed, many others hurt when a gunman opened fire on the pyramids outside Mexico City.
Friends Greg Magadini, Jalen Abar, and Jasleen Landaverde were among those pinned down when the gunman opened fire.
Obviously, you know, we're at the top of a pyramid, so the only exit is really like the bottom of this like the stairs, but then the stairs are so steep.
They waited until the gunman turned his back before attempting to escape, jumping to the landing below.
The drop is about 15 feet.
Greg and Jalen sustaining minor injuries, but Jaslim injuring her foot badly.
ABC's Matt Rivers. Today would have been Queen Elizabeth's 100th birthday, and the royal family is celebrating with a series of commemorations. However, says ABC's James Longman in London, they're also dealing with other things as well.
The royal family has, of course, had its difficulties since her death, not least the scandal surrounding the former Prince Andrew and cancer diagnoses for Charles and Princess Kate. The family is hosting a special reception at Buckingham Palace to mark the day today, and her daughter, Princess Anne, is unveiling a special garden in Regent's Park.
The Southern Poverty Law Center says it's the subject of a criminal investigation by the Justice Department over its past use of paid informants to infiltrate extremist groups and gather information on their activities, often sharing it with local and federal law enforcement. And Kevin Warsh, who's hoping to become the next chairman of the Federal Reserve, has just shown up at a hearing before the Senate Banking Committee as a part of his confirmation proceedings. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com, as well as Scarlett Fu and Paul Sweeney with you, the Bloomberg Intelligence program. Coming up, we're going to talk to Michelle Jamrisko, Bloomberg News White House and National Security Editor, get the latest on the war in Iran. Will there be talks? If so, who's going to go to these talks, and when will these talks take place? Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He's going to join us here, lead us up to the confirmation hearing for Mr. Warsh, Kevin Warsh, Federal Reserve Chair nominee. His confirmation in front of the Senate Banking Committee. That starts around 10:25-ish. And when that starts, we'll bring that to you. So that'll coming up. That should be spirited, to say the least, I would think here. So we got a lot going on. Or combative. Yep, exactly right. So we'll see how that plays out. Right now, let's kick this whole thing off with Alexis Christopherson, getting Bloomberg Business Flash.
Thanks, Paul. And we have stocks solidly higher here, lifted by another round of strong earnings and better than expected March retail sales. The S&P 500 up 23 points at 71.32. Dow Jones Industrial Average up more than 360 points now at 49,801. NASDAQ Composite up more than 92 points at 24,496. Brent crude is at 95.22 the barrel, down about 0.25%. And West Texas Intermediate slipping about 1%, now at 88.75 the barrel. The Bloomberg Dollar Spot Index a bit stronger at 1192.99. In stock news, 3M's earnings beat the street, but sales growth was short of Wall Street expectations. The maker of Post-it notes, the stock there basically unchanged at the moment. General Electric's first quarter profit beat Wall Street expectations. That's as strong demand for air travel helped the jet engine maker sidestep disruptions tied to the war in Iran. Shares of GE down nearly 4%, and DR Horton posting its seventh straight quarter of declining earnings. It also trimmed its forecast for the number of home closings it expects this year, hurt by bad weather and those rising mortgage rates. DR Horton is now up nearly 8%. And President Trump says he would like to see a buyer emerge for Spirit Airlines. He also said he's open to the government coming to the carrier's aid. The Wall Street Journal reports that Spirit is seeking an infusion of cash from the government during a spike in jet fuel prices. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner-Amper. Eisner-Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. Eisner-Amper. Let's take a look at some of the stocks on the move today. We can do that with the Bloomberg's Christine Aquino. Christine, what are you looking at?
All right, Paul, let's take a look at Apple this morning. Big corporate news, of course, with the CEO transition. So Apple, those shares, ticker AAPL, down about 0.6% at the moment, pairing some of those opening losses that we saw earlier was down nearly 1% at the open. So more details here, of course, with the transition from CEO Tim Cook, who will be handing the reins over to hardware boss John Ternus later this year. Ternus will become CEO on September 1st, and then Cook will transition to become the executive chairman. So Ternus has headed hardware engineering since 2021. He spent 25 years on product development. And so Bloomberg Intelligence's Anurag Rana weighing in on this change, saying that the role does signal continuity rather than a strategic change. But given Ternus's role as the hardware head, we could see Apple sharpen its hardware strategy over the next few years. So we'll see about that.
All right. So finally, a change in leadership over at Apple. And by the way, there's going to be a Bloomberg Tech special on the new leadership at Apple at 12 p.m. Eastern time. What do you have as your second mover?
Let's take a look at United Health today, Scar, because those shares roaring quite nicely this morning. So ticker UNH, they're up more than 9%. We did get their earnings report, and so they boosted their adjusted earnings per share forecast for the full year. First quarter profits also beating expectations here. So adjusted EPS above $18.25, so $18.25 versus the estimate of $17.83. Now, the company also weighing in on their plans for coverage for obesity drugs under Medicare. So they're saying that they're seeing difficulties with that potential plan. Medicare insurers had until April 20th, so basically yesterday, to tell the government whether they would participate in this plan to add coverage for weight loss drugs. And sounds like, at least as far as UNH is concerned, they're not necessarily enthusiastic about that.
Minnesota Mining and Manufacturing. The kids know it as 3M. What do you got?
3M, maker Post-its and everything sticky. I really like their sticky tabs, for the hooks. But yeah, so mixed set of earnings this morning. I mean, they did see organic growth, adjusted organic growth, falling short of the average analyst estimates. Organic sales falling 1.4% in the first quarter. They did stand by their financial guidance for the year, despite a, quote, volatile environment, according to CEO Bill Brown. So Barclays, though, saying that they may have made their lives harder by not lowering their guidance for 2026 organic sales growth, given the decline in the first quarter, but we will see. I mean, at the moment, those shares holding up relatively okay. Ticker MMM, they're up about 0.4%.
All right, good stuff. Thank you so much, Christina Aquino. She is our managing editor for Markets Live coverage. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Be sure to subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go now to Washington, D.C. and check in with our own Michelle Jamrisko. She is our White House and National Security Editor on the latest on the war in Iran. And of course, there's a lot going on in Washington this morning, Michelle, but I wanted to get from you the latest in terms of whether Iran is going to show up for these peace talks, ceasefire talks that we know the vice president is traveling to Pakistan for.
Well, it's anyone's guess, Scarlett, including the President of the United States. So Trump this morning telling CNBC that he's not sure yet that whether they'll be sending them. He thinks they have no choice when referencing Iranian delegates, but to send them. He says he's still optimistic that they could get a great deal, in his words. So from the U.S. side, I think it's pretty clear that they do want to send the delegation that Trump has flagged before. Vance, Witkoff, and Kushner should be headed there. They have not left yet, but we're expecting perhaps that they would depart today and hopefully be meeting somebody on the other side.
Why is there so much confusion as to how this will or will not proceed here? I've never seen anything like it from both sides.
Well, certainly this is what we've been dealing with throughout the conflict, is the rhetoric, the public rhetoric, not really matching what perhaps is going on behind the scenes. And that's from both sides. Of course, you have the president trying to kind of jawbone the reality that he wants to see, and he thinks he has all the leverage in the situation to do so. So trying to kind of force Iran into what his game plan is for the negotiations to end the war. On the Iranian side, of course, we've heard, especially through the state-run media and semi-official news agencies, that they will will not be bullied into action, that they will not come to the table until a U.S. blockade has ended in the Strait of Hormuz. But it's really presented this sort of chicken and egg situation where the U.S. side is saying, and Trump repeated this morning, that the U.S. will not end the blockade until there is a deal. However, Iran is saying there will be no deal until the blockade is ended. So we're in a bit of a sticky situation back and forth. And we've seen before, especially with the first round of talks, where that can happen in public, and then behind the scenes there are a few delegates working on both sides to kind of come to some sort of agreement. Even if there is not major progress in that first round. So we're expecting, and we're open to the possibility that that might happen again. We could see the groups back in Pakistan in the next couple of days, and the things will be back on track. But we just don't know, and certainly high uncertainty today, especially with things still happening in the Strait of Hormuz that wouldn't suggest a return to normalcy anytime soon.
Right, absolutely. So I guess my question when it comes to this standoff between the U.S. and Iran is, who is leading the way in Iran? Who's the leadership that we should be concerned with? Is it the head of the IRGC? Is it the foreign minister? It feels like they're on different, one is more pragmatic than the other, perhaps?
Well, this has been the long-time struggle for the U.S. in dealing with the Iranian regime, is that has been increasingly decentralized. Of course, the IRGC plays a huge role more broadly. In this conflict in particular, I think the U.S. would like to think that those who are coming to the negotiating table have some power to make those decisions. And those, of course, would feature the likes of the Iranian Parliament Speaker Ghalibaf, as well as the Foreign Minister Abbas Araghchi. So those are the figures that I think the U.S. sees as a little bit more moderate, a little bit more rational to their needs. And so one would hope that there was some agreement coming together from that side. But we've also heard a lot from one figure on the Iranian side who was more seen to be a kind of a reformist figure on the Iranian spectrum. And that is the Iranian president, Pezeshkian. And if you're judging by public statements, at least in the past couple of days, he's been increasingly defiant about Trump's and the U.S.'s broader style in trying to end this conflict. So it doesn't suggest a whole lot of matching of tone among those two leaders from the two presidents. But of course, very different leadership there. There's been a lot of talk about whether or not Iran has actually changed a regime. I mean, of course, the U.S. has assassinated the Ayatollah. New Ayatollah is the son of the previous one, so the supreme leader. So there's a lot of questions to be answered about who's making the decisions over there. But as for now, the U.S. would like to focus on the couple or few folks that are coming to the negotiating table.
Very good. Michelle, thank you so much. We really appreciate your reporting. Michelle Jamrisko, Bloomberg News White House and National Security Editor. In just moments, we're going to go back down to Washington, D.C., the Senate Banking Committee confirmation hearing for Kevin Warsh, President Trump's nominee for the Federal Reserve Chair. But first, we want to set the scene here with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist here. Ira, what do you think your Treasury bond market and the trading desks around global Wall Street, what are they going to be keen for with Mr. Warsh's testimony today?
Yeah, it's kind of interesting. Some people think that Kevin Warsh is going to be able to get the committee to be more dovish, and they expect him to sound very dovish today. So they expect the front end to kind of rally a little bit, although we haven't been, right? We've actually been selling off on the higher oil prices that we've gotten today. So, inflation expectations going up, and that's been driving short-term treasuries higher. I think also most people, now this isn't certainly consensus, but I think most people do think that that Warsh is not going to be able to convince a lot of the other members to cut interest rates very aggressively, even though most have penciled in at least one, if not multiple cuts before the end of this year.
Okay, so his outlook on interest rates certainly will be a top of mind. There's also a lot of talk here as well about the future Fed independence. And my understanding is that he has floated an idea of revisiting a 1951 agreement between the Federal Reserve and the Treasury that helped boost Fed independence. What do we know about this?
Well, so the Federal Reserve, a client not so long ago mentioned this to me, and I think this is a good way to kind of frame this argument. Is the Federal Reserve is inherently a political organization because the 7 members of the Federal Reserve Board of Governors are political appointees, right? They are appointed and then they're confirmed by the Senate, and that's what you're seeing today with this confirmation hearing before the Senate Banking Committee. But operationally, they are independent, and that's the reason why these governors have 14-year terms, so they can be independent. There's not going to be anyone who's going to be appointed by one president and then not serve under another president, assuming they fulfill their full term. So the way that I would think about Kevin Warsh is he believes in Fed independence, but at the same time, I think he wants to make sure that he keeps the person who nominated him reasonably happy and is going to try to figure out ways to work with Treasury in order to try and lower interest rates. And certainly the Federal Reserve, it can work with others, and it has to, in that it's a banking regulator as well. So it has to work with the Office of the Comptroller of the Currency. It is a member of the FSOC, basically the body that are a number of different regulators get together to discuss the financial stability. So that Financial Stability Oversight Council is something that the Fed's on. So they still work with other organizations within the government, even outside of monetary policy.
So, Ira, what is the data telling the Treasury market now? I mean, I'm sure that the Fed follows the data. What's the data telling us these days?
Yeah, well, this morning's retail sales data was pretty good, actually. It wasn't bad at all. That control group, which is the inputs to GDP, was up 0.7%. Now, we have to be a little bit careful because it's not inflation adjusted, the retail sales data. Those are notional numbers, but it still shows that people have enough beyond what they paid for extra gas, because gas on a non-seasonally adjusted basis was up 30% in March, right? And in terms of their spending and what people had to spend their money on. But they still have excess money in order to spend on other goods and services. So the economy is nowhere near recession at the moment. It is slower than it was the last couple of years, but that's not necessarily a bad thing. And it's certainly something that the members of the Fed are going to keep an eye on. And it's one of the reasons, quite frankly, Paul, why you have these 1 or 2 or 3 cuts penciled in by a majority of the Federal Open Market Committee now, because they do anticipate additional slowing as the economy goes on.
All right, Ira Jersey, thank you so much. Ira Jersey, of course, is our chief interest rate strategist here at Bloomberg Intelligence, giving us kind of the lay of the land here as we move over to Washington, D.C. now, where the confirmation hearing before the Senate Banking Committee of Kevin Warsh is taking place. Let's join them right now.
Well, we can do that. You want to wait? We got Senator McCormick right now speaking, so we'll wait till we get to.
I think he's providing some kind of character.
Yeah, I haven't seen that before. A character statement, perhaps regarding Mr. Warsh. But I think the key thing I was just reading some of the notes from Bloomberg News reporting on Senator Warren. Really questioning the independence of Mr. Warsh, and we know that's going to be a line of questioning for some members of the Senate committee here, because we have a president who is very vocal about wanting interest rates lower. And he's called that out. He's called out the current Fed Chairman Powell for not lowering rates more aggressively. And so the expectation is that with this nominee, that we'll have some undue influence from the president. But now Mr. Warsh is saying, no, I will be independent. So
yeah, the question for markets and for investors is, will a chair, Kevin Warsh, make policy based on what the economy needs and what the data says versus what President Trump has made clear he wants, which is lower interest rates? And his track record is really interesting because he was a longtime hawk as governor of the Fed from 2006 to 2011 during the great financial crisis. He often warned about the threat of inflation and the need for higher rates. But last year, in July 2025, he turned kind of dovish.
Yes, and that's kind of calling the question for some, again, his independence. But again, this is a Fed, as we've been taught by economists like Michael McKee and by rate strategists like Ira Jersey, it's a committee. And yes, the chairman has certainly a very important weight on that committee, but it is a committee.
It's a consensus-driven organization.
Yes, and it's one that this Fed has been saying for such a long time that it is data dependent. And the data right now, one could argue, and if you look at the WIRP function, the World Interest Rate Probability function, this is the data suggesting, at least to the marketplace, that no rate cuts in the near term, no rate hikes in the near term. Just kind of let's
see how it goes.
Let's see how it goes. And that seems to be what the market's discounting. Maybe that's in conjunction with what the language is coming from the Fed. But that's kind of where the market is right now. I'm looking at the bond market today. We've got the 10-year Treasury up a couple of basis points to 4.27%. But as Ira was pointing out, the front end of the curve, the 2-year, up 4 basis points to 3.76%. And both of those numbers have been generally in a range, a pretty steady range. The 10 years kind of 4 to 4.5.
Totally.
Right smack in the middle of that. So that you could argue that the bond market really this year with the Iran war has been quite efficient. Not really any panic buying or selling here. So it's been quite efficient.
In contrast to the equity market and the oil market, which has moved a lot more violently with the Iran war headlines. We've seen stocks really take a hit, but then come right back and more because we're near record highs or at record highs. Whereas the bond market definitely took a hit, but hasn't recovered to the same extent.
Yep, absolutely. I'm looking at the, if you look at the VIX for the stock market, I'm sitting right at 19, so below 20 is kind of a quiescent area, as Tom Keene would say. North of 20, it starts to reflect some angst. And we did move out to about a 31 level on the VIX right at the beginning of the war, but since has come down. So we'll keep an eye on that. Looking at the markets here, you want to get a little reset here?
Yeah, let's check in with Alexis Christoforous for our Bloomberg Business Flash. Hey, Alexis.
Hi there, guys. So we are having both the S&P 500 and the NASDAQ in record territory once again. We have got stronger earnings to sift through this morning and also better than expected March retail sales. Both of those things helping to boost stocks here in the early going. The S&P 500 up 18 points. Dow Jones Industrial Average up 285 points. We've got the NASDAQ adding about 74 points. Oil is now moving higher, so reversing an earlier slide. Brent crude is up about 0.5% at $95.91 the barrel. WTI crude now just below $91 a barrel. That is up more than 1%. Lots of earnings to get to today. United Health reporting first quarter profit that blew past Wall Street expectations and boosted its outlook for the year. And Halliburton says it sees signs of a resurgence in oil field activity in North America. Meantime, shares of telehealth firm Hims and Hers Health falling today after Amazon launched a GLP-1 management program through Amazon One Medical. Also, Amazon leaning in on AI, committing another $5 billion investment in Anthropic. And that's your Bloomberg Business Flash.
All right, thank you very much, Alexis. We appreciate that. Right now, let's head down to Washington, D.C., the Senate Banking Committee confirmation hearing for Kevin Warsh, President Trump's nominee for Federal Reserve Chair. Let's go down and listen in.
She's been with me for many of the most important moments in my life. I'm grateful for her love and her personal accomplishments. I reciprocate that with somewhat of my own love, though I'm a little more stoic than she. And about every 20 years, I reintroduce her to this committee. She sat behind me 20 years ago, and it was almost 20 years ago to the day. And so let me offer today what I said then. Jane, happy anniversary. I'm also thinking of my late mom and dad. They were paying great attention to this hearing 20 years ago. They're no longer with us, but I was always proud of them and the values they taught me, and I hope they'd be proud of me today. We start today with a note of broad agreement, even though we might have heard different narratives at the outset of this hearing. This is a time of great consequence for the nation's economy. As a former Fed governor and friend or colleague of the last 5 Fed chiefs, from whom I've learned plenty of lessons, I'm particularly alert to the challenges and opportunities confronting the institution that I cherish, the Federal Reserve. To the President, to the Congress, the nation, I owe my best judgment and my most faithful efforts in serving the mission that you in Congress assigned to the Federal Reserve, including full employment and stable prices. The American people are counting on the Fed to deliver on its commitments, perhaps now more than ever. The real highlights of my life are not on my resume, as Senator McCormick said. They include the individuals with whom I worked and from whom I learned. I graduated from high school in upstate New York. I had some exceptional teachers there and some brilliant classmates. I've learned we're lucky in life if we start out with good influences in learning and in character. A public school education gave me both of these, and I'm grateful. I made my way to Stanford and found myself in the company of some of the most highly accomplished economists and policymakers. George Shultz, former Secretary of State and Treasury, was among the great patriots at the Hoover Institution, who I came to know as a teacher, mentor, and friend. He passed away right after COVID at age 100, but I still feel him with me. I could not have imagined a better formative experience than working from and learning from folks like him. I could tell you about all the things I learned, but maybe the most important was to be around people completely devoted to the ideas and ideals of our country. Silicon Valley in the early 90s, another fitting backdrop for all of the things we confront today. I found myself in the right place at the right time. The U.S. was at the vanguard of a new era of technological leadership, and I just looked out my door to see it. Now, in the last 15 years, I've gained deep experience in macro and in markets, working with Stan Druckenmiller. He never held a position in government, but is no less a patriot. He never got a PhD in economics, but I don't know a finer economic thinker. Without their guidance and the guidance of Condi Rice, my friend and I should say my boss at the Hoover Institution, I doubt I would be sitting before you today as the President's Fed Chairman nominee. But I'm certain of one thing. Absent their tutelage, absent their example, I would not be as prepared for the urgent, mission-critical task at hand. In between these bookend experiences, I served quite a while ago as a governor at the Federal Reserve. At the onset of the financial crisis, as Senator Warren said, our central bank played an indispensable role, and we benefited enormously from the credibility that our predecessors had built up and passed down to us, governors of the Fed at the time. In these unusual and exigent circumstances, I saw the Fed and its people at their very best. But I also witnessed an institution that was tempted to play a larger role in the economy and society. So let me be very clear. Monetary policy independence is essential. Monetary policy makers must act in the nation's interest. Their decisions the product of rigor, deliberation, and unclouded decision-making. And as Senator Warren said, I do not believe that independence of monetary policy is threatened when elected officials state their views on rates. Fed independence is up to the Fed. That has three implications. First, Congress is tasked with the mission to ensure price stability. Inflation is the Fed's choice. Second, Fed independence is at its peak in the conduct of monetary policy. And third, as the chairman said, the Fed must stay in its lane. I'm committed to ensuring that the conduct of monetary policy remains strictly independent, equally committed to work with the administration and Congress on non-monetary matters that are part of the Fed's remit, and I commit myself to accountability. Finally, I'll just say this, Mr. Chairman. Milton Friedman had a phrase that always stayed with me. He always worried about government officials that lured and hung around with what he called the tyranny of the status quo. Status quo practices and policies are especially harmful when the world is changing this fast. If confirmed as chairman, I will be faithful to the Constitution, to the Federal Reserve Act, and to the very best of the Fed's traditions. I believe a reform-oriented Fed can make a real difference to the American people. And if confirmed, I will seek to create an environment in which the best people do their best work. Candor and goodwill will go a long way in pursuing those objectives. And I suspect this hearing, Mr. Chairman, will put us to the test. It's a real privilege to be here.
Thank you, sir. I will say that we typically stick to a 5-minute opening comments. I would encourage all of us to stick with our 5 minutes as it relates to our question and answers. We have full attendance today, and it's going to be really important for us to stick as closely to the 5 minutes as possible. If we go over by much, you'll hear me, which is an indication that you're already over, and I'll do my very best to keep us on time. Kevin, there are so many questions to talk to you about, to ask you about, to be honest with you, and I just want to name a couple of them, and we'll look forward to hearing more on these topics. I will not have enough time to delve into some of the most important issues facing our country. I'll take 2 of those issues and focus my time. I'm sure my colleagues on either side will have a conversation with you and ask questions about AI. The AI future is going to have massive impact on where we go as a nation. It's going to have massive impact on your dual mandate as it relates to full employment. Our production may go up while our employment stays flat. So this is a really important question that at some point we should delve into. I also think that someone should spend some time talking about our balance sheet. We have nearly a $7 trillion balance sheet at the Federal Reserve. Too much attention has been paid to your balance sheet and not enough attention has been paid to the nation's balance sheet. And I think it's really important for us to dig into that issue as well. Digital assets, the future of finance in the world seems to have a major component of it being digital assets. The market structure legislation, we don't want your comment on, but the important role of the blockchain in the future is another really important part of the future of our economy. I will spend some time talking about affordability and the importance of the independence of the Fed. One of the things I've appreciated about your previous comments is the importance that you have placed on the dual mandate, stable prices, which typically comes through the form of interest rate changes, as well as promoting maximum employment. I think those two will become more challenging in the current environment. One, obviously, the second one being the AI and the future of full employment. You've criticized the Federal Reserve for getting too big, mismanaging inflation. I'm sure you know the definition of transitory, so I won't ask you, but I've got a feeling you know, and some of your predecessors did not. Compromising the independence of the Fed. I think we should spend more time on finance, less time on climate change, on politics, on who is or who's not in charge. I think you would agree on those issues, though I will not ask you. I will ask you, however, that under your leadership, how will you steer the Federal Reserve to address the real life issues of affordability is my first question. And my second question will be about how do you make sure that the Federal Reserve stays out of the lane of external influences?
Well, thank you, Mr. Chairman. There's probably no more pressing question than the cost of living. We know at the Federal Reserve that price stability was an objective that you and your colleagues gave to the Fed. So when, over the course of the last several years, especially after COVID, when prices went up to the tune of 25 to 35% for virtually all deciles of the American people, that's an indication that the Fed missed its mark. And we are still dealing with the legacy of the policy errors in 2021 and 2022. Once you let inflation take hold in the economy, it's more expensive and harder to bring it down. And so the fatal policy error going back 4 or 5 years is still a legacy that we're dealing with. We need, in my judgment, fundamental policy reforms to fix it. And while it's true that inflation is less problematic, meaning the rate of change in prices is less severe than it was some years ago, hardworking Americans are no doubt feeling it. I think that means a regime change in the conduct of policy. I think that means a different new inflation framework. I look forward to working with my colleagues at the Fed, if confirmed, to achieve that. I think it means, as you suggested, using tools differently. The Fed has an interest rate tool and a balance sheet tool. My view is the interest rate tool gets in the cracks. It's fairer. The balance sheet tool disproportionately helps those with financial assets. The interest rate tool hits the entire economy. So we need a new framework, new tools, and I'd also say, Mr. Chairman, new communications.
Yes.
I think part of the reason why, after making a mistake in 2021 and 22, the mistake was compounded, is the Fed gives its forward guidance. The Fed tells the whole world what their dots are going to be, what their forecasts are going to be. Well, the Fed's human. Then they hold on to those forecasts longer than they should. I think if the Fed were to wait until it gets into a meeting before making a decision, that incremental deliberation can keep the central bank from compounding its errors. I think these are big changes that are needed, and if confirmed, I look forward to doing it.
Thank you very much. Ranking Member Warren.
Thank you, Mr. Chairman. So the Fed has been plagued by deeply disturbing ethics scandals in recent years involving at least 6 Fed officials. So it's critical that the next chair have no financial conflicts, none. You have more than $100 million in investments that you have refused to disclose to ethics officials and to the public. So let me ask, do the Juggernaut Fund or the THSDFS LLC invest in any companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles established by Jeffrey Epstein?
Senator Warren, thank you. So let me first share a point of agreement with you. The Fed has two tools. One is its monetary policy, and the second is its credibility. And the scandals that you talked about, the ethics
Mr.
problems
Warsh,
you
I
talked about,
appreciate that, but I
went
have
to the
very
core of the
limited
credibility
time.
that has hurt the
Could
Fed.
you answer my question, please? I asked. You have $100 million in undisclosed assets. And what I'm asking is, are any of those with this outfit that invests in companies affiliated with President Trump or his family, companies that have facilitated money laundering, Chinese-controlled companies, or financing vehicles set up by Jeffrey Epstein? It's a yes or no question.
Senator, I have worked tirelessly with the ethics officials at the Office of Government
Yes,
Ethics.
and you have not
come to an ethics
revealed
agreement
$100
with
million
them and
in
have
assets.
agreed, Senator, to sell all of
That's
my financial
not my
assets,
question. Mr.
including
Warsh, are
the
you
Duquesne
refusing
assets.
to tell us if you have investments, for example, in vehicles set up to advance Jeffrey Epstein? Is that what you're telling us? You just won't tell us?
Senator, what I'm telling you is that those assets that you represent at Juggernaut will be sold if I'm
All right,
confirmed
let me
before I take
follow up.
office and sign the oath of office.
Let me follow up on that. Will you at least disclose how you plan to disclose and divest these secret assets? I'm sure you understand that the public might question your motives if, for example, billionaire Stanley Druckenmiller, who you honored in your opening statement, and who makes a living guessing what the Fed will do next, cuts you a massive check for $100 million as you take the oath of office to become the new Federal Reserve Chair.
Senator, as you know, it sounds like your fight might not be with me, but the Office of Government Ethics. I have come to full agreement with them and have agreed to divest all of those assets,
I'm asking you
especially
a very
those that you
straightforward
referenced
question,
before I
Mr.
take the oath
Warsh,
of office.
and that is, will you disclose how you divest those assets, or will you just collect a check for $100 million from someone whose whole business is betting on what the Fed will do?
As I said to the ethics officials at the Federal Reserve and the Office of Government Ethics,
I'll
they agreed,
take that as a
I would
no
be
as well.
redeeming my
So
assets
Donald
before
Trump
I take
has
office.
made clear that he does not want an independent Fed. In fact, he has said, and I quote, "Anybody that disagrees with me will never be Fed chairman." And he's made clear that you are his sock puppets, saying last week that interest rates will drop, quote, "when Kevin gets in." Yeah, I think they do. Not when economic conditions change, we'll get lower rates. Not when the economy needs it. Nope. He said, when my guy, Kevin Warsh, is in there, we'll get the interest rates that I, Donald Trump, wants. So independence takes courage. Let's check out your independence and your courage. We'll start easy. Mr. Warsh, did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the Federal
I'm just
Reserve.
asking a factual question. I need to know, I need to measure your independence and your courage.
Senator, I believe that this body certified that election many years ago.
That's not the question I'm asking. I'm asking, did Donald Trump lose in 2020?
And I'm suggesting you in
I'm
2020, the
suggesting you
Fed
can't
made
answer that.
huge inflation problem, and you certified the election.
So
We
let
need
me
to keep
ask you
politics
another
out
question.
of monetary policy.
In our
and
meeting, you
monetary
said
policy out
you
of
would
politics.
be independent because you're, quote, a tough guy. Those were your words, tough guy. And you will be able to stand up to President Trump. So let's try it again. Name one aspect of President Trump's economic agenda with which you disagree.
Well, Senator, the Federal Reserve in recent years has wandered outside of its remit, wandered into other
I'm
areas.
asking for something
That's
you
not something
disagree
I'm
with
prepared
Donald
to do.
Trump on.
If I'm
Just
confirmed,
one
the Federal Reserve should stay in its lane.
Just one little place where you disagree with Donald
Well, I
Trump.
do have a disagreement, actually, Senator, with the president. I think even this morning, he said that he thought I was out of central casting. I think central casting, I'd look older, grayer, and maybe show up here with a cigar of sorts.
Quite adorable. But you know, we need a Fed chair who is independent. That's the only way we preserve the independence of the Federal Reserve. If you can't answer these questions, you don't have the courage and you don't have the independence.
I agree with you on independence, Senator.
Senator Rounds.
Thank you. Thank you, Mr. Chairman. Mr. Warsh, first of all, welcome. And I appreciated the opportunity to visit with you personally within the office. I agree with you, and I think Fed independence is critical. And I think that's an item that you and I agree on wholeheartedly. I want to take an opportunity just to kind of perhaps give you an opportunity to respond. I know that the ranking member had a number of items that she expressed concerns with. I'd like to give you an opportunity to just kind of work this way through. And let me just ask you a few questions, and I'll allow you to take the time to fully answer the questions. As I understand, Mr. Warsh, you worked with the career ethics professionals at the Office of Government Ethics and at the Fed to come to an agreement in terms of your dissolution of some of the assets that you as a businessman have. Is that correct?
Yes, Senator, that is correct. I worked with the Fed ethics officials first, answered all of their questions, then with the career professionals, the Office of Government Ethics, answered all of their questions, and then they wrote up an ethics agreement, which is part of the public record. But because I agree with Senator Warren on the ethical questions that have been raised over the last several years by several people that were members of the FOMC, so that there's no question about my independence, no question about the clarity of my financial record, I agreed to divest virtually all of my financial assets, the large majority of which will be divested before I raise my right hand and am sworn into office if confirmed by this body. So I've gone above and beyond, not for any other special reason other than the Fed needs to reestablish its credibility because the conduct of policy depends on it.
So let me just, for the record, the agreement which you have signed clearly states that you have agreed to divest your assets that are in question within 90 days of confirmation if you have not already divested them. That is correct.
Yes, Senator, and in fact, the large majority of those assets will be divested before I am sworn into office if confirmed.
Thank you. The career ethics professionals were the ones that basically had sent your signed paperwork to this committee's chief clerk. I really question whether or not they would have done that if they did not come to the ethics agreement with you in the first place, correct?
Yes, I presume that's right. We had a very good working relationship, and I'm happy to be sitting after the divestiture and cash or T-bills or whatever's the permitted asset so we can get back to the business of fixing the Fed, reforming an institution that has lost its way a bit, that has missed the mark. As Chairman Scott said at the outset, this inflation risk is still something that's being talked about around kitchen tables and boardrooms. My preferred definition of stable prices is a little different than most academics. I believe that price stability should be a change in prices such that no one's talking about it. That's an old-fashioned definition, but I think it's still valid. And the sooner that we can reform the institution with my colleagues if confirmed, the sooner we can ensure price stability, and we can have a new set of leaders atop the institution with high, credible, ethical standards to return the Fed to what it should be. The independence that both Chairman Scott and Senator Warren mentioned, critically important. But independence has to be earned, and it's earned by delivering on the promises, the commitments that the Fed has made. And as the Fed hasn't delivered on those promises, we shouldn't be surprised that we hear politics that are entering the room at the Fed. We need to get the politics out of it so the Fed can focus on its day job, deliver on full employment and stable prices.
It's true that people want to see stability within the Fed, but is it okay for a Fed governor or a chairman to change their mind on a particular policy?
It's more than okay, it's essential. Economics is not physics, it's not math. Frankly, most of us that ended up in the economics business, we started like I did as a math major. It was too hard. So we ended up in economics. In economics, what we need to do is focus to the left of the decimal point, not to the right of the decimal point. We need to focus on the big things. And if mistakes are made, central bankers, economic policymakers need to correct them fast. The real mistakes, the mistakes that cause inflation to be persistent, to undermine hardworking American standard of living, and when those mistakes go on.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Senator Reed.
Mr. Chairman, before we start the next question, I ask that we have entered into the record the U.S. Office of Government Ethics certification, which requires that all nominees disclose all of their assets, and showing that Mr. Warsh is out of compliance and that he has not met the ethics requirements.
Without objection, I will note, however, that what has been clearly articulated is that he will, according to his agreement with OGE, do what many others have done as well within 90 days, be not only in compliance, but to have divested himself from any assets that are in question.
Mr. Chairman, can I ask? I don't think we've had other nominees who are out of compliance and not disclosing at the time they come before the hearing.
Not on this committee, that's correct.
Not in this committee.
Before we, here's what we're not going to do.
Fair enough.
We're not going to have two chairmen, for sure.
Just asking.
Number one. Number two, what we're also not going to do is debate what we're putting into the record. And finally, what we are going to do is have a conversation about America's economy. And frankly, we all deserve the opportunity to ask our questions. We don't get to figure out the answers, but we do get to ask our questions. And I hope that we are able to continue in that direction. As long as we are, we're going to have a very good hearing. And if we're not, then I will find a way to help us expedite getting back on track. Senator Reed.
Thank you very much, Mr. Chairman, Mr. Walsh. Until you dispose of all the assets you've identified to the Office of Government Ethics, you will not be in compliance. Is that correct?
That's not my understanding. My understanding is that a signed ethics agreement provides duties and responsibilities on me and duties and responsibilities on the government, and that's what the nature of the ethics agreement is.
You have an agreement that within 90 days you will dispose of all your assets. All your assets. Is that correct?
Senator, I have an agreement within 90 days so that there is no appearance of anything inappropriate, that I would divest all of my assets, the majority of which before sworn in. What I've disclosed, Senator, is all the information that is mine to disclose. I've shared all information about assets that I control and that I can share, which I did much to the satisfaction of the Government Ethics Office.
Excuse me. What you've said is that you will take the oath, if confirmed as chairman, with assets that have already been identified as presenting potential conflicts of interest. Will you agree to not take the oath until you have fully disposed all the assets that you've been identified?
Senator, I'll agree to take the oath pursuant to the terms of the ethics agreement that I struck with the Office of Government Ethics. I don't think anyone could do more than that. Other than me, I've agreed to divest even more assets so that I will have virtually no financial assets.
The divestiture is totally up to you. You can select what assets you're disposing of, what assets you're keeping. Is that correct? And then still be sworn in as chairman.
The divestiture is up to the agreement that I struck with the Office of Government Ethics.
Who makes the decision as to what assets are divested, you or the Office of Government Ethics?
Both of us. That's why it's an agreement.
Excuse me. I must commend you on the way you can circularly go around questions and not answer them. It's a skill. Unfortunately, it's not a good skill for the chairman or of the Federal Reserve Board. We typically ask questions and expect to get direct, faithful answers. You haven't given them to the ranking member, and you're not giving them to me. So, again, you feel you will not be, you will be compliant if after 90 days you still have a significant number of assets that have been identified as presenting conflicts of interest. Is that your view?
No, Senator. If I were to violate the ethics agreement, I would not be in compliance. If I follow the agreement, I will be.
Well, that's your position. I think others would differ. When you sell all your assets, where are you going to place the proceeds of those sales? I believe that Chairman Powell has placed them in sort of funds which are very difficult to individually influence. Do you propose to do that?
Yeah, I propose to put them in permissible assets that are as close to cash or treasury bills as I possibly can. I haven't selected anything, but it will be as plain vanilla as possible so that there would be no appearance or reality of having any influence. We'll be sitting in something like cash.
Okay. Now, the question of independence is just one that I think will dominate these proceedings. This morning, President Trump was asked on CNBC, will you be disappointed if your new Fed chair doesn't cut rates right away? And President Trump answered, I would. It's very hard to separate President Trump's obsession with rate cuts, his attacks on the Federal Reserve, on Chairman Powell particularly, and your nomination. So this independence thing seems to have evaporated quite quickly between President Trump's statements and your positions. Again, you maintain you'll be independent of President Trump?
Yes, Senator, I do.
Well, President Trump constantly maintains that nobody's independent of him, that it's his morality that guides the whole United States government, including the Federal Reserve, and that you will be someone who will carry out his wishes. Frankly, do you suspect that he chose you because you indicated to him that you want to cut rates?
Senator, I don't know the reason for the president's choice, but I can tell you what I've been writing about for 15 years and what I said to the president, which is
you're going to I'll cut rates if you give me the job.
No, that's not what I said, Senator. Now, the president, as you might know, much like virtually all presidents I've either known or studied, presidents tend to be for cutting rates. I think the difference is President Trump expresses it quite publicly without surrogates or subterfuge, but presidents want lower rates. But Fed independence is up to the Fed. Fed leadership has to make a decision about what's the right thing to do.
No.
In my judgment,
you're a leader. You're the leader. You establish the moral and ethical standards and economic principles of the Fed. And you just pass it off to, well, you know, it's not my job, it's everybody's job. That means it's nobody's job. Thank you.
Senator Tillis.
Mr. Chair, before my time starts, can I make a parliamentary inquiry?
Certainly.
I want to make sure that we get this right, because I'm not an attorney, but I think it's pretty important to suggest that according to Mr. Warsh, he has signed an agreement that is in compliance, provided that he executes the agreement.
Correct.
So we should not have into the record that he is before us out of compliance, because you stipulated that what Senator Warren said was a first of a kind here, but he is not out of compliance. He has agreement that if he executes, will be in compliance. That's why he's properly before us. And I just want to make sure for the record that that is clear.
Yeah, very clear. Let me just say it. I'm going to reiterate what you just said, but I was writing it down myself. The Office of Government Ethics has entered into an agreement with Kevin Warsh that he has up until 90 days after confirmed to divest of his assets.
So the word, I mean, to non-attorneys here, I heard someone say he's before us out of compliance, and that's why I checked with the staff to be absolutely certain. He is properly before us. He will be in compliance if he executes agreement that addresses the concerns that have been presented by some of my colleagues on the other side of the aisle. I just want to confirm for the record that that is in fact accurate.
So if we're doing a matter here of, is this parliamentary inquiry? Is that what this is?
I've made a parliamentary inquiry, so I'm not burning my time on something that I thought felt like a cheap shot to say he's out of compliance when in fact he's not.
Then I'd like to ask the other question, and that is, have we seen this agreement? Do we have any way to verify that, in fact, these sales will occur if we have no idea what's in them and no one has told? And let's remember the law for a minute. The Fed, unlike other parts of government, do not have a 90-day you can be out of compliance. Fed law is explicit that you cannot own any portion of a financial interest in a bank.
Mr. President, Mr. Chairman, excuse me for interrupting. Senator,
now I'm going to let the attorneys take over.
Are we going to all get extra time here?
No.
I'd like extra 3 minutes.
All right.
Okay.
So, Mr. Chair, I just, for the record, and the only reason I say
that was a parliamentary inquiry, so it doesn't count.
Yeah. But,
okay.
Mr. Chair, the reason I mentioned that is because you had stipulated it. I don't think you meant it this way, but you as a chair said that this is the first of a kind of someone being out of compliance. I don't think you meant that. I wanted to make sure it was clear for the record.
Well, let me just be very clear again. The career ethics professionals were the ones that sent Mr. Warsh's signed paperwork to this committee's chief clerk. They would not have done so if they did not come to an ethics agreement with Mr. Warsh. Mr. Kennedy, Senator Kennedy does raise a good point. We are going to stick to our timeline, and I appreciate you raising the point of how long an inquiry can go on, and that does not buy you more time unless, of course, we all decide we want more time, and then I would rule on that, and I would rule against it.
Thank you, Mr. Chair. Mr. Warsh, congratulations. You can't count this as a date with Jane, particularly this one. I think probably the first hearing was a little less acrimonious.
Senator Thompson's
I'm not
Republican
going to
from
ask you
North Carolina.
anything. You can take a break and get ready for the bludgeoning on the other side. They're going to beat you till you bleed, and then they're going to beat you for bleeding. I'm going to talk about what's preventing me from being in a position to vote for you until we've spent time together in my office. You have extraordinary credentials. They're impeccable. I think the way you're dealing with the ethics issue is strong. Problem I have is where we are right now. And I start by saying I loved your opening statement. I love your focus on the independence of the Fed. I love the idea of Fed independence with respect to achieving the dual mandate, but Fed transparency on so many other things that the Fed does that, frankly, we're all frustrated with, bank examination, supervision being some among them that I think we should have more insight into. Mr. Chair, I'd like to submit for the record 2 executive orders under President Trump, one in 2020 and one in 2025, talking about making federal architecture beautiful again and focusing on trying to preserve the integrity of old buildings.
Without objection.
Thank you. And Mr. Chair, I will be submitting an analysis, but if we can go to slide 2. And turn it up right. Much has been made about the building project that has Chair Powell under investigation. I'm not going to get into the details except to say that I used to work for a firm that did audit and compliance, so I'm naturally wired to go back from the ground up and figure out what the deal is. Here's what I know. The Martin building has been conflated into this project to make it a $4 billion building. Even if you put the Martin building in, it's a $3 billion building. The reality is, what we're talking about is the Eccles building and the East building, for which, bring that up higher, Jack, you're a tall guy so people can see it. These are the overruns. And these overruns occurred in part because the cost of inputs went up 69% since the original estimate. Asbestos was identified. Remediation was required. Pylons had to be built underneath the building because it turns out they used it as a landfill and they had a water table issue. There were a variety of reasons why this building went over budget. And as a matter of fact, if we put everybody in prison in federal government that had a budget go over, we'd have to reserve an area roughly the size of Texas for a penal colony because of the way government projects work. And the reality is the overage, inflation adjusted, was about $730 million. the majority of which seems to be legitimate. Next slide. Not acceptable, unfortunate, but legitimate. Now, what I've really got a problem with, and we're talking about Fed independence. By the way, I think you're going to be independent. You have to be. You got to convince 11 other people to vote with you, at least a majority. It's a consensus organization. You try to get the majority to. Most of these votes are 11-1. So if anybody thinks the president can appoint somebody and you unilaterally can control things, you're going to be an unsuccessful chair if history is any guide, and you've served under some of the best. So I know you're going to do it right. The problem that I have here is that we had some U.S. attorney with a dream, or assistant U.S. attorney, thinking it would be cute to bring Chair Powell under an investigation just a few months before the position was going to be open. This happened this year. Normal course and speed. Here's how it works at the Fed. May the 15th, the term would have expired. We'd be having this hearing. You'd be getting confirmed. Custom also suggests that the sitting chair, even though he has 2 years left on his term, would have exited. But instead, we have somebody who thinks a building project that went over by about $700 million with a lot of what seemed to be justifications for it are holding up this whole process. It sounds like to me somebody over in the DOJ didn't even check with the boss. The boss said on the same night that I said I can't go forward until this bogus investigation is done with, said he didn't know anything about it. So we've got people in DOJ over in the D.C. circuit or the D.C. district doing these investigations. We have got to end this investigation. Big DOJ didn't know about it. The president didn't know about it. Let's get rid of this investigation so I can support your confirmation. Mr. Warsh, the only thing I've found the least bit odd about you is you've never watched an episode of Seinfeld. You've spent so much time at being a rock-solid economist that you're not even taking time away for a little laugh like that. I look forward to supporting your nomination, and I look forward to this investigation being taken down. If the chair wants to have all of our subcommittees start looking at capital expenditure projects for the agencies that we're overseeing, I think that's a great idea. And I'd like to be on a committee specifically drilling down on this analysis. If somebody can prove me wrong, I'd be happy to make a criminal referral. But I don't have the D.C. Circuit tell me a crime was committed when 7 members on this committee said it wasn't, including the chair. Thank you, Mr. Chair.
You're welcome. Only one question. What is Seinfeld? Senator Van Hollen.
Mr. Chairman, thank you. Mr. Warsh, good to see you. Reviewing your record, I am concerned that your position on interest rates seems to shift with what's politically convenient, rather than based on sound economic judgment. In the aftermath of the 2008 financial crisis, the worst recession since the Great Depression, with some of the worst unemployment in our lifetimes, you were a hawkish voice, expressing concern that the Fed might wait too long to raise rates. I think you got it wrong then, but now you seem to have swung 180 degrees in the opposite direction to embrace lower rates, a view that conveniently aligns with the president who nominated you. You've made this pivot even as today prices are too high. I think we all know that. Our economy works for families when prices are affordable and unemployment is low. That's why price stability is an important part of the Fed's mandate, right?
Senator, yes.
And the Fed uses its monetary policy tools for price stability and full employment. That's the job Congress gave to the Fed. Here's how Ben Bernanke described how the Fed uses those tools. He said, and I'm quoting, "Generally, if economic weakness is the primary concern, the Fed acts to reduce interest rates, which supports the economy. If the economy is overheating, the Fed can raise interest rates to constrain inflationary pressures," end of quote. So that's a textbook model of the Fed. Cutting rates supports the economy, but can lead to higher inflation, while raising rates helps to fight inflation, but can limit growth. Do you agree with Chairman Bernanke that that's generally how the Fed can use monetary policy to affect the economy?
Senator, I do agree generally with that proposition. But I'll note at a moment like this, the supply side of the economy is changing dramatically. So the core of what Chairman Bernanke said is a question about what's the economy's potential. As I said in my opening remarks, I think the economy's potential is growing quite quickly, and that makes the decision that you tee up to be a difficult one, and one that the Fed's going to have to dig deep in evaluating what's the right policy choice in the upcoming meetings.
Well, I want to push you a little bit on that in a moment, but right now the Fed has set its main interest rate at 3.5 to 3.7%. Last December, President Trump told the Wall Street Journal he wanted to cut rates to 1% and maybe lower than that by the end of this year. So just to better understand how you think about economics, in the economic model Bernanke laid out, let's say there's an economy with decent growth and no recession. If the central bank were to cut rates from 3.5 to 1% or lower, a massive cut, that would typically push prices up, right?
Senator, unlike many of my colleagues, past and present, I don't believe in forward guidance. I don't believe that I should be previewing for you what a future decision might be. I think it's essential that the Fed make decisions in the room.
Mr. Warsh, I'm not asking you what decision you would make. Obviously, that's going to be up to you. I'm asking you for the framework in which you think about these things. And it seems a pretty straightforward question about what would happen if we reduced interest rates by the end of this year to 1% or less. And under the Bernanke model, and I think almost every economist or most economists would say that that will drive up prices. And so that's what I'm asking you. Would you agree that that would likely drive up prices?
So, Senator, the Fed has two important monetary policy tools. One is interest rates, and the other is a balance sheet that we created in the 2008 financial crisis. Those tools should be working in concert, not at cross purposes. So it's hard for me to isolate one variable when we'd have to have a discussion on the other.
All right.
Sorry.
Well, let me just say this was a pretty clear question about the framework in which these decisions are made. I have heard you talk about how AI may change that calculation. Yes. I will just say, and I think you know this, I mean, I have this, you know, the Financial Times pointed out the economists reject Kevin Warsh's claim that the AI boom will enable rate cuts. And I find it just implausible to suggest that by the end of this year, AI would produce such increases in productivity that it could reduce in a rate cut to below 1%, and you can't tell me that that would very likely increase prices.
So, Senator, can I say two things? First,
Senator,
sorry.
Quickly.
Sorry. Monetary Policy Center works with long and variable lags, quite famously. If the Fed were to make a decision today about the conduct of policy, it's likely to find its way to the real economy 6, 9, or 12 months later. So it's difficult to judge policy today for an immediate result. And that would be my only concern about the framing of your question.
Thank you, Mr. Chairman. In closing, this is what concerns me, is that your views now have sort of flipped to conform with where the President of the United States is. And that's been a concern many of us have. Thank you, Mr. Chairman.
Senator Kennedy?
I want extra time, Mr. Chairman.
I know, sir.
Consider these 5 minutes a parliamentary inquiry. Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know. Okay. I think it's that thing you stick your hand in.
Yeah, kind of like this?
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend Senator Warren, and she, as my friend, suggested that, I wrote it down, you will use your power, you might use your power to bail out your friends if they get in trouble. kind of like President Biden did with Silicon Valley Bank and Signature Bank. She didn't say the last part, I just did. Are you going to do that?
No, Senator.
Okay. The ethics folks, they've cleared you, but they've said you got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you?
No, not for most of them, sir.
Okay, so it takes a reasonable period of time, right?
Yes, sir.
And you've promised to sell them, right?
I did.
And if you don't sell them, we'll know, and the ethics folks will know, right?
Yes, I'd be in violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates.
Okay.
Humble central bankers should be listening and then making their own decisions.
But some politicians matter more than others. And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he has not made his opinion on that a secret to anybody.
Yeah. And every president has that you're aware of.
Yes, and they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility as Fed chairman is the most important thing you have?
It's the most important thing to me, it's the most important thing to the institution, and it's the most important thing to the successful conduct of policy.
Okay,
if the markets
that's a yes, right?
Yes, Senator.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter, I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or did happen?
The president never once asked me to commit to any particular interest rate decision, period, and nor would I ever agree to do so if he had, but he never did. I was honored he nominated me. Like everyone else in the committee in the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay. I've got one more question because I'm about to run out of my parliamentary inquiry time. I've heard your argument the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem. Therefore, rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you've said what I just said, haven't you?
I have said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI, short
okay,
for American
let me stop you because the chair's going to cut me off.
Oops, sorry.
Here's my worry, that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there.
Yeah.
Thank you, Mr. Chairman. I'll get to my 5 minutes in a little bit.
So you come back about midnight, sir, and we'll go ahead and start all over again. Brand new day, sir, brand new day. Thank you for your patience. Senator?
Thank you.
Cortez Masto.
Thank you. Mr. Walsh, thank you for taking the time with me. I appreciate meeting with you. Congratulations on this nomination, and welcome to all your family, friends who are here. Let me talk to you about a couple of things. It's really around economic theory, and we have talked a little bit about this when we were meeting. Inflation has been above the Fed's target for 5 years. Would you agree with that?
Yes, Senator.
Yeah,
yes.
and core PCE inflation has been running at about 3%, a full point above that Fed target, correct?
Yes.
And so some Federal Reserve officials have said that this excess is due to tariffs. Do you agree with that?
Senator, I don't. If I can make 2 points.
Please.
Much as we discussed in your office, I think the data that's being used to judge inflation is quite imperfect data. And among the projects that the economics profession, and if I'm confirmed as chairman of the Fed needs to do, is to try to use our new understanding and new data sources to see what's really the inflation rate in the economy. We used to use core PCE, core measures, so we'd exclude food and energy because it was sort of a rough swag as to what was going on. We don't have to do a rough swag anymore. What I'm most interested in is what's the underlying inflation rate, not what's the one-time change in prices because of a change in geopolitics or a change in beef, but what's the underlying generalized change in prices in the economy. And my broad sense is that these inflation risks and the inflation damage the last several years is improving somewhat. It has improved somewhat in the last year. The measures I prefer are looking at things that are called trimmed averages, where we take out all of the tail risks, all of the one-off items, and we ask ourselves whether the generalized change in prices is having second-order effects on the economy. Again, they're not where they should be, but I think that the trend is quite favorable.
And these trend averages and the data that you're looking at now, it's not traditionally the norm that economists would use in this position. Is that correct?
Some in the economics profession are increasingly looking to these median-type measures, but among the projects I would hope to undertake as one of the first reforms at the Fed is a data project where we would go off and we would evaluate with the public sector and the private sector, including the Bureau of Labor Statistics, a survey of 1 billion prices. And what I'm really most interested, Senator, is what's the change of that 500 millionth and one price? Because that's inflation. That's a change in the generalized level. In a market economy, prices change all the time, and I don't want to be confused by that. I want to know what inflation really is, and I still think there's some work to do.
And I respect, listen, I'm listening to you today and talking with you. I respect you truly believe as an economist and a theorist in this theory, in what you are talking to us today about, which is traditionally not the norm. And many are disagreeing with you on that, and publicly disagreeing. And so I understand that. But I guess the position I have is I hope you're right, but at the end of the day, my concern is people are suffering right now with high costs, and we need to address it. And I don't know how long it's going to take for your economic theory to gain traction or to be proven that it's going to benefit so many people in this country right now. And here's one other thing, because I don't have that much time, and this is what is also a concern of mine, so I want you to address it. Earlier, you've been on the Federal Reserve Board, and you were there during the financial crisis of 2008. You and I talked about this. I was the Attorney General then. It hit Nevada so hard. Here's what I do know, and at that time, in 2006, you attended numerous meetings where housing experts pleaded with you to stop predatory mortgages. In fact, Gail Burks, who was the CEO of Nevada's Fair Housing at that time, who I worked with, repeatedly warned Fed leadership, including you, about predatory lending practices such as flipping loans or misinforming seniors about reverse mortgages. And in 2007, you said, and I quote, "Subprime mortgages have gotten a bad name in this environment, and in some cases, that's not just." You also said that you don't see any immediate systemic risk issues among big banks. And you said that at that time. And then just recently, and this is what I want you to address, Senator Warren has said that you told her you had no regrets during this tenure. How can we trust that your economic theory, when you were wrong then, is going to be the accurate theory we need now to help so many families and businesses that are struggling with the policies that we're dealing with now?
Senator, let me address a few things. The chairman is going to cut me off when he must, but I would say this. For many years before the global financial crisis, I warned about the very real risks of Fannie Mae and Freddie Mac blowing up, which they did. I think that part of the housing market was vulnerable for many years, and not enough was done about it, even in spite of my protestations and my urging about GSE reform. It wasn't done. I think that compounded the financial crisis. Secondly, I think subprime mortgages then, subprime assets then, were indicative of prices of almost every financial asset that were mispriced. What I suggested then and what I believe now is that subprime mortgages were just indicative of a set of prices that were incorrect, and they all repriced. Just to give one fine example before I turn to the chairman.
Perhaps no examples right now.
Okay, sorry.
Let's go to Senator
Thank you.
Haggerty. I want to give you the opportunity to finish that exchange.
Thank you, Mr. Chairman. And Mr. Warsh, I want to welcome you and your family. And I want the committee to know that I've known Kevin Warsh for 30 years. We first crossed paths back in 1992, shortly after Kevin graduated from Stanford.
Listening to Bill
We
Haggerty,
both worked in the White House staff at that
Republican
point in
from
time.
Tennessee.
And I just want to say this, that the man testifying before us today is the same man that I got to know then. Serious, disciplined, with a true heart for public service. And I want to say this, I've said it before, Kevin Warsh is the man for the moment. His background, his experience, and his discipline are precisely what we need to bring our economy into its full potential. I'm delighted to see him here today as we both reinforce competence here at home and do the same thing abroad. And if I think about Kevin's qualifications, think about the contrast with the nominations that we saw with the last administration. I think this committee will recall that President Biden nominated a prospective federal bank regulator, frankly, a graduate of Moscow State University in Russia, who advocated for replacing private bank deposits with retail accounts held at the central bank. Those who might criticize Kevin for his private sector success miss the point. Kevin's experience is not a liability, it's an asset. It brings a practical understanding in terms of how markets function to bear, how capital is allocated, and how policy decisions shape the real economy. Mr. Warsh, how will your experiences in both the public and the private sector shape your governance of the Fed should you be confirmed?
Senator, thank you very much, and thanks for the kind introduction. For your colleagues on this panel, Senator Haggard and I shared a desk in 91 and 92, so I've known him for a very long time. I think my prior experience at the Fed, which some of your colleagues made reference to, are going to allow me to hit the ground running. This is as consequential a moment for the U.S. economy and, frankly, for the institution as any point since the late 1970s. And so my experience at the Fed, my understanding of the people, the culture, the governance, and of the things that are ripe for reform are going to give me a leg up. We don't have a long time to do new studies and contemplate what reform should be. We have a short window to try to bring inflation back down to where it should be to ensure price stability. And because AI that Senator Kennedy referenced is so consequential, and AI is quickly becoming at something like escape velocity, it's important to revisit the Fed's models and see whether this innovation cycle, while it could have over time improvements in the price level and make the Fed's job on inflation easier, there's a question about what that means for employment, which is another part of the Fed's mandate. So I think that's part and parcel of what my background and suggestion and history would suggest. But if I can make one other point, what the Fed needs is a reform to its frameworks and reforms to its communications. I've seen what the Fed's done well, and often I'll give them one cheer or two, but now more than ever, the Federal Reserve needs 3 cheers, and that's what I hope to deliver.
Well, let's stay on this point, particularly, and you've mentioned this in your commentary, the point of the Fed's mission creep over the years. If you think about what the Fed has done, they've strayed into what I would call politically contentious areas. They've gone well beyond their core mandate. And we've seen this across the Federal Reserve System. And what the Fed has done is eroded its credibility as what it should be, which is an apolitical and independent central bank. In bank regulation and supervision, the Fed's focused on non-material and often politically charged areas. I'm thinking about climate change policy here. Elsewhere in the Federal Reserve System, we've seen regional reserve banks used as platforms for promoting very divisive partisan policies. There I'm thinking about DEI, climate policy, even racial reparations. The Minneapolis Fed even went so far as to publicly lobby for an amendment to a state constitution on education policy. How far beyond the remit can they get? In the 2020 Monetary Policy Review, the Fed even sought to redefine its legislative mandate of maximum employment as a broad-based and inclusive goal, close quote. I mean, that's tacitly understood to mean that the Fed should accept higher inflation to privilege select groups of Americans. And while the Fed undertook this social engineering, it also financially engineered a massive footprint in our market. QE provided near unlimited bid for government debt, which of course made it easy for us to subsidize more government debt here. It subsidized government financing, and it encouraged, frankly, what I view as very reckless federal spending. In each of these examples, we see a clear pattern. The Fed has strayed beyond its core mandate to encroach upon policy decisions that ought to be left to those of us that are democratically accountable. Mr. Warsh, the Fed's own actions have eroded its credibility. What do you think should be done to regain public trust?
Senator, robust reform. The Fed can deliver on the mandate that you gave it if it sticks to its knitting. As it wanders into areas upon which it has neither authority or expertise, it loses its focus. And I'll just give one example. In 2020, as you reference, when the Federal Reserve changed its inflation framework in August of 2020, inflation was running at around 1.72%. And the Fed changed its framework, rewrote in some sense the remit you gave it, and they asked for a little more inflation. They ended up with a lot more, and that was the foundation for the inflation surge that happened in the subsequent years, which we're still living with.
Okay. Thank you, Mr. Warsh. Thank you, Mr. Chairman.
Senator Smith.
Thank you, Mr. Chair. Good morning, Mr. Warsh. It's still morning. Let me start with this. I think you have said that you have confidence that this economy has potential. I think that's fair to say. And you've also said that this is a time of great consequence for the nation's economy, perhaps one of the most significant hinge points in a couple of generations. That's fair to say?
Yes, Senator.
Thank you. And so I agree with that. And I actually want to go a bit further because I think that it seems to me that this economy is amazing for rich people, people who have a lot of capital. And in fact, we can see in 2025, billionaire wealth grew 3 times faster than the average rate of the previous 5 years. And wealthy households hold a massive portion of the nation's wealth. And this, I think, is the tipping point that our economy actually faces right now. And I can tell you that in Minnesota, a lot of people are telling me that it is harder and harder for them to afford the basics. They aren't rich. They don't have enough money to pay their bills, to pay their doctor's bills. So I want to look at this with you for a few minutes, and I want to start with inflation. So last week, President Trump said that gas prices are, quote, not very high, and, quote, we're having some fake inflation because of the fuel. So understanding what you've been saying about data and measurement and all of that, let me just ask you, do you think that gas prices going up 20% is fake inflation?
Senator, the gas prices like beef prices, eggs, milk, and the rest, they move, and when they move in the wrong direction, the American people are hurting by it. There's no question about it.
That's right. American people feel it. It's not fake to them. It's money that they don't have in their pocket because gas is up 20%. I think my constituents would say that that inflation is real and not fake. Okay, so let's look at unemployment. At the State of the Union, the president said, quote, the roaring economy, excuse me, this is the quote, the roaring economy is roaring like never before. So do you agree with that statement? Is that how you see the economy, that is roaring like never roaring before?
So Senator, if I can clarify 2 things. One, there's a difference between the change in prices and inflation. The change in prices happen in a market economy. When inflation moves up, that's because the Fed had something to do with it. Now, on the state of the economy, I would say that the broad contours of the economy are improving. The potential of the economy, the real results of the economy are improving, but I think it can improve more, and I think in the years ahead, I think the economy's potential is strengthening.
So, the reality is that the economic data, understanding what you're saying about economic data being not imperfect, that there was almost zero job growth in 2025. And so that looks to me like not a roaring economy, it looks like a weak economy, which is what my constituents are telling me back in Minnesota. Let me go to one last look at this. Around the country, the average cost of home insurance rose 12% last year. Now, in my home state of Minnesota, not a coastal state, premiums rose 34% in 2025. This is, of course, caused by extreme weather events, hail, floods, tornadoes, hurricanes, climate change. So is that inflationary in your perspective? Is that increase in home insurance, property and casualty insurance, isn't that inflation?
So, Senator, if I can answer two questions that I think I heard, and we talked about both of these in your office. When we look at the payroll numbers every month and we ask ourselves whether it's good or bad, the job you gave to the Federal Reserve is to ensure we're at maximum sustainable employment. I think broadly speaking, the economy is running about close to full employment, though we never know what the right number is. So if Americans that want a job can find a job, then by the Fed's metric, we're at full employment. On the question of insurance premiums and the rest, when I look broadly across the economy, I would say when we look at health care, when we look at education, we look at housing, those prices have tended to go up more. In the less regulated parts of the economy, we've seen a downward structure, a downward change in prices, and we try to aggregate them the best we can.
But I'm not exactly sure what your point is there, but I would just say that my point here is that rising home insurance rates caused by increasing extreme weather events, climate change, is another inflationary pressure that people in my state are dealing with. And this, of course, the reason I'm focusing on this is because I'm worried that because of the pressure that you are going to be under from the president to lower interest rates, that this inflationary pressure that my constituents are feeling is going to get worse and not better. And so I don't have time to ask my last question, but it is literally this. The president has said that he demands that the next Fed chair will lower interest rates. And I take him at his word at that, and that is what causes me such grave concern here. Thank you, Mr. Chair.
Yes, ma'am. Senator Lomas.
Thank you, Mr. Chairman. Welcome, Mr. Warsh, and congratulations on your nomination. And thanks for appearing before this committee, and taking both positive questions and some of the hostility. I apologize for my colleagues' behavior when it strays outside of decorum. My first question is about the balance sheet of the Fed. What is your view about the size of the balance sheet currently?
Thank you, Senator. As we talked about in your office, the Fed balance sheet has played a particularly, I think, unhelpful role in helping the Fed achieve its dual mandate. The Senator had just mentioned what she described as the increase for financial assets relative to real assets. Well, part of that is the Federal Reserve. The Fed is not blameless in that as it's grown the Fed's balance sheet, grown its imprimatur on the economy, those with financial assets have benefited from it. The reason why I prefer monetary policy to use interest rates as the dominant force is interest rates affect a far broader cross-section of the economy. Interest rates get in the cracks. If we were to cut rates, then broader number of people will benefit from it versus quantitative easing, which tends to move through financial assets first. Half of our fellow Americans don't own any financial assets, so they're wondering what's in it for them. Broadly speaking, Senator, on the balance sheet, I was involved in 2008 and 2009 in response to the global financial crisis that Senator Warren referenced, and we used extraordinary measures and created a bigger balance sheet. But we agreed to do that only in the times of emergencies, only when interest rates were pinned to zero. The big balance sheet has become an ordinary recurring force, and I think has been quite unhelpful, and is part of the reason why the Fed is in the business of politics. Slowly and deliberatively, I believe we need a smaller central bank balance sheet. It took us 18 years to create this big balance sheet that's done quite a bit of harm, it strikes me, to the Fed's credibility. Working with the Treasury Secretary, we're going to have to find out a way in which we can take the balance sheet and make it smaller, because a large balance sheet where the Fed owns more outstanding debt than many parts of the financial markets, that's fiscal policy in disguise. Fed needs to get out of the fiscal business, focus on the monetary business, so the Fed can deliver on the remit you gave us.
Thanks for that response, because some of us don't appreciate the connection between the size of the Fed's balance sheet and interest rates. With regard to interest rates, can you tell us a little bit about your conversations with President Trump about interest rates?
Yeah, I don't want to put words in the president's mouth, but I think he has said loudly and clearly his view on interest rates. Don't think I'm breaking any news here. But I can tell you what I said, and what I said the president is what I've said to this committee and what I've frankly been writing about for more than a decade. Interest rates are the much better way to be using monetary policy than buying bonds and mortgages, some of which are issued from the United States Treasury Department. That is a confusion of roles. That leads to a set of mission creep. So interest rates are the dominant tool, and interest rates, as I mentioned, get in the cracks. My broad view on the conduct of policy from here is that too many Fed officials, past and present, opine in advance about where they think interest rates should be next meeting, next quarter, next year. I think that's quite unhelpful. As we've heard today from many of your colleagues, we don't know the state of AI. We can't be certain about the state of geopolitics. The economy is going to change. You need central bankers that are humble, that are nimble, that are open-minded, that can react when we have good data, when events strike us. My broad view is that interest rates need to be forward-looking, need to be based on better data, and we should have a big, robust deliberation inside the FOMC. I tend to favor messier meetings than some, where people don't show up with rehearsed scripts, but we can have a good family fight. If the central bank has that good family fight, I think that they're going to make better decisions. And if they happen to make mistakes, they'll correct them sooner. So I'm not one for pre-deciding what interest rates should be. I never said to the president where I think rates should be. I never committed any such thing, and I wouldn't have even thought about doing so.
Quick yes or no. Do you believe that digital assets should be incorporated into our financial industry so Americans have new investment opportunities and consumer protections?
Senator, digital assets are already part of the fabric of our financial services industry in the United States, yes.
Thanks, Mr. Walsh.
Senator Warnock.
Thank you, Brother Chair. Mr. Walsh, congratulations on your nomination, and I appreciated our time together in my office a few weeks ago. If confirmed, you will serve as chair of one of the most powerful economic institutions in the world. Decisions you make would move markets, affect Americans' retirement savings and ability to buy homes. It would influence the global economy. You currently serve as a lecturer at Stanford University. If you were to assign, if Professor Walsh were to assign a letter grade to the American economy today for the average working family, what grade would you assign?
Senator, it was good to meet with you in your office. You know, in modern academic institutions, they give everybody A's, so it's not a fair comparison. Especially at elite universities, I know everyone gets perfect grades.
Well, what grade would you give the economy?
Well, if I gave a student anything other than an A, the dean would summon me to his office because I would have hurt his self-image.
Well, the Americans that I talk to, particularly in the state of Georgia, who haven't had the benefit of attending some of these elite institutions, are trying to make their lives work. They're sitting around their kitchen tables trying to figure out how to put their kids through school. And regardless of how the markets are doing, consumer confidence is at a record low. So that's their grade on the economy. Working families are struggling, and things are getting worse. The inflation rate has remained elevated above the Fed's 2% target rate throughout President Trump's term, despite his promise to lower inflation. The president's war in Iran has spiked energy prices by 11%, and Americans are paying on average nearly $4 a gallon for gas because of the war. We've lost nearly 90,000 manufacturing jobs since President Trump took office. He promised us a manufacturing boom. We've lost 90,000 manufacturing jobs. And Americans already dealing with high prices paid $1,000 more per household in 2025 as a direct result of President Trump's illegal tariffs, which he remains committed to in spite of the Supreme Court decision. He does even better than this practice of, these institutions. When asked what grade he would give the economy, he said an A, and then he thought about it and said, no, actually A+++. And as I thought about his answer, I was wondering who was he talking about? Who is it an A+ for? Certainly not the ordinary working class Georgians that I'm fighting for every single day. Maybe the people closest to him. But I'm hard pressed to think that folks across the state of Georgia who are looking at their grocery bill, looking at their gas bill, looking at the $1,000 that they've had to pay would give the economy an A++. What are your thoughts?
Senator, thank you. If the Fed were to execute on a series of policy reforms, then I believe the economy can be stronger. I believe inflation can be lower, and I believe real take-home pay can be higher. I think the Fed is not blameless for the divergence you described between those that have financial assets and those that don't. Had the balance sheet not been brought from the $800 billion level when I showed up at the Fed in 2006 to an order of magnitude higher, if the Fed had kept a smaller balance sheet, the way the senator I just talked about a few moments ago, I think interest rates could be lower, inflation could be better, and the economy could be stronger.
Yeah, you discussed your theory of the case with me in that regard. But I think you would agree that the recognition, I think implicit in your testimony is the recognition that this is not a plus economy. In your economy, in your testimony, you note the importance of price stability and correctly note that inflation means people lose purchasing power, particularly harming low-income folks. But I also noticed your testimony did not really discuss the Fed's other mandate, and that's to maximize employment. Inflation is critically important, but if you don't have a job, you're in trouble. Do you view the Fed's mandate for maximizing employment as equally important to its price stability mandate? And are you concerned about weak job growth numbers?
Before the nominee answers the question, the senator from the elite university, Morehouse, is out of time. So I appreciate the question, but we will have the answer submitted for the record.
I know you wanted to attend Morehouse College. I'm sorry.
Everybody wants to attend Morehouse, by the way, but I am a Charleston Southern Buck.
I appreciate.
Very happy about that. He couldn't get into Charleston Southern, but it's good you got in somewhere. This is good.
If you can't get into Morehouse, go to Stanford.
Everybody's got jokes up here, so we'll go to Senator Brett.
Thank you, Mr. Chairman. Before I get started, I want to emphasize that transparency and accountability at the Fed are absolutely vital. The American people need to have trust in our government. We need to have trust in our government agencies, and that includes transparency and accountability at the Fed. So when we're talking about billions of dollars being spent on renovations, it's absolutely appropriate for Congress to ask questions. And it is absolutely appropriate for Congress to get answers. We need to understand where this substantial amount of money has gone, and we need to ensure that every institution, including the Fed, is always making decisions that are in the best interest of the American people. And so I urge everyone involved to make sure that any outstanding questions on this matter come to fruition so that we can get answers and move on and have a smooth and timely transition and a confirmation process, of which I want to say congratulations on both your nomination, your willingness to be here today, and I also want to say that to your family. I think a lot of people miss the fact that when any of us step up to serve, that it's not just you, your family that goes through so much. And so we just want to say that sacrifice is often overlooked, and we certainly appreciate your family being with you today and all of you and what you're willing to do here. I had a chance to get to know you over the years, and as many of my Republican colleagues have and other colleagues, and I think we would all say you are absolutely the right man for the job at the right time in our country's history, and I am excited about your leadership at the Fed. We have had an opportunity to talk about a number of issues, but I know that your integrity and that your commitment to the American people are going to help restore confidence at the Fed, and it will also ultimately serve our country incredibly well. So it's not going to be any easy task to return that confidence. We have spoken about needed reforms at the Fed on the monetary policy side and also the operational and internal standpoint as well. And of course, your calls for reform aren't baseless. You served at the Fed during one of the most challenging times. You just referenced it in your previous answer to a question from my colleague across the aisle. I believe you said there was a balance sheet of $800 billion when you showed up in 2006. So talk to me a little bit, speak to me about that, about what you have seen during your time and tenure at the Fed already, and then what other life experiences you have that you will bring as you tackle this role.
Yeah, so Senator, great to see you again. So the chairman knows I worked with the senator when she was a staffer on this very committee, and I was a young staffer myself. So it's an honor to be here. And Senator, as you know, this is a serious responsibility. I'm honored the president nominated me for it. This is a time of consequence, not just for the country, but for the central bank. I think the central bank can go back to first principles and improve itself. I see most of the actions of the Fed come from good intentions, but when you gave the Fed a remit, it wasn't a general roving remit to do what it thought was right. It was a particular remit to focus on particular issues and to not wander. And that's the trade-off on independence. Independence about the conduct of monetary policy, where we can hear criticisms from others in the economics profession, elected officials, and we should be open-minded to them. Listen, I think there's been a considerable amount of groupthink in the economics profession, and so being open-minded to it is important. But outside of monetary policy, it's important that the central bank work with the government on areas of overlap, and so I think that's likely to happen going forward. If you ask Senator Britt about my biggest lessons are about how a central bank should be acting in crisis times versus in normal times. In the crisis of 2008, in the pandemic of the crisis of 2020, that's when the Fed needs to take extraordinary measures. Going back to the founding of the Fed in 1913, it was created to respond to shocks. And so there, I think central bankers often should get the benefit of the doubt. When the world is racing away from it, the real economy is suffering fast, the central bank should show up with liquidity support. But the job of the central bank is to try to mitigate those risks in advance, to buy insurance so that we don't go from shock to shock, from boom to bust. And so my criticism is more about the conduct of monetary policy and regulatory policy in normal times. And that's the area that are in need of reform. We have a window where the economy is improving, but I would say more improvement is still possible. And it's during this policy that we need to look introspectively, look fundamentally at reform. So when there is another risk, there is another shock, the central bank is prepared to address it with less harm to the real economy.
Thank you so much. I am out of time. I look forward to your service to our nation, and I know that we will be in great hands.
Thank you.
Thank you, Senator Britt. Senator Kim.
Thank you, Chairman. Mr. Warsh, good to see you. I guess I just wanted to start off by talking about just the state of American families right now. nearly 60% of people surveyed say that they're worried about affording the very basics, rent, gas, groceries, the bills. 60% of Americans say that they cannot handle a $1,000 emergency. 40% of Americans saying that they can't handle a $400 emergency. I wanted to ask, do you agree that the American families are struggling right now with affordability?
Senator, as we discussed in your office, central bankers should not be second-guessing what people feel and see in their own lives. People's lived experiences matter to them. What I can say is the central bank has some responsibility for the things that you've described, and that the legacy of inflation, what I think is the biggest economic policy error in 40 or 50 years, happened just a few years ago, and we're still living with the remnants of it. I think inflation is less problematic than it was a couple of years ago, but I would not.
But the problem of affordability
continues,
though. That sounds right, right?
Yeah.
Because I'll be honest with
that.
you. When I hear, I heard 2 months ago President Trump say, he said, quote, "What word have you not heard over the last 2 weeks? Affordability, because I've won. I've won affordability." It sounds like you would disagree with that assessment that the fight for affordability for American families is over.
So I think the trend is going in the right direction.
But we still have more work to do.
Well, the way I would describe it, Senator, is the cumulative increase in prices starting in early 2020 till now is between 25 and 35%. So I understand what hardworking Americans say. It's still a struggle. That's a legacy of a past policy error.
One thing that you talked about before is about, just the real cost that families are facing right now. And I appreciate that you were pushing back on that comment that the president had about calling the energy prices and the fuel price increases that we're having fake inflation, because right now Americans have paid more than $8.4 billion more in gas during the first month of this war. Fertilizer, 70% of respondents to the Farm Bureau survey said that fertilizer is unable to be afforded right now, just given the price increases. Are you concerned that there could be real long-term effects of this war in Iran, especially if we're continuing to see these challenges when it comes to fuel and fertilizer?
Senator, if my reform agenda, if confirmed, stands for anything, it's for the central bank, especially the Fed chairman, to stay in its lane.
I know that, but you also have to
I wouldn't want to wander outside of it. I'm happy.
But you're also charged with forecasting in terms of understanding where our economy is going. So does an impact of that magnitude rise to something that the Fed should keep an eye on and be concerned about?
The Fed should have an open mind towards all sorts of data, but the things that central banks can affect are things that are not one-off in nature, but are persistent and find their way into the generalized price level.
And that's something I
wanted
to ask you about that, because you talked about a fundamental policy change when it comes to the Fed. And I guess I wanted to just get a little bit more clarity on that. Senator Lummis mentioned about the balance sheet and the concern you have about that. What level do you think the balance should be at? If it's $6.7 trillion now, where do you think the goal is in your mind?
So I haven't fixed a particular number, but any changes, Senator, in the balance sheet would be part of a public discussion, debated rigorously. And if and when the central bank comes to a judgment about a new balance sheet policy, which I hope the central bank would, it would be described well in advance. As I mentioned, it took 18 years to create this balance sheet problem, and we won't be able to fix it in 18 minutes. And so that's why I think deliberation here is important. But it suffices to say it should be smaller, and at least as important, it should not be holding long-term Treasury assets as if it's the fiscal authority. That's when it gets into politics.
I appreciate you saying that it's important to be able to have that public discussion. I mean, one thing that's come up as I've been engaged with different experts is concern about rapid reduction. If you are moving in that speed, it could generate a number of concerns, including upward pressure on long-term interest rates. So I guess I just wanted to check, do you share that concern? As you are thinking about how to reduce it, do you also understand, though, that there are concerns about rapid reduction in the speed with which you're trying to go down?
Yes, Senator, and that kind of regime change would have to be deliberate, well orchestrated, well choreographed, and well described so that unnecessary upset are not done to financial markets as we go to a policy regime change much more focused on interest rates.
With that, I'll yield back.
Thank you, sir. Senator Ricketts.
Thank you, Mr. Chairman. Thank you, Mr. Walsh. It was great to see you in my office. Thanks for coming by. I want to continue to talk about inflation because it is something that is incredibly important. I think you share the view that inflation is a silent tax on American households. Is that accurate?
Senator, it's accurate. It's the most regressive tax that anyone in Washington could come up with. If you were trying to do the most harm to the least well-off among us, inflation would be the way to do it.
Yeah, and my colleagues on the other side of the aisle have been talking about that. And I note, at least I don't recall, that they ever talked about that during the Biden administration. Because it was during the Biden administration that we saw this record inflation, this 40-year-old high inflation. And yet my Democrat colleagues were silent about it back then. Now they want to talk about it. But of course, American households were hurting back then as well. Inflation was caused by President Biden's reckless policies and reckless spending. Let's look at ARPA, a partisan bill that was passed by the Democrats, which cost taxpayers $1.9 trillion. When ARPA was passed in March of 2021, inflation was at 2.6%. Inflation quickly accelerated. It was over 5% by May, June, and July, and by the end of the year, December, it was 7%. Does federal government spending have anything to do with inflation, Mr. Warsh?
Senator, as we talked about in your office, my view of inflation is a bit different from some. I don't think inflation comes about when the economy grows too much or hardworking Americans get an increase in their wages. I think inflation comes about when the government prints too much, by which I mean the central bank, and broadly speaking, the government spends too much.
And so we're spending too much money, and now we've been cleaning up their mess ever since. I will also note the Republicans have been taking efforts to reduce the deficit. I think year to date it's down about 10.6% from where it was last year. And this is why it's so important we get our spending under control. I think you also talked about the balance sheet. And one of the things about the balance sheet is that I think if I hear you're saying it's too big, and it benefits people who have financial assets. But if you don't have financial assets, you haven't seen the benefit of a large balance sheet at the Fed. Is that accurate?
Senator, it's broadly accurate. When the large balance sheet was created in the 2008 financial crisis, the agreement between my colleagues and I was that we would only use this in an emergency scenario because the transmission mechanism for a large balance sheet goes two ways, through signaling effects and through asset prices. Now, at the time of the financial crisis, financial asset prices were down 60 or 70%, and so it was understandable. Interest rates were at zero. But in the ordinary course, the central bank, an independent body, should not be adopting a set of policies that have that kind of distributional consequence. That's why interest rates are a better way to be setting monetary policy.
So if I don't want to put words in your mouth, but just what I hear you saying is let's reduce the size of the balance sheet because that benefits maybe half the American population. And then let's focus on interest rates and inflation so we can benefit all Americans. That if we take interest rates down, that benefits all Americans. You said it gets into the nooks and crannies. That if we get inflation under control, that is how we benefit all Americans. And the size of the balance sheet has only benefited some Americans. So what you're really about is trying to change a policy at the Fed that has really benefited under the last administration people who have lots of money, actually not just the last administration, the previous administrations, but you also want to make sure we get off of the inflation. I mean, during the Biden administration, we saw 4 years in a row of declining real wages for American households. And what you want to do is get that inflation under control so that all American households benefit. Is that fair?
That is fair. I'm going to paraphrase former Chairman Paul Volcker, where he said something along the following lines. You would need to have a PhD from an elite institution to believe that inflation doesn't have something to do with money.
Okay, great. Real briefly, I've only got a few seconds left here, but I'm going to switch topics on you real briefly. Chairman Powell and Secretary Bissett met with leaders of our largest banks recently to talk about advanced AI models like Mythos from Anthropic to identify banking vulnerabilities. It's apparently very good at finding those vulnerabilities. When confirmed, what will you do to modernize the Federal Reserve's internal risk assessments, tabletop or scenario planning exercises to ensure that we can anticipate and defend against the type of emerging risks that potentially models like Mythos could present if used in the wrong hands?
I have about 20 seconds to answer that.
20 seconds. Senator, a lot is the short answer. The 15-second answer beyond that is the pace of change in these technologies is accelerating. AI, which I think of really as American ingenuity, gives America a huge head start relative to our competitors around the world, but it's not without real risks and real challenges, and a forward-looking, reform-oriented central bank needs to be on the front end of it.
Great. Thank you very much. I look forward to your leadership.
Senator Gallego.
Thank you, Mr. Chair.
How are you?
In a 2019 interview with Bloomberg, you said monetary policy is important not for decision it makes, but for reasons it gives for the explanations. Mr. Warsh, the Federal Open Market Committees, or that the Fed sets U.S. monetary policy through interest rate decisions at those meetings, do you commit to maintaining the current practice of holding a meeting at least once every 8 weeks, yes or no?
Senator, by statute, as we talked about in your office, I believe the statute requires a minimum of 4 meetings, but 4 is not enough. So having more meetings than that is appropriate. But I've not even begun to look at the meeting schedules for 2027 and beyond, of course, subject to confirmation.
Okay. So then, do you commit to holding a press conference at least on the day of the FOMC meetings?
Senator, right now, press conferences are held periodically. If you ask me my true personal opinion, right now, Fed chairs and other central bankers around the FOMC, they speak quite frequently. There is no lack of transparency. But I would say this, I think truth-seeking is more important than repetition. And if one has a press conference, one wants to deliver some important news.
Perfect.
So
and to
I
follow up on that, then, would you commit to taking questions at those press conferences?
If a press conference were held, I think it would be incumbent to hear what the reporters of the day had in mind.
Thank you. I'm glad, our personal meeting regarding this was very enlightening. Earlier today, you said to Senator Kennedy that President Trump never demanded you to cut interest rates in your job interview. Is that your sworn testimony?
That is, Senator.
Okay. Well, someone here is lying then, because it's either you or President Trump. Because in an interview with the Wall Street Journal of December 12th, President Trump confirmed that he pressed you on your commitment to support interest rates cuts. And I quote, during a 45-minute meeting with Warsh on Wednesday at the White House, the president pressed Warsh on whether he could trust him to support interest rate cuts if he were chosen to lead the central bank. According to people familiar with the meeting, Trump in the general interview confirmed that, repeating, Mr. Chairman, I'd like to enter for the record the Wall Street Journal article, December 12th. Trump says he's leaning towards Warsh or has it to lead the Fed. So, this brings up an issue of credibility at this point. Who's lying here? Is it you or the president? Because the president confirmed that he did ask you to cut interest rates.
Senator, there's, of course, a third alternative. You cite a couple of reporters for a leading financial newspaper. I recall reading that story at the time.
Did you issue a correction?
I think those reporters either need better sources or better journalist standards.
Did you ask for a correction?
There are things in the newspaper, Senator, I see all the time that don't strike my ear as correct.
So is, in your opinion, that the president then is lying when he said he did not ask you?
I can only repeat to you, Senator, what I said to several of your colleagues.
So you did not? You right now, under sworn testimony, are saying just to right now that the president of the United States in that job interview did not ask you to cut interest rates?
The president never asked me to commit to interest rate cuts at any particular meeting over the period of my tenure at the Fed. He didn't ask for it, he didn't demand it, he didn't require it, and nor would I have ever done so.
So if these reporters come back and decide to do another follow-up on this and they confirm what they heard, what will your response be?
Well, my response would be what I suggested to you a few moments ago. As I read that story in real time, I remember thinking they either need better journalistic standards or better sources.
So, here's my problem, Mr. Chair and colleagues. And Mr. Warsh, I think you're incredibly qualified. A lot of us are actually worried about the integrity of the Federal Reserve. We're worried about what this means for the economic markets, and we're worried about what this means for inflation. We're worried about your independence, and now we're hearing direct contradictions whether or not you were directly asked by the president to cut interest rates, and you're saying no, and he's saying yes. And I think for a lot of us, there's a question now of credibility. And I think there's a real reason why many of us are not voting no. As a matter of fact, until you verbally spoke to Mr. Kennedy and answered his question that he did not ask, the president did not ask you to cut interest rates, this was not even going to be brought up. So there's definitely right now a true question about who is lying here. It's either you or it's the president. I yield back.
Senator, if I might respond?
Certainly.
Thank you. I take my responsibility to be an independent leader of the Federal Reserve very seriously, if confirmed by this body. I take the integrity of the office and my personal integrity very seriously. And I stand by every word I said. The president never asked me to commit to any such thing, nor would I ever do so.
Mr. Banks. No, sir.
Thank you, Mr.
Republican
Chairman.
Jim
Governor
Banks of
Warsh,
Indiana,
congrats
now
on your
questioning
nomination.
Kevin Warsh,
As we spoke about during our meeting in my office, I strongly support your nomination and look forward to voting for you to be the next chairman of the Federal Reserve, and it can't happen soon enough. One policy area that we strongly agree on is the threat that China poses to America's economy. In fact, you've written publicly that China is deliberately positioning its financial system to rival U.S. leadership and actively working to elevate its currency on the global stage. Can you talk for a minute about how the Federal Reserve reinforces the strength of the U.S. dollar as the world's reserve currency in the face of that challenge?
Sure. Senator, it's great to see you again. We talked about some of these issues of the G2 rivalry, the rivalry between the U.S. and China in your office. If confirmed as chairman of the Federal Reserve, I will then have to say that it's the Treasury Secretary's business to talk about the dollar. It's the Fed chairman's business to talk about interest rates. But I think I can say this quite comfortably. The dollar is the linchpin of the global economy. The United States and the Federal Reserve is a beneficiary of the strength of the dollar. The U.S. financial system is the most important financial system in the world, and the central bank's been charged with really important responsibilities in overseeing it and supervising it. There are risks to the U.S. position in the world, including economic. The economic statecraft agenda led by Secretary Bessent and Secretary Rubio is an important one. On that, the Fed will play a supporting role in ensuring that the financial system is as safe as it can be, and work with them, because it's outside of the conduct of monetary policy, to ensure the U.S. is on its front foot and in a position of strength during this period of rivalry between the U.S. and another nation around the world.
What are some of those? I understand the role of the Treasury Department versus the Fed, but what are the most important steps that the Fed can take to reinforce confidence in the U.S. dollar?
Deliver stable prices, Senator. Deliver an economy that improves from here even further, where real take-home pay moves up, where inflation falls, and the U.S. economic growth potential is the best in the world. I mentioned earlier, Senator, something that I really do believe. AI is a testament to American ingenuity. The United States is the best positioned country in the world to take advantage of it so that the U.S. economy, U.S. workers benefit from it. That the U.S. is in a better position than anyone else, but it's filled with challenges, geopolitical challenges, technology challenges. So the sooner that we can hit the ground running on reform agenda, the better.
You wrote in an op-ed in 2021 in the Wall Street Journal that I recommend everyone reads. It's one of the reasons that I wholeheartedly support you, because of it says a lot about you in this op-ed. But you talked about how the PRC is actively promoting its digital yuan currency with the explicit goal of creating an alternative payment system that sidesteps U.S. sanctions. You've been very clear that China's not playing by the rules. China is buying over 80% of Iran's sanctioned oil in Chinese currency through Chinese banks, completely outside SWIFT. The Iranian government says it is charging ships to transit the Strait of Hormuz and collects payments via crypto and Chinese currency. What tools does the Federal Reserve have to defend the dollar's role as countries route payments through the Chinese financial systems to do business with Iran and other adversaries?
Yeah, Senator, thank you. As we talked about before, monetary policy is independent. But outside of monetary policy, the Federal Reserve can be working hand in hand with the rest of the government. The Federal Reserve is independent inside of government, not independent of government. what the U.S. can do with respect to the dollar is have a more robust payment system. The Fed has a number of payment systems that most financial participants in the world use. I would say they all are in need of substantial reform. There's a system called FedNow, which some describe as Fed yesterday. There's a series of new technologies that the Fed needs to oversee and needs to architect so that the payment system in the U.S. is the safest, most efficient, most capable in the world. Otherwise, we'll be losing to adversaries around the world in being the linchpin of the global economy.
Thank you. Your leadership is so important, and it's important right now. We need you on the job right now, not later, right now. So I look forward to voting for you quickly and seeing you confirmed and getting you on the job. With that, I yield back.
Thank you, sir. Senator Blunt Rochester.
Thank you, Mr. Chairman
Yes,
and
ma'am.
Ranking Member Warren. Also, thank you, Mr. Warsh, for taking the time also to meet with me
Democrat
earlier
Lisa
this
Blunt
week.
Rochester, senator from Delaware, now
I
questioning
share
Kevin Warsh.
many of the concerns of different committee members about us kind of putting the cart before the horse. And in one regard, it is the whole issue of independence of the Fed. And I know you have made commitments both in your testimony and here today with us in the process of watching the president try to fire Chairman Powell as well as Governor Lisa Cook. It really raises a lot of red flags for us. Even Justice Kavanaugh said that no president has fired a sitting governor in the 112-year history of the Fed, which was structured to be independent of day-to-day politics, and that it would weaken, if not shatter, the independence of the Federal Reserve. There are a lot of questions here today as well about both ethics and whether or not all the paperwork is in, and even Senator Warren's question about, selling of the assets and whether they would be transparent is something that's important, again, to ensure confidence. And so I shared some of those concerns with you in person when we met, and I share them here for the record. I did have a question. I want to focus on AI, but I did have a question beforehand that I wanted to clarify. You mentioned your desire for reform as well as regime change at the Fed. Could you just clarify, you didn't mean removing the regional bank presidents whose 5-year terms were just restated and re-upped in December?
Senator, I meant policy regime change.
Got it. So for the record, we're not looking at regime change for those 12 board presidents. I want to jump to AI because it's probably one of the #1 issues that I hear about in my state. I'm former Secretary of Labor in Delaware. This is something that I asked Chair Powell when he was here as well about. A lot has happened in a year. And one of the things you have characterized this as the most productivity-enhancing wave of our lifetimes, past, present, and future. You have described it as structurally disinflationary, and that central bankers must make a bet. I'm in the camp with Senator Kennedy. I'm concerned about us making a bet on something that we know, you've said it, Chairman Powell said it, we don't have the data to even understand yet. And so my first question is, what happens for policy if that surge doesn't materialize as expected?
Yeah. So, Senator, I enjoyed our discussion. I think the essential elements of a new policy for the Federal Reserve is to get access to better data and to dig deeper into the productivity possibilities that can come out of this new investment wave. Today we call it artificial intelligence. 2 years from now we're going to call it business CapEx, and 3 years from now we're going to call it just ordinary business. I think it has two important effects on the conduct of policy. I don't claim to have perfect knowledge of how any of these are going to go, but I do have an intuition the pace of change is accelerating. I'm sorry, Senator, go ahead.
I was just going to ask, how much of your view on interest rates depends on those productivity gains showing up quickly?
Yeah, so I think it has two elements. One is the increase in capital expenditures to build data centers and the rest. That will have an effect on demand. That will increase demand. My guess is a few tenths of 1%. But on the supply side of the economy, to increase the potential output of the economy, that could be considerably bigger. We don't know that. We can't bank on that. But considerable work needs to be done by the Federal Reserve in evaluating this productivity wave. As I said before, monetary policy works with long and variable lags. So you have to make some informed judgments. And unlike other people in office, if the judgments are wrong, you've got to call the flag on yourself and correct them.
Well, I think there's been a lot of conversation here about concerns that in your record, in your history, you have been hawkish on inflation rates and keeping them low. And now we're looking at AI. What I don't want to see is us use AI as an excuse.
Yes.
For making good policy. Too much depends on it. Too many families' lives depend on it. And in our conversation, I also talked about the fact that I know Wall Street is going to be okay, but who we're concerned about as well is Main Street.
Yeah.
Thank you. I yield back.
Thank you, Senator. Senator Kramer, you are recognized.
Thank you, Mr. Chairman. Thank you,
Kevin
Mr. Warsh,
Kramer,
for being here.
senator
Thanks
from
for stepping
North
in the
Dakota,
gap.
Republican, now questioning Kevin Warsh live in
In
Washington.
fact, I'm a little bit curious as to why you even want to do this. I'm thinking, I don't know. I don't know. Anyway, congratulations on the choice. By the way, with regard to independence, real quickly, I find it curious. In fact, I've often found curious that people expect somebody who's appointed by an elected official has to be confirmed by 100 other elected officials would somehow not have a philosophy. That's what I hear sometimes. Like, why don't we, speaking of AI, we should just have an AI Fed chairman. That way it'd be completely neutral, right? Other than the people that put all the information in the algorithms. Anyway, that said, I think we should not forget that it would be common for a president who believes that interest rates should be lower to want to nominate somebody who has expressed that maybe interest rates could be a little lower, as opposed to the quid pro quo that's being accused of today. So I'm just grateful you're willing to do it. By the way, the other thing about independence that strikes me with regard to the Fed, do you have any idea how often an interest rate decision by the Fed is a 12-0 or a 10-0 vote? Do you have a sense of it?
I do, Senator. I'd say over the last 15 years, decisions have been unanimous or near unanimous. As I said to one of your colleagues earlier, I prefer clean memos and messier meetings, and there's nothing wrong with a divergence of opinion. These are very hard calls.
Thank you. I don't know when diversity became a bad thing in a room of thinkers, particularly with staggered terms. The other thing, none of this was in my mind that long ago, but the other thing that strikes me is you do have a lot of experience. This is your 20th anniversary, or at least your second anniversary. Have your thoughts changed much or evolved over those 20 years of experience in various categories, areas, not to mention your research and your intellectual and academic writings? I mean, have you evolved a little bit?
Absolutely. I'll make 3 points if I can. One is it is essential for the chair of this organization to be open-minded to new ideas. The world is moving fast. The mistake that's common in the economics profession, which Secretary Schultz once described to me when I was telling him that I was thinking about pursuing further studies, he said, it's fine to get a PhD, but make sure that's not the last day you were learning. Too many people in the profession go back to what they learned 30 or 40 years ago. We've got to be open-minded. The world's changing and the facts are changing. To the characterization I heard from some of your colleagues about did my opinions change, my opinions change when the facts change. When interest rates are at zero and the balance sheet is growing and the economy is booming, well, relative to that, I will say I sounded hawkish. In 2018, when the Federal Reserve pushed to raise rates into a financial market meltdown and economic weakening, I said that was a mistake. That was dovish. I expect to have a divergence of views based on the facts on the ground. And if I could just answer one other question you asked about why I want to do this job, I would say I've lived the American dream. I've been the luckiest, most blessed, fortunate person with the greatest teachers. I was a kid from upstate New York in public schools, and I had an opportunity to serve after 9/11. I was walking with a friend of mine who happens to be in this room away from a building near the site of the tragedy. I was walking up Fifth Avenue, and I thought to myself, what am I doing? And so I committed myself to public service then. I did 10 and a half years of public service. I've been grateful for 15 years in the private sector where I've been able to practice my discipline, think anew about things, and the call to service struck again. I'm honored to serve if this body will confirm me.
Excellent. You know, I do find it curious that so many people seem to be hung up on the fact that you've been successful even while doing, in between bouts of public service, probably a better way to put it. I'm not wealthy, never have been wealthy, and I'm not sure I have much potential to be wealthy, but I have nothing against people who are. That said, real quickly, I do want to talk a little bit about debanking. That hasn't been talked about a whole lot, but speaking of institutions that are dug in, I think there's you know, out of the 22,000 people, there are a lot of them that sort of still believe that reputational risk should be a factor, that reputational risk could be based on out of favor, you know, industries. Can you give me a sense of how you plan to attack that, if you will?
Politics have no place, not just in monetary policy, but in supervision and regulation. Yes. If central bankers should stand for anything, it's to resist fads, resist trends, call balls and strikes. That's exactly what I would intend to do.
I lean hard yes, Mr. Chairman.
Thank you, sir. Senator Alsobrooks.
Thank you. Good afternoon, Mr. Walsh. And thank you for meeting with
Senator
me
Angela
last week.
Alsobrooks, Democrat
In
from
August of
Maryland, now in line for
2025,
questioning of Kevin
President
Warsh.
Trump tried to fire Fed Governor Lisa Cook for unsubstantiated allegations widely believed to be politically motivated. Thankfully, both a federal district court and the D.C. Circuit Court of Appeals ruled in favor of Governor Cook, preventing her from being fired while the investigation proceeds. This is a landmark test for independence. Now, Supreme Court Justice Brett Kavanaugh said allowing Cook's firing to go forward would weaken, if not shatter, the independence of the Federal Reserve. So I would like to ask you, will you commit to defending Governor Cook's tenure as Chairman Powell has done?
Senator, it was a pleasure to meet you in your office and spend time with you. As I said to you then, I'll repeat here to the broader committee. If I stand for anything, it's the Fed should stay in its lane. As I understand that matter, it's pending before the United States Supreme Court. I think it's inappropriate for me to weigh in on that, especially because in the event that I am confirmed, I could be a party to that matter.
Well, I disagree with Mr. Walsh. I disagree with you. This is your future colleague who is confirmed by both this committee and this Senate to serve her country. Chairman Powell has defended her tenure, and your answer to this is you will not defend her. Is that correct?
No, Senator, that's not my answer. My answer is there's a pending case before the Supreme Court, the results of which I think we're going to hear about soon. If confirmed by this body, I will follow the Constitution, the Supreme Court law, and the best of the Fed's traditions.
Well, let me ask you this then. Do you agree or disagree with Justice Kavanaugh on the Supreme Court, who said that her firing would weaken, if not shatter, the Fed's independence? Do you agree with Justice Kavanaugh?
So I took a constitutional law class, but I wouldn't say I'm worthy of being a Supreme Court justice. What I can say is Fed independence means everything to me.
And it means...
And that's exactly what I would try to do if I'm confirmed.
Well, I'd like to move on to the criminal investigation of Chairman Powell. The Trump administration could have taken many off-ramps to end what is a ridiculous exercise. Instead, they have doubled down. U.S. Attorney for the District of Columbia, Jeanine Pirro, sent prosecutors to the Fed last week to continue this circus, and they were turned away. Chairman Powell has said that the administration's investigation is not about any testimony or the renovations of a building, calling these arguments pretext, and he said that the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on its best assessment of what will serve the public rather than following the preferences of the president. So do you dispute Chairman Powell's assertion that the investigations are pretext for policy disagreements?
Senator, as I said with respect to the other case, this is also pending before the courts. I have a ton of confidence in the court's ability to make a final resolution. I'd abide by any judgment of the courts and would follow that judgment in the best of the Fed's traditions.
Okay, it's difficult. Let me just ask you another question instead. Just a few days ago, bless his heart, President Trump called Chairman Powell a stubborn, incompetent person who he said suffers from Trump derangement syndrome. Now, can you say before this committee that you disagree with this characterization?
Yeah, my disagreements with Chairman Powell are about policy, not about personality or personnel.
Okay, let me ask you another question about the president. Now, my colleague a moment ago said to you that the president, you said the president has never asked you about lowering interest rates, and you said he never specifically, is the word you use, demanded that you decrease interest rates. Well, did the president generally suggest this to you as well?
You know, in my recitation to your colleagues, I wasn't trying to be clever. The president never generally or specifically instructed me, suggested I should commit to any interest rate path whatsoever.
Okay, let me go to another point. So if the Senate does not confirm you by May 15th, the president may inject more financial chaos into our economy by illegally attempting to remove Chairman Powell and installing someone else until your confirmation. Now, the law is quite clear here. If there is a vacancy, the current chairman continues to serve as chair pro tem until the Senate confirms a replacement. But the Trump administration is gearing up to fight this assertion. And I expect every financial leader and reporter is watching your words right now, which can move markets. So I'd like to give you an opportunity to reassure them. Do you agree that the law requires the current Fed chair to continue serving as interim chair while this replacement is confirmed?
So I haven't been advised on that. I will say this. I was a summer associate for 8 weeks at a law firm, and that was the extent of my legal career. I'm certainly not capable of defining whether the Vacancy Act applies to the Federal Reserve or not.
All right. Thank you.
Yes, ma'am. Senator Bernie Moreno.
Mr. Chairman, thank you for the honor of going last. I know that's normally
Republican Bernie
reserved for
Moreno
people with
of
much more
Ohio,
status
now
than I
questioning
have, so I
Kevin
appreciate
Warsh live
that
on
very
Bloomberg.
much. Mr. Chairman, I'm going to read something here for a second. Mr. Chairman, it's clear that Mr. Warsh is tremendously accomplished. He is committed to strong capital standards, effective supervision, and meaningful market discipline. He knows unequivocally that the Fed must be independent, non-ideological, and nonpartisan. And for this reason, I am proud to support his nomination. I wish I had said those words, but those are the words of Senator Chuck Schumer when he voted to confirm you, in fact, introduced you. So I would like to enter that into the record. As they say, there's nothing wrong with that, but it looks like Democrats used to love you at one point. What changed?
The Senator, I don't know.
You didn't catch the Seinfeld reference, so just proof that you did not watch the show. All right. Let me ask you some quick rapid-fire questions. I know people have enjoyed being here this long, but maybe not others. A lot has been said, and I think it's important, on the plight of working Americans when it comes to being able to afford the basic elements of what it means to be somebody here who's successful in the working class. Are working class Americans better off or worse off than they were 3 years ago?
The aggregate statistics show improvement, but I do want to suggest with better Fed policy, I think the improvement can be stronger.
No, clearly. But we're not done, and we have a long way to go. But if you're somebody who's an average working American today, in 2026, you're better off than you were 3 years ago, because 3 years ago, you were getting demolished by generationally high inflation. Is that true?
The trajectory on inflation is improving, but there's more work to do.
And one of the key parts of why I'm supporting you is because a total and complete focus and understanding that the interest rate tool is the tool that allows you to help working Americans much more than the balance sheet tool. Would you agree?
Yes, Senator, I do.
All right, perfect. Let's move on to central bank digital currencies. Do you agree that the Federal Reserve has no legal right to issue a central bank digital currency?
Senator, I agree that they don't have the right, and I think it would be a bad policy choice.
So let me just put an exclamation mark on that. Under your chairmanship of the Federal Reserve, you will not have the Federal Reserve explore or any way move towards a central bank digital currency.
If it's within the power of the chairman of the Federal Reserve, I agree with that statement.
Perfect. Let's shift over to AI. A lot has been said about that. And I worry that some of my colleagues don't feel that this is quote unquote real or happening as quick as it is. It is happening insanely fast. In fact, would you agree that it could lead to an employment shock, especially for entry-level white-collar jobs?
Senator, I agree with you on the pace of the technology revolution. I've had to update my own priors versus 6 or 12 months ago as I've seen the rate of improvement of the models. Senator, the way I describe it is this: I am more confident that there will be improved output than I am certain about when the effects of that would be on the labor market. I basically believe in the following good economic tenet, which is described as the lump of labor fallacy. And we tend to think in economics, there's only a fixed number of jobs, and we've got to fill them every day possible. The labor force, the structure of the labor market changes. The jobs that will be created 2 or 3 years from now, some of which are unimaginable to us today. But the lag between the improvement in output and the effect on the labor markets, that's got to be central to the Fed's thinking, given the pace of innovation in this cycle.
And this concept of price stability plus maximum employment, that maximum employment piece is problematic when policymakers open our borders and let tens of millions of people come into this country illegally. Is that not correct?
I'm gonna let you guys handle immigration policy. I'm gonna have plenty on my plate if confirmed.
Adding 10 to 20, 30 million people into the country when you're trying to make certain that everybody here has a job is problematic, correct?
Yeah, the central bank takes the labor market is as it is, and that's a function of policies you and the administration put in place. It's not our place to be opining on that.
Okay. And let me just add one last thing and more to your wife. How did you get so lucky to have a guy that's so romantic that on Valentine's Day of 2006, he brings you to a Senate hearing? I mean, you set a high bar for all of us. Look, I'm going to ruin the suspense for everybody. You're going to be confirmed. You're going to be the Federal Reserve Chairman. And most importantly, you're going to do an incredible job. And I'm honored to be able to have been part of that process, and will vote for you resoundingly.
Thank you, Senator.
Well, that concludes the question and answer portion of today's hearing. I'd like to thank our nominee for testifying before the committee today, and thank you for your willingness to serve our country. For senators, all follow-on questions for the record must be submitted by tomorrow, April 22nd at noon. And for you, the witness, please respond by Thursday, April 23rd, 1 p.m. to the written questions you receive in order to facilitate this committee promptly processing this nomination when it comes. With that, this hearing is adjourned.
Thank you.
There you have it. The gavel is dropped by the chair, Senator Tim Scott, Republican from South Carolina, on a roughly 2.5-hour escapade for Kevin Warsh. You heard it and saw it all right here on Bloomberg Radio and on YouTube. We stuck with it till the end on channel 121 on your satellite radio with a top live blog going here on the terminal and a lot of headlines that have been crossing the terminal. Kevin Warsh saying an independent Fed must stay in its lane. Going on to talk about his interactions with President Trump on this particular matter, which is fascinating. He says, I wasn't trying to be clever. The president never generally or specifically instructed me or suggested I commit to any interest rate path whatsoever. File that away. Saying the Fed needs a new framework for addressing inflation. Fascinating. He did not detail what that was. And making clear under questioning from Senator John Kennedy, a Republican from Louisiana, that in fact he will not be the president's sock puppet, as Elizabeth Warren suggested repeatedly in her questioning, saying as well the Fed has a short window to bring down inflation. We're watching Wall Street here. Markets are slightly lower, stocks that is, interest rates slightly higher. Tyler Kendall standing by on Capitol Hill, and we're going to get to Tyler as she makes her way out of the hearing room to give us a good briefing on what we just heard from Kevin Warsh. This is a conversation we've been waiting a long time for, and by the way, we could wait a lot longer for a vote, a confirmation vote that is being blocked by Senator Thom Tillis, who supports Warsh but does not support the DOJ's criminal investigation into Jay Powell. We'll put all the pieces together with Tyler coming up. First, it's Charlie Pellet and the market reaction live from World Headquarters in New York. How's it look, Charlie?
Right now, we do have stocks lower, but important to point out that we've got oil higher. We are seeing a spike in energy with the West Texas Intermediate crude now up by 4.5%. $93.60 a barrel, Joe Matthew, right now on WTI. Barrel of Brent, the global benchmark at $98.23. Brent crude up now by 2.9%. So with oil higher, we've got stocks lower. S&P right now down 15 to 7,092. A drop there of 0.2%. The industrials, Dow Industrials down 49, now down 0.1%. NASDAQ lower by 40, a drop there of 0.2%. And the VIX holding below 20 right now. The 10-year, 4.29%. We do have the 2-year currently yielding 3.77%. Spot gold right now dropping 2%, 47.23 the ounce. And again, crude bears repeating, up by 4.5%. Again, repeating some of the headlines from the Kevin Warsh testimony. Warsh pledging to act independently if confirmed as the next Fed chair. Also, he insisted that the president never asked him to commit to any particular rate decision. Our Stuart Paul is going to have a whole lot more on the testimony coming up in just a moment. Recapping, the VIX below 20, oil moving higher again, WTI up 4.4%, S&P down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet will have more on the markets coming up at the top of the hour, 1 p.m. Eastern, as we work into our second hour here on Balance of Power and welcome our global television audience to the conversation. Now, we're about to do something that you don't see or hear on traditional news networks as we venture into the hallways of Congress, right outside the hearing room that Kevin Warsh was just in. Bloomberg's Tyler Kendall is standing by. And we don't need to be formal about this, guys. Let's just bring it up because she's standing by along with a bunch of other reporters in the hallway here for possibly Kevin Warsh to exit that hearing room along with lawmakers who Tyler is going to be asking questions of here. This was a 2.5-hour hearing. Unclear if Kevin Warsh wants to talk with reporters, but we'd love to talk with Tyler Kendall. Can you hear us, Tyler? What's going on in the hall right now?
Hey, Joe, I got you. Well, it's absolutely packed here in the Dirksen Senate building as this confirmation hearing for Kevin Warsh comes to a close. We just saw the chair of the Senate Banking Committee, Tim Scott, exit the hearing room. We're waiting to see if we get any glimpse of Kevin Warsh exiting, so that's why you may see me continuing to turn around for any update.
You do what you got to do.
To a few different lawmakers. Well, as always, we're running around trying to bring you the latest, but we did get a sense, of course, today during this hearing from lawmakers that really did focus their questions today on the future of the Federal Reserve's independence, and we heard Kevin Warsh respond to the grilling, pledging to act independently, and as you mentioned, pull out that quote saying that he will not be a sock puppet, in the words of the ranking member, Senator Elizabeth Warren. At one point, Warsh said in part, quote, "The president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve." And he went on to say that President Trump has never asked him to commit to any particular interest rate decision. Now, the issue is typically this would be considered a pretty smooth sailing nomination. You know, Republicans, by and large, are on board with trying to get Kevin Warsh confirmed, but the issue is there is still that one holdout, Senator Tom Tillis, the Republican from North Carolina, who can make good on his threats, considering Republicans only have a 13-11 majority on this committee to withhold the nomination from advancing to the full floor until the legal matter against Fed Chair Jerome Powell is resolved. And Joe, I actually caught up with Tom Tillis after the hearing. He came out, spoke to us reporters, and he's appearing to float a potential off-ramp that he would be in favor of congressional oversight into the Fed's renovations in exchange for the DOJ suit being dropped. Now, that latter point is the important part, that he hasn't moved on, that the DOJ has to drop this legal matter into Jerome Powell, and President Trump indicated as early as today in an interview that he's going to double down on the investigation. But I bring this up because it does appear significant in that a few months ago, Tom Tillis told me that there couldn't be a swap, a congressional investigation in exchange for the DOJ investigation. So maybe this is something that we should keep our eyes on going forward if the Senate Banking Committee and House Financial Services Committee join together to look into the Fed's renovation costs.
Absolutely fascinating. Tyler, thank you so much. We'll let you get back to it. In our regards to Kevin Warsh, if you end up bumping into the nominee. That's the real stuff there, guys. That's the hallway of the Dirksen Senate office building and all of its glamour. Producer James was there this morning to pick up his congressional badge. You got to get the credentials there. He said the line was around the block, not to get credentials, to attend this hearing. Not only did you have all the lawmakers there, but half of Washington was paying attention to this, and you've got to think that President Trump was watching and listening. We haven't even mentioned Iran yet, by the way, because he's watching and listening to a lot of things in the White House right now. Stuart Paul, aforementioned, was steeped in that hearing today and joins us now as a voice on the Fed, Bloomberg Economics U.S. economist. This is the man we call to talk to around Fed meeting time. And at some point, Stuart, it's going to likely be a Chair Warsh we're talking about. And I guess that's kind of the weird part about all of this. Everyone, Democrats and Republicans in that hearing room, will tell you that he's going to be confirmed. but we have no idea when the confirmation vote is going to happen because of the DOJ investigation and the Tillis blockade. How long can this standoff go on for?
Well, it can last through the end of this year. Tyler hit the nail on the head. She's exactly right that right now Tom Tillis has a lock, and so the confirmation process is locked down. Tom Tillis is not going to let up until the DOJ investigation is dropped. As you heard from Tyler, it sounds like he's willing to take on oversight responsibilities in the committee and oversee the Fed's expenses. That's if the DOJ drops the investigation, and then Warsh can proceed. But until the DOJ drops the investigation, you are at a standstill. There is not enough votes to get Warsh through committee and to the Senate floor to get him fully confirmed. And so this really does come down to the Department of Justice and the president deciding which they want more. Do they want to investigate, or do they want someone who can perhaps deliver interest rate cuts? That's really all that it ends up coming down to.
So how did he do? Stuart Paul, I'm curious your general insights here, because I'm not sure this changed any minds, right? If you supported the Warsh nomination, you're probably pretty happy. And if you didn't, he didn't change your mind. He did say the Fed must stay in its lane. He said all the things he was supposed to say about supporting Fed independence. When asked directly, he said he would not be the president's sock puppet. He did talk about a new framework for addressing inflation. We didn't get a lot of details on that, but did he move the needle in either direction?
No, he also didn't need to move the needle in either direction. This was always going to go down as a party lines vote. Ultimately, when the time comes for this, there will be a party lines vote in committee. There'll be a party lines vote in the Senate chamber itself. So all he really needed to do was stay reasonably steady and not make any unforced errors. So what were the sort of errors that he could have made? Well, he could have revealed too much about the framework that he plans to bring to the Federal Reserve. He did not reveal very much about the framework he would bring to the Federal Reserve. Senator Van Hollen, in a line of questioning, was actually very interesting. He noted that Governor Warsh, in his prepared remarks, noted that basically inflation is everywhere and always a monetary phenomenon, supposing the current set of circumstances where inflation is being pushed higher by an energy supply shock. That's not a monetary phenomenon, really. And so Van Hollen pursued this line of questioning. Should the Fed be addressing this, or should the Fed be perhaps inappropriately cutting rates and fueling inflation? Warsh would not take the bait. He would not offer any sort of framework. He would not capitulate to any sort of the pressure that comes from being under fire. It was actually a reasonably interesting dialogue back and forth, and Warsh did not fall into any potholes, really. He did a fine job.
All right. Fantastic. Stuart, thank you. Stuart Paul, Bloomberg Economics, U.S. economist. We need Stuart's read. We already got the read from Tyler, who was there. And we want to assemble our political panel to get into the political implications of the conversation we just heard. Look no further than Elizabeth Warren, ranking member, of course, on the Senate Banking Committee, the top Democrat who came armed and ready to talk about a lot of things, including the big one, Fed independence. Here's a little back and forth.
In our meeting, you said you would be independent because you're, quote, a tough guy. Those were your words, tough guy. And you will be able to stand up to President Trump. So let's try it again. Name one aspect of President Trump's economic agenda with which you disagree.
Well, Senator, the Federal Reserve in recent years has wandered outside of its remit, wandered into other areas.
I'm asking for something
That's
you
not something
disagree
I'm prepared
with Donald
to do.
Trump on.
If I'm
Just
confirmed,
one
the Federal Reserve should stay in
economic
its
issue.
lane.
Just one little place where you disagree with Donald
Well, I
Trump.
do have a disagreement, actually, Senator, with the president. I think even this morning, he said that he thought I was out of central casting. I think central casting, I'd look older, grayer, and maybe show up here with a cigar of sorts.
Quite adorable. But you know, we need a Fed chair who is independent. That's the only way we preserve the independence of the Federal Reserve. If you can't answer these questions, you don't have the courage and you don't have the independence.
Wow, that's how it started. Quite adorable, says Elizabeth Warren. I guess the lesson here is never tell Elizabeth Warren that you're a tough guy. That's just a bad way to start. And by the way, Elizabeth Warren is going to be our top guest on the late edition of Balance of Power. Did you hear that? Have they been talking about this on the air all day? I hope they have. 5 p.m. Eastern Time, live from Capitol Hill. Elizabeth Warren, one-on-one here on Balance of Power. Kaylee Lyons is getting in the BOP van and going up there to the Hill to do that conversation. It's going to be fascinating to hear what she has to say, not only about independence and sock puppets, but about compliance. She brought up Jeffrey Epstein in the first couple of minutes of this back and forth. Yeah, he did show up. There was one email, I guess, in the Epstein files, and how we're connecting the dots between his investments, his portfolio, Epstein. I don't know. That's why we're going up to Capitol Hill to talk to Elizabeth Warren. Right now, it's our great panel. Jeannie Sheehan Zaino is with us, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center. And delighted to say Lonnie Chen is along for the ride today, fellow in American Public Policy Studies at the Hoover Institution at Stanford University, and of course, our Republican strategist. Lonnie, Jeannie, great to see both of you. Jeannie, I'll start with you. On that back and forth with Elizabeth Warren, is there anything to come from this? Questions of independence, accusations of being out of compliance when everybody seems to know that he will be confirmed?
Yeah, that's right. Boy, I felt a little badly for Kevin Warsh when that joke fell flat that he tried. That was a little rough. Yeah. And boy, this was a fascinating hearing. I mean, when John Kennedy asked him to define what it means to be a human sock puppet, this is where we have sort of fallen in these things. And I have to say, Joe, and I don't know if you and Lonnie agree, but it seems to me that these hearings for these nominees are starting to sound a lot like Supreme Court hearings post Robert Bork. A lot of questions, very, very little interest in answering or, attempts to try to stay above the fray. So when you ask, what happens with all of this, she gets him on the record with these non-answer answers. He will get confirmed once Tillis's concerns are addressed. And he's going to be the next Fed chair. It is just now a matter of when. So I'm not sure they're effective substantively beyond getting him on the record with non-answer answers, if you will.
Wow. That is really interesting, the comparison to a Supreme Court hearing. I can't tell you how I would rule. That would be inappropriate. In this case, Lonnie, I can't tell you if I'd cut rates. That would be inappropriate. Lonnie, of course, shares the Hoover Institution with Kevin Warsh. For full disclosure, Lonnie, how did he perform knowing that he was going to face questioning like this from the likes of Elizabeth Warren?
I thought he did very well. Look, the reality is that these confirmation hearings do tend to be more theatrical in nature. I think that's one of the unfortunate elements of our politics now, is that rather than discussing the substance of all of the many issues that a Federal Reserve chair will deal with, I think we end up with efforts by senators to have gotcha moments, to put nominees in difficult spots when, as Jeannie very rightly points out, the outcome of this vote I don't think is particularly in question. Kevin Warsh is a supremely qualified nominee for this job. He has the right experience and temperament and disposition, so I don't think people should question that. But really, this is about finding the moment that a senator can use in their political advertising or for their own political purposes. I don't expect you're going to hear a lot from Senator Warren when she comes on your air this afternoon. I think she's going to devolve to talking points and to attacking elements of the nominee's background that are either irrelevant or frankly made up, in my view. So look, it's these things are we got to follow them. We got to watch them in case something crazy happens. But nothing really does anymore. These hearings have become basically performative.
Interesting. Elizabeth Warren sent a letter to Kevin Warsh, Jeannie, back on the 18th of March. I'm looking at the letterhead right now. It says, Mr. Warsh, I write to request information following reports your name appears in materials released by the Department of Justice in response to the Epstein Files Transparency Act. In light of your recent nomination, she says it is essential Congress and the public fully understand the extent of any interactions or relationship you had with Jeffrey Epstein. Is this something that Democrats will pursue further?
I think so. And quite frankly, I think this is going to be the new normal, Joe. I think almost every nominee that comes up who was referenced in those files may have known Jeffrey Epstein. This is going to be standard fodder for representatives and senators. And right, it should. I mean, the victims of the Jeffrey Epstein scandal deserve to know if somebody who is going to be speaking on their behalf and on the behalf of the American public and acting in such important positions, what their relationship, if any, was with Epstein. So I think that that is going to be something we hear more and more.
I understand he showed up in an email in the DOJ files that were released publicly, Lonnie. Is this a smear? Is this appropriate for a hearing like this? Is Jeannie right? Is this the new normal? If you go up to Capitol Hill, you have to answer if your name's in the files.
Yeah, I do think that this is going to continue to become the new litmus test in some ways. And it will be certainly something that nominees are going to have to answer for. And to the degree that there is a clear and concise answer, I would encourage every nominee to give that answer with respect to these kinds of inquiries. But look, having been through several confirmation hearings myself, I can tell you that, there's all sorts of different things that senators will believe it is in their right and in their remit to ask you. And the best thing you can do is where you can answer and where you can't, do exactly what Kevin did, which is to give answers that allow you to talk about what you want to talk about, right? And we all know that that's what these hearings are coming down to. But it is, again, I mean, it's performative. That's what this is, right? Because there's no question in my mind that once the Tillis issue gets resolved, Kevin will be confirmed.
Well, let's talk about that. Tom Tillis has been accused of being performative as well. In this case, he seems pretty authentic about his opposition because he actually supports Kevin Warsh. He told him, go take a break because I don't have any questions for you. He just talked about the Jay Powell case. How does he step off here? Does Congress take the ball from DOJ and Donald Trump climbs down? Lonnie, what do you think?
I'll answer. Look, I think Senator Tillis's concerns are certainly legitimate. I mean, when he talks about wanting to make sure that there's closure to the investigation, I don't think it is performative. I think he has a sincere point of view and perspective about the need to ensure that the DOJ is not inappropriately employed to engage in an investigation where in fact there may not be need to investigate. So I fully understand where he's coming from. In terms of whether Congress steps in, it's a pretty thin majority, and it's a thin majority on both sides. And any issue that could potentially cause a division within the Republican conference is probably not an issue that either the Speaker or the Majority Leader on the Senate side have any interest in touching. So my sense is it is going to be one of those things that's going to have to be negotiated behind the scenes rather than for there to be some really significant congressional effort, because I just think you're going to have a tough time getting all Republicans on board.
Have a swing at this one, Jeannie. We've got about a minute left. How long do you think it will be until we see a confirmation vote?
You know, if I would have thought that Donald Trump on that CNBC interview earlier today, he was being prodded. Oh, please, Mr. President, just say you're going to stop the investigation. Tillis votes, he's willing to go ahead. You get what you want. Powell is out, Warsh is in, and Donald Trump would not go along with it. It was just fascinating to listen to. So in normal circumstances, Joe, I would say today, this thing is going to move forward. But Donald Trump is invested. I mean, he was even saying things like, I don't think he's gotten any kickbacks, but we have to investigate. And of course, Jeanine Pirro has moved the investigation forward in the last few days. So I think it's going to be longer than makes any sense to me, or I'm certain to Warsh.
Well, thankfully, we've got a great panel to keep talking about it. Jeannie Sheehan Zaino and Lonnie Chen will be back in our second hour. Kaylee Lyons is joining the conversation as always, and we're going to talk to Kitty Richards about that hearing today. Straight ahead on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
But when will they vote? Welcome to the Tuesday edition as Kevin Warsh sits for hours of testimony before the Senate Banking Committee, but unclear when a confirmation vote will actually take place. I'm Joe Matthew alongside Kaylee Lines in Washington. Thank you for joining us, Kaylee. That vote being held up, of course, by a lone senator, Tom Tillis. Until the DOJ ends its investigation into Jay Powell, the president doubling down today, though, that he wants to see the results of that investigation.
Yeah, when asked repeatedly in an interview on another network if he was going to take the off-ramp, just let the banking committee investigate it, the president said no. He wants to figure out what is happening with the renovation of the Fed's building. So when Kevin Warsh could become Chairman Warsh remains very unclear. What he did, though, pledge in his confirmation hearing is that he would not be a sock puppet for President Trump, saying repeatedly that he would act independently, though also that he doesn't really believe in forward guidance. He didn't signal, Joe, what he's thinking in terms of the incoming rate decisions he would have to make.
That's right. He played it pretty coy on that and talked about a new framework for making interest rate decisions, a new regime at the Federal Reserve, without detailing a lot of that. So maybe we raised more questions than we answered today. We'll talk about it with Michael McKee coming up and with Kitty Richards. And of course, our own Tyler Kendall has been up there for the duration. She was in the room.
Yeah, looking forward to checking in with her. And as we talk about a potential new regime at the Federal Reserve, obviously President Trump maintains we also are dealing with a new regime in Iran. What we do not know as to whether or not that is true, one. The other is whether or not anyone representing the new regime is going to be willing to show up to talks in Pakistan when we have not yet seen our own delegation, including the Vice President of the United States, J.D. Vance, making tracks to Islamabad with a deadline on this ceasefire expiration looming tomorrow.
That's the news at the moment. Everyone is still in Washington. And we thought at one time yesterday there was a report that J.D. Vance was already in the air. So it's unclear exactly how this is going to unfold in the next 24 hours. But we'll be tracking it all for you right here on Bloomberg.
Just like we always track financial markets, who obviously were watching this Warsh hearing with bated breath. Did we really learn anything that moves the needle? Let's check now with Charlie Pellet, who's up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Indeed, two big stories. We got you covered right here on Balance of Power. Iran and the Kevin Warsh hearing before the Senate Banking Committee. Stocks lower, oil higher. Going to focus on energy right now. We begin with West Texas. Intermediate crude up 5% right now, 94.12 a barrel. Oil higher, stocks lower. Barrel of Brent 98.78 right now, up 3.5%. S&P down 24 at 7,084, drop there of 0.3%. We did see stocks eventually move higher this morning, but right now looking at a 110-point loss on the Dow. Dow Industrials down 0.2%. Nasdaq down 0.3%. All of this with the VIX right around 20. The 10-year 4.29%, the 2-year 3.77%. Gold is down 2.1%, 47.17 the ounce. Kevin Warsh today pledging to act independently if confirmed as the next Fed chair, rejecting concerns that he would be a, quote, sock puppet for President Trump. Again, the Dow, the S&P, Nasdaq, all lower. Also keeping an eye on Apple shares. Right now we do have Apple. It is among the most read and the most actively traded stocks. Right now we've got Apple down 2.3%. This following the announcement that CEO Tim Cook will be handing over the reins to hardware boss John Ternus later this year. Again, Apple down 2.3%, Nasdaq down 0.3%, S&P down by 0.3%. But the big story here, crude, West Texas Intermediate up by 5%. I'm Charlie Pellet, Joe Matthew, Kaylee Lines. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. No sock puppets here, as Charlie mentioned. That is what the message was from Kevin Warsh as he testified before the Senate Banking Committee today, with not only Fed policy, but Fed independence really the central focus of that hearing and the questioning from senators. Amid, obviously, what we have seen, public pressure from President Trump to push the Federal Reserve to lower interest rates. But Kevin Warsh maintained, Joe, in his testimony that the president never asked him to predetermine, commit, fix, decide on any interest rate decision in any of their discussions, nor, he said, would he ever agree to do so.
A lot of Democrats went out of their way to make sure he said that on tape, if this needs to be played back at some point. And of course, D's and R's on the committee will tell you that it is likely, it is widely expected that Kevin Warsh will be confirmed. The question that we return to is when, and when a vote might take place, knowing that there's opposition from Tom Tillis, the Republican senator who actually supports Kevin Warsh. Now, Bloomberg's Tyler Kendall has been on Capitol Hill all morning with this hearing in mind, not only watching it unfold, but she spent some time with Tom Tillis and the other lawmakers who were streaming out of the hearing room. She's got this report for us. Now, Tyler, do we have any insights on how Tillis will follow up and when a vote might take place?
Okay, Joe, well, that at this point is the big question because, of course, this would typically be considered a smooth sailing confirmation hearing. Most of the Republicans, including Senator Tom Tillis, say they do want to see Kevin Warsh confirmed. But at this point, Tillis is holding firm that he will not move to advance Kevin Warsh's nomination to the full Senate floor until the legal matter against Fed Chair Jerome Powell is resolved. And he really can make good on these threats because Republicans only hold a 13-11 majority on this Senate Banking Committee. Now, as you mentioned, I did have some time to catch up with Senator Tillis after his remarks during the hearing today, and I asked him about what a potential off-ramp could look like, including whether we could see some sort of swap here, a congressional investigation, if that DOJ investigation is dropped. And as you're about to hear, he told me that could be a good idea.
I think it's a great idea. And you know, in truth, the one thing I realized in the Banking Committee is we never really scrutinize capital expenditures from these agencies that we regulate. We should be looking at the business. I think that's a great point that the president's kind of brought up, that we haven't really watched these things in detail in the past, and we can all benefit from that.
So if that was launched and the DOJ dropped its suit, then you would get.
Yeah, it's the right order, too, because there was no referral from this committee. It is virtually unheard of that you would have testimony in a hearing initiate a criminal investigation without one of the witnesses at the hearing, one of the witnesses being one of the members at the hearing, saying there were. 7 of them said that there weren't in this particular case. So I think that'd be the right way to do it, where you have a bona fide potential criminal decision or activity. That's when it gets referred from committee, and that's when an investigation should start.
Joe and Kaylee, importantly, President Trump was asked about this potential off-ramp in an interview earlier today, and he doubled down on the Department of Justice's investigation. As you well know, a federal judge moved last month to block the subpoenas in the case, but so far, prosecutors have vowed to appeal that decision.
All right, Bloomberg's Tyler Kendall live on Capitol Hill for us. Thank you so much. So Tom Tillis obviously remains resolved in his path forward. He will not be casting a confirming vote to advance him out of committee until this investigation is wrapped up. So we have a lot of questions as to when Kevin Warsh will take the helm. But we also still have some questions, frankly, today as to what exactly he would do at the helm, if indeed he becomes confirmed, in terms of advocating for rate policy, cuts, hikes, one way or the other. Let's get into that now with Michael McKee, who covers international economics for us here at Bloomberg, our chief economics and policy correspondent. So, Mike, he made a point to say that he wasn't going, that not only did not promise the president that he would be cutting interest rates, but he doesn't really believe in issuing that kind of forward guidance. That said, given the other commentary we got from him around his more unusual thinking around economic policy, what is the signal we should glean from his testimony?
Well, I think you have to take a step back and say every nominee for every job in the government who goes before the Senate is going to be as vague as possible in what their plans are, because they don't want to be held, as Joe said, to account when they roll the tape a couple of years down the road. Warsh was not particularly clear, but I think you could divine a couple of things out of what he wants to do. He may want to change or eliminate the summary of economic projections and the dot plot. He doesn't like the forward guidance they give. He said the Fed sticks to those too closely. I think it's the markets that stick to those too closely. The Fed only changes those once every 6 months, and the markets tend to think that they should be changed minute to minute. He also suggested that perhaps they want to look at using a different inflation measure for their target. He didn't address the idea of whether the 2% target is a good target or not, but he suggested that maybe trimmed mean, where you take off the outlying, the highest and the lowest inflation in a particular month, and you look at what's happening in the middle, gives you a better picture of what's going on. And he also seemed to suggest that perhaps they should use more private sector data. He talked about the Billion Prices Project up at Harvard. The Fed's been doing that, moving in that direction, but he seems to want to make that more of a priority. And then finally, he would like to corral Fed speak. I'm not sure he can do that in this world where everybody has access to social media or a camera on their phone, whether he can keep Fed officials from talking about what they think.
Can't put that genie back in the bottle.
Yeah.
Michael McKee. A lot of talk about oversight today, and of course, what's happening at the Eccles building. Is there going to be a new regime when it comes to Fed spending oversight?
I don't think so, because I don't I mean, as much as I know, and I've been doing this for a long time, there's nothing particularly wrong with the Fed spending. The president has completely exaggerated how much these buildings cost. Right now, the estimate is it will be $2.5 billion. It was originally estimated, these are two buildings that they're constructing, originally estimated at 1.9. So it's a $600 million cost overrun, which is not unusual for buildings like this. And they had a lot of issues because they were so old. They're not $4 billion buildings. But the important thing is that in the Federal Reserve Act, Congress granted the Fed complete oversight of its own buildings, purchasing and maintaining its own buildings. So Congress, it's one area where they don't have a say on what the Fed's doing. So it'll be interesting to see if Warsh wants to change that at all, but I wouldn't imagine, once you give somebody some powers, they don't like to give them up voluntarily.
How about that? Interesting. Just quickly, by the way, because we've had a few people ask, Larry Fitzgerald, former wide receiver, sitting behind Kevin Warsh, also former Congressman Harold Ford Jr., I noticed, were these all just friends? Supporters behind him?
It appears they were.
Popular guy.
He is a popular guy, I guess. But it was an interesting point made by Senator Reid that Kevin Warsh obviously is by far the wealthiest person who will have been chairman, at least in the modern era, and that he hangs out with a different class of people than the ordinary American. And we've all been concerned about whether Trump will influence him. And Reid was suggesting, well, what about all these tech bros and multimillionaires that you hang out with? They look at the economy differently than the average person. So I thought that was an interesting point.
Important part of the conversation. Michael McKee, thank you so much. It's always great to have you here in Washington, D.C. Ahead of our conversation with Kitty Richards from the Groundwork Collaborative, we're reminded of the anatomy of the sock puppet. It came up more than once today. Here's a little exchange with the senator from Louisiana, John Kennedy.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine, commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
A lot of attempts at humor today. We did not bring our sock puppet, but we do have Kitty Richards, and I'm really glad to say that she's with us in studio today. Senior Strategic Advisor, Groundwork Collaborative, former official at the U.S. Department of the Treasury in the Biden administration. Kitty, I'm sure you enjoyed watching that today. It's great to see you. We're wondering if it changed anything, if he's as good as confirmed.
You know, I think the big X factor remains how Tom Tillis is going to react to the DOJ investigation. I think other than that, the Republicans control the Senate.
So it's
Donald
when,
Trump
not
wants
if.
this. It's when, not if. But I do think that, you know, Senator Tillis has really taken a stand on this politically motivated prosecution. Now, during the hearing, he went out of his way to indicate that he doesn't think that Donald Trump had anything to do with this prosecution. But I think it will be interesting to see whether he sticks to his guns on that or finds an off-ramp.
Well, of course, his concern is over Federal Reserve independence. The idea of independence and the influence of the president on interest rate decisions was brought up repeatedly in this hearing. Kevin Warsh made it clear, as we just heard, that he didn't commit to be cutting interest rates. However, we've heard from him previously this notion that he would be supportive of easier policy. My question, Kitty, is how difficult will it be at this point, if we do get a Kevin Warsh-helmed Federal Reserve, for them to cut interest rates without looking like it was due to political pressure, even if we are starting to see some economic signs that easier policy is warranted?
I think that that is one of the really difficult problems that Trump has created for himself with his aggressive stance toward the Federal Reserve, that, you know, there are many reasons to be concerned about this nominee and political independence. Among them are criminal investigations into current Fed board members, not just Jerome Powell, and the president's very aggressive stance. But also, I think people are wary of this particular nominee because for many, many years he was extremely hawkish, arguing that monetary policy during and after the Great Financial Crisis and the Great Recession should have been much tighter. I think that those opinions have not been borne out. He has not reversed course on those opinions, but very, very quickly after after the results of last year's election, he began clearly posturing for this role and calling for much more dovish monetary policy. And so I think people are taking away from that he might be more interested in which way the political winds are blowing than in what the data is showing.
A lot of questions today about his financial holdings, at least questions from Democrats. We're going to have Elizabeth Warren on the program later on today on the late edition of Balance of Power. If you're just joining us, tune in for that at 5 p.m. Eastern, because this is going to be an important time to speak with the senator. Compliance when it comes to his financial holdings, out of compliance in some cases, unidentified holdings that he says, well, it doesn't matter because I will divest them before I am sworn in, at least the majority of them. Is this story already over, or will we learn more about his investments?
Presumably, we're going to learn something more over the course of the next few weeks. But, if he has struck a deal that he does not have to disclose as long as he divests, that could create problems for sort of appearances of transparency. The question of why we care about his holdings now and when if he is Fed chair. The Fed isn't just in charge of setting monetary policy, right? They're a huge banking regulator, and that's a really important part of their role. And so any concerns that folks at the Fed are in bed with certain banks or could gain monetarily from certain actions taken as a banking regulator, those are really serious concerns. And also, there are concerns about this nominee in particular has a very strong deregulatory stance, which he held right up to and during the financial crisis. And he thinks that some of the safeguards put in place after the financial crisis went too far and should be rolled back. And so I think folks really want to know what his financial interest in banks
But also
looks
how
like.
he will divest them. That kept coming up from Senator Warren, Kayleigh, suggesting that someone like a Druckenmiller could write a $100 million check for him to divest $100 million in assets. Is this all politics, I guess, is my question.
Well, yeah, and then of course you had, I believe it was Senator Kennedy talking about the notion that these kind of sales, it's not like a yard sale, that, that some amount of time needs to be allowed when we are talking assets of this quantity. But I would imagine, Joe, to your point, that this is something Senator Warren's going to want to talk about when she joins Bloomberg later on today.
If the holdings include a lot of private companies, things that aren't traded on the public market, which they probably do, given that they're covered by a bunch of non-disclosure agreements, that opens the door for exactly what you were talking about of, if other members of the company write a check to buy his share, how do we value that check? How do we make sure that that's not some sort of special sweetheart deal?
I want to get back to the monetary policy specific questions that he would have to be dealing with if and when he is confirmed. I guess it is a when, not as much an if. In reality, Kitty, knowing that we still have a severe lack of clarity as to what exactly is going to happen in the next 24 to 48 hours in the Middle East, if we're going to see an extension of the ceasefire or a resumption of hostilities. Much remains unclear. What we do know is that the Strait of Hormuz is still blockaded by both the U.S. and Iran. Obviously, the Federal Reserve is not as well equipped to respond to supply-oriented shocks such as this. But if this goes on for much longer, are they going to be forced to all the same, even if their tools aren't the ones that can fix the problem?
They're in a really difficult position because those supply shocks are going to have the dual effect of both creating a drag on economic growth and jobs. So there are estimates from Goldman Sachs that had the war already wound down, we would still be seeing about $10,000 or 10,000 jobs per month lost because of the oil price shocks. The war continues apace. We have a ceasefire, but we have not opened the Strait of Hormuz. So you have the labor market side, but you also have the pricing pressure side, where the cost of oil filters through to the cost of all of the goods and services that Americans buy every day. So we're going to see prices continue to rise, and that takes a while to work its way through. It's not as immediate as the oil price commodity markets can make it seem. And so we're going to likely see both a drag on employment, that's half of the Fed's mandate, and a push upward on prices, the other half. And that puts the Fed in a really difficult position.
Boy, it sounds like it. Just before you leave us, I'm curious your thoughts on the performance today. The role of Fed chair has become much more public-facing, much more performative than it was years ago. You remember Alan Greenspan, he wasn't doing panels every week. There wasn't even a news conference after the Fed meeting when a decision on rates would be made. there's some charisma here, obviously. Donald Trump's talking about central casting. That's why it came up today. How do you think he'll comport himself in dealing with the media and answering the tough questions after a rate decision?
I was really struck during the hearing by, yes, he was quite personable, but he has really adopted the now standard practice of refusing to answer any serious questions and dancing around them. I don't think that that serves a Fed chair well when dealing with the public. It also, I don't know what it will look like behind closed doors. He said he likes to see a good family fight at the table when rate decisions are being made. But, you know, a big question is, how is he going to handle the relationship with other members of the governing board?
All right, Katie Richards, always good to have you. Senior Strategic Advisor at the Groundwork Collaborative, also former Treasury official during the Biden administration, here with us in our Washington, D.C. studio. But we want to head back up to our New York studios where we find Charlie Pellet and get a check on these markets on this Tuesday. Charlie, how are we looking?
Right now, lower across the board, and not just declines for the U.S. stock market. Lows of the session right now, Kaylee Lines. Equities extending losses after the New York Times reported that Vice President J.D. Vance's diplomatic trip to Islamabad has been put on hold after Tehran failed to respond to American negotiating positions. Crude oil ripping higher right now. We got West Texas Intermediate with a 5% gain. WTI back above 94.10 a barrel. Brent crude closing in on $100, 99.75 for a barrel of Brent. The global benchmark up now by about 4.5%. So bottom line here, sell-off underway. S&P down 46, 7,062. And again, to be sure, lows of the day and continuing to slide. S&P down 0.7. The Dow down 276 now, down 0.6%, and the Nasdaq Composite Index down 0.7%. The VIX just below 21 now. The 10-year 4.30%, with the 2-year 3.78%. Gold down $118 the ounce to just above 4,700, down 2.5%. But again, the big news here: surge in oil. WTI up 4.9%, 94.02 a barrel. And again, equities extending those losses after the New York Times reported that Vice President J.D. Vance's diplomatic trip to Islamabad has been put on hold. President Trump, meanwhile, says he would like to see a buyer emerge for Spirit Aviation Holdings, and also was open to the idea of government coming to the aid of the airline. He also said on CNBC that he is opposed to a merger between American and United. Shares of UAL down 1.7%, American down by 4.3%. I'm Charlie Pellet, and Joe and Kaylee, that is your Bloomberg Business Flash.
All right, Charlie, thank you so much. He'll be back in about 20 minutes' time with another read on the markets. Not getting better here. In fact, it's a very different market than we were looking at this morning, with sharp losses now following some optimism ahead of what appeared to be the next round of peace talks with Iran. This is where the story changes. Kaylee Lines, we've got reporting now from the New York Times that J.D. Vance's trip to Islamabad, which at one time had reported to be already underway, this time yesterday, has been put on hold as Iran failed to respond to terms. Now, Iran had been playing pretty cagey with its opportunity or intentions to attend this next round of peace negotiations. It appears everyone for now, that includes Jared Kushner and Steve Witkoff, are staying right here in Washington.
Now, according to the official that the New York Times is citing in their reporting here, sourcing, they say the diplomatic process is paused, though the trip has not been canceled. So this isn't to say that it's completely off the books. They're just not going to send the Vice President of the United States, the second highest ranking official in the U.S. government, to talks at risk of him being stood up potentially by the Iranians. Of course, as you say, Joe, we're seeing market reaction to this, keeping in mind that the deadline is tomorrow evening. The ceasefire is set to expire evening time, Washington time, at least according to President Trump. And he told our colleague Jeff Mason just yesterday that it is highly unlikely he would extend it. So where does this leave us? Let's turn now to our political panel to try to get answers to some of these questions. Jeannie Shanzano is with us, of course, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Republican strategist Lonnie Chen, fellow in American Public Policy Studies at the Hoover Institution at Stanford University. Welcome to you both. Lonnie, just to begin with you on this notion that the vice president's trip, at least for now, is being paused or postponed, if not outright canceled to this point. Can they just simply not take the risk that he travels all the way to Pakistan and Iran doesn't show up to the table?
clearly there was some element of the discussion with Iran that had not been sort of fully resolved. And obviously, you don't want to send the vice president into a situation where there are significant elements of uncertainty about people showing up, about key elements of the negotiation that remain unresolved or certainly difficult to bridge. So I think this is a reflection more broadly, Kaylee, of just how challenging this discussion is between the U.S. and Iran, how many things remain to be negotiated, and how hard it's going to be to see an end to resolution of this conflict. And I think that is the broader takeaway from the change in timing we're seeing here potentially.
Jeannie, I'm guessing that you're not surprised by this. You've been calling out the fact that Iran has not committed to another round of talks and questioned the assignment of J.D. Vance in this effort to begin with. If we get to this deadline tomorrow night and there's no deal, what's going to happen?
There's two options, essentially. Donald Trump does what he said he's going to do, which is escalate, bombing bridges, bombing civilian power plants, or he extends this ceasefire. And I think we all hope it's the latter. And of course, Donald Trump has been on all sides of everything. So I think it's a possibility. But, you know, I'm struck, Joe. He said today that the war is over, followed a couple seconds later by saying he's going to get a good deal. Then he said, no, it's going to be a great deal. Now, a lot of times in the U.S. and the West, when we hear the president's double speak, maybe it's because we're used to it, we chalk it up as being part and parcel of his efforts to quell the markets, to sort of assuage people in the markets, that everything's going to be okay. And that may work as far as the markets are concerned, but it does not work from a diplomatic standpoint. In Tehran, every time he says these things, they hearken back to Geneva, that last meeting when they were in the middle of negotiations and were bombed, or the meeting prior when they were in the middle of negotiations and bombed. These are being read in very different ways, all of these truths and all of these sort of off-the-cuff statements the president is making. And so I am not at all surprised that Iran is not going to Islamabad. And let's also remember, there's another reason they're not going. They're not pushing to go into negotiations with the United States. Time is on their side. The longer this drags on, the better for Iran. And so all of that means that the president has to work very hard to get them to the table. They can't repeat what they did in that first round, where they come out of negotiations and the president says, Iran says, we're going to open the strait. And the president says, nah, I'm going to keep the blockade in place. All of this loose talk is having huge, huge negative implications for the United States and the world economy.
Well, we're just getting an update from the Ministry of Information and Broadcasting in Pakistan, of course, the mediator of these talks, saying that they remain in continuous contact with the Iranian side regarding confirmation of its delegation, going on to say that the ceasefire ending at 7:40 a.m. PST, referring here to Pakistan Standard Time, which is 9 hours ahead of the U.S., it ends on that date, or at that time on April 22nd, which would actually be evening time here in Washington tonight. So clearly we can't even agree on when this ceasefire is supposed to expire, as the president maintains that it is Wednesday night, Washington time. But Pakistan's Ministry of Information going on to say Iran's decision on participation before its expiry remains critical. And I wonder, Lonnie, if this is just a game, a very, very, very risky game of chicken that both sides are playing right now.
Yeah, I mean, I presume that's part of it. The president has a series of options available to him if the Iranians do not resume talks. My gut just says he's not particularly interested in escalating with additional application of kinetic force in this situation. But obviously, there are some really, as I said earlier, some really sticky issues that remain broadly unresolved. And the Iranians don't seem particularly interested in reaching resolution on those at this point. And so, when the ceasefire ends, whether it ends, who goes to those negotiations, a lot of discussions happening behind the scenes, and one hopes that we are continuing to move toward resolution on the key issues, whether it's the Strait of Hormuz or Iran's nuclear program. Those are obviously the two biggest issues here. But, I mean, look, when the ceasefire ends, when it's up, that appears to be up for some interpretation at this point.
Well, I'm going to just press a little bit further with where Kayleigh was going here, not to misrepresent what Kayleigh was suggesting, Jeannie, but this almost smacks of a disinformation campaign. CNN reporting yesterday morning, J.D. Vance is in the air. Somebody leaked that. He's already on his way for talks. Axios this morning. The Iranian team waited all night for a green light from the supreme leader. It came Monday night, according to Axios. That's when the Iranians committed to attend the talks, and J.D. Vance gassed up the airplane. Are we seeing the same strategy on both sides, where we simply cannot trust the information because it's not meant for our consumption?
Yeah, I mean, we are seeing this play out on social media in real time, and it is very disconcerting. And, you know, I don't think many Americans would be surprised that they can't trust what is coming out of Tehran. I think what is really startling is we can't trust the information from our own government. And I'm not suggesting it is because of nefarious reasons. Maybe it is, maybe it's not. They seem very confused. At one point, J.D. Vance is going. At another point, he's not going. One point, he's en route. Another point, he's not. At one point, the strait is open. Then it's not. They've agreed to the enriched uranium. Then they haven't. It is no way to run this type of high-level negotiation. And, you know, yesterday, you spoke to Jane Harman, and she talked about one thing she hopes happens, and I want to echo that. If and when they do get to the negotiating table, because I suspect at some point, or maybe I'm just hoping out loud they do, I hope that both sides, but we'll speak for our government, the United States sends in people who have expertise in the Middle East and in Iran specifically. These are people who know what is going on there and are schooled in this. We have had some representation that is does not represent us as the United States in the best way possible. And if we don't get good people at the table, these negotiations, which are tough, are bound to fail or stall once again.
Well, when we consider what these negotiations could really yield in such a short period of time, keeping in mind it took well over a year to finalize the JCPOA back in 2015, Jeannie, have we not learned that this president is okay with just reaching some kind of a very vaguely defined agreement in principle? We've seen this repeatedly when it comes to trade deals, that, okay, yes, we have an agreement, you're going to pay broadly this rate. We don't actually see the kind of granular detail of an agreement ironed out for a significant time beyond that, if at all. In some cases, we've never even gotten to that point. So would you be surprised if that's the case here as well?
I wouldn't be surprised given the history you just laid out, Kayleigh, so beautifully. The problem is it is not all up to Donald Trump. There are other sides here. There is Iran. There is Israel. There is the larger Middle East and our allies there. There's Europe. There's China. There's Russia. There are so many interests there. And, you know, I noticed all the talk from the administration the last few days has been about nuclear programs and enriched uranium. That's a huge thing. But let's not forget, there are so many other complicated issues, from reparations and sanctions to the control of the strait. What happens to our bases there, to Lebanon, to the proxies? All of that has got to be detailed. And I would say just one last thing. The foreign minister over in Iran said the other day, we're going to do this on a piece-by-piece process. We're not going to go all in as Iran and wait for the U.S. to respond. We'll give you something, you'll give us something else. That kind of step-by-step process they're trying to hold the United States to. And I don't think we've seen evidence that Donald Trump likes to play that way. So it's like they're talking past each other.
Interesting. I don't expect that any of us can get inside Donald Trump's head, Lonnie Chen, and I certainly won't ask you to do so. But when you listen to the rhetoric that we've heard from the president saying on the other network this morning that he could have won, he would have won the Vietnam War, and quickly, if he had been president. We're looking at the markets reacting here and losing optimism pretty quickly. Stocks are lower. Interest rates are moving higher now. The 10 years at 4.3. Oil prices back up about 5%. Brent is just about to creep back into triple-digit territory here, $100 a barrel. It's becoming more difficult to square the president's rhetoric with the reality in this case. Lonnie, how important is it that a deal is struck by the deadline tomorrow night?
Well, I think it's important that there's a deal struck for all sorts of different reasons. I also think it's the case that while we can't predict what the president's going to do or say, it is clear that he tends to be responsive to market signals. And that explains a lot of the media that we've seen him do in the last 24 hours. I think it explains a large part of his desire to declare the war over, his desire to make it seem as though the areas of disagreement and potential negotiation are narrowed. I think obviously he is personally concerned about what the impact, the ongoing impact of this uncertainty is on markets. And I think that has continued to be the tempering mechanism. If we look across all of the different negotiations, both domestic and foreign, during the course of this president's second term, certainly, that has been a factor that he has weighed and weighed pretty heavily in his calculus. So I think the import of an agreement speaks for itself. The reality and possibility of it, we'll have to see.
Really interesting. Great conversation, Lonnie. Thank you, and Jeannie. Our great panel today, Jeannie Shanzano, Bloomberg Politics contributor, Republican strategist Lonnie Chen. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll update the situation at the White House next.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A bounce off the bottom, but still a lot of red on the screen. With the Dow, the S&P, NASDAQ all declining. We're seeing oil push higher. Equities did extend losses after the New York Times reported that Vice President J.D. Vance's diplomatic mission to Islamabad has been put on hold after Tehran failed to respond to American negotiating positions. West Texas Intermediate crude now at $92.25 a barrel, up by almost 3%. Brent crude at $98.15 right now, up 2.7%. Equities lower across the board. S&P trading down 20 now to 7,089, a drop of 0.3%. Dow Industrials down 93, drop there of 0.2%. Nasdaq down 57. For Nasdaq, a decline of 0.2%. The VIX at 20 for the 10-year. 4.29% with the 2-year currently yielding 3.78%. Gold is down 2.3%, 47.08 the ounce. And again, West Texas Intermediate crude, $92.15 a barrel, up by 2.8%. Lots of industrial earnings today. GE's first quarter profit did beat Wall Street's expectations. GE, though, down 5.9%. Shares of RTX Corp down 3.2%. 3M after earnings down by 1.8%. Again, recapping here, S&P down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. There's a lot for markets to be digesting today. Clearly, much of it emanating from conversations happening here in Washington on Capitol Hill in confirmation hearing for Kevin Warsh, the chairman of the Federal Reserve. Also conversations that are or are not happening at the White House, where we understand Vice President J.D. Vance will be participating in meetings there today rather than traveling to Islamabad, at least according to the New York Times. His trip, along with the special envoy Steve Witkoff and Jared Kushner, has been postponed, delayed for now, given Iran was not making clear whether or not they were willing to show up to these talks. Obviously, Joe, if we are to see an extension of the ceasefire, that would be one thing. If we are to see a resumption of hostilities, that would be another. All of it creating a very difficult economic picture as we consider the fate of the Strait of Hormuz and global energy supplies, which is why, even if he eventually can get concerned, Kevin Warsh is probably going to have a pretty difficult job ahead of him.
Well, that's for sure. And all the while, radio silence from President Trump on the situation in Iran. The last post, I think, was just after 7 o'clock this morning. Iran has violated the ceasefire numerous times, exclamation point. That's all that was written. We did, of course, hear from him in an extended interview earlier today on Brand X, but we are waiting to hear the President of the United States weigh in on this next round of talks, and it might be the case that we simply don't know. This is still coming together now with a lot of cagey responses coming from Iran. So it looks like nobody's getting on an airplane imminently here in Washington.
Yeah, well, we are expecting to see President Trump at least at an event later on this afternoon, an event for student athletes in particular, but it would be an opportunity for him to shed some light on to where exactly things stand. But as of now, light is not being shed. It feels like a lot of us are operating in the dark on this one, Joe.
That's true. We'll keep our eyes on oil prices, of course, on the markets throughout the day. Charlie will be back with another read coming up at 2 p.m. Eastern. This, of course, all on the heels of the Kevin Warsh confirmation hearing, leaving us all to wonder when there will be a Kevin Warsh confirmation vote. And that's not going to be answered today with Tom Tillis's opposition to, or at least blocking of this vote in opposition to the DOJ criminal investigation into Jay Powell. We've got a bit of a taste of the back and forth with Tom Tillis, of course, the Republican from North Carolina, a supporter of Kevin Warsh. He made that clear today. He's just not a supporter of this investigation. Listen.
We have got to end this investigation. Big DOJ didn't know about it. The president didn't know about it. Let's get rid of this investigation so I can support your confirmation. Mr. Warsh, the only thing I've found the least bit odd about you is you've never watched an episode of Seinfeld. But I don't have the D.C. Circuit tell me a crime was committed when 7 members on this committee said it wasn't, including the chair. Thank you, Mr. Chair.
Let's bring in Patrick McHenry. Been looking forward to hearing from the former chairman of the House Financial Services Committee and former Speaker Pro Tem, of course, Republican from the great state of North Carolina as well, and a colleague of Tom Tillis. Bloomberg Politics contributor. Great to see you, Mr. Chairman. Welcome back. What does Tom Tillis want to see here? And I know that you're not inside his head necessarily, but is it an ending of the investigation or a resolving of the investigation? Does he actually want to know if Jay Powell's guilty?
Well, a substantial part of Washington wants to be Senator Tillis's head right now and trying to figure out a way through this. The reality is that with a one-vote margin for Republicans on the Senate Banking Committee and committees across the Senate, Tom Tillis has the deciding vote on whether or not Kevin Warsh gets reported out of committee. This is a huge thing for the administration, for the Federal Reserve, for the global economy. Tom Tillis is the pathway for any nominee through that committee and any piece of policy. And so right now, Tom Tillis has made it quite obvious, quite clear what he wants. He wants the investigation into Jay Powell to end, the investigation into the Federal Reserve and their building project to end. Those things can be arranged. I think that's possible. But he needs that assurance. He needs a very clear assurance for him to vote in the affirmative for Kevin Warsh. And he wants to vote for Kevin Warsh. So that means that Warsh is assured a positive vote out of committee if the Powell investigation and when the Powell investigation ends.
Well, when the investigation ends may be up to the president if he decides he wants to push to have it dropped. And when given the opportunity multiple times in an interview earlier today, he said no. He wants to find out what exactly happened with this renovation and why a project he says he could have done with $25 million has taken billions of dollars. Are you surprised that the president, at least at this point, is not pursuing the off-ramp on this one? Do you think that will change if we get to mid-May and he's actually faced with the prospect of a Chairman Powell who's going to stay in place in a custodial manner for a period of time is facing him?
Yes, and I think we also have an Inspector General report that is due imminently. I think that report can help in this investigation from the Department of Justice or the U.S. Attorney here in the District of Columbia. I think that can be dealt with, but it's going to take time, and certainly we do have time before Powell's term ends.
Interesting how we may or may not get out of this. As somebody who ran the Financial Services Committee and actually had to run these hearings with the Fed chair, you have a good sense of some of the stipulations that come with being Fed chair, some of the disclosures, and in this case, compliance when it comes to financial holdings. What did you make of this back and forth today with Senator Elizabeth Warren, suggesting that he's not only out of compliance, but could have some arrangement that would create further conflict in the way that he divests his enormous holdings? What is about to happen?
Ridiculous, completely ridiculous and irrelevant. The reality is that the ranking member of the Senate Banking Committee is going to find some reason to be a no, and this is all that they could come up with. And the disclosures that Kevin Warsh made about his financial holdings are about funds that hold other investments. And so if you're holding a venture fund, you have multiple different investments in there. The magnitude of those investments are typically non-disclosed and a variety of different investment techniques. I think Kevin Warsh can come into full compliance with all the laws required of the Federal Reserve and high-ranking executive officials in our government. I think he can do that sufficiently in accordance with the law, but I don't think he broke any of those laws in the way he disclosed his financial holdings.
Well, this is something we'll be getting into later on today when the ranking member herself, Elizabeth Warren, joins us at 5 p.m. Eastern time. But you're here with us now, Mr. Chairman. So I also wonder your take on the actual monetary policy trajectory moving forward, which Kevin Warsh very clearly said he would not commit to. He doesn't believe in forward guidance. I just wonder that if and when we do get a Warsh cut, if you will, if Kevin Warsh is the chair and the Fed decides to cut rates at some point in the future, if you think that financial markets in particular are going to view that as credible, given the conversation being had about independence because of the pressure that the president has not been shy on piling on the idea that he wants interest rates lower.
Well, sure. I think I do think forward guidance is a helpful and good thing for the market. I think something like the Taylor rule, which would formalize that is a good thing for the Federal Reserve and the financial markets generally. That was a disappointing comment today that we heard from Kevin Warsh. But generally speaking, sitting outside the Federal Reserve system, And having served within the Federal Reserve as a Fed governor, I think you see some level of respect that Kevin Warsh offered today for that process, that he then has to take the reins as chair. That is a ongoing operation with substantial engagement in the financial markets. A balance sheet is massive, multiples the size of when he left the Federal Reserve a few years ago. And so he has to consult with his colleagues and figure out how the committee process is currently working in order to guide monetary policy on a forward-going basis. And I think, so I think that is certainly something to be noted about today. Additionally, a Fed Treasury accord, I think, is a high time in coming, given the substantial engagement in the financial markets, the substantial size of our debt and deficit. And so there has to be some level of accord for the coming generation for the Federal Reserve. Third and finally, the question of independence. The question of independence is about performance. That is really how it's designed. You can write laws however you want, but you have to have performance that shows independence. I think Kevin Warsh can and will be an independent chair of the Federal Reserve, just like we've had for the last couple of generations.
Well, a lot of talk about debt and deficit surrounding the war with Iran. Patrick McHenry would like to ask you about some of the developments that have emerged today, because it does appear that the next round of negotiations, which we had presumed would be later today, maybe early tomorrow, are now on ice. The New York Times reporting that J.D. Vance is postponing his trip to Islamabad, and we've seen, of course, quite a bit of rhetoric between the U.S. and Iran in the past 24 hours, with the president saying to Bloomberg specifically he is unlikely to agree to extend the ceasefire beyond what he now is saying is tomorrow night for a deadline. If we roll through this deadline tomorrow and fighting is set to resume, does the president need to consult Congress on next steps?
I don't think so. I think what we're talking about here is small. This is not as large as a war-making operation with ground troops that the founding fathers contemplated over 200 years ago. And so the question of national security is a heavy burden for the president, but one primarily governed by the president's decision making. And so what we see here is a question of how we get out of the situation in Iran. What is the foregoing analysis of the level of security to bring petrochemicals through the Straits of Hormuz? This has a global impact, has a disproportionate impact on Asia. That disproportionate impact on Asia means that those Asian players like India and China should have some offering of stability in Iran. And we've not seen that leadership from them. The president is obviously slated to meet with Chairman Xi in mid-May. And I think we would like to see something resolved. And I think the administration would like to see something resolved in part or in whole by that meeting to discuss our trading relationship with China and China's trading relationship with the world. So what's going to happen here in the coming days, I don't think will dictate what is going to happen in the coming months. My colleagues at Xauusd have said the base case here is that you're going to see not large-scale action resume, but potentially small-scale action on an ongoing basis and a dialogue between us and Iran. And the likelihood in the coming weeks won't be some big peace agreement, but we'll set facts on the ground and we'll start seeing oil go through the Straits of Hormuz, and we're going to see a relief to the global economy over periods of weeks, not overnight, and certainly not in the next 48 hours. And I think that is I think what we should think about as a base case with our arrangement with Iran.
All right, Patrick McHenry, Always great to have you, Bloomberg Politics contributor, now the former chairman of the House Financial Services Committee. We always appreciate your insight here on Bloomberg TV and radio. We hit two of the big stories of the day with the chairman there, Joe. Obviously, massive questions around the diplomatic effort when it comes to Iran, questions as to when Kevin Warsh could actually face a confirmation vote after his hearing today. We also have a question as to whether or not we're going to get a new congressional map in the state of Virginia. It's redistricting vote day today, and that story has gotten lost in a lot of the sauce here, but obviously has implications as we consider where the House majority could go come November.
One question we don't have is whether the text spam messages will finally end in the state of Virginia.
Please make it stop.
I think this is the last day. Important interview. Kaylee's heading up to the Hill to talk to Elizabeth Warren. 5 p.m. Eastern. We'll meet you back here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. This is Bloomberg Business Week Daily. On this Tuesday, April 21st, we've got stocks dropping. That really happened on a New York Times story that Vice President J.D. Vance's trip to Islamabad, for peace talks to end the U.S. war in Iran, they are on hold. So I got to say, stocks were already under some pressure and had erased some earlier gains, but this really sent them to pretty much their lows of the session.
And oil, as predictably, it is higher, though, off its session highs. Still $98 a barrel on Brent, WTI at $92 a barrel. Both of those up around 2.7% in today's trade.
All right, we're going to get more on the trading in just a moment. When we come back, though, we're going to talk about that U.S. war in Iran. Where are we on negotiations? And then after a day up on the Hill, is the president's pick for the next Fed chair, is it he basically getting closer to getting the job? Got some questions for our Mike McKee.
Yeah, looking forward to that conversation in just a few minutes. Also, the Deputy CIO Solutions and Multi-Asset over at Morgan Stanley Investment Management ties all of today's headlines to the trade.
We're also going to get to the core of what faces Apple's new coming in CEO. That'll happen in September. And then the president of customer experience over at Adobe on partnerships and surviving in an AI world. It's not been easy for any kind of software company.
No, we got a packed hour right here on Bloomberg Business Week Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. And developing political story right now. Headline on the Bloomberg out of Washington. Democratic Congresswoman Phyllis McCormick says she has resigned. That's according to a statement posted moments ago on X. Again, developing story headline right now on the Bloomberg Professional Service. U.S. equities lower across the board, bounce off the bottom, but still a lot of red on the screen. Looking at a 24-point drop right now on the S&P at 7,084, down 0.3%. Dow Industrials down 124 on the Dow, decline there of 0.2%. Nasdaq lower by 61 for the Nasdaq Composite Index, a drop there of 0.2%. A rebound in oil driving stocks lower. Traders are awaiting confirmation that Iran will join the U.S. in peace talks. Also, we saw equities extend losses after the New York Times reported that Vice President J.D. Vance's diplomatic trip to Islamabad has been put on hold. The VIX just below 20 now with a 10-year 4.29%. Spot gold is down 106 the ounce to 47.14, down 2.2%, while West Texas Intermediate crude now up by 2.3%, 91.65 a barrel. Barrel of Brent 97.83, up now by 2.5%. Apple shares do remain lower today, down 2.4%. It is among the most actively traded, certainly among the most read stories on the Bloomberg. Apple declining a day after announcing that Tim Cook will be replaced by John Ternus as Chief Executive Officer. Again, Apple down now by 2.4%. Recapping the Dow, the S&P, Nasdaq all lower. S&P right now down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash.
All right, we're going to be talking, as Charlie mentioned, Apple. We're going to talk about that a little bit later on this hour with our own Mark Gurman. Meantime, we do have a headline crossing. Deutsche Telekom said to mull a full combination with T-Mobile US. So some news there.
I'm looking at shares at T-Mobile. They are shooting higher as soon as that crossed the Bloomberg. Up right now, just about 1%.
All right, we'll keep an eye on that for you as we count down to the close on this Tuesday. In the meantime, the U.S. is still awaiting a green light from Iran for peace talks to take place before a ceasefire expires on Wednesday, with the sides deadlocked on issues including access to the Strait of Hormuz. We know we did get that New York Times report that said J.D. Vance, at least his trip, the vice president, to Islamabad right now on hold.
Yeah, with the latest on the White House and the war, back with us is Wendy Benjaminson, senior editor for Washington D.C. Weekends at Bloomberg News. She joins us from our Washington, D.C. bureau. The clock is ticking because tomorrow night is when that ceasefire is supposed to end. The president said he's unlikely to extend it. What does that mean if these two parties aren't even physically in the same place?
This morning that he would resume bombing, and then asked if he really meant that or if it was a bluff. He said, well, that's what I want to go into the negotiations with. That if they don't make a deal, if these talks aren't successful, you know, all bets are off and the war goes back to where it was a couple weeks ago. There are these reports that, you know, Vance is holding off leaving, and we also know that Steve Witkoff and Jared Kushner, the other negotiators, are also still in the United States. And the Iranians seem to be in a position right now where they're like, what's the point of talking? I mean, we opened the strait, you did a blockade, you know, you're firing on our ships, like why are we talking? But what Vance has been ordered to go in there and come away with is an agreement on Iran's uranium enrichment program. And I think my take at the moment is that we are miles and miles and miles away from resolving that.
All right, we're talking with Wendy Benjaminson. We have a little bit of an audio problem, so we want to try and fix that for you so we can hear Wendy fully and clearly. In the meantime, we just want to go back to that New York Times story that really changed the market direction. As we said, we were already off our best levels of the session, had erased earlier gains, but that's when we saw stocks take a dip to their lows of the day. What the Times published at around 1:34 p.m. Wall Street time is that here's what they say. The delay is another hurdle in the Trump administration's push to secure an agreement that would curb Iran's nuclear program. So Vice President J.D. Vance's diplomatic trip to Islamabad, where he was expected to press Iranian negotiators for a nuclear deal, has been put on hold after Tehran failed to respond to American negotiating positions. This is according to a U.S. official with direct knowledge of the situation, again, from the New York Times.
Ahead of that, President Trump said Tehran had no choice but to send a delegation to negotiations in Pakistan. The U.S. is in a strong negotiating position, he told CNBC earlier today, and is, quote, ready to go with the resumption of bombing if a breakthrough isn't reached. That's what Wendy was referring to. I think the question, Carol, is to what extent does military activity continue, and when does it, or I guess I should say start up again, if these peace talks don't happen?
Which is kind of wild because I think investors are expecting we're not going to be having those talks anymore about escalation. Back with us is Wendy Benjaminson. We fixed our audio issue. She is, of course, senior editor for Washington, D.C. Weekends at Bloomberg News. Thanks for being patient with us, Wendy, as we work that out. You know, I do think investors, based on the trade, who certainly on the equity side of things, just keep kind of trying to grind higher after several records and a quick run up last week, that they, you know, don't think that escalation could still come between U.S. and Iran. But based on what the president says, negotiating tactics or reality, we could see an escalation in the war.
We absolutely could see an escalation. And then again, it's Trump. We could not. He might come away. You know, the deadline was technically tonight. And yesterday he said, no, it's Wednesday. So it's possible that if, you know, they're still trying, the Pakistanis are still trying to get the Iranians to the table, and they're still trying to decide whether it's smart for Vance and Witkoff and Kushner to go. Who knows? That deadline might get pushed back, you know, another 24 hours or something like that. You know, I think, remember that Trump politically needs to get an off-ramp for this war. And the Iranians have their own domestic reasons for maybe not backing off right away. And, you know, so it's not really in anyone's interest for missiles to be flying. But it is important that these talks happen.
And perhaps shame on all of us, because we know the Strait of Hormuz and certainly the nuclear, the enriched nuclear piles. I mean, those are the negotiating tactics and really leverage, if you will, when it comes to Iran. We knew that this wasn't going to be easy. Wendy, thank you so much. Wendy Benjaminson, senior editor for Washington, D.C. Weekends. Tim, we're going to stay in D.C. We're going to go from kind of what the executive branch on the war is up to, and then we're going to get to what's been going on at the legislative branch today.
That includes hours of a hearing for President Trump's pick to be the next chair of the Fed, Kevin Warsh. Warsh repeatedly pledged to act independently if he's confirmed as the next head of the Fed. He rejected Democratic concerns he would, quote, be a sock puppet for President Trump, who continues to demand lower interest rates. Here he is, Kevin Warsh, earlier in an exchange with U.S. Senator John Kennedy, a Republican from the state of Louisiana.
Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah,
earlier.
what is it?
I'm not sure I know.
Okay.
I think it's that thing you stick your hand in.
Yeah, kind of like this.
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that was the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
All right, that, of course, was Kevin Warsh earlier in an exchange with U.S. Senator John Kennedy, Republican from the state of Louisiana, with what you need to know about the hearing that went on for several hours this morning and into the early afternoon. Joining us right now in our D.C. bureau is Bloomberg TV and Radio international economics and policy correspondent Michael McKee. Mike, not a sock puppet, but basically the idea is that he's not a puppet of the president and will run the Fed, chair the Fed as he sees fit. Do you buy it?
I think you have to going in. He's going to be the chairman of the Fed at some point. And it would be very difficult for him to try to run monetary policy if he was seen under the thumb of President Trump. The question is, can he maintain that distance even if he is doing the right thing? Because there's no doubt that if he doesn't get interest rates to move lower over a certain period of time, he's going to hear it from the president. He'll go on Truth Social and say something about Kevin Warsh and his Fed. The issue for Warsh actually, though, is how does he do that? Because at this point, the economy doesn't call for it. And he's just one of 19 people who vote, or 12 who vote, 19 who are on the committee who make the decisions about interest rates. So does he... is he able to convince people to go along and cut rates? I think that's going to be a very difficult thing to do at this point because the Fed's pretty divided over the need to do that.
Mike, I think anyone who tuned in to these hours this morning, suffice it to say, I think it was entertaining, to say the least. The question that I had throughout the process, though, was, does any of it matter if Senator Thom Tillis is there and says, I will not vote for this to move ahead unless an investigation is dropped into Jay Powell?
Well, a certain amount of it does, in the sense that it gave Wall Street investors a chance to get some idea of how Kevin Warsh is thinking about inflation and thinking about monetary policy. He's talking about possibly making some major kinds of changes in the way business has been done for a while, like perhaps getting rid of the dot plot. He's talking about shrinking the balance sheet, which would be a difficult thing to do, would take several years. And he said that if they do that, they want to make sure that it doesn't cause any problems on Wall Street. So those are things for investors to look out for, and that they would have to